At the very eye-watering price of 550,000 euros. They're looking to attract new customers there. So we're on the lookout for how the stock is going to open up. And then, of course, as you were just saying, Tom, we're keeping a close eye on the change in spot price for oil. So that's going to have an impact on key energy stocks. And, of course, airlines, which are key, very sensitive to the price of oil and have been as of late, and jet fuel in particular. So those three sectors are going to be, we're going to be paying very close attention to when things open up in a couple of minutes' time. But, of course, as we said, the UK market playing catch-up here, Tom.
Yeah, across the session yesterday, it was banks and it was travel and leisure that led the gains across your sectors, and energy on the downside. You can expect that to reverse, at least to some extent, in the session today. The FTSE 100, of course, may adjust things slightly with that catch-up story. Futures there pointing higher. The markets are opening right now. Let's check in then on the price actions. The FTSE 100 is actually flat right now, just turning positive, and we'll see how that adjusts in the first few seconds of trade. Of course, it was a bank holiday yesterday in the UK. FTSE 100 then up 0.3% so far. Across the benchmark, you are modestly lower. Wait for the cap, wait for the DAX, of course, to come through with those prints. And to the point around the energy story, with oil prices higher, we'll see how that reflects across the majors, because they were under pressure yesterday on that almost 7%, around 7% drop that we had by the end of the session on Brent. Brent today up around 2%. The DAX then a little softer on the German index by just 0.1%. The IBEX in Spain also a little weaker by 0.1%. Again, this seems to be a market that is cautious, is awaiting more details. We've heard Marco Rubio suggesting we could be a few days away from that potential deal, but of course factoring into that, US strikes on Iranian assets. The CAC 40 over in France currently down 0.3%. Jemima, what are you seeing across the sectors? Yeah, well, in terms of sectors, an outperformance this morning from basic resources. So that index is already up around 1.8% in the early minutes of trade. Retail also having a good start to the session, up about 0.5%. Right at the bottom, there isn't a lot of red this morning, but you can see marginal underperformance from telecoms, from chemicals, and from media as well. But in terms of some specific names, as I mentioned, basic resources having a good start to the day, the likes of Rio Tinto outperforming here. And then we also have Glencore also up around 2.6% as well. Now, in terms of a main outperformer, we have Kingfisher. That its stock is up 5.3% on back of more robust sales. And then just to point out, we have a few stocks that have turned ex-dividend today: Safran, Crédit Agricole, Michelin, and Carrefour on our radar. And perhaps we should talk a little bit about some of the airlines too, Tom, given the focus on energy. And just to let you know, their IAG has opened up 2.75% higher. EasyJet up 2.4%. Let's get to the bond markets then. You've seen a rally in the treasury markets, and you're seeing a pretty decent rally as well for gilts. Again, reopening after the bank holiday of yesterday, so not a big surprise that gilts are rallying on the back of the adjustments in oil prices yesterday. So yields are down between 7 and 8 basis points, 8 basis points lower on the 2-year, 4.25 right now. The benchmark 10-year is currently yielding 4.82, yields down 7 basis points. So gilts getting a bid, at least in the session so far. There's a piece on the M Live today suggesting that gilts could be the best performer across bond markets if we do get a reopening of the Straits of Hormuz. Well, I mean, they tend to have high beta anyway, but also don't forget, don't discount what Andy Burnham said last week and the fact that he plans to adhere to fiscal rules. This is a UK story and a broader fixed income story.
Okay, let's get some deeper analysis now with Marie Jacot, Edmond de Rothschild Asset Management France CEO. Really good to have you on, Marie. So we've been talking, and you know, throughout the course of this war, it's been pretty evident that European markets have underperformed Asia and the US. I wonder if we do get a resolution to the war, whether that changes the calculus and the investment thesis around European equities here.
Absolutely. Thank you and good morning, and thank you for having me. That's our view as well. We clearly have observed that the European markets have lagged versus Asia and the US since the beginning of the year. It's mostly due to three factors: to the composition of the index, which is much more focused on industrials, consumer, luxury, and much less on AI and tech stocks than some of Asian markets and the US. The weakness in dependence on energy for sure makes Europe very vulnerable to any escalation in the Middle East and headlines on OPEC. And thirdly, the clearly questions that are being still hanging on, weakness of some stocks and growth more generally. However, we think that there is a big catch-up trade to be considered if things get better, and that's been the positioning in our portfolios.
Yeah, and of course, again, there's so much lack of clarity about what's going to happen here. And I'm just going to bring you some lines that we've got from the Iranian Supreme Leader. He issued a comment in a statement, but essentially saying the U.S. will no longer have safe haven for Middle East bases, so issuing a threat of some sorts to the U.S. around the bases that are dotted around the Gulf region. And of course, this is on the back of U.S. strikes once again overnight on around the Straits on specific Iranian assets. So this could go two ways, Marie. And I just wonder, if you look at where volatility is trading right now and the fact that we are back essentially for equity vol, FX vol, back to pre-Iran war levels, whether this actually may be a good time to position in those hedges and take advantage of the cheap vol.
Clearly, and look, we're in a situation of what we could call a gentle euphoria, where on the one hand, you have a stock market that's being very robust, despite the fact that risks remain on the geopolitical side, as you said, in particular. But we think that the way that we should position portfolios at the moment, we are still constructive on equities, US equities mostly because of both macro and fundamentals being strong. Emerging market equities, where you have a good dynamics in energy or AI. And for Europe, it's more of a not really a growth story, but as we just said, should things improve, should the environment improve, then we would play Europe as clearly a trade that could present some really good catch-up.
Marie, good morning. It's Tom alongside Jemana. What is that catch-up trade then? Let's play out the positive scenario. How do you position around a reopening of the Straits of Hormuz and European equities?
Well, we've seen the European stance towards defense evolve over the last years through the Ukrainian war, for example. It's been one of the main drivers, obviously. We hear that Germany is ready to go up to 100 billion of defense expenditure, which will represent, I think, around 2.8% of their GDP in 2026. And that means that European small caps that are would be typically, some of the small caps exposed to defense, to infrastructure, would be positively positioned in our view. So that would, be a big part of the catch-up trade, in our opinion.
How do you play the AI story? How do you play the AI story at this point, Marie?
There is an interesting trend that we're looking at, which is more of a contrarian and satellite trade through Chinese tech. You can see, if you look at the Hong Kong index today, the tech index, so gathering the 30 largest tech stocks in Hong Kong versus its equivalent in Korea or Taiwan, it's down 11.7%. There's some catch-up to be done, and some potentially good news with a better IPO pipeline and more openness towards foreign capital that could be positive. It's obviously not without large risks that are to be considered, and within those risks, the relationship between US and China, just to mention one. So we're not necessarily using that trade as a core trade, but certainly as a satellite opportunity in our portfolios.
I want to ask you about the outlook for European autos, and I'm not saying anything new here by saying that the auto industry has come under a lot of pressure the last couple of years. Even the likes of Ferrari today, they've unveiled this new electric vehicle version. The stock is down 7.7%. This is one specific example, but more broadly speaking, what we have seen is a huge amount of competition coming through from Chinese automakers. Do you sense an opportunity here to actually get involved in this space, given the re-rating and given how low the valuation is compared to other markets around the world?
That's right. I think clearly the auto trade versus Europe versus China has gone to a deficit as far as Europe is concerned. China is now exporting up to 15%, I think, in sales in electrical vehicle in Europe. So clearly there is clear cautiousness that needs to be exercised, and we continue to stay invested. Our view is that we're constructive in the medium term, but we are using protection tactically on a short-term basis as well in the portfolios.
Marie, you're constructive on credit. I want to get your views on what happens to credit. Spreads have been tight, but if this détente continues and the Strait of Hormuz is not reopened, what is your level of concern that spreads start to blow out in credit? Are there areas that are looking kind of flashing red signals to you at this point, or you're still comfortable leaning into investment-grade credit?
Look, we're constructive on credit through both investment grade and high yield, and that will last as long as we don't have any strong sign of a recession. You're absolutely right. We need to be really cautious on the evolution of the geopolitical risks, and we've got plenty of headlines to play with on a daily basis, but for the time being, we prefer credit to duration, and so credit to interest rates. So we continue to have a stance that's positive on both high yield and investment grade credit, corporate credit.
Yeah, and to be clear here, Marie, to come back to that point that you're more bullish on credit, so you're not looking at it from the perspective of an all-in yield. You don't want to hedge out your duration exposure simply because you don't believe that fixed income can rally from here?
That's true. What we want is clearly to extract the credit risk in the portfolio and concentrate our exposure on this for the time being. And that's been part of the performance since the beginning of the year, and that's the trade that we continue to be firmly convinced about. But as I said, it will be heavily dependent on whether or not we have sign of recessions, which would change the context, obviously.
Marie, thank you very much indeed. Marie Jacot, CEO of Edmond de Rothschild Asset Management France. Let's check in briefly on the core 6 today, with all the major markets reopened, of course, In Europe, Novo Nordisk in the healthcare space is up 0.7%. You're seeing a bit of a loss coming through in LVMH. Travel and leisure was part of the story in terms of the luxury sector. Of course, that could be very receptive to any potential deal. Today, down 0.6%. A little bit of softness for Rheinmetall, the key player in the defence space, of course, currently down just 2 points. ASML down 1.7% as Huawei continues to suggest it's less reliant on their tech. Schneider Electric down 0.5%. And a decent gain for Nestle, so far up 0.9%. Let's check in on some of the individual stocks, other names on the move with Louise Moon, who's standing by. Louise.
Morning, Tom. Taking a look at oil companies down across the board for those key companies there, BP, Shell, Equinor. Of course, that's on the back of developments that we've been seeing in the Middle East. Oil prices rising as strikes continuing and hopes dented for a peace deal. So that's how it's impacting those main oil stocks today. Next up, we're also looking at Ferrari. This is after they've unveiled their first ever fully electric vehicle. That's a 5-seater vehicle. Shares really heavily down into the red there, over 6%. There's doubts over whether there'll be enough demand and they'll really be able to pull that off, as well as all their other offerings as well. Looking also at airlines after a note from Morgan Stanley, a bit of a mixed impact there. We've got Lufthansa. Morgan Stanley had cut Lufthansa, so it's tracking that cut there with a fall in share price. Air France, they had lifted, and IAG, their top pick, rising the most by 3% after that Morgan Stanley note, saying there's opportunities there in the airlines sector. Now, onto an individual stock, Kingfisher in the UK. This is the owner of B&Q and other DIY kind of retail brands, boosting over 5%. That's after a sales update saying, despite sales being slightly weak, they're expecting to hit their full-year guidance, despite all the kind of wider retail headwinds. So hanging on in there and boosting their share price, being welcomed by the market.
I guess DIY summer, given it's so hot here in the UK. Thanks to Louise Moon. Thank you so much. All right, coming up, we check in on the price of oil after U.S. forces carry out further military strikes in Iran, pushing back hopes that the Strait of Hormuz will reopen. Details next. This is Bloomberg.
Tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg 10.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Astonishing day for U.S. technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Welcome Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Welcome back to the opening trade. We are about 16, 17 minutes into today's session, and we are seeing moderate declines, I would say. The DAX down about 0.3%. The CAC 40 down 0.4%, but the FTSE 100, which was closed yesterday for trade, is up 0.7%. Keeping a close eye on basic resources there. The miners doing quite well, and of course, Kingfisher as well, guiding to better sales.
Okay, Jemana is obsessed by DIY. We're also obsessed by what's happening with Ferrari. This is certainly one stock in focus for us today. Ferrari shares slumping this morning, the market reacting with disappointment after the Italian manufacturer unveiled its first fully electric car. There it is. The 5-seat model is priced at a mere $640,000 and marks a sharp break from the sport cars maker's fuel-burning heritage. Joining us is Bloomberg transport reporter Danny Lee. Danny, tell us more about the car. Why has the reaction, at least from investors, been so negative?
Well, when you think about, Tom, the legacy that Ferrari has, this is a very much a fully electric vehicle that is very un-Ferrari-like. When you think of the two-doors, two-seater luxury sports cars that this Italian sports car maker does produce, the prancing horse is famous for, this is very much a departure. It's also a fully electric vehicle, partly designed by former Apple executive Johnny Ive. So there's a lot that is very different, and I think investors are really digesting just how much Ferrari is trying to not pivot so much, but really capture a completely different audience, and perhaps audiences in different geographical markets. That is very radical to maybe something that is more attuned to the traditionalists, with all the fuel and the fury that the Ferrari sports car is normally like. So this is very much a departure, and therefore you see that stock down really quite hard.
And it's interesting because Ferrari themselves have dialed back their ambitions of how many EV vehicles they're going to produce. So originally, I think their plan was to produce about 40% EVs by 2030. They've now dialed that down to 20%. But let's go back to the origin of all of this. Why have Ferrari decided to go electric?
Well, Ferrari wants to have a foothold even in some of the more nascent technologies. Clearly, the market has moved in various ways, but no, it's not just good enough having combustion engine, high-performance combustion engine cars, and so Ferrari wants to have not just that, but also hybrids and fully electric vehicles, and particularly in markets where it does really well, such as China, so it can have a bit more diversity in its offering. But clearly, by having a little bit of exposure, it does mean that it can potentially generate higher earnings. And particularly with this new pricing of this Ferrari Luce, is going to be at the higher end of what it sells of its regular range. So this pricing is a very deliberate strategy as well to help drive up those earnings, particularly as its overproduction of Ferrari cars are generally capped. So therefore, it can keep that exclusivity.
So, Danny, look, this is obviously a really important moment for Ferrari pushing into EVs, but this is just one, to your point, this is just one amongst the portfolio that Ferrari will now offer. So how much of an effect is it likely to have on the company's performance, the outlook going forward?
Well, Ferrari does have the confidence to, when it has broken the mold, so it earlier in the last couple of years has produced an SUV that has 4 seats and 4 doors. Completely different to what it has done, but what it has been able to do is capture popularity. It's an SUV that has sold really well, and therefore, when it's been thinking about, according to Bloomberg reporting about the performance version, it means it can charge much more potentially for some of these models, and therefore this does feed ultimately to higher earnings, particularly at a time when we have seen sales slip because of the Iran war. So therefore, it has been disrupted in some of its key markets. So all of these new models do help lay that foundation for a bit of a stronger future.
Yeah, well, 550,000 euros. Let's see how the take-up is going to be. Bloomberg transport reporter Danny Lee, thank you so much. Well, Brent crude futures rising to session highs after comments from Iran's Supreme Leader Khamenei saying that the U.S. will no longer have a safe haven for Middle East bases. The remarks come after U.S. forces carried out further military strikes in Iran overnight. Joining me now is Bloomberg's Stephen Statinsky. I guess no surprise really that we are seeing a bit of an uptick in the price of Brent. But what are people in the industry actually saying about what could happen over the next couple of weeks, given once again we're in this situation where it's really unclear if we're going to get an actual diplomatic breakthrough?
I think there is this divide in the market where there is an expectation that there will be some sort of peace agreement. And even if that were to come, how long would it take to open up Hormuz again? How long would it take to get flows back to normal levels? That's the big question. And one thing that I've noticed over the last few weeks and months is that whenever talks continue, even though there is no deal, if there are talks continuing, if Rubio or Trump says something saying they're close to a deal, or those talks progress, or then you see oil kind of slip in that expectation that there will be some sort of agreement. When there are attacks and when there's a threat to the wider region, that's when you see prices rise again. It seems that the market isn't so closely monitoring the actual flow of vessels through Hormuz. They're really just watching the rhetoric. And the big fear in the market, the big thing that would push prices much higher is if this ceasefire that exists right now were to evaporate, and you go back to March, where there were U.S. and Israel strikes on Iran, and then Iran doing retaliatory strikes across the region. That is the big fear. Now, of course, we're not in that situation right now, but any breakdown in talks could go that way. So that's why every day I feel like when traders wake up, they look at what Trump has said. As long as he isn't saying that he's going to bomb everybody and that the talks continue, that's a good news for the market.
What is that, Stephen, what is all of that doing in terms of this gap that we're seeing between physical and paper oil?
What's been really interesting is in the early, I guess more in April, you were in March as well, you were seeing a pretty big gap between dated Brent, which is the physical or the now barrels, the barrels that they need to get right now, versus the futures market. You are seeing a closing of the gap between the physical market and the paper market. So there isn't this disconnect that we had months back. Instead, I think where you're really seeing the true pressure points are on the fuels. So you're looking, when you look a little bit more down the barrel. So I'm talking about jet fuel, those prices remain quite elevated. Diesel, as well as other products. LPG as well to Asia is becoming quite challenging to get. You're seeing long lines at the Panama Canal to get U.S. shipments to Asia. So I think that's where the pressure point is at the moment. And because of that, you're seeing just widespread demand destruction to help balance that. And that demand destruction is happening here in Asia, where I said, maybe not so much Japan, but more so in South and Southeast Asia. I'm talking Pakistan, Bangladesh, India to an extent, as well as some of the countries like Vietnam and the Philippines.
Stephen, thank you very much indeed. Really, really interesting in terms of the update there as we continue to get lines from the Iranian side as well. Stephen Stupczynski with a take there on the energy market reaction to the developments out of the Middle East. So we have had some lines from the Iranian Supreme Leader reacting to this and warning around US bases.
Yeah, I will say again, we don't want to read too much into this because it's unclear whether Khamenei has actually issued the statement himself or whether it's been written for him. Perhaps this is the official response that Iran are giving to those strikes from the U.S. overnight. But of note is that the negotiations are still actually taking place in Doha, so there's still hope that there may be a breakthrough.
Yeah, and then again, on the bull case, if this is as much as it comes to in terms of the Iranian response to those US attacks, then maybe that in itself a positive. They have not responded with their own attacks. Coming up, elevated oil prices then, still putting emerging market economies, of course, under pressure. We can get some insights from someone who knows this space very well, Luis Costa, Citi's EM Strategy Global Head. That's next. This is Bloomberg.
exploring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in Season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch Season 2 on all these lovely channels.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Welcome back to the opening trade. We are half an hour into today's session, and what you're seeing is a bit of a dip in sentiment compared to where we were yesterday. We have the Stock 600 as a composite down about 0.1%. The DAX down 0.4%, so leaning towards negative here, and the CAC 40 in France down 0.5% as well. So a bit of a pare back from some of the gains that we had yesterday. And again, we've been talking a lot about markets hoping on some form of a breakthrough on Iran-US, but with the U.S. strikes on Iranian assets overnight, things have taken a turn for the worse, especially with the move upwards in the price of oil. FTSE 100, I will say, we are seeing a bit of a catch-up. Remember, we were out yesterday for the bank holiday. Today, coming back in, and again, up 0.7%, boosted by the likes of some consumer goods and also basic resources today having a good session. Tom?
Yeah, Jemima, if you lift the hood, then you see a bit of a mixed picture, fairly evenly mixed in terms of the upside, the gainers and the losers. Currently, 307 members, of course, of the Stock 600 currently in positive territory. On the downside, 279. So fairly evenly balanced on a day when it seems the market is looking for that next catalyst and continuing to either developments out of the Middle East. Volumes are essentially in line with 20-day averages, just down 4.5%, off a little bit from that 20-day average, but not by much. Let's dig a little deeper and look at some of the individual names that are leading, and certainly that catch-up trade is a factor. And it would be looking at a more negative session if you stripped out the FTSE 100. But Kingfisher is gaining strongly. It's not just the catch-up trade, it seems. It's also first quarter sales as well, coming in strongly for Kingfisher. So the DIY trade is back, it seems. And that stock is up right now 5%. Glencore, the miners, are performing relatively well in the session today. And Glencore is an example of that, adding 13 points, up 2.3%. And IAG, travel and leisure, because, of course, through the week, oil prices are lower. Yes, they're up today. Brent is higher today, but down 7% yesterday, and for the month on track to be lower as well. Travel and leisure, IAG in focus, up 2.9% then, that airline company, of course. On the downside, Ferrari taking a really big hit, coming out with its first fully electric vehicle, and investors not liking what they see. Currently down 6% Ferrari. ASML, a potential challenge then from Huawei, saying it can make chips at the 1.4 nanometer level without ASML's lithography machines. That company in the Netherlands currently down 2.5%. And BP in the oil space, with prices currently up 2%, 2-3%, but down again on the week, currently a little softer by 1.3%. BP weaker so far in the session. Jemima.
All right, here's what else you need to know this morning. The Vatican is joining the growing debate over AI regulation. Pope Leo has called for artificial intelligence to be disarmed, warning it could pose risks to humanity. The Roman Catholic leader also wants AI to be more human-focused and less controlled by powerful tech monopolies. Russian Foreign Minister Sergei Lavrov has advised the U.S. to evacuate citizens and diplomats from the Ukrainian capital of Kyiv. In a call to U.S. State Secretary Marco Rubio, Lavrov said that Russia is set to launch systematic and consistent strikes against facilities in the city. Hungarian Prime Minister Peter Magyar says he'll sign a political accord with European Commission President Ursula von der Leyen as soon as Thursday on the release of the bloc's frozen funds. The deal will provide a, quote, outline of what Budapest needs to do to tap the funds. The EU froze more than $20 billion in funds for Hungary back in 2022 due to graft and rule of law concerns during Viktor Orban's longtime rule. Tom.
Okay, let's get back to the oil story and the geopolitics. Fresh lines crossing from Iran. Iran's IRGC saying that they fired at a US drone and a jet in Iran's airspace. That is according to Tasnim news agency. Iran's IRGC also warning against ceasefire violations. That is, again, according to Tasnim, after, of course, the US struck some Iranian assets on the ground in Iran and some ships, it seems, in the Straits of Hormuz. The elevated energy prices, then, we've seen since the start of the conflict have, of course, put pressure on emerging market economies. Joining us now to discuss is Luis Costa, Global Head of Emerging Market Strategy at Citi. It was fantastic to get you into the studio and get your views on EM. What is the higher oil price doing to your world of EM? Is there a level of comfort with Brent below $100 a barrel?
Definitely a relief, I would say. But I mean, definitely, if we continue close to 100, it's a big change in terms of the assumptions for monetary policy out of EM economies over the next quarter or so. And we could indeed have hikes, or let's call it preemptive hikes, on the back of that. So definitely a relief. It doesn't look like we are going straight back to 120, 130, which was, the base case for quite a few investors out there. Hedges are off the table now. That's quite interesting that after April, macro investors, not only the EM folks, but macro investors, they are not buying hedges anymore. They are not buying downside S&P anymore. They are not buying CDS protection anymore. It's quite interesting. It goes back to what we've been discussing to clients, that, the general view is that we are heading on a very non-linear way, and I think the overnight news, they kind of support this theory, on a very non-linear way towards some sort of agreement. But it's going to be non-linear. There will be pitfalls along the way.
Okay, there will be pitfalls. It'll be non-linear. How clear is the trade, I wonder, in the EM space between the energy importers and the energy exporters?
Oh, it's been very clear. It's been very clear. We've had in the energy vulnerable group, like emerging Europe, for example, or the Chiles of the world in LATAM, we have seen, a pretty good repricing of the curves. In countries that are not so vulnerable, for example, Brazil or Mexico, countries that are not necessarily at the top of the energy vulnerability table, we have seen a much better performance, not only on the rate side, but also on the currency side, which obviously gives us, a good way here to express selective positive views in EM.
Yeah, Luis, I want to come back to what you were saying about people no longer putting on hedges. And I wonder whether that's to do with the fact that there's less concern that we're going to get another flaring up of hostilities, or due to the fact that none of these hedges have actually worked out. If you had bought S&P puts, you would have been out of the money. If you bought 150 strikes on oil, you'd be out of the money. If you positioned for wider spreads, you'd also be out of the money as well. So why even bother?
Because of the gravity in this story, right? We've seen the price action yesterday, fair enough, yesterday, major global holidays, but you can see the price action, and we had this, a couple of weeks ago as well. So you've got this batch of positive headlines, and then all of a sudden, dollar down, and a little bit of a rally in interest rates, and clients are actually tired of this. And they know, as you said, the view is for a non-linear approach. And two, markets react, it's still with a bias towards the positive news. Even though we know that, like I said, it's not going to be linear. We're going to have, threats. There will be eventually flare-ups like we had, overnight. But that's generally the view. And I think it's the correct way to approach that.
Yeah.
Just to remind everybody, since April, in the sample of funds, or EM funds we track, we had more than $10 billion inflow. Right? If I had told you back in November, December that, look, we are having an Iran conflict and there were over 5% of assets under management.
Is that local currency or hard currency?
This is local currency. This is local currency. Predicated, of course, in a relatively well-behaved price action by the dollar, which is something that we can discuss later on. But the dollar is allowing still a residual positive view in the sub-asset class.
It's fascinating, isn't it? The dollar has strengthened, of course, during the conflict, but has been, prior to the conflict, on a downward trajectory. If we return to weaker dollar on the back of any deal, how much of a catalyst could that be for you?
It's going to be huge, because essentially, when I talk to our clients,
and it's not priced in yet.
Well, in a way, no. You cannot say that this is not necessarily priced in. I think that it can get stronger, for sure, right? You remember, last year or 2 years ago when we started getting warmed up to the EM local currency trade. It's the flows were immense because the positioning was not there, right? So now the positioning has definitely improved, but it can definitely get stronger.
So, Luis, one of the things that we were also talking about is the knock-on effects on individual countries that will have to do something to support their own currencies, i.e., start a rate hiking cycle. Which are the EM countries that stand out to you from that perspective?
Well, I do think that, Asia is probably, a very vulnerable part of EM. And not only because of the oil shock, but because of the general anatomy of flows that we're getting now. We see dollar INR, dollar India. We continue to see prospects for India depreciation versus the dollar. The low yield in Asia is also vulnerable in this aspect, and that actually matches with the energy vulnerability side of things. So this is very interesting. But let's not forget that markets can also exaggerate. For example, in South Africa, at a certain point, we had, above 100 basis points reaction by the SARB, and we don't believe the central bank will react that, even though it's one of the most cautious central banks out there, and they are absolutely correct in being cautious. We do believe that that can open for some opportunities here to receive rates and buy bonds in some of these curves where the pricing reaction has been exaggerated here.
How comfortable are you with the AI trade around Korea and Taiwan?
That's scary. But, by the same token, if you go back in time, like I spent a lot of time looking into Korea, right? And the fact of the matter is Korean households, they absolutely love equities. They always loved equities. But guess what? They always loved foreign equities, right? So, this is the very first time in the cycle, let's call it this 10-year cycle, that they're actually Korean households are buying domestic stocks. And obviously...
but that's scary, though?
The price action is scary, how vertical the chart is. This is actually supportive, right? So it's scary from the price action point of view, supportive if you look into the anatomy of flows. I think that it can keep going. And the AI cycle, guys, even though, the CapEx numbers as a percent of GDP, we are surpassing the .com CapEx, right? But we can still be in a very young part of the cycle. It can go quite a lot, right? Yeah. So that can be quite constructive to some of the EM economies out there, Korea, Taiwan. And also, let's not forget, it's not only the semiconductor story, it's also the natural resources story. What feeds the AI cycle, or the assembly line, let's call it, like in terms of natural resources. And I think that can be quite interesting as well for metal producers in emerging markets.
Yeah, fascinating. Luis, so good to chat to you. Thank you so much for coming on The Opening Trade. Luis Costa, Citi's Global Head of Emerging Market Strategy. Now, the World Health Organization has warned Ebola is spreading faster in the Democratic Republic of Congo than responders can contain it. Suspected deaths in the country have climbed above 220, and response efforts are struggling in a volatile region. For more, our Africa healthcare reporter Janice Hugh joins us now. Janice, what are the latest details from the WHO And how much strain is the response right now under?
There's a lot of strain. The WHO has said that really the response is outpacing the spread. The spread is outpacing the response. And so we've got a situation where they're really trying to play catch-up in a region that is an incredibly difficult region to operate in. We got a survey yesterday from Action Aid talking about how 1 in 3 people in Congo, or at least in the region that they were in around the epicenter, do not even believe that Ebola is real. There's a lot of myths, a lot of misconceptions. So they are fighting this not only from a medical point of view, but also from a messaging point of view. They're really trying to get out into communities and explain how to keep yourselves safe. They're really also battling this without a vaccine or any real therapeutics that deal with this specific strain. The more common strain, the Zaire strain, is the one that we have vaccines for, and this strain we do not.
And Janice, South Africa, meanwhile, has pledged $5 million US to the Africa Centers for Disease Control and Prevention to try and support the continent's response. What more can you tell us about that effort from South Africa and whether more cash is needed?
They closed the gap quite well yesterday. There was a briefing where a lot of pledges were made. The amount from South Africa was double what they initially had offered, but it is not the biggest amount by any stretch of the imagination. The World Bank itself has pledged $180 million, with $160 million of that going to Congo specifically. We've got $82 million from the US in pledges, $57 million from European partners, and the total that they've said they need is $519 million. So that 500 that was the total from yesterday definitely closes that gap. The DG of Africa CDC has, however, said that 519 million is probably going to grow as they see spread and as they have to do further preparedness.
Janice, thank you very much indeed. An important update, of course, out of the region for us. Janice Q, Bloomberg's Janice Q, with an update there. Coming up, back to the energy markets. Brent crude then rising to session highs after comments from Iran's supreme leader pledging the US will no longer have safe haven for bases in the Middle East. We'll bring you the latest. That's coming up. This is Bloomberg.
As an exchange, what can you do to make it more attractive to be a publicly traded company?
Talk to our customers. We spend a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies to really focus on structured reform to allow a company to tell their story in the most efficient way possible and reward them for the good disclosures that they are making in the market.
Is there any sort of financial innovation that you could drive to get more companies to list? Tokenization has come up.
Well, we did announce our tokenization initiative earlier this year. We've already built the technology, we've already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into that electronic form, but is going to be a platform that runs in parallel to our more traditional exchanges.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Welcome back to the opening trade. We are 48 minutes into the Tuesday session. European markets, European equities are essentially flat. The UK is back, of course, after the bank holiday and performing relatively well on part of that catch-up story, up 0.7%. But broadly, this is a market, it seems, looking for the next catalyst. US futures pointed to gains of 0.6% on the S&P E-minis. Joanna.
Well, within the last hour, Iran's supreme leader has said the U.S. will no longer have a safe haven for bases in the Middle East. The remarks come after U.S. forces carried out further military strikes in Iran overnight. Let's bring in Paul Wallace, Bloomberg's managing editor for Middle East and Africa. So on one hand, we have President Trump talking about successful and progress being made on negotiations. But of course, then now we're seeing these military strikes and the Iranian side threatening U.S. bases in the region. Where does this leave the ceasefire?
Hi, Jemana. We are in a bit of a strange state right now where tensions are very high as exemplified by the overnight strikes from the U.S. on Iranian targets near the Strait of Hormuz. The U.S. said those were in self-defense, and they were, according to them, attacking some ships that were laying mines in the waterway. Iranian media has actually just come out and said that they fired on U.S. jets and that they took down an unmanned drone. So I think that shows how sort of significant what happened last night was. However, at the same time, and for that Supreme Leader Mojtaba Khamenei is making those threats, the two sides are still talking about inching towards an interim peace deal with lots of caveats and both of them saying that things could fall apart still, but they're both talking as if they are getting closer. And the Supreme Leader in his statement moments ago did not criticize the U.S. for the overnight strikes, and he did not suggest there were any new snags holding up the talks over this interim deal. So that's the state of play at the moment. As I said, it's still a very precarious situation and things could break down, and there's no guarantee there won't be a reversion to a hot war between Iran and the US. But for now, both sides are sort of saying they are slowly getting towards a deal.
Paul, the president adding in a new dynamic in the last 24 hours or so and pressuring the Saudis and the Qataris and others to recognize Israel by joining the Abraham Accords. How seriously should the region take this, and what does it tell us about the president's intentions?
I think this sort of says quite a bit more about, U.S. domestic politics and probably U.S.-Israeli relations right now than it does about, U.S. relations with the Arab world and with Iran specifically. I mean, Trump came out and in a long post, a post of about 550 words on Truth Social, he said that Saudi Arabia and Qatar should pretty much immediately recognize Israel by joining the Abraham Accords. He said that Pakistan should do the same. He mentioned some other countries like Turkey and Egypt joining the Abraham Accords. They already recognize Israel, but they're not part of the Accords. So, it seems like he's putting pressure on the Saudis and the Qataris. I think it would be very unlikely that either of them would join very soon. They've both been very clear that they need either a Palestinian state or firm steps by Israel towards allowing for a two-state solution. And a two-state solution is just absolutely not something that any mainstream Israeli politician, let alone the current government, is going to accept right now. So I think it seems like it's a bit of a no-no. But Trump is trying to appease the Iran hawks in the U.S., who are the likes of Mike Pompeo, the former Secretary of State, and Lindsey Graham, the Republican senator from South Carolina. These are the kind of people with quite a bit of influence, and they are very concerned about this emerging deal, saying that it concedes way too much to Iran. So this may be Trump's way of trying to sort of get them off his back.
Okay, the domestic politics are potentially a factor. Paul Wathers, thank you very much indeed for an update out of the region. Let's get back to the markets and bring in Bloomberg MLive strategist Mark Cranfield. Mark, fantastic to get you around the set. We think this is an historic first. Treasuries are rallying today. Yields are down. A bit of a catch up, of course, after the closure of yesterday. How far could this go if we do get a deal? How convinced are you that longer term there is going to be yield flattening across the curve? What is your take right now in terms of what we're seeing across treasuries?
I think we're in the early stages of a global trend of curve flattening, where finally we're catching up to the point where oil prices have been high enough for long enough that they're causing sufficient inflation that we're going to see central banks respond. European Central Bank looks as though they may well go in June, Bank of Japan. Even the Fed is starting to shift that they might not raise rates immediately, but the narrative is clearly changing, and the new governor there is really got a difficult job to keep everybody on board in terms of certainly the Fed has stepped a long way back from lowering interest rates, just a question of whether they go ahead with a hike straight away or they just stay a bit hawkish. So that's affecting the short end of the curve, keeping interest rates up a lot longer than expected. The flip side of that, it means that economies are going to start to suffer. All the supply disruptions, higher commodity prices are starting to feed in. That will make people a bit more negative on where growth will go towards the end of the year. So they'll become more supportive of longer-term bonds, particularly 10 years plus out towards the 30-year. So you will get a natural yield level starting to come down a bit in relation to the short end, flattening everywhere.
Yeah, I just wonder if the Fed under Warsh, if they don't start cutting, how much President Trump's patience will be tested. But let's talk about another central bank which may actually start hiking or continue hiking. Bank of Japan. Seems like we're all set for June now. Yeah,
we've had two significant speeches in the past couple of weeks where they've moved to the hawkish side. At the last meeting, 3 dissenters wanted a hike straight away. There's now 5, it looks like. That's enough to swing the balance at the June meeting. So far, there's been no serious pushback from the Japanese authorities. Prime Minister Takaichi clearly wants rates to stay low for as long as possible, but she hasn't made a big deal about it. Even she seems to recognise, and Bloomberg Economics put out a good piece today, suggesting that there's a window here with other central banks moving towards tightening. Japan can just slip in at this time. It's 6 months since the last hike. They'll probably do a dovish hike. So move, but give no indication of when they're going to do it again. And that will probably suit the market. Also, if they don't, it's a serious risk to the Japanese yen. The yen has been under pressure. It's getting towards that 160 again. It's time to do something about it.
Mark, thank you very much indeed. A dovish hike potentially in the cards for the BOJ. Mark Cranfield, of course, from our MLive team. The stock of the day for us is Ferrari. Let's check back on that company with the stock down 6%. This is largely on the news that Giovanna Pesecci would not be placing an order for their new fully electric vehicle. I'm being flippant, of course, but there it is. They've revealed the Lucci.
Yeah, I don't know how to pronounce it. It's well, it costs 550,000 euros.
Yes.
The new electric
Hence
vehicle.
your trepidation.
Well, it's on my baby shower list, so if you want to contribute, feel free.
Sign up here.
As every new mom knows, you need a new Ferrari. But no, I think they're taking a big risk here, and they're seeing whether they can appeal to a new audience.
A new audience that maybe is Mini Giovanna sitting in the back of that 4-seater. There it is. So a bit of a negative response so far. We'll see what it means longer term, of course, for Ferrari as they push through with that fully electric vehicle. Later today, we're going to hear from the CEO, from one luxury item to another, of watchmaker Audemars Piguet. Don't miss that exclusive conversation on The Pulse at 9:45 a.m. UK time. That is it for the opening trades. Currently, US futures pointing to gains of 0.5%. We continue to monitor Iran, of course. This is Bloomberg.
It's the world's second-largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We are risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this yield forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
U.S. and Israeli jets carry out new attacks in Iran hours after President Trump suggested a deal to end the war was near. Russia warns the U.S. to evacuate its citizens from the Ukrainian capital as it threatens systemic and consistent strikes on Kyiv. Plus, we've got an exclusive interview with the chief executive of watchmaker Audemars Piguet. I'll also be joined by the chief executive of Tech Mahindra and JP Morgan's Karen Ward. Now, there is quite a lot to get through. Again, if you look at the markets, they're of course looking at geopolitics, which is why we start with geopolitics. U.S. stock futures actually extending gains. Treasuries rallying. Now, crude prices rebounding after American forces hit missile launch sites in Iran and boats trying to place mines, clouding the outlook for resumption in oil flows through the Strait of Hormuz. That's, of course, impacting the MSCI World Index. Brent crude at 98.92 and gold spot at 4,536. Let's also have a look at what's going on in Europe, but they've really been following on what we've heard so far from the U.S. and then Asian markets. You can see a little bit of pressure on the CAC 40 and the DAX, the FTSE gaining some 0.6%. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, just 24 hours ago, the U.S. was suggesting that a deal to end the war in Iran could be announced within hours. But overnight, U.S. and Israeli jets carried out new strikes on Iranian vessels in the Strait of Hormuz, describing them as defensive. Now, the U.S. Secretary of State says the continued closure of the strait is unacceptable.
They need to reopen. What's happening there is unlawful. It's illegal. It's unsustainable for the world. It's unacceptable. I don't know of any country in the world that does. And the Russians are not in favor of a tolling system. The Chinese are not in favor of a tolling system. I mean, there's no country in the world that's in favor of a tolling system except the regime in Iran. So that's not acceptable. That cannot happen.
Now, Marco Rubio also had a phone call with the Russian foreign minister who warned him to evacuate U.S. citizens from the Ukrainian capital. Now, we'll get more on that in a moment with Tony Halpin, who leads Bloomberg's Russia team. But first, on Iran, let's bring in Jumana Bersecci, Bloomberg Horizon's Middle East and Africa anchor. So, Jumana, what's the thinking, actually, behind the latest U.S. and Israeli strikes when, you know, the president had just said that the talks had been proceeding nicely?
Yeah, well, interesting to say, actually, that this morning IDF came out and also declared that they did not participate in the strikes overnight. But to your point, things are looking a little wobbly. We've sort of transitioned from extremely high hopes of a breakthrough in the next coming days to these limited attacks that the U.S. launched on Iranian assets overnight. They say they were acting in a defensive capacity. This morning, Iranian media is saying that they had shot down an unmanned U.S. drone. Unclear what the timing was on that, but we do know that the U.S. did strike at missile launchers and indeed at some of these mine-laying vessels as well. At the same time, Francine, negotiations are still underway. Marco Rubio once again suggesting that a lot of the differences have been papered over. Ghalibaf, who's the Speaker of the House from Iran, and the Iranian Foreign Minister are actually in Doha today in Qatar to continue with those negotiations. Two key sticking points as ever: the Strait, with once again Iran maintaining that they want to have some form of control over who goes through, and then the fate of that enriched stockpile, with President Trump overnight saying that they will come to some form of a mechanism to either destroy it or for the Iranians to hand it over. But, I mean, these are two huge stumbling blocks that we still need to get through.
Jumana, Israel is also set to intensify strikes in Lebanon. How much will that be a setback with an Iranian deal?
And you raise an interesting point there, because it seems as though the Iranian side want to weave in once again the Lebanon file into the broader discussions. There has been a ceasefire in Lebanon ongoing for a couple of weeks now. It's been a little shaky, and since the ceasefire was announced, Israel had restrained, or IDF had restrained, from targeting outside the southern part of the country. That seems to have changed overnight, with more hawkish language emerging from the Prime Minister, the Israeli Prime Minister, and he's saying that they will once again head back at Hezbollah more forcefully. Overnight, we saw images of many residents around the southern parts of Beirut fleeing once again in anticipation of further strikes. And yesterday, they conducted about 70 strikes on Hezbollah targets, they say, throughout Lebanon. So there's a real risk, perhaps, there of another escalation too. Will it derail progress on the broader Iran-U.S. talks? There's always a possibility, especially if Iran wants to relink the file back again to the equation.
Jumana, thank you so much. Jumana Bersecci there with the very latest on what's happening with Iran. Now, Russia has also told the U.S. to evacuate its citizens from the Ukrainian capital, Kyiv. Let's bring in Tony Halpin, who leads Bloomberg's Russia economy and government coverage. Tony, why is Russia now stepping up attacks?
Good morning. Well, I mean, essentially because it can. It's well aware that Ukraine is struggling to find more resources with air defense missiles, given the demands in response to Iran in the Middle East. Many of those are being diverted to that conflict. But also in addition to the fact that Russia is really responding in some ways to Ukrainian success recently. They've been targeting refineries and other installations in Russia, and they also had a very large drone strike aimed at Moscow last weekend, and that produced a lot of criticism in Russia of the way that the war was going. So Russia in many ways is trying to seize back the initiative by intensifying strikes on Kyiv.
Tony, how far away is a peace deal for Ukraine? What's the latest in these talks?
Yeah, it's not close at all. The U.S. is consumed by the Iran situation. It hasn't been able to really move forward discussions between Russia and Ukraine. Marco Rubio said as much, that they're not really interested in an endless round of negotiations that don't go anywhere. We don't see much progress on the ground there. I think neither side really accepts that a deal is close at this point.
Tony, thank you so much. Tony Halpin there with the very latest on what's happening in Ukraine. Now let's get more with Rachel Elahus, Director General at RUSI. Rachel, thank you so much for being with us. I mean, there's no real end in sight when it comes to Israel, U.S., and Iran. In fact, things are getting worse. What needs to happen for some kind of real truce or real negotiation?
Well, it's very difficult to see a path forward now with the strikes overnight. It showed exactly how far apart the two sides are. But I think if we look at the contours of the latest agreement, one thing that was a positive development was the involvement of the countries in the region. You really saw the UAE, Qatar, and Saudi Arabia coming together with Pakistan and the United States to exert a bit of pressure on the Iranians. And I also appreciated the sequencing. So they tried to come to an agreement on the things that were on the table, like unlocking some of the frozen assets, but then kicking the can down the road on some of the harder agreements, like what will happen to the enriched uranium.
I mean, is there something actually that, do you have to negotiate the uranium before you negotiate the Strait of Hormuz? Otherwise, they have too much revenue coming in?
Well, everybody's going to have their things on the list of priorities that need to come first in the sequencing. I personally believe that looking at the situation globally and the impact globally, that the most important thing is the Straits of Hormuz, because if we get a negative precedent there where tolls can be charged, that could have effects globally. But sequencing is probably the only way forward.
What do you think happens in the next couple of weeks?
Well, that remains to be seen, whether we are continuing to broaden the agreement. I think your previous guest mentioned that we've now brought the the Israeli strikes on Lebanon and Hezbollah in Lebanon back on the table. I think we could see a situation now where there's more pressure for the countries in the region to sign up to the Abraham Accords. If we keep widening the agreement rather than focusing on the things that were core to the agreement, like coming to some sort of path forward on the enriched uranium, keeping the guardrails around development of ballistic and cruise missiles, and then not creating that negative precedent around the Straits of Hormuz. Those are the things we need to focus on rather than putting new things into the scope of that agreement.
Rachel, I mean, is there a danger actually that the U.S., that President Trump needs a quick deal because of the midterms and the oil price really starts biting, so that at the end of the day, the Iranians are much better off now than they were 5 months ago?
Yes, President Trump needs a quick deal, but the Iranians also probably need some form of relief to their economic situation. And it's not just the United States. I mean, we're feeling the pressure here in Europe, but it's going to now, with almost 2,000 ships sitting waiting to pass through the Straits of Hormuz, that's going to hit not just fuel prices, but commodity prices, groceries, you name it, fertilizer. We've missed planting seasons, and it's to this stage, it's really been focused on small and medium-sized countries that don't have a lot of resilience built into their economic bases. But now, I think when we're almost more than 6 months on, it's going to start hitting our bigger economies.
What do we know about how much money actually the Iranian regime has? Because there are still ships, presumably, that are passing through and paying them for safe passage.
There are ships that are passing through, and that selectivity has allowed them to persist and to stay afloat a bit longer than possible. It's also estimated that they still have more than 70% of their cruise and ballistic missile stockpiles in place, so they can turn up the heat pretty quickly if they feel that these negotiations are not moving in a constructive direction.
What do you think happens in Ukraine? And again, there's a lot of talk about the fact that Marco Rubio was given the heads up to get U.S. citizens out of Kyiv. Is Putin much more, I guess, dangerous now than he has been in the past?
We've seen these types of empty threats before, not just in terms of calling for evacuation with a view to upcoming strikes, but we've also seen Putin use the nuclear card and threaten tactical nuclear use. That's usually when he's in a difficult situation and backed up against a corner. So I wouldn't read too much into the threats, because Ukraine is actually making some gains on the battlefield in recent weeks, particularly when the illegal Starlink terminals were turned off for the Russians. You really saw the effect of that on the battlefield. So I think we need to hold the line. Unfortunately, the Ukrainians aren't going to get much help from the United States, either in terms of more equipment, because the United States itself is struggling with stockpiles, or politically, because the United States is bogged down in trying to sort out the situation in Iran.
How much is China still supporting Russia?
Very much so. And when we saw Putin going to visit Xi in China a few weeks ago, there was this currency swap deal that does actually enable Russia to it allows China to buy more Russian energy, but in return for that, it will down the road allow Russia to use that currency swap arrangement to buy more Chinese goods. So that dependency of Russia on China is only continuing.
And what does China want with Iran? Again, I thought, for me, it was striking to see actually President Trump show up in China and then President Putin show up like a week after with the similar pompous and pageantry, to both leaders. Is China kind of playing games with the Strait of Hormuz?
Well, the visits, I was also struck by the similarity in how the two leaders were treated and how they both walked away with a little more than ceremony and grand agreements and not a lot of details or substance behind it. As far as what China wants in the Straits of Hormuz, I think they like seeing the U.S. have multiple dilemmas in terms of its foreign policy. And when Trump went to China, I think he was looking for a clear offer of help in resolving the situation, and he didn't get that. But let's be honest, China was quite smart in terms of its own energy reserves, so it's been able to withstand the pressures of this conflict more so than longer than others, but it won't be able to hold the line forever.
Rachel, is there a way to actually secure safe passage for some of these vessels in the Strait of Hormuz without a deal with Iran?
It's very difficult. I think the United States has tried to do that a little bit with the blockade. It's standing off a little bit, and it was interdicting ships that it thought should not be passing through, and there were limited passage closer to the coasts. But no, not in a meaningful way. I think we could get small numbers of ships coming through with this continued blockade, particularly if it got closer to the coasts and the U.S. was willing to take more risks in reinforcing that. But no, really what we need is a comprehensive deal that opens the straits for everyone.
Is there a problem of trust because the president says, tweets one thing and then does something else? Or is it just that the two sides are too far apart?
They're very far apart on the things that are meaningful, like the enriched uranium. But in terms of the need for economic relief, I think that is maybe one thing that they both share. So in that narrow pathway, perhaps, again, we can go back to that sequencing and put the harder things maybe 60 days down the road and focus on reopening the straits and getting the oil flowing again.
When you look at Lebanon, this is now an integral part, actually, of what's going on. What's the way forward for them?
Well, the difficulty with Lebanon is I don't think the United States can control Israel's actions. And I think when this deal was proceeding before the strikes overnight, and the deal seemed to be on track and imminent, as the U.S. president said, I don't think the Republicans in the U.S. Congress were happy with that. They thought that didn't have enough of the Israeli security guarantees therein. I don't think the Israelis were happy with that, and Prime Minister Netanyahu was very vocal and very upfront in saying that he would continue to strike Hezbollah in Lebanon, regardless of what the terms of the deal said. So there's a credibility problem there, because why would anyone believe that the United States could hold Israel back?
I know this is a very difficult question to ask you, but in the next couple of months, are we going to see this kind of one step forward, two step backwards kind of negotiation, or is there real hope of finding a good resolution?
If past is precedent, I think we are in this one step forward, two step back situation, because we've been there for almost 2 years with regard to Ukraine and a deal in Ukraine, and we've really been there since February, March with regard to Iran. And it's not that the two sides don't have things that they agree on. It's that they are all seeking to maximize their game, and they don't really have that final incentive to come to the table and finish this.
Rachel, thanks so much for joining us. As always, Rachel Elahus, their Director General of RUSI. Now, coming up, new strikes on Iran weigh on risk appetite, so we'll dig into the market reaction with JP Morgan's Karen Ward. That's next, and this is Bloomberg.
up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, Brent crude has rebounded after those U.S. and Israeli strikes on Iranian targets. But U.S. futures and treasuries gaining in a sign that investors are still hopeful for a deal. Well, with us now, Karen Ward, EMEA Chief Market Strategist at JP Morgan Asset Management. Karen, it's so good to speak to you. Thank you so much for coming on. I don't know whether we're due a correction at some point, just given geopolitics. We're seeing a little bit of a bounce every couple of days. But do you expect some kind of real correction coming in?
No, I don't think so. I mean, I think there's something tactical going on in markets, but there's a bigger force that's at play as well. So the tactical aspect is we know it's darkest before the dawn, particularly when it's a political negotiation. This is the toughest part. And if you sold the market 6 days after Liberation Day, when US was putting 145% tariffs on China, the market's now up 50% from that day. You've been chasing it ever since. So I think tactically, you've got this not wanting to be top and tailed in the back of your mind. But I actually think, Francine, the way I make sense of markets, and I do think they're rational, is this realization that almost the more chaotic the world becomes, the more that's creating spending. And that's government spending on all aspects of resilience, whether it's their military, their energy infrastructure, their technology resilience, and companies spending as well, because they are rerouting supply chains, they're taking advantage of technological change to improve the efficiency of their business. And I think that's really what markets are focused on, that whatever happens in the next month or two, there's a much bigger theme that's at play.
But there's worries in global bond markets, which we're not really seeing translate in equities. So what do you put your bet on?
Well, bond yields rising because expectations that actually growth is going to be okay, that is consistent with equity markets rising. But inflation. I think you're right, Francine, that, you know, I mean, we came into this year with the bond market very much expecting all the central banks to be cutting rates. And clearly the situation with Iran and then rising headline inflation has taken those rate cuts off the table, and the market started to think about hikes as well. So the bond market's had to do a big about turn in its perception of how the whole year is going to play out. But I think actually, you know, the bond market is telling you there is this economic resilience that's there, because actually if Iran was going to cause a global recession, then actually bond yields would have been going down.
When you look at inflation, how much do you worry about an interest rate hike that then has to be reversed quite quickly if the damage to GDP is too strong?
So I don't think the central bank should be hiking at all. So what matters, so headline inflation is going to rise, core inflation is going to rise, and there's no doubt many central banks, including ours here in the UK, are going to be feeling nervous about that because inflation has been above target for too long. But whether or not you should act depends on whether you think that inflation is going to show up in the labour market. Because if workers are confident in their jobs, they can see there's loads of job offers around them, they'll go and ask their boss for more pay to compensate themselves for energy prices rising. And that's when we get into one of those vicious cycles of prices going up, wages going up, costs going up, prices going up. And that's what the central bank needs to worry about. The labour markets in the West just aren't in that shape. That is fundamentally the difference between now and 22.
Is that because of AI?
I don't think it is. I think genuinely we've just had this uncertainty of politics all around the world for some time, and it's just creating this hesitancy of businesses, this degree of wait and see. Maybe in certain sectors there's a degree of trying AI in the process. But no, I don't think fundamentally, I think it's just residual business uncertainty and companies everywhere waiting for a demand to really get entrenched before they were making hiring decisions.
So, Kara, you think basically central banks should not hike, but you think they will in US, ECB and BOE?
I don't think the Bank of England or the Fed will. Okay. The ECB has a bit of a tendency to focus more on headline inflation. So maybe we get 1 or 2 from the ECB, but I think it will be little more than a gesture, a shot across the helm, and I think that the market is overpriced. I think there's a big opportunity in short rates.
So where else do you see opportunities?
Well, I still think, I mean, my base case is that we are going to see a resolution. You were talking about that with your super guest that was on before. I think the incentives on both sides are now getting acute. I mean, we have to remember that 80% of the energy that travels out of the Strait goes to Asia. So in terms of what economic pain is Iran inflicting on the world with the Strait being closed, it's many of its friends and allies. And China is a very important voice. Now, we don't get tweets to learn what Xi Jinping is thinking, but, the domestic economy in China is incredibly weak. And it's only doing okay because of very strong exports. So China also cannot risk the global economy going into recession. So I think the pressure is intensifying. If I'm right, and we see this resolution, or at least this step towards reopening the Strait, there is still a lot of parts of the market which have been held back. The European trade is completely on pause until this is resolved. There's a cyclical part of the market that's looking very depressed. So I still think even though the benchmarks are at record highs, there's a lot underneath the surface that will react if we see the resolution come through.
Karen, talk to me a little bit about the UK. So there's, political upheaval. We have a prime minister that feels like a lame duck, unclear who replaces him or when exactly. Does this weigh on financial markets?
Well, I think it's now in the price. We know we're essentially waiting for a few steps to play through. Andy Burnham, whether he gets elected in Makerfield and can make a challenge, who else is going to be on that ballot? We're in a holding pattern. But that, I think, in UK markets is that risk premia is now firmly in the price. And I think it's always interesting watching politicians and, having spent a year in government myself, what individuals say when they're not in office ends up being very different to what they say when they're a couple of days away from potentially taking office. So I think the risk premia in UK markets reflects some things that have been said about perhaps a much more left-leaning agenda. I suspect as we get closer to the uncertainty resolving itself with potentially a new prime minister, if that were to happen, we'll be hearing a more centrist voice from whoever's looking to take the keys of number 10.
So that you don't see anything that would point to some kind of market event because of fiscal positioning of the UK or anything like that? I
think lessons have been learned here in the UK. We are very mindful of the fact that we are, as Mark Carney said, relying on the kindness of strangers, and we are therefore very much in hook to the bond market, and that I think will craft the agenda as we get closer to a leadership election. I hope what I see is not only discussion about needing to maintain the fiscal rules, or at least a headline restraint, but actually a growth agenda. That's still what we're desperate for in the UK. If we hear more about, another ream of tax to spend, which would be now the 3rd year of tax to spend, that's when we're going to stay stuck in a rut. But I'm optimistic that we're not going to get there, that as we get to the summer, there's going to be a sensible agenda on the table.
Karen, thank you so much, as ever, for joining us. Karen Ward there, EMEA Chief Market Strategist at JP Morgan Asset Management. Coming up, the Chief Executive of the Commonwealth Bank of Australia warns that AI will take away jobs and businesses across the economy. We'll discuss all of this with the Chief Executive of Tech Mahindra. That's coming up next, and this is Bloomberg.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start in the third floor or the lobby. You actually have to start in the basement.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacroix here in London, and these are your top stories. U.S. and Israeli jets carry out new attacks in Iran hours after President Trump suggested a deal to end the war was near. Russia warns the U.S. to evacuate its citizens from the Ukrainian capital as it threatens systematic and consistent strikes on Kyiv. Plus, we have some exclusive interviews with the chief executive of the watchmaker Audemars Piguet still to come. But first, the chief executive of the Commonwealth Bank of Australia has warned that AI will take away jobs at businesses across the economy. Well, my next guest, however, says demand for human labor will not go away. Moy Joshi, the chief executive of Tech Mahindra, is here. Thank you so much for joining us. I mean, there's just a lot going on in the tech space, but given the slowdown in tech hiring that we're seeing in India and the demographic profile, a lot of young graduates, for example, in India around the globe, worry that entry-level coding jobs may disappear. Do you share that concern?
Well, look, I think the thing is that, as you rightly said, there has been a slowdown in hiring over the past couple of years. But I feel that has largely been driven by the fact that growth in the industry has been a little bit slow, right? So we've come from a historic growth rate of about 6 to 8% for the industry that climbed all the way to 20 plus during COVID and now has come down to closer to 2%, right? So I think the hiring really reflects the slowdown in the business. And the slowdown in turn has been driven partly for India by the fact that you had a lot of these global capability centers being set up. So they diverted a part of the demand from the traditional system integrators. You obviously had geopolitics, right? Last year we had tariffs and all the sort of the related geopolitical shocks. This year you've had Iran. And the third has been the AI overhang, right? There has been the sort of the decision making among our clients has been slowed down as they're looking to see the impact of AI. But longer term, I remain very bullish about the potential for the industry because...
But, sir, if you look, for example, if you look at the current outsourcing software services, right, how much of what percentage of that will be automated over the next decade?
Sure. So actually that's a very interesting question because if you look at the overall global sort of addressable market, for instance, for business process services, that is about 1.2 trillion, out of which about 20% is really outsourced, right? And then you've got the demand for IT services, which is also about 1.2, 1.3 trillion, but of which about 50 or 60% is outsourced. But all of this exists within an overall global demand of labor, which is probably closer to 40 trillion. Right. So while you may have some compression on the coding side, the reality is that because software is becoming all pervasive, you will probably see the total addressable market for the kind of services you provide expanding quite significantly.
So do you believe that actually AI will create more jobs and it will destroy full stop?
For sure. Look, I think certainly for our industry, it's I think a lot obviously depends on how much growth AI is able to generate. But specifically for our industry, I feel it will expand the total addressable market. I do feel that the work that needs to be done of modernizing and simplifying the stacks, the work that is being done in the data space, the new sort of roles it will create, for instance, in agentic AI, will more than make up for the compression that we will see because of the efficiency in coding. Right. I think it goes to how we see the industry, right? If we see the industry as purely doing coding or purely doing operations, then it's possible we will only see compression. If we see it helping, the largest companies in the world becoming more efficient and solving problems for them, we should continue to see, again, an expansion back to growth.
So India has also become a global IT powerhouse during the dot-com era. Do you believe that India can now become an AI product and platform leader as well?
Oh, for sure, for sure. Look, I think every single industry shift, right, whether it was Y2K and the move to open systems, or it was a dot-com or it's cloud, has always expanded the total addressable market for the IT services industry. And I see no reason why this should be different, right? At the end of the day, adopting AI by large companies will require a lot of expertise, right? Will require expertise, will require an understanding of their systems. And if AI is indeed giving the sort of returns that people believe it is, then you would have people investing more in terms of technology and more in terms of adoption rather than less.
I mean, I think tech spending globally has been a little bit uneven. So what are your clients spending on today?
I think, look, it is fair that over the past couple of years, I don't think our clients really, because our enterprise clients, if you leave the hyperscalers aside and the model builders aside, the spend on tokens is relatively small. Maybe there is some increased spend on hardware that is really the result of higher prices that we've seen recently. I think people are more in wait-and-watch mode. At least for the first year after COVID, you had the huge overhang of spend that really had to be brushed to the system. You also have had some, sort of price increases from the SaaS vendors that has meant a share of the budget has gone to that. But I don't see, people cutting technology spends for sure. As a result of this, and to implement AI, like I mentioned, right, will require the work of simplification and modernization and a deep contextual understanding of the landscape. It's very hard to implement AI for, let's say, for a wealth manager if you don't know what wealth management is.
Are you seeing more demand for large transformation deals given all of these uncertainties and again, companies and also chief executives still trying to figure out, for example, what the wealth manager of the future will be?
Exactly. So look, I think, you've had AI in wealth management for a very long time, right? You had, whether it was Wealthfront or the others, you had AI-driven investing models for a long time. But really, the percentage market share is still only 1 to 2%, right? So it's really the largest scope is still with the traditional wealth managers. And it is how you make the private banker, how you make the financial advisor a lot more efficient in their day-to-day job, how you help them build client-specific models, how you help them, give a better understanding of the macro to their clients.
So what skills are you actually hiring on today? I'm sure, they must be different in terms of coding programming to a couple of years ago.
So look, I think this industry, our industry over the past, I've been here for about 25, 27 years, right? And I feel the deep verticalization of the industry is something that is going to continue. Historically, you had largely horizontal skills, whether they were in terms of operations or in terms of coding, right? But increasingly, you have people who have a deep understanding of networks, for instance, within a telco context, or a very deep understanding of factory of the future in a manufacturing context. I would say the number one focus for us has been on hiring those deep vertical skills, because those people are able to much better understand and apply the context of AI for our clients.
Mohit, thank you so much for joining us. Mohit Joshi, they're the Chief Executive of Tech Mahindra. Now, the US, India, Australia, and Japan have also launched a maritime surveillance plan for the Indo-Pacific after a meeting of Quad foreign ministers in New Delhi. The alliance seeking to revive momentum after recent tensions between Donald Trump and Narendra Modi. Well, let's get more with Bloomberg's Oliver Crook. Ollie, good morning. So what else have we learned from today's meeting?
Yeah, Francine, it's good to check in periodically on America's sort of traditional alliances and see how they're doing a year and a half into the Trump administration. The Quad format is not one that we've really heard about over the last few months, but it's significant now that Marco Rubio, the Secretary of State of the United States, went over to New Delhi to meet with the foreign ministers of Australia, Japan, and India to try to make some headway in some collective efforts. And they've done so in three major areas. One is about Indo-Pacific Maritime Surveillance Initiative that they have launched. They have just announced they were there standing together, shoulder to shoulder, and giving a joint press conference. The other is about port infrastructure, building out port infrastructure in some of the Pacific Islands. And of course, I think probably most importantly, most interestingly, an accord and some kind of initiative on energy. And of course, what we've been hearing a lot about recently, Francine, critical raw materials. Interestingly enough, for the Trump administration, one that we know is not a very big fan of multilateralism and sort of these sort of cooperations between nations. You hear them talking about it more and more and more, particularly on this issue of critical raw materials, because of course, they're very concerned about the pressure that the Chinese are able to exert on this. So for them, this is another opportunity, the Quad format, to try to build out those supply chains on critical raw materials.
So will we get also a Quad leaders meeting?
Yeah, it's a good question, Francine. Last time we had one was under the Biden administration at the end of his term as president. We have not yet had any sort of indication that there will be one, but it is interesting to have the Secretary of State, Marco Rubio, saying that the Quad is a cornerstone of U.S. policy. That is something that will be very welcome from the Japanese, from the Indians, and of course from the Australians. The real question, though, is there appetite at the sort of Trump level, at the leader level, to sort of elevate this constellation of nations to have that leaders meeting. Of course, I think that these nations were also very concerned about the fact that Donald Trump seems much more interested in having those one-on-one meetings, particularly with Xi Jinping, because really this Quad format is something that is sort of designed to counterbalance some of the influence that the Chinese have over the Indo-Pacific. So we'll see if we can get that relationship up to the level where we get these 3 or 4 leaders, I should say, meeting in the same place.
Ollie, thanks so much. Oliver Crook there with the very latest, of course, on the Quads. Now, the World Health Organization has warned Ebola is spreading faster in the Democratic Republic of Congo than responders can contain it. Suspected deaths in the country have climbed above 220, and response efforts are struggling in a volatile region. Now, for more, Africa healthcare reporter Janice Q joins us. Janice, what are the latest details from the WHO, and how much strain is the response under?
The response is under a lot of strain. As you say, the spread is outpacing response. The WHO says they're really just trying to play catch-up with this really fast-moving virus. There is an urgency on the ground for more coordinated response. There was a briefing yesterday where a lot of state officials were pledging money, and they're really just trying to make sure that that funding gets to people on the ground. We have seen a lot of challenges on the ground. There was a survey done by Action Aid which said 1 in 3 people in the most affected communities don't actually believe that Ebola is real. So there's community messaging that's needed, as well as supplies and other therapeutics.
South Africa has pledged $5 million to the Africa Centers for Disease Control and Prevention to support the continent's response. Let's take a listen.
The government and the people of South Africa are pleased to announce an initial contribution of $5 million to Africa CDC in support of the ongoing continental Ebola response. Africa is no longer waiting passively for others to act and to come to its assistance.
That was Cyril Ramaphosa. Janice, what more can you tell us about the funding and wider response?
So President Ramaphosa's $5 million was double what they initially had said that they were going to be able to contribute, but that contribution really dwarfs in comparison to some others. World Bank has pledged $180 million, with $160 million of that going to Congo directly. We've seen the US come in with $82 million and European partners with $57 million. We even had the Gates Foundation at about $15 million. So the total that was being looked for was $590 million, and this 500 definitely helps close that gap. The DG of Africa CDC, Kasia, has said, though, that $519 million will probably expand as the spread expands and as preparations for other at-risk countries is needed.
Janice, thank you so much. Janice Q there with the very latest, of course, on what's going on with Ebola. Coming up, the Pocket Watch collaboration that led to chaos. We'll be speaking with the chief executive of Audemars Piguet. That's coming up next, and this is Bloomberg.
To Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Asia is at the forefront of some of the world's biggest stories. I'm Chevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
The conversations that matter, the insights that you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, events in the watch world made global headlines recently over highly anticipated collaboration between Swatch and Audemars Piguet. Chaos ensued as crowd safety concerns forced nearly 20 stores to close and saw some timepieces resold for around 13 times their original value. Now, the frenzy underscores the challenges for luxury companies developing strategies for visibility and growth. So to discuss all of this, joining us now is the chief executive of Audemars Piguet, Ilaria Resta. Thank you so much for joining us. I mean, the anticipation buildup was actually quite extraordinary until the moment that everything was sold in store. In light of what we know now, could and should have Swatch handled this better?
Thank you for having me here, Francine. Indeed, we had a huge interest for this release that led to the launch date with many crowds outside the stores, and Swatch had to really manage real-time the operations on the ground to ensure that everything ran as smoothly as possible. with safety. Now I must say a week after the situation normalized, and we are very excited to reveal and continue talking about this bold and incredible collaboration with the Swatch.
It was certainly very, very bold and so very much anticipated. How much input did AP watches have on the launch? And did the images of people queuing and some of the chaoses hurt the halo effect, or do you think people will forget quite quickly?
Lisa, we see it already that our website received more than 10 times visitors that we have in a year in one day. We have sold out our master classes where we explain watchmaking, and very interesting and exciting, we have sold out all the visits at the AP Lab, which is a new format that we launched recently, where we explain watchmaking, where we engage with the new generations and explain our movement is assembled. And it's a very important part of our strategy of openness and connection with the new audiences, with intent really to create the love for watchmaking.
Why a pocket watch and not a wristwatch?
Indeed, the pocket watch was really to go back to the historical piece that started watchmaking long ago. And then we started playing with it because, yes, indeed, it's a pocket watch at the start, but also we like to see it on the neck, around the neck, as a pin, even on the hair, like it was the case when watches were invented. There was lots of creativity of use just outside of the pocket itself. And we love to see so much creativity for people that are creating new ways to use the pocket watch. Yesterday I saw it as a cover for the phone case. So creativity is really galore now.
I was going to ask you, what if somebody develops a way of putting the watch into a strap to make it actually a wristwatch? Would that bother you?
Well, everybody will do what they want, but indeed the intent for us was to bring time outside of the wrist and to play with the many ways to engage on the time. And for us, importantly, was really to put a mechanical watch in the hands of people who have never used a mechanical watch. We would love to see the crown being used to rewind. The watch is a manual movement, so after 90 hours of power reserve, it stops. So they need to use the crown to make sure it's winded again. And that's an important way for us to, in a way, teach the use of mechanical watches in a context where nobody needs a watch to tell the time. And we need to preserve this wonderful industry that over the last 50 years has been disrupted multiple times. And it's an industry that is anyway suffering a significant volume demand.
I mean, is there, first of all, is this program actually, continuing indefinitely, or is it a one-off?
It's a one-off that will be, though, continuing for a few months. That's why I invite really people to wait and not rush, because in the next months, these watches will be available.
I mean, Ilaria, it was very interesting hearing you say about, the volume and actually how there's a lot of scarcity for these really beautiful high-end products that you make. Is there a worry? I mean, how much do you think about, the risk of cheapening the brand because of some of these collaborations? I know you mentioned that you're trying to also appeal to a younger generation. It's a very fine balance. So how do you think about the two?
I think the biggest threat for watchmaking in general and for Audemars Piguet is irrelevance rather than broad availability. We will continue producing Audemars Piguet watches in the way we've always done, with an important component of hand design. This is critical. That's why we produce limited numbers. Our watches offer a completely different movement. We are investing in elevating the watchmaking watchmaking innovation. Actually, this very year we've launched the most complicated pocket watch in the history of Audemars Piguet with the universal calendar, which is a patented new movement. And the intent is really to continue investing and pushing forward the horological excellence. One other example on the other spectrum of this cultural relevance movement is everything we are doing to open up the doors to education. I'm a true believer that learn and love are connected. You need to learn what it is using a mechanical watch, what's behind the mechanical watch before we can love it and collect it. And that's been proven over and again when people come visit our manufacturer and they see the way we produce watches, the watchmakers' artistic abilities, and the time it takes to assemble the most complicated watches. They become collectors, they become fun. And we are really trying to use the opportunity to have a megaphone to talk about the wonderful craft of watchmaking. For us, the most important part of this operation, though, is donating 1% of the proceeds of this collaboration to support the watchmaking savoir-faire, especially the ones that are at risk of disappearing. And this is the biggest threat for watchmaking. It's an industry that has been disrupted so many times. 2/3 of the industry disappeared after the quartz crisis, and there are jobs, savoir-faire, expertise that can disappear. So we have created a fund using all the proceeds to support these artisans, and we will come back to you with more news about this operation.
It's really interesting, and also interesting to hear you talk about the fact that you don't think it's cheapened actually the name at all, but it's broadened how this is available and actually the imagination maybe of the youth. How have existing AP collectors been reacting to the collaboration with Swatch?
Well, many of them are in the queue to buy their Royal Pop, and of course they see very much the difference between the two words. Like is the high-end meeting an icon of the industry, Swatch, that saved the Swiss watch ecosystem back when it was created. And by the way, many of our collectors started their collection very young with a Swatch, and I talk about myself as well. So they see the coexistence is a playful collaboration, and actually what we see is an even higher interest on the Royal Oak. People have started learning the history of the Royal Oak, who, by the way, was itself, when created, a pioneer in provocation. It was breaking all the rules of the horological world by creating a case that was big for the time, and 39 diameters watch in stainless steel, when all the watches were in precious gold, precious materials. It was nicknamed Jumbo, so big it was. 20 years later, we launched the Royal Oak Offshore, which again broke the norms, in a way played with the cause of the Royal Oak. There was, of course, a big discussion about it because it was even bigger, and it was nicknamed the Beast. So Audemars Piguet is not new to continue the cultural conversation, to innovating, and what we keep saying, using a bit of grain de folie to make sure that we stay connected, especially with the younger generation.
Ilaria, I also wanted to ask you about how, we're seeing some of these watches actually sell online for thousands of pounds, so much more than the retail value. How does that make you feel?
Well, the intent we have is to really open up to the public, to make sure that people who want to get an access to a mechanical watch, Swatch, with some design cues of the Royal Oak can. We see already the market stabilizing. And again, I repeat that there is time for buy this wonderful collaboration in the next few months.
Ilaria Resta, thank you so much for joining us today. That was, of course, the Chief Executive of Audemars Piguet. We'll have to get you back on to talk also about some of the demand that you're seeing in the U.S. and elsewhere in the world for your AP watches. Now, Ferrari shares slumping as investors react with disappointment to the company's first fully electric car. The Luce costs $640,000. It can reach 100 kilometers per hour in 2.5 seconds, while supercar rival Lamborghini has delayed its first EV, highlighting how hard it has become for luxury car makers to persuade customers to part with the noise but also the physicality of combustion energies. Now, there is a lot going on in the markets. Again, the focus is really on geopolitics and some of the earnings that we've seen. Attention and focus will also be on what we see with AI and some of the spending that we've heard about in the last couple of days. Now, U.S. stock futures for the moment extending gains, treasuries rallying as investors remain pretty hopeful of an imminent deal to end the Middle East conflict. I'm looking at investors also weighing the outlook for the Fed policy as these elevated oil prices really start to fuel inflation concerns, for example, with the key treasury yield gap shrinking to its tightest level in a year. Coming up, Lockheed Martin's president of missiles and fire control is on Balance of Power. That's at 6 p.m. London time, and this is Bloomberg.
Astonishing day for U.S. technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation.
As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
City, 10 a.m. in London. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Renewed fighting. U.S. and Israeli jets strike Iranian vessels in the Strait of Hormuz, clouding hopes for a potential peace deal. Oil rebounding on uncertainty over the reopening of the strait. And elevated oil prices fueling inflation concerns, with traders looking ahead to PCE data later this week. Let's get a check on markets around the world now. Let's get to Winnie Su for the latest from Asia. Winnie.
Good morning, Bonnie. It's another positive day here in Asia as many of our markets reopened after a holiday. Here you can see the MSCI Asia up for a fourth day, and that is its longest of such streak in 7 weeks. Now, investors are mainly brushing off those concerns around the latest developments when it comes to the U.S.-Iran conflict, while keeping their focus pretty much still on that AI story. And hence, you're looking at how the South Korea's Kospi Index still driving gains today in Asia, up 2.6% to 8. Now, another fresh record. And we're also seeing some gains in the Chinese chip makers in Hong Kong, driven by these optimism around a potential breakthrough when it comes to Huawei's technology, which is likely going to help it narrow its gap with TSMC. And speaking of TSMC, you flip the board and take a look at how that stock, the rally in TSMC, as well as the AI boom, is really driving Taiwan's market cap to narrow its gap between with India's market cap, and now it has surpassed that of India's, up around 4.95 trillion US dollars, and making it the world's 5th biggest stock market.
An incredible statistic. Winnie, thank you so much. Winnie Su there in Hong Kong. Bit of a mixed reaction in Europe after, of course, some holidays yesterday across Europe. So, for example, in London, we're seeing stocks rise, but across the rest of Europe, a lot of declines for major indices, and that has the Stocks Europe 600 down about 1/3%. We're seeing demand for gilts and also treasuries coming back today. So you had stocks, as I say, in London higher, futures in the US pointing to gains as well. Andy Burnham coming out and saying basically he would stick to fiscal rules if indeed he is to become prime minister, and that seems to have calmed the market. But generally the market seems to be pricing in de-escalation still when it comes to the Iran war. Now you will see Brent crude higher, but that's because we dropped to just above $96 a barrel yesterday. It was down about 7% in Monday trading. Back up now, but still below $100 a barrel. Same thing for WTI. We're pricing here off Friday's close. Nevertheless, we're just about $93 a barrel right now, which is a far cry from where we had been in the heat of this war. We'll see how markets react to the latest strikes throughout the day. But as I say, futures are holding up. And if we take a look at bonds as well, with Kevin Warsh now in charge of the Fed and PCE data coming out later this week, we are seeing demand back for bonds. The 2-year yield at 4.06 and change, and the 30-year yield all the way back down to just above 5% now. In fact, the 2-10 spread at 44 basis points. That's a 10 basis points difference from where we were just a few days ago. All right, let's get to some individual movers now. Back over to London and Chloe Melly. Chloe.
Good morning, Bonnie. It's a huge drop for Ferrari this morning after unveiling its first fully electric car, which actually looks a lot like a Tesla. And so investors are questioning whether this is a move that makes sense for a company that is known, of course, for those very loud combustion engine sports cars with very specific look. And so we have seen a lot of criticism coming from analysts and from social media as well. And so that is really dragging down those shares for Ferrari this morning. Moving on to the space sector, and we are seeing those really extend the rally, the recent gains that we had seen in that sector since SpaceX kicked off its big IPO process. And so we are seeing that extension of that rally today with the likes of Redwire, MDA Space and Firefly all in the green in pre-market trading this morning. And finally, Elbit Systems is also in the green after winning a big contract. We've got a $1.4 billion contract for an unidentified European customer for a military modernization program. And so we're up very strongly on the back of that for Elbit this morning.
Chloe Melly, thank you so much. And coming up in this hour, we discuss inflation risks with Katrina Dudley of Franklin Templeton. U.S. and Israeli jets struck several Iranian vessels in the Strait of Hormuz hours after President Trump suggested peace talks were progressing. Here's what U.S. Secretary of State Marco Rubio said about the continued closure of the strait.
They need to reopen. What's happening there is unlawful. It's illegal. It's unsustainable for the world. It's unacceptable. I don't know of any country in the world that does. And the Russians are not in favor of a tolling system. The Chinese are not in favor of a tolling system. I mean, there's no country in the world that's in favor of a tolling system except the regime in Iran. So that's not acceptable. That cannot happen.
Let's get the latest now with Jumana Bersecci, anchor of Bloomberg Horizons Middle East and Africa. Jumana, the U.S. characterizing these strikes as defensive in nature, but we've had comments from the Supreme Leader as well. Where do we stand?
Yeah, well, things were looking a little wobbly this morning, Vonnie. And to your point, CENTCOM did actually say that they were acting in a self-defense capacity. They had struck, the U.S. forces had struck at certain Iranian assets. And here specifically, they targeted missile launchers and mine-laying vessels. Now, overnight, Iranian state media is saying that they, too, had fired at an unmanned U.S. fighter jet in addition to a U.S. drone. And so if you read the timing, perhaps that would suggest that U.S. retaliated in response to those Iranian strikes on the drone. Now, it could have torpedoed all of these diplomatic efforts that we were seeing over the last couple of days, but there are no signs as of yet that either side want this to escalate into something bigger. And to your point, overnight, we heard from the Iranian Supreme Leader. Very rare to hear from him. He did put out a message. Remember, this is, of course, the first day of Eid in the region, Eid al-Adha. It's going on for the rest of this week. He called on Arab and Islamic states to unite, but then he also issued a warning to the U.S. saying that any military bases in the region would not be safe and would be at risk. So another threat coming through there. At the same time, Secretary of State Marco Rubio heralding good progress in these discussions. We know that the Iranian delegation is in Doha today, in Qatar, the likes of the Speaker of the House, Mohammad Ghalibaf, alongside the Iranian Foreign Minister. Both of these individuals, key protagonists when it comes to prior rounds of discussions in Doha to further and to perhaps paper over some of the differences still existing between the two sides in the hope that we can get to a breakthrough. But I will say, Vonnie, once again, the matters that we're talking about here are still substantial. These are not easy matters that can be glossed over. When you talk about the fate of the Strait, Iran once again are reiterating that they want to impose tolls. That's something that's obviously not acceptable to the U.S. Iran are pushing for more sanctions relief, for the unfreezing of assets. A key sticking point there, because the U.S. probably won't want to give too many concessions on that front before they've sealed the fate of the nuclear file and what happens to that highly enriched stockpile. So still many matters to be resolved. Certainly this morning things look wobbly, but in the background negotiations continue.
Jumana, thank you so much. Much appreciated there, Jumana Bersecci. Oil rebounding on those fresh strikes on Iran after Brent fell more than 7% on Monday. Joining us now is Bloomberg cross-asset strategist Ven Ram. Then markets continue to price in de-escalation, but it's not as if there are any more boats going through the strait on a daily basis. So why the calm in oil markets?
Well, morning. I think that the markets are a bit too complacent here, particularly treasuries. I think that the oil market is kind of is catching up gradually to the reality. I think we are now almost nudging $100 a barrel, as you were saying earlier. But I think the most glaring pocket of mispricing is definitely in the front end of the curve in treasuries. I mean, at 405 on the 2-year, it doesn't look like the markets are pricing in the higher for longer scenario in oil prices. And I think that needs to feed through into consumer prices, as it will with the PCE data that's coming out later this week. And the Fed's dot plot for next month will definitely show an upward revision to those core PCE estimates, which then sets up the question, where does the Fed go from here? The natural path for the Fed is for higher rates, not to take rates lower. And I think that the markets are glossing over that reality. And as that reality starts to dawn on the markets, I think that front-end yields will push higher in the coming weeks.
Yeah, we unwound that trade, Ven, in the last few days, right? We were much higher on yields just a few days ago. So what changed? I mean, we knew Kevin Warsh was coming in. We knew he was going to get confirmed, and now he is. And so why is the market changing its mind on rate hikes?
Well, I think that there was a bit of scaling into duration, which set off the mood in the markets. I think that, at 520 on the 30-year treasuries, I mean, that's a level we haven't done for a long time. As they approached 520 last week, there was some pronounced buying, and that's what has taken the yields down, and that has reverberated through the rest of the complex. But I don't think, the way to go into this market is to nibble into pockets of opportunities in duration, but not at the front end and the mid parts of the curve.
Ven, can I ask you a question about currencies? Because we're seeing the yen continue to be above 159 today. We're at 159.20. We were there a couple of days last week as well. Euro also just a tiny little bit weaker after Isabel Schnabel said that there should be a rate hike for the ECB in June. What's happening across currencies? Are they reacting to the treasury trade, or is it slightly different in each jurisdiction?
I think it's a bit of a nuanced story in each region, Bonnie. I think that in the case of Japan, I think that, the investors are going to short the yen, continue to short the yen. It's the same old story that we have seen before. The neutral rate is much higher in Japan, and the Bank of Japan refuses to raise rates, as it should. when confronted with the inflation, which they are not doing. And as long as that gap remains between where the BOJ ought to be and where the BOJ actually is, I think that the yen will get pilloried in the meantime. So I think that it's a very speculative trade, and you're paid basically to go against the yen because the carry is just working against the currency. So it's a bit of a no-brainer to be short the yen.
All right, then. Thank you so much, Bloomberg's Ben Ram. We'll see how the rest of the week shapes up. Foreign ministers from the US, Japan, India and Australia meeting in New Delhi. The Quad Security Alliance is trying to rebuild momentum after a high-profile clash between President Trump and Prime Minister Modi. Let's get more with Bloomberg's Oliver Crook. So, Ollie, what have we learned from today's meeting?
So we had this format of the Quad, which is not something we've heard a great deal about over the last couple of months. So just a reminder to everybody that it's Japan, Australia, India, and the United States. And it's really sort of a format that has been developed to sort of be a counterbalance in the Indo-Pacific to China. And so you had this meeting and you had a press conference from the 4 foreign ministers, including Marco Rubio, standing shoulder to shoulder and announcing a couple of initiatives. The first was a maritime surveillance initiative that they will be launching collectively in the Indo-Pacific. The second is about sort of building out port infrastructure in some of the Pacific Islands based out of Fiji and then going out from there. But then also, I think probably most interestingly was something on plans on energy and critical raw materials, which is obviously something we're hearing more and more about. There's obviously a great deal of concern from the Quad countries, speaking to Marco Rubio about the impact of the energy impact and the war in Iran is having on their economies. And of course, thinking sort of longer term, this issue of critical raw materials, Vani, I think is very interesting because it is one of the areas in which we see with the Trump administration a willingness to engage on a multilateral level with a number of different nations. They've launched their own sort of Pax Silica program to sort of get the supply chains for critical raw materials. They launched at the end of last year. You hear a lot about it at the G7 level. This is an administration that is generally pretty allergic to these kind of ideas of multilateralism, but you hear this coming over and over again. And this was, again, one of the big conversations here among those Quad foreign ministers, how to secure those critical mineral supply chains. And again, all down to the concern with the amount of control that China has over that market.
Ollie, back to Ukraine and Russia. So the Russian Foreign Minister Sergei Lavrov apparently called Marco Rubio to advise him to evacuate U.S. citizens and diplomats from Kyiv. What does that portend for the capital of Ukraine?
Well, certainly people in Kyiv, the entire population, they will be bracing for what will likely be a very sort of hard attack from the Russians. We should say the Russians have been bombarding Kyiv very consistently, and in fact over the weekend as well, with a number of people having been killed. But we did get this statement out from the Russian Foreign Ministry saying that the strikes will be particularly striking decision-making centers and command posts, and due to the fact that those facilities are scattered across Kyiv, they're notifying foreign citizens, including personnel of diplomatic missions and international organizations, for the need to leave the city as soon as possible, is what they say. Now, the reason in the context that this is all sort of happening right now, this is in part reprisals from what we've seen from the Ukrainians being very successful in having some deep strikes within Russia. And of course, those strikes that really went into Moscow and really sort of touching the capital of Russia in a way that we had not seen that much throughout the war. This, of course, is the Russians trying to sort of regain initiative and sort of flex that muscle. But again, over the weekend, another thing, Vani, that we should be paying attention to, they fired another one of their mid-range hypersonic ballistic missiles, these Orishkin-class missiles. These are missiles that are capable of carrying, for example, nuclear warheads. Obviously, this one was not carrying that, but this is all part of the image that the Russians need to sort of continue to propel as they're sort of losing momentum on the battlefield, and also, again, just sort of threatening those populations over in Kyiv and potentially striking some of the government outposts there.
Okay, Ollie, thank you so much. Bloomberg's Oliver Cook there in Brussels. Now to other top stories trending on the terminal this morning. China restricts overseas travel for top AI professionals at firms such as Alibaba and DeepSeek. According to sources, individuals involved in advanced AI work now need approval before any overseas travel. China's move signals an escalation of efforts to safeguard strategic technology. Japan has slipped behind China, becoming the world's third largest creditor nation in 2025. Germany is in the #1 slot. Japan's leading position as a creditor nation over a period of decades has been cited as one of the factors explaining the year's haven status for the yen in the past. Ferrari falling after unveiling its first fully electric vehicle. The 5-seat model, priced at around $640,000, got disappointing reviews. The design was judged too similar to other electric models, with one analyst describing it as a mix between a Honda Accord EV and a Tesla 3. Coming up, bonus resentment. Internal tension at Samsung as a union tries to block chip employees from being awarded hefty bonuses. More next. This is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
It's the world's second-largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Bloomberg Brief, I'm Vonnie Quinn in New York. A Samsung union representing non-semiconductor division workers asked a Korean court to block voting on a deal that would distribute almost $27 billion in bonuses to chip employees. The union says last week's wage negotiations disproportionately favored the chip division. Matt Bloxham of Bloomberg Intelligence joins us now. So Matt, there was a little relief when the company did decide to pay out those bonuses so that there wouldn't be a strike. Does this scupper the potential for no strike now?
I think there's certainly that risk, but I mean, it's quite eye-watering. It said $27 billion of bonus payments, mainly to the chip unit, which would average about $340,000 per employee. And I guess the issue here is that the union that is challenging this, which represents mainly employees out of their DX unit, which is for the finished electronic items such as smartphones and TVs. Under the current deal, those employees in the DX unit would only get about $4,000 per employee. So stark contrast there. And anybody that works in banking will have probably experienced a bonus day where some units get pretty much all the rewards and they get nothing. And I guess this is the question about how evenly do you share the profits of a company between your employees. But it suggested it's disproportionate, but actually if you look at the profit that Samsung makes, it almost all comes from that chip making unit. So I think that probably the unions representing those employees have got a strong case that actually their employees are generating the profit, so they should get the bulk of the rewards.
Yeah.
But I'd be surprised if it gets blocked on this challenge.
Matt, can I ask you about this story that AI trainers are making $25,000 a day to teach Wall Street bankers how to use AI tools? So obviously, it sounds like a massive amount of money, but what is the context here?
Yeah, it's a big number, isn't it? But I guess if you've got 20 to 30 employees in a training room and you're charging $1,000 or so per employee, it maybe doesn't look quite so expensive. And I guess what we've got here is this big disconnect between the capability of AI that's available in pretty much every organization now and the ability of staff to actually harness it and be more effective and more productive in their jobs. And so, whether it's paying $25,000 to external trainers or deploying internal training resources, there's a huge huge effort now across every company to upskill their employees so they can really harness the technology and move forward and hopefully get an advantage for their company over others.
Matt, we have Chinese semiconductor stocks rising today, and it's on this prospect that they may actually be able to overtake TSMC. How likely a prospect is that, and what would it do to U.S. semiconductor makers?
Yeah, it's a good question. I mean, I think inevitably, China is gradually closing the gap on U.S. and Taiwanese semi and chip manufacturing capabilities. I think it's certainly something to watch. I think for sure TSMC is still going to be the predominant supplier of high-end chips to the developed world, the likes of Apple, for example. So I think this is kind of more about the kind of evolution of the China market, and also right now there's huge restrictions on how NVIDIA, for example, can sell into that market. So probably no big near-term implications for US chip economy, but it's definitely an interesting sign that China is fairly quickly closing the gap.
All right, Matt, so we'll keep an eye. Matt Bloxham of Bloomberg Intelligence. Coming up, the Wall Street Journal saying the risk premium for holding stocks over bonds has almost disappeared. A look at that and what else is making headlines in your front page news next. This is Bloomberg.
In case you missed it, on Bloomberg Crypto.
There's a debate going on right now in D.C. that I think folks need to start paying more attention to, and that is the yield. And the question really is, who is going to keep the yield? Who makes money off stablecoins? Well, right now, in the case of some of the large stablecoin issuers, there's a yield on those deposits. So when there's a dollar, for example, deposited in a bank account, there's interest paid on that dollar. And so who's capturing that yield? And I think one of the really interesting things about the Genius Act is that it bans so-called yield-bearing stablecoins from giving that yield directly back to consumers. Now, that's not true everywhere. And I think if consumers have a choice, why would a consumer want an institution to keep that yield? Or would there be sharing of that yield? So right now, one of the debates going on is, will rewards be allowed? And I think these are really important questions.
Don't miss Bloomberg Crypto, live Tuesdays.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg. Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up on the New York Times, the latest surrounding an unstable chemical tank in Southern California that triggered an evacuation of 40,000 people. Now, thousands were told they can go home overnight, with officials saying the risk of a large explosion has been averted. Next up on the Wall Street Journal, vanishing equity risk premium. The Journal says investors are piling into stocks at a rapid pace, but the equity risk premium makes them look as unattractive as they did after the dot-com bubble burst. And the Associated Press reporting on the New York Knicks' decisive victory over the Cleveland Cavaliers, earning them a spot in the NBA Finals. The Knicks will head to their first NBA championship series since 1999. This is your macro picture going into the first session of the week here in the United States after the holiday. Futures higher, the dollar index is bid dollar across various currencies, and then we also have a bid in treasuries as well. Across the curve, we're seeing yields decline.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Renewed fighting. U.S. and Israeli jets struck Iranian vessels in the Strait of Hormuz, clouding hopes for a potential peace deal. Oil rebounding after those strikes, clouding that outlook. And elevated oil prices fueling inflation concerns, with traders looking to PCE data later this week. So let's take a look at markets. Brent crude then looks like it's higher by 3.5%, but bear in mind it did drop 7% yesterday, so we actually closed at 96 and change in yesterday's session. We're back up to just under $100 a barrel, which is lower than we were last week, in fact, even in spite of these strikes in the Strait of Hormuz. We have futures pointed higher as well. Nasdaq 100 futures in particular looking to extend last week's gains, and S&P futures up 0.6% as well. If you look at the bond universe, you'll see yields down by 5 to 6 basis points across the curve. We're seeing a real bid now, particularly into the front end of treasuries, but that 30-year yield is also down to 5 and change at this point, 5.0202. So you'll watch for any pricing out of interest rate increases later in the year. Let's get to some individual movers now. Over to London and to Chloe Malley. Chloe.
Good morning, Bonnie. Ferrari is in the red this morning after unveiling its first fully electric car. And so the key question here is now, is a Ferrari still a Ferrari if it's quieter, if it doesn't have this roar of the combustion engine in it? Also, if it looks like more of a Tesla, really. And so we are seeing a lot of criticism coming from analysts, from experts, and from social media as well. And that is really dragging down those shares for Ferrari this morning. Moving on to space stocks, which are in the green in pre-market trading, extending recent gains, a recent rally which really started when SpaceX kicked off its IPO process. And so we're seeing an extension of that today with Redwire, MDA and Firefly all strongly in the green this morning. And finally, chip stocks with exposure to Asia are also rallying this morning on optimism over a potential tech breakthrough by Huawei. And so we are that would essentially close the tech gap between Huawei and TSMC and Intel. And so we are seeing that driving those shares this morning, and we are in the green for the likes of United Microelectronics and SEM Research in pre-market this morning as well.
Wow, some massive moves there, Chloe. Bear in mind, we are coming off a holiday too. Chloe, thank you so much. Chloe Malley there in London. So U.S. equity futures extending gains, and also treasuries rallying as investors remain hopeful. The latest American strikes on Iran will not derail talks to end the war. Joining us now is Katrina Dudley, Senior Investment Strategist for Franklin Templeton. Katrina, thank you so much for joining. So we have this, what looks like a de-escalation trade or a safety trade. Is that what the market is pricing in, that we will in fact get some kind of a reopening of the strait?
I think we need to get a reopening of a strait to actually show that we've got progress towards these peace talks. And I think some of the news overnight with what was happening in the strait, we're a little tentative about this. And why is this so important? Well, this is really feeding into inflation expectations. So, the higher energy prices, which have been driven really by the closing, are driving inflation expectations, and that is just having ramifications right down the supply chain.
Yeah, I mean, oil, the front month contract has been $30 more than it was before the war for 3 months now. How much longer can we withstand that kind of price increase?
That's the question, because when we were talking about it originally, we thought that this was going to be a very short war. We thought that the energy price hike or increase would be just a spike up and down, but it's been persistent, and that's the concern that we continue to have, because we're starting to see a little bit of fragility in the consumer. If we look at consumer inflation expectations, they're much higher than what the market is pricing in. They're looking at over 4% versus the market is pricing in around 3.64. So they are expecting that higher inflation. And why? Because when they drive up to the pump, like I did over the weekend, and I think most of the people who were driving over Memorial Day did, we got sticker shock. I don't think we realized how much gas prices had gone up, and you combine that with when you walk through the grocery store aisles and you see higher food inflation. So I do think that the consumer is really starting to feel inflation now. Before it was transient, now it feels a little more permanent.
So it seemed like the market priced in an interest rate increase, but there was that massive repricing just before last week. And now we've sort of undone that quite significantly. What is the market thinking?
So the market is actually considering unemployment, I think, is what is starting to come back into the narrative. So if I look at it, there's just so many balls that we're juggling up in the air. So we look at the war and we think about the implications of that. We're talking about deglobalization. And what does that mean? More jobs are coming onshore back into the United States. So that's positive. But offsetting that is this AI narrative and the AI capex boom that we're all talking about. We're looking at those, $800 billion of AI capex. And that obviously people are expecting to start driving potential job losses. So we've kind of got these competing forces at work, and whatever is winning the day is what's driving that narrative.
So I'm glad you mentioned, when Kevin Warsh walks into the FOMC and they start a debate, does he concentrate on that? Does he say, look, we need to keep this productivity boom going, let's lower interest rates or at least keep them on hold and make sure that this capex cycle continues and that companies are incentivized to, grow and to spend to grow? Or does he say, look, this inflation is going to eat the pocketbooks of American consumers, let's consider hiking.
So on the fact that we won't consider hiking is if you look at the 5-year forward expectations, we're down around 2.5 to 6. So that's closer to the 2 target. And we've always known that's a bit of a band within what they're looking for. So that's suggesting on a longer term basis that the market is pricing in us getting to that 2% level, which would suggest we don't need anything. You've also got to remember in 2025, we did have a couple of insurance cuts, as I would think about those Fed rate cuts. So that's on one hand, but you're exactly right. Do we need to have a few more cuts to stimulate the economy and offset this narrative of the decline in employment expectations? And so he's really got to balance these things, the inflation narrative, as you just talked about, as well as this full employment narrative. And I think that what we've seen over the last few years is this data dependency of the Fed, and I do expect that to continue under his leadership.
He's very concerned about the balance sheet.
I think we all are.
And I'm curious if that can actually help on the inflation front, if reducing the balance sheet, maybe at a faster pace, or maybe just putting the concentration on that side of things as opposed to the interest rate lever, if that actually improves inflation expectations, or if that's just not enough anymore. We don't really believe that that's enough.
I think really what's going to drive inflation expectation is unfortunately we started the conversation with the war, and we're going to come back to that. I really do think he's looking at food prices and energy prices, because when they're thinking about inflation, they're really thinking about how does that impact the consumer and expectations for the consumer. So I think that the inflation number that they're looking for is a little more consumer driven.
What do you say to investors that might be looking to get out of equities at these levels? I mean, we're seeing futures rise once again today, right? And into fixed income, right? There's been a repricing, as I say, we're looking at a 10 basis point round trip in the last 2 weeks. What do you do?
So if I take a look at equity market expectations, what drives markets is interesting. It is actually earnings growth. So the earnings growth expectations for 2026 are over 30%. It's been driven by a multitude of sectors. It's not just IT, it's communication services, but all of the sectors bar one are expected to generate positive earnings growth in 2026. And then if you look at 2027, when earnings growth normalizes, it's normalizing in the mid teens levels. It's around 16% earnings growth. And that strong earnings growth is what drives you and keeps you into equities, because it's earnings growth that drives markets. It's not as much valuation. So whilst people have been focused on valuation, it's never a reason to sell. And I think in this case, earnings growth is really supportive of those valuation numbers.
So in terms of the curve, are you seeing more demand at the front end or at the longer end? And, what do you tell clients?
In terms of what we're telling clients is balance. I think that's the way that we are looking at portfolios. And at the moment, I keep talking about the fact that we've got all of these balls in the air, and we keep, it's not really as directional of a market as you would like. Often, we've had situations and we've had points in time where we've sat back and we've said, hey, you've got to be all in on equity. So I look at, post the tariffs, we were looking at the market, we were looking at expectations, and we were like, let's go all in. And at this stage, because there's just so many competing interests, I'm looking at where we've got consensus among investors is this AI trade, which, as we've talked about repeatedly, we also have this kind of resiliency which is driving the narrative. But on the other side, we have this continued geopolitical turmoil, and that's concerning us, as well as these higher inflation rate expectations.
Katrina, always a pleasure. Thank you so much for joining us this morning. Katrina Dudley of Franklin Templeton. Now to other top stories trending on the terminal this morning. Ferrari shares falling after it unveiled its first fully electric vehicle. The 5-seat model, priced at $640,000, got disappointing reviews. The design was judged too similar to other electric models, with one analyst describing it as a mix between a Honda Accord EV and Tesla 3. China restricting overseas travel for top AI professionals at firms such as Alibaba and DeepSeek. According to sources, individuals involved in advanced AI work now need approval before any overseas travel. China's move signaling an escalation of efforts to safeguard strategic technology. The World Health Organization says Ebola is spreading faster in the Democratic Republic of Congo than responders can contain it. Deaths have climbed above 220 now. Health officials have warned that attacks on hospitals and unsafe burials are accelerating transmission. Coming up, renewed tensions in the Middle East after U.S. and Israeli strikes on Iranian vessels in the Strait of Hormuz. We'll have the latest. This is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong U.S. tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Welcome to Bloomberg This Weekend. I'm David Burke.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. U.S. and Israeli jets struck several Iranian vessels in the Strait of Hormuz just hours after President Trump suggested peace talks were progressing. Here's what U.S. Secretary of State Marco Rubio said about the continued closure of the strait.
They need to reopen. What's happening there is unlawful, it's illegal, it's unsustainable for the world, it's unacceptable. I don't know of any country in the world that does. And the Russians are not in favor of a tolling system. The Chinese are not in favor of a tolling system. I mean, there's no country in the world that's in favor of a tolling system except the regime in Iran. So that's not acceptable. That cannot happen.
Let's get the latest with Kate Ackley, senior reporter for Bloomberg Government. Kate, we keep hearing that there's progress in these quote-unquote talks, and yet we never actually hear what that progress is. Do we have any idea if there's any, movement even on some of the red lines from both sides?
Well, obviously here, this is one of those things where the actions are sort of speaking louder than words. We saw just after, really hours after President Donald Trump had said, they seemed closer to a deal. There was a lot of sort of positive indications coming from the White House over the weekend. And recall, of course, the president said he was skipping his son's wedding ceremony or wedding celebration in the Bahamas over the weekend to work on Iran and other really crucial matters. So we did see some indications that there was movement, there was stuff going on over the weekend, but then really just hours after that, we saw these strikes, in the Strait of Hormuz area, which, as you know, is that really crucial thoroughfare for oil and gas, as well as other, critical minerals and other things. So this, it's, again, all eyes on sort of what's actually happening, what we're seeing happen there in that region.
Yeah, there's, a characterization that this was defensive strikes, but there's also the possibility for this to escalate, it would seem. Domestically, we're seeing a Cornyn-Paxton battle today, another primary, this time in Texas. What should we be looking out for?
Well, this has just been a huge, big spending race there, this primary in Texas, for the Texas Senate seat. Senator John Cornyn, who's, been in the Senate for a couple of decades, more really, 24 years. We've seen $130 million plus spent on ads in this primary, which went into a runoff. Election day for this runoff is today. So really voters now get to make the decision. President Donald Trump endorsed Ken Paxton last week. So it was really kind of a last minute, late breaking endorsement. And we saw a lot of sort of a backlash on Capitol Hill to some of Trump's endorsements against sitting incumbents. Many of the Senate Republicans are, not in line with President Trump on this. They're backing Cornyn. So if Cornyn is to lose, we expect, again, this will prompt more of a backlash where Senate Republicans maybe sort of go their own way on policy issues and stymie the president's agenda on Capitol Hill. At least that's the potential that we're watching.
Well, it's hard to extrapolate, but it does seem that the president's endorsements have been doing well in primaries, and that perhaps the more MAGA-style voter comes out more during the primaries. Should we expect that today, or could Texas upend some of these thinking?
Well, obviously, it's up to the voters, but Ken Paxton goes into this primary, this runoff today, as the front runner. So the polling and the momentum that you can track publicly, voters obviously get the final say. We'll know later tonight, probably. But Paxton is the front runner going into this, and that's something that we've seen on the Democratic side. Democrats are almost cheering the idea of running against Paxton. They think they have a much better shot of winning this Senate seat in November against Paxton than they do against the incumbent, John Cornyn.
All right, Kate, thank you so much. Kate Ackley there of Bloomberg Government. Turning now to tech, a Samsung union seeking legal action to block a tentative wage deal that helped the company narrowly avoid a shutdown last week. The union says the deal disproportionately favors Samsung's chip division by awarding the workers almost $27 billion in bonuses. Matt Bloxham of Bloomberg Intelligence joins us now. So, Matt, it was a little bit of an eye-popping number last week. There was more than $300,000 of a bonus per employee on average, let's say, across the chip division. And you could understand how perhaps employees in other divisions were not too pleased with that. But do they have the potential to upend this deal in any way?
Yeah, my sense would be probably not. I mean, obviously, this is a big debate about how equitably you share the profits of a company. And as we've seen, Samsung's chip business does make the vast majority of the profits. So there's a strong argument there that their employees should get paid the most. And this is the smallest union that represents largely employees in the DX unit, which makes smartphones and TVs. So my sense would be probably a court isn't going to block this payout settlement, and that in aggregate employees across the business will vote in favor of the deal. But it does kind of show you the big skew you can get and just how much money the likes of Samsung are generating from the chip market right now.
Yeah, and it's a supply chain risk for U.S. companies as well, obviously, that use Samsung inputs. So then there's this other story about AI trainers making $25,000 a day to teach Wall Street bankers how to use AI tools. First of all, there's the $25,000 a day. Put that into context for us. Is that a big number? Is that a small number? And then the other part of that is, how many of these training sessions are happening, and how soon is AI just going to eat up all the jobs?
Yeah, I mean, it looks like an eye-popping number as $25,000 for a day's training. But I guess, if you're a specialist trainer and perhaps got 20, 30 people in a training class, then maybe $1,000 a day per employee isn't quite so eye-watering. And I think it kind of talks to this big disconnect we've got right now between the amount of investment going in to AI technology and the capability of that technology and the ability of staff across a whole range of industries to actually tap into that and improve their productivity. And that's really what I think management across a range of firms are looking to do, is kind of help their staff unlock the capability of these hugely powerful tools so that they can improve their personal productivity and the productivity and the competitiveness of their organizations so they can take a bit of a lead against competitors. And I think there's a lot of this training going on, a huge number of different training organizations, and inevitably if you can make $25,000 a day, more people are going to be looking to kind of tap into that opportunity. But yet there's a lot of training going on internally within organizations too.
Matt, I want to ask you about China's situation today. So we're seeing some of the chip makers do extraordinarily well, and then the likes of Xiaomi, getting hurt from the memory price increase that we've seen over the last year or plus. Just maybe you could summarize sort of the overnight movements in China tech.
Yeah, so I guess a couple of things going on here. Obviously we heard some thoughts out of Huawei that they're actually closing the gap on TSMC in terms of their move towards 1.4 nanometer chip technology, which they're now saying they'll have in 2031. TSMC expects to have that technology in 2028. So, still a gap there, but I think kind of a clear sign that Chinese manufacturers are developing technology and closing that gap on international rivals. I mean, I think in terms of the kind of the Xiaomis of this world, I think there's an interesting point here in terms of the rising input costs of memory and other chips. And if you're kind of playing more towards the kind of low to kind of mid price points of the smartphone market in particular, much harder to pass on those cost increases to your consumers in terms of higher prices. And I think we're seeing this squeeze across a lot of the industry. Apple to some degree shielded from that because it operates in much more the premium end of the market, where perhaps price sensitivity of their consumers is lower.
Yeah, it bears watching. Matt, thank you so much. A roundup there of all the tech news, domestic and international, overnight. That's Matt Bloxham of Bloomberg Intelligence. Coming up, the latest read on the consumer as we get inflation data and more retail earnings this week. We'll get you set up for your trading week. This is Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead this week. The Consumer Conference Board's Consumer Confidence Index coming out today at 10 a.m. New York time. We also get PCE data. That's on Wednesday. We get more retail earnings, Dick's Sporting Goods and Abercrombie & Fitch tomorrow. And on Wednesday, we get Gap, Best Buy and Costco for a read of the consumer. Tech earnings on deck as well with Salesforce tomorrow and Dell on Thursday. All right, let's have a look at some of your movers before the opening bell. Ferrari shares down. Now they're down about 3% after critics panned the look of its first fully electric vehicle with some really nasty comments in there about it looking like a Honda Accord and a Tesla 3. Very strange for Ferrari. Rocket Labs, well, this is among the space stocks that are rallying ahead of the SpaceX IPO, up another 5% today. You'll see it across the board with the space stocks. United Microelectronics, this is a story about exposure to Asia. So semiconductor companies with exposure to Asia are rallying today. Optimism over a potential breakthrough in technology by Huawei, just absolutely powering those stocks higher. Let's take a look at the macro environment before you head into your first trading session of the week. Well, it looks pretty positive, right? Even if we saw some strikes overnight. NASDAQ 100 futures just continuing the gains with S&P as well. And Brent crude, while it looks like it's higher, and indeed it is, the session, we did close yesterday down almost 7% at $96 a barrel on Brent. So we'll keep an eye on that price today as we see what happens with the Iran war. Well, that's it for Bloomberg Brief. Surveillance continues the conversation. This is Bloomberg.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
It's a market that is looking at reasonable growth.
People feel like they have to put money to work.
You stay diversified, you stay disciplined, and you get rewarded.
The market could get gut-checked here from momentum unwind.
Were it not for AI, this would be a very, very different story.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Tuesday, crude bounces, the U.S. striking Iranian vessels through the Strait of Hormuz. As the White House is calling it defensive, indicating talks are progressing well. It's leaving investors focused on a resolution and pushing equity futures higher, following the long weekend.
So what do we take away from this, given the fact that there have been actual strikes, yet at the same time we've been still talking about a ceasefire? It's that people want to believe that this has to resolve, and they're taking solace in the idea that it isn't escalating, even though there have been strikes, kinetic warfare. That said, when you take a look at the fine print, still so many questions, whether it's the nuclear, whether what's going to be agreed upon, whether the hard points are even being discussed, and what it means to reopen the strait with some payment, not necessarily a toll, but some payment that has to do with compensating Iran for safe passageways through the Strait of Hormuz.
Let's just park the price action just for a moment. The contradiction for everyone here, I think, is pretty clear. Talks are progressing well, apparently. Iran was laying mines, but we're reopening the Strait of Hormuz. Can you make sense of all of that
No,
this morning?
It's absolute confusion. It's also confusing when you hear the CENTCOM spokesperson in a number of statements to a number of news outlets basically say that this was defensive in nature. We want to hold on to the ongoing ceasefire. They are basically holding on to this ceasefire by a thread. And right now, when you see what is going on, going after the boats because the Iranians were laying mines and the Iranians going after F-35s, it doesn't sound like there's a ceasefire in place between Tehran and Washington.
The market had already moved on, and the market is itching to move on this Tuesday morning.
There is some validity to this, and I'll back the market for a hot second, saying that there were a couple of tankers that got through the Strait of Hormuz for the first time since February. You've seen a couple more trickle out. The fact that there hasn't been an escalation is making people have faith that both sides do not want to escalate, that they see it as more of a problem if there is a kinetic escalation. And people are looking at this and saying, feasibly, you have to have some sort of reopening at some point in the next couple of weeks. And that seems to be the excitement that people have. Is it clinging to too much hope? Yes. But that, I think, is what people are looking at.
All-time highs we're on track for this morning. Equity futures, a catch-up trade here, up by 0.6% on the S&P, on the NASDAQ, up by 1 full percentage point. Coming up this hour, we'll catch up with Steve Chevron of Federated. As Wall Street looks past renewed Hormuz hostility, Sarah Kunst of Clio Capital, as the OpenAI CEO, downplays the threat of a jobs apocalypse. And Salon Desire, Franklin Templeton, as Kevin Walsh vows to lead an independent Federal Reserve. We begin this hour with the U.S. launching fresh strikes on Iranian targets in the Strait of Hormuz. Bloomberg's Tyler Kendall joins us now from Washington. Tyler, you've got to explain where we are in these talks. Just where are we?
Well, John, at this point, it felt like that we ultimately had gotten signs of diplomatic progress over the weekend. You heard President Trump touting that they had good conversations towards a deal, but it does appear that the renewed fighting is now just underscoring how fragile this situation remains. Secretary of State Marco Rubio, speaking with reporters overnight, said that there have been multiple conversations, quote, back and forth, but that ultimately President Trump is only going to agree to a good deal or no deal at all, because this comes as you have been outlining on what appears to be renewed fighting between the two sides, as CENTCOM confirms that it conducted defensive military strikes near Iran's largest naval base, hitting multiple targets, including military launch sites, as well as these boats that were laying mines. And in response, we saw Iran engage U.S. drones and an F-35 fighter jet that entered into its airspace and is now threatening that we could see further retaliation for what it says was a U.S. violation of the ceasefire. That, of course, is raising the regional risk for our partners and our allies in the region that have been trying to urge this White House to reach a deal. We'll have to see how this ultimately develops from here, because the U.S. had been putting forward that we could be getting closer towards a memorandum of understanding. It appears that this would be a phased agreement where the ceasefire is extended, the Strait of Hormuz could be reopened, the U.S. lifts its naval blockade, but then we see those negotiations on Iran's nuclear program ultimately delayed. So, John, at this point, that's raising concerns, even from some Republicans here in Washington, that the White House could agree to this delayed deal for any sort of curbs when it comes to Iran's nuclear program and what happens to that stockpile of highly enriched uranium.
Tana Kendall with the latest in the nation's capital. Tana, thank you. Appreciate it. Here's the view on Wall Street this morning. Steve Chevron of Federated raising its year-end price target on the S&P to 8K, writing both sides of the Iran conflict need the war to end. When that happens, it will provide a favourable disinflationary tailwind, and the Wash Fed will likely begin a new rate-cutting cycle. Steve joins us now for more. Steve, good morning, sir. It's good to see you. How important has this phrase been for you and the team? If it can't happen, it won't.
It's probably been the most successful trade over the last 20 years, right? If the global financial system is on the verge of collapse this weekend, it probably won't happen. If a deadly virus is going to keep us locked in our homes indefinitely, it probably won't happen. I think this is another one of those scenarios. The world can't allow the Strait of Hormuz to be closed indefinitely. China can't afford that. Asia can't afford it. Europe certainly can't afford it. Politically, it's not a winner in the United States. If it stays closed indefinitely, it threatens the very existence of the Iranian regime. And I think that's why the market is looking towards some deal here. There's enough noise. Yes, there's aggressive negotiating, to borrow a Star Wars phrase. But what you've got going on here, we think, is the beginning of the end. And I think what it belies, though, is the more important story for the markets, which is that we're seeing something happening with earnings that none of us have really seen in our careers. The fastest margin expansion we've ever seen. And I think that's what's driving the markets higher.
The outlook for earnings has got better, not worse.
Yes.
We've heard a lot of people communicate that on this program. Has the risk-reward in equities improved, given the rally we've seen and the fact we're now basically at record highs?
Yeah, because, well, I think it has. So a couple of things. I think, one, you've rallied so far, but you haven't brought all the market with you, right? So this has been a story. It was, again, the recovery off the lows was very much on tech, and the concerns earlier in the year about software disruption, but also whether or not you were throwing good money after bad with the hyperscalers. You're starting to see cash flows grow faster than CapEx, which has given you comfort. The oil-sensitive parts of the market haven't participated yet. And so if you do get some resolution here, which we think eventually you will, you can start to see a rebound in the consumer, some early cyclicals, maybe even real estate, although I think that's probably a little ways off. You got to get the rate cutting cycle. So we think there's more market return to come. We don't think this has played out.
Just to build on what John is talking about, you could say the mantra, if it can't happen, it won't, right? The other mantra is you start to get in when policymakers start to panic. And because everybody has been buying and trying to avoid some sort of downturn, you have not seen the panic coming from some of the executive branch. Does that give you a bit of concern that there isn't going to be as soon an end to this conflict?
No. I mean, it really does. I'll give you a couple of reasons why. I want to get back to this earnings story really quickly. We're seeing margins grow at a 9% clip on a year-over-year basis. That has only happened once, and it's been between 1995 and 1999. You're seeing cash flows of the hyperscalers grow faster than their CapEx, and this is the biggest CapEx boom since the railroad. Those are two incredibly bullish underlying fundamentals. That's one. Number two, we're talking about a Fed that's likely to stay on pause, right? We're not talking about some kind of massive rate hike cycle, and we think actually they'll cut once you get past the Strait. And so here's the deal. With Trump, and I think we've seen this now over 12 years, when he's getting close to a resolution, you see a little bit more disarray. You see that last grasp for that extra bit of leverage, and that's what the market thinks is happening here.
Why do you think this Wash Fed so definitely is going to either remain on hold or start a cutting cycle when the market seems to A, disagree, and B, you're seeing inflation tick up, and C, you're seeing margins actually increase at the fastest pace ever, which is raising concerns about, are we even restrictive here?
So I think there's a couple of reasons why they'll be in that position. One, shelter prices continue to come down. Those are on a leg, and they're going to continue to be a disinflationary force. Two, energy prices, we haven't seen a big bleed through into core prices just yet. If we keep seeing oil prices here, you will. If this ends, we think you're going to see that pressure abate. So you're not going to have the energy price read-through excuse. And there are certainly parts of this economy, which has been our point for the last couple of years in criticism, of the PAL Fed, whether it's low, middle-end consumers, small businesses, some of the cyclicals that are rate sensitive that have been under pressure now for 3 or 4 years. And so we think with those, and by the way, the other element here too is wage pressures have eased, right? There's still low unemployment, but we're not seeing the same kind of wage growth that we saw. There's not that wage price spiral. So we think, look, not an aggressive cutting into something that is, easy policy, but a move closer to a neutral rate, which is probably 2 or 3 cuts over the next 18 months, is probably where the Fed would have been absent Iran, and we think that's where it'll go after Iran.
Steve, on Iran, inevitably it will end, you say, and I'm totally there with you. But when? Because the Iranians seem to have a lot more patience, and for them it's existential in a different way than it is for this White House, which is also facing down midterm elections.
So I think from the market's perspective, it already has. I mean, that was the market's conclusion a month and a half ago. I'm not saying that that's right or not, but the market has moved on as this being a primary concern, just as it did with Russia-Ukraine in 2022, right? That war's still ongoing, but it's not driving markets the way that it was. I think in terms of the end, look, I'm of all the things I pretend to be an expert on, war is not one of them. But I will say this, I think one of 2 things is going to happen here. Either you are going to get to a negotiated settlement, or this re-escalates in a way that really threatens the existence of that Iranian regime. And it's not just the United States. At some point, other actors in the world, like Europe and Asia, just can't have that straight close. So this doesn't end well for them if they don't make a deal.
But from a market's perspective, at some point, do they need to go back and say, it's not over, we can't look past this?
Well, I think you certainly would get to that point faster in Europe. That's one of the reasons why we moved more underweight Europe, because, the poor Europeans, after the Russian gas strategy failed, they said, gee, let's go to Oman. That hasn't worked out well either. I think one of the reasons that you're seeing U.S. stocks, particularly growth stocks and EM stocks, do best is they're the least dependent on this, right? They either have the United States has a domestic energy supply, or you've got a secular story that is bigger than just an oil price. I think the more oil-sensitive parts of the economy, Europe, parts of Asia, they've already seen that, and that's why they're lagging. That's one of the reasons why we don't favor those parts of the world.
Steve, if we do see a resolution, does that change? Does that spark that rotation people are looking for?
I think it does in the U.S. I don't think it does for Europe. If you look at Europe, what's been interesting is that they underperformed when the conflict raged, and then they underperformed after the ceasefire was announced as well. And I think part of that is the stagflationary concerns there are more real, and I think they have some other issues. Whereas in the U.S., you saw kind of sharp rebounds. I do think in the U.S. what you'd see if we got resolution here is value would reassert itself like it did in the first part of the year. I think small caps would reassert themselves like they did in the first part of the year. So I think you would see broaden out in the U.S., but I like EM better than I do developed.
Saw some of that last week with the small caps to the equal weight. Steve, it's good to see you.
Great to be here.
Thank you, sir. Steve Chevron there of Federated. Equity futures this morning, we got a bounce from Friday's close, up by 0.7% on the S&P 500, with an update on stories worldwide. With your Bloomberg brief, Yahara has more. Hey, Yahara.
Good morning, John. The ceasefire between the U.S. and Iran looking fragile this morning. The U.S. and Israel striking Iranian vessels in the Strait of Hormuz overnight, while Iran's semi-official Tasnim news agency saying the Islamic Revolutionary Guard Corps shot down a U.S. drone and fired at an American fighter jet in Iranian airspace. Russia is advising the U.S. to evacuate its citizens and diplomats from Ukraine's capital. The Interfax news agency says Foreign Minister Sergei Lavrov told Secretary of State Marco Rubio that Russia is launching systematic and consistent strikes on Kyiv. And we are seeing Ferrari shares plunging in Milan after critics blasted the look of its first fully electric vehicle, the $640,000 Luce. The 4-door, 5-seat EV drew negative reviews from analysts and those on social media, marking an early setback for Ferrari's controversial push into EVs. That's your Bloomberg brief. John?
Yahara, thank you. Thank you very much. The Luce sending Ferrari enthusiasts to a very dark place over the weekend. The irony not lost on anyone.
Yeah, okay, yes, but I have to say, I admire the craft here, and I admire...
Craft, okay.
Not for $600,000.
Please tell us more, Bramley.
Well, I mean, I'll hold some of my... I'm sure I'm just going to get iron. The engine, the way that they went trying to create that sort of visceral response that people have to the engine.
Can't wait for the Pharaoh rant.
They went and tried to amplify the noise of the engine, even though it was electric, to try to get that sort of revving sound.
Straws this morning.
There is a bucket somewhere, and in that bucket is cappuccinos after lunch, cutting up your spaghetti
after
and
10
putting
a.m.
ketchup on pizza. okay? And that belongs in that bucket.
Okay, wow, okay, how do you really feel?
More on that a little bit later. Up next on the program, that's the tease. Renewed fighting with Iran.
These incredible men and women gave their lives to ensure that the world's #1 state sponsor of terror will never have a nuclear weapon. Oh, and they won't. They will never have a nuclear weapon.
Stephen Kirk of the Council on Foreign Relations joins us next, live from New York City this morning. Good morning.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Live from New York City, welcome back to the program. A light slate of economic data for the week ahead, a shortened trading week. The main event, though, later on the week, PCE data dropping on Thursday. Look out for that. Read on the consumer as well at the same time. Earnings from Best Buy, Costco, Dollar Tree throughout the week. We'll report on some of those names for you as the week rolls on. Let's get to the price action for you. Equity futures, of course, pricing off Friday's close. A catch-up trade here stateside. Equity futures positive by 0.7% on the S&P, on the NASDAQ up by 1 percentage point. You see this move reflected in the bond market as well. 2s, 10s, 30s, yields pulling back. 10s now sub 450 at 449. WTI priced off Friday's close. Still looks like this. Down on the session by 4 percentage points versus Friday. If you price it off yesterday, which is what we can do with Brent, this price is in maybe just a touch of escalation overnight. Brent crude up by about 3 percentage points at 98.88. There is some escalation. At the same time, the market on net seems to be encouraged by the comments over the weekend.
The U.S. coming out and saying that what it was doing was simply retaliating, and it was defensive strikes against Iran. Over the weekend, however, both sides talking about how a deal is getting reached, how Pakistan was getting involved, Qatar was getting involved. Interesting to see some of the other regional allies of the United States being involved in some of these discussions. Everyone's trying to get a deal, and reopening the strait, as we heard from Marco Rubio, is non-negotiable.
Brent crude this morning higher by 2.9%. Under surveillance this morning, renewed fighting with Iran.
These incredible men and women gave their lives to ensure that the world's #1 state sponsor of terror will never have a nuclear weapon. Oh, and they won't. They will never have a nuclear weapon. We're having victories all over the place, more than we've had in many, many decades.
So here's the latest this morning. The US and Iran clashing near the Strait of Hormuz, even as both sides tout progress on a peace deal. Stephen Cook of the Council on Foreign Relations writing the Iranians will not give up their right to enrich uranium, and they want management over the Strait of Hormuz. Stephen joins us now for more. Stephen, welcome to the program. Let's run with those 2 points. They want to carry on, and they want the right to enrich uranium, and they want to manage the Strait of Hormuz. How do we strike a deal with them not backing away from those 2 things?
Well, that's exactly the point, is that the Iranians have remained firm that they have a right to enrich uranium. They have not given on that at all. Every time the president has said that the Iranians have agreed to something along these lines, the Iranians contradict those statements. It seems quite unlikely that they will give up their right to enrich. There might be some way to fudge a situation in which they enrich to lower levels than before. They move enriched uranium outside the country, but they will maintain that right to enrich. And then when it comes to the Strait of Hormuz, luckily for them, the president launched a war on February 28th, and they now have control or partial control over the Strait of Hormuz in a way that they never could have dreamed of before. It seems unlikely that they're going to give it up. They said that there would be no tolling of the Strait of Hormuz, but there certainly would be fees for service for shipping going through the strait. So I don't think we're as close as the president and others would suggest, without either the president capitulating or the Iranians capitulating, and it doesn't strike me that the Iranians are in a position or willing to capitulate.
So basically, Steve, the same thing, just different branding. Would you assess that this morning we are still in a ceasefire?
Well, I think the president and others would like you to believe that we're still in a ceasefire, but obviously the United States and Iran are on a hair trigger here. The Iranians apparently threatened U.S. forces and even fired on U.S. forces, and the United States responded. But this is not a return to the kind of high-intensity combat that we saw throughout March. Clearly, the president is shying away from a major escalation and is looking for a diplomatic way out. But the Iranians aren't going to let him do that. They have an enormous amount of patience, and they have inflicted a lot of pain on their population, and they're willing to continue to inflict that pain in order to push the president into a humiliating capitulation.
What was interesting over the weekend is in one very long Truth Social post, the president talked about Saudi Arabia and Qatar and how these countries should be joining the Abraham Accords. Is there any room for that to wrap up this conflict?
It seems like the president is aware of the criticism of the deal that's on the table, at least what we believe the deal on the table might be, and is trying to make it look better by saying that it will simultaneously come with an expansion of the Abraham Accords. But the Saudis have held firm and said that they will not normalize relations with Israel until there is an irreversible path towards a Palestinian state. The Qataris have said that they will deal with the Israelis, but only in terms of resolving the Israeli-Palestinian conflict. So it doesn't seem to me that normalization is actually on the table. The president is just trying to sell this deal in a way that will make it more palatable for the Republicans in the Senate and others. But I don't think anybody really believes this normalization is on the table.
Stephen, you said they're more palatable to Republicans. This is what's interesting to me. Is that part of the issue? Is it more palatable to Israel? How much is the break between both President Trump and the Republicans in his party, as well as Netanyahu in Israel?
Well, it seems that there's a rather significant break between Israel and the United States. That's to suggest that the Prime Minister has come to the conclusion that there's really nothing that he can do with regard to the president's positions on Iran, and that Israel will have to take matters into its own hands. It has consistently said that whatever ceasefire the United States or whatever agreement the United States and Iran come up with, Israel will not necessarily be a party to it with regard to the Lebanese front and Hezbollah. The Israelis have been taking a lot of fire from Hezbollah. Hezbollah has been using these wire-guided drones to which the Israelis had very little defense. So you're seeing Israeli soldiers killed day in and day out. The Israelis just can't give it up there. When it comes to the Republicans in the Senate, there's been a lot of criticism from those senators because the deal looks like it gives the Iranians very significant sanctions relief, the ability to sell oil, which removes a significant amount of leverage when it comes to trying to press them to end their nuclear program.
The more you talk, Stephen, the more I'm at a sort of cognitive dissonance between the two Steves this morning. We had one Steve coming on saying if it can't happen, it won't. It's not going to be an issue in a couple of months. Everybody needs a Strait of Hormuz open. Then you come on and you're saying essentially that it seems like we're pretty far apart. How do you reconcile where the market is and where negotiators are?
Well, I heard your interview before I came on, and I think this is something that's been happening in the markets from the very beginning, is that there is a belief that there's some magic formula that's going to open the Strait of Hormuz. I was on with you all in April at the time of the IMF World Bank meetings, and I think there was an expectation that the Strait would be open in a matter of days. I hated to throw cold water on that at the time, but it was going to be months before this issue is resolved. Perhaps the president will, as a result of these strikes, will have instilled a little bit of flexibility in the Iranians, but so far the Iranians are hanging quite tough.
We were told that Friday, April 17th, the Friday off that week down in Washington, D.C., the Strait would reopen, and then, Lisa, the Strait did not reopen that weekend at all.
What's fascinating is we've gotten these head fakes again and again and again, and instead of being benumbed by them, markets welcome each one. Oh, good, it's nice talk that we're going to get. Let's breathe some life into it, and it's because of what the first Steve said, which is if it can't happen, it won't, and that's been the winning trade.
Stephen Kirk of the Council on Foreign Relations. Stephen, good to see you, sir. Thank you very much. The pressure's not coming from the market, that's for sure. Equities close to all-time highs and crude backing away.
The only issue I have was with the idea that if it can't happen, it won't, was that's what everyone in Washington, D.C. thought about the Strait of Hormuz being closed for even this long, that the Iranians would never go there. That's what everyone thought about Russia's invasion of Ukraine. They're too tied into Germany, the Europeans, the global economy, that they won't do it. Guess what? Sometimes in geopolitics, they're thinking about this a lot differently than the markets are or even this White House are.
And yet the stock price and the stock market still goes up and to the right on every chart I'm looking at over that period.
And people say it's the earnings. People say, look, we've been able to exist this long. And you know what? We're going to close our eyes, la, 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 and buy. I'll avoid some of the oil-sensitive stocks.
Up next, we'll catch up with Sarah Kunz, the Clio Capital, as top CEOs downplay the risk of an AI jobs apocalypse. Plus, we'll close our eyes when we look at the latest car coming out of Italy.
I'm in a bucket with cappuccino and cut up spaghetti.
By 3%.
Ooh.
From New York. You're watching Bloomberg TV.
About 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, But when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Three-day rally on the S&P 500, leading to an 8-week winning run on the S&P this morning. Futures bouncing by 0.75% on the S&P, on the Nasdaq up by more than 1 percentage point. Playing catch-up following the long weekend. In the bond market, same story. Yields down across the curve. 2s, 10s and 30s. 2s down 6 basis points to 4.05%. Priced off this move on WTI, pricing off Friday's close. WTI this morning down by around 5% to 91. Let's call it 92, just about.
Because people uttered the word ceasefire once again, and everyone got very excited. There was a sense that we were getting close. It was coming from both sides. We have seen an escalation in some of the violence. That said, it seems like there is some oil and some natural gas getting through the strait, and there have been increasing reports of that happening. So somebody's saying, how closed is the strait? It is, getting a little bit open. I'm trying to reconcile the two Steves. I'm not doing a very good job.
I hear you, but I also hear a lot of people who are confused. Told repeatedly over the weekend that we're closer to a deal, that will reopen the Strait of Hormuz, and at the same time, we're bombing vessels who are laying mines through the Strait of Hormuz that we're about to reopen to allow the free flow of energy in the Middle East.
It feels like the most extreme version of a carrot and stick approach. The talk sounds like they are moving forward, maybe baby steps, but moving forward, and we saw that throughout the entire weekend. But then what we actually saw on the ground, not what people are talking about, what they're doing, is that we are seeing kinetic warfare back again, even though they are saying that this is defensive in nature and they are clinging on to this idea that this ceasefire can hold.
The only way to make sense of this really is that Iran's version of this deal, this free flow of energy through the Strait of Hormuz, is through the path that they want everyone to go through, which is why the mines are being laid. Now, if the US has signed up for that, there's going to be a lot of questions about the kind of deal that they're about to sign.
Yeah, which is the reason why Republicans have really been pushing back and saying, hold on a second, this allows Iran to have quite a bit of power. If it's too confusing, it can't happen. Just look at earnings, John. Just look at earnings.
Earnings are great.
They're good.
Stocks are up and to the right.
So what's the problem?
All-time highs. There is no problem.
Clearly.
Equity futures this morning up by 0.8%. No problem in this equity market, that's for sure. Let's get you some single names. Some problems in Italy, some morning movers. Yahira has more. Hey, Yahira.
Exactly, John. And for that reason, we are seeing Ferrari shares plunging over in Milan, down 6.3% after it unveiled its first fully electric vehicle. And the early reviews are pretty brutal for the $640,000 car. Looking through analyst notes, one saying that it is far worse than he expected, and even calling it a cross between a Tesla Model 3 and a Honda Accord EV. Not something you want to hear if you are the iconic Ferrari brand. Turning to Dell, those shares are rising some 4% in the pre-market, headed for a fourth straight day of gains as investors lean into the AI infrastructure trade just ahead of its earnings on a Thursday, and part of the optimism coming from strong results from Lenovo on Friday, fueling bets that Dell could once again raise its guidance on strong AI server demand. And we end on Sweet Green. The salad maker shares are up 7.5% in the pre-market after jumping nearly 9% in the last session on an upgrade by analysts over at JP Morgan to overweight, saying the company is focusing less on robotics and more on menu items that people actually want, pointing to the success of their new wraps. That's John.
Yahira, thank you. Appreciate it. Thanks for the update. More from Yahira later this hour. On a radar this morning, the US holding firm on its demands for Iran. The Secretary of State, Marco Rubio, saying the country must reopen the Strait of Hormuz.
They're going to be open one way or the other. So they need to be open. What's happening there is unlawful. It's illegal. It's unsustainable for the world. It's unacceptable. The straits need to be open, unimpeded, without tolls. And And obviously that needs to happen immediately as soon as anything's agreed to.
Rubio adding it could take a few days to reach a deal following fresh US strikes in southern Iran. Elsewhere, China announcing new restrictions on overseas travel for its top AI talent. Sources telling us here at Bloomberg that professionals for firms including Alibaba and DeepSeek are among those who now need additional approval before leaving the country. And finally, the Goldman boss, David Solomon, downplaying AI's impact on employment. Solomon writing in the New York Times that while artificial intelligence will create disruptions, the US will see a revival in productivity rather than a job apocalypse.
To me, it was interesting that he wrote this in the first place. CEOs are trying to get out front of a message that's getting increasingly unpalatable to college students and, frankly, to rank and file across the country, talking about how, yes, this could be problematic given some of the transition that we saw during the Industrial Revolution, but then going on to make the argument that you made last week, John, which is that overall the quality of life has improved going back to the 50s or the 40s or the 30s, and can't we just lean into that? And down the line, there'll be more jobs that get created. Whether or not this is true, he even put a caveat in there. If this isn't true, we should probably retrain people pretty quickly. But it gives you a sense of where the PR push is right now, given the fact that all of the corporate executives are investing in this. They say this is the future. Now they have to get everybody on board.
It's interesting that he also wrote this at a time when he just gave a speech about this. It doesn't seem like his house EDM track that he played for the Wharton Business School students actually worked, because it was dead silence after he played that at that commencement speech. What I found interesting about this opinion piece is he talks about this potential greater speed public policy must respond. And right now what you see is a deregulatory push in Washington, D.C. when it comes to AI. And at some point, there is going to have to be a policy response if you're getting the types of reactions you're getting at college campuses.
It's an interesting essay. There's a line in it that jumped off the page for me that when I was a first-year banking analyst, something as simple as making a graph of a stock's performance used to take 6 hours. Efficiency. But is this about increasing efficiency or is it about replacement? And that's the debate that everyone's having right now. Cost is going to be a big factor in all of that. There's also belief. What do you believe? What do you believe is true coming out of the C-suite right now, particularly after the comments of Bill Winters of Standard Chartered just a week ago? Is that the real version of the actual conversation taking place on Wall Street? And is this the version that maybe they'll be pushing in the months and years to come?
Especially as their staff contracts and as you start to see greater efficiencies there. Yes, there might be more people working in data centers to build them and construct them, but there's not exactly crossover. And that raises, again, the point of retraining and how you sort of adapt people's who are accustomed to certain lifestyles of a certain paycheck moving elsewhere. You're going to hear more CEOs talking about this. The real issue is we just don't know. And when you talk to a lot of them, they don't know either, at least when they're not on a podium.
Let's build on this. It is the great debate on AI unemployment. The OpenAI CEO, Sam Altman, downplaying a jobs apocalypse. The Anthropic co-founder, Chris Olah, telling the Vatican AI could replace labor on a, quote, very large scale. Sarah Kunz, the Clio Capital, writing, we can assume that for any Anthropic position, OpenAI will have the opposite. The reality is somewhere in the middle. Sarah joins us now for more. Sarah, welcome to the program. You heard us talk about that essay from David Solomon of Goldman Sachs. In that piece, he talks about two different versions, either a jobs apocalypse or a massive increase in efficiency that we all benefit from. Sarah, how do you see things playing out?
I think a little bit of both. There will be, and we're seeing sort of this white collar recession at a time where cost of living is also sky high. And so not having a job is a much more expensive proposition than it used to be, or being underemployed is a much more expensive proposition than it used to be. And so there's a lot of nervousness, and there are a lot of jobs that do seem like they are trending towards we need less of them, whether that's sort of the paralegals, the front-end web developers of the world, what has long been thought in sort of this last generation as a solid kind of entry-level white-collar job is disappearing.
That said, to the point that John was making earlier, we are seeing a real transition right now. We are seeing this sense that people are getting replaced, and this time could be different. And this is what people talk about, that you're replacing true intelligence rather than, say, just functionality when it comes to Excel spreadsheets or Google searches. Is this time different when it comes to the revolution in jobs?
I think that we're replacing the ability to sort of do things in an automated way. And we have built a lot of our industries on having people who sit there and do that sort of same thinking again and again and again. I don't think that AI replaces true intelligence, creativity, but there's also a lot of jobs that don't necessarily require that day to day. And so what do we do with those people, especially in an economy like the US, where we don't have, single payer healthcare or a huge sort of way to give a social safety net at scale to working age people?
How much are discussions around part of the white-collar workforce going away justifying the spend that a lot of CEOs are making on this technology, and frankly justifying the roadshows that the OpenAIs and Anthropics have out there for IPOs?
Those are two super different questions, right? Because we've seen a bunch of research that comes out that says when you put AI into a company, a lot of times you're not necessarily getting a tremendous amount of gain overall. We know that there are companies where engineers are being incentivized by a leaderboard of how many tokens they use. So they're building little vibe coding apps to just sort of burn tokens. They're making videos of their mom every day or something just to kind of burn all of that to sort of be managed by that metric. That's not efficient. That's not adding efficiency. That's not great spend. However, those tokens being used is very, very, very good for the Anthropics, for the AIs, for the OpenAIs, and even the SpaceXs who want to IPO based on that story.
Sarah, all those three names, you say it's unlikely all three will find a warm reception. Who's not going to find a warm reception when they IPO?
I think it depends on timing. I suspect that there are crazy levels of internal discussions happening right now of, do you want to be the first? Do you want to be the middle? Do you want to be the last? Last to IPO, generally, that can be a really tough position because people have kind of placed their bets. The hubris has died down. You start to get the doubts, and you never know what's going to happen in the rest of the world. We live in very interesting times, but first can be a little scary too if you mistime it. And it's hard to time being the middle when you don't know when the other two guys are going. And so I suspect there's a lot of jockeying behind the scenes to figure out when should we IPO. And I would not be surprised to see them do it a little bit kind of on a very short notice where they file, they go because the window feels open, the moment feels right. It's a little bit like taking off in a spaceship.
Sarah, though, when I'm looking through your notes, it does sound like you don't really love OpenAI. You're a little bit scathing on this company. Why?
I think that we've seen that this is a bit of a ship of Theseus, right? Most of those initial founding technical co-founders are now at Anthropic, or they have, in the case of Ilya and some of those other guys, their own sort of neo labs, right? And so the technological excellence that built this company is no longer there. We've found out a lot about Sam Altman over the last few years. It's not normal to get fired or attempted to be fired from every single job you've ever had. And so it's a little bit concerning when you look at that track record that we now know and say, yikes, why doesn't anybody like this guy? Why don't people stick around? Those are relevant questions for the CEO of a publicly traded company, except he's also pretty, indifferent on whether or not he actually wants to be the CEO of a publicly traded company. So if you are building your hopes around Sam, one, why do you think this time is different? And two, is he actually going to stick around? And I think those are both huge, although slightly opposite questions.
Some of those questions were asked of Mark Zuckerberg, though, Sarah. I remember the IPO, the roadshow when he was wearing the hoodie. A lot of people were asking questions about whether this was the right guy to run a public company, questions about the origins of the platform to begin with back in his days at Harvard. How is that any different to Sam Altman over at OpenAI?
I mean, look, I think that being a little bit sketchy when you are a 19-year-old and then going on to build a company that, remember at the time, right, we had Sheryl Sandberg, we had all of these sort of adults in the room, as we sometimes call them in venture, who did have a lot of that deep corporate experience that people trusted because it felt like, hey, maybe Mark's not necessarily the guy for the job. And those people broadly had a lot of sticking power. Whereas you look at Sam and you say, okay, this is somebody who's in midlife, mid-career. This isn't sort of a youthful indiscretion. This is just kind of who he's been. And he has a really hard time keeping executives. That revolving door of OpenAI is moving fast.
Fair point, Sarah. Appreciate it. Thank you. Sarah Kunz there of Clio Capital on OpenAI versus Anthropic, and two very different visions of the future. Let's give you an update on stories worldwide this morning with your Bloomberg Brief. Yahara has more. Hey, Yahara.
Hi, John. The head of the WHO will visit the Ebola-hit Democratic Republic of Congo today. The number of confirmed deaths in the country topping 200, raising fears of a wider regional spread. A Samsung labor union is trying to stop a vote on a bonus plan that would give nearly $27 billion to the company's chip workers. The union says the deal unfairly favors Samsung's semiconductor division over other employees. And in sports, the Knicks are heading back to the NBA Finals for the first time since 1999. New York sweeping the Cleveland Cavaliers in their 11th straight playoff win. They'll be taking on either Oklahoma City or San Antonio in the finals, which tip off on June 3rd. That's your Bloomberg Brief. John?
Yeah, Hara, thank you. Thank you for the update. They just don't lose.
It's amazing. They literally just don't lose. And what's so great about this is that the Spurs and Oklahoma are now 2 for 2. So they're just going to exhaust themselves while the Knicks get to rest, get to practice, stay focused, locked in.
Show us the money. What's the price for a ticket?
Oh, my God. One ticket.
What's the
and I've been
price? Cheapest price?
Something a little bit north of $3,000. That's nosebleeds. One ticket is going for more than $500,000. If
World
anyone
Cup.
needs a +1, I am available.
The World Cup looks good value.
I mean,
right
honestly,
now,
that looks
right?
like a nosebleed seat for the World Cup. And frankly, they've done the World Cup before 1999, or since 1999.
Up next on the program, backing Fed independence.
Honestly, I really mean this. This is not said in any other way. I want Kevin to be totally independent. I want him to be independent and just do a great job.
Up next, we'll catch up with Sonal Desai of Franklin Templeton from New York City. This is Bloomberg Surveillance.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start on the third floor or the lobby. You actually have to start in the basement.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Equity futures on the S&P 500 positive here by 0.7%, on the Nasdaq 100 up by more than 1 percentage point this morning. After closing for the long weekend, we reopen with Russell futures higher by more than 1 percentage point. In the bond market, yields pulling back, particularly at the front end of the curve. We're down by 7 basis points on twos to 4.05%. Under surveillance this morning, backing Fed independence.
Kevin will restore confidence in the Fed, which is so important. Honestly, I really mean this. This is not said in any other way. I want Kevin to be totally independent. I want him to be independent and just do a great job. Don't look at me. Don't look at anybody. Just do your own thing and do a great job.
So here's the latest this morning. Fed Chair Kevin Warsh preparing for his first full week as the head of the FOMC. President Donald Trump easing his calls for interest rate cuts as traders raise bets for a possible rate hike. Sonal Desire, Franklin Templeton writing, with the energy shock feeding into headline inflation, rate cuts are off the table. Sonal joins us now for more. Sonal, welcome to the program. If rate cuts are off the table, are rate hikes on the table?
So, hi, John. Thanks for having me here. But I would say that rate hikes are on the table in certain circumstances. I think 4% headline inflation at this point is almost baked in the cake for this year, just because of where oil prices are and the elasticities associated with it. But I think if we were to see headline inflation actually start veering not towards 4 but closer to 5, yeah, I think rate hikes are on the table. I don't think that happens this year, by the way.
It was funny to know, when do you think that will happen?
If it happens, it depends on how long these oil prices remain in place. And if it were to happen, it would be next year, I think. This year, I think that even if the conflict were to resolve in the next week or 2 weeks, I still don't think that oil prices come down significantly below something like, say, 80. And that's enough to get headline up towards 4.
Sonal, an increasing number of people are questioning whether we actually are at neutral or above neutral. Michael Darda from Roth Capital Partners over the weekend. What if the Fed is actually below neutral? Matt Lazzetti of Deutsche Bank coming out with a piece called Overinsured, where he talked about the 175 basis points of rate cuts, saying maybe they went too far. How much are you sympathetic with these views?
Well, I've been saying that the neutral rate is closer to 4 than to 3 for about 2 or 3 years now. So I'm happy to see more people coming around to this view. But I completely agree. I think Jay Powell has described policy repeatedly as being moderately contractionary. And I would see it as being moderately expansionary. And I think 4% is probably closer to where neutral is. Between productivity growth and the Fed's own inflation target, I don't think you get to 3%.
If that's the case and all, then you might want to buy the long end of the yield curve if you believe that the Fed is actually going to respond to some of this pressure with a rate hike. Is the signal that you're taking from the market that there isn't a whole lot of faith that there will be some sort of hiking cycle, even if inflation remains elevated?
So here's the thing. Inflation has been elevated. For 3 years now, the Fed has been 50% above its inflation target, and the Fed has cut, over that period of time, close to 200 basis points. And therefore, we actually have a very dovish Fed. And I think the market is perhaps coming around to that viewpoint, regardless of who the Fed chair is. I think we have a very, very dovish Fed. We've always had one. And I would say that if we look forward, I don't think the market currently is pricing in realistically what long-end yields would be. I think 475.5 is probably closer to fair value. I think this is not yet the time to go all in on long-end yields. I think we're going to range trade a little bit, but the drift over the next several years, I would say, is probably upwards. It's not downwards.
So no, it's a great point, because many people probably argue that actually Jay Powell, who was another Trump appointee, could be even seen historically more dovish than Kevin Warsh. Kevin Warsh, when he was signing in, his swearing in on Friday, and then also gave a little bit of a speech, said he's going to lead, quote, with energy and purpose, just the way Chairman Greenspan did. Can you glean out what kind of Warsh Fed we're going to see?
I think an orthodox one. I hope to see an orthodox one. It's been close to 20 years we've had completely unorthodox policy from the Fed. The first go-to is quantitative easing. That is very, very unorthodox monetary policy. The Fed should not be engaging in the long end of the yield curve outside true crisis. And it is true that they've come in several times when there was a crisis, but they remained in for much longer than any crisis would indicate they should. Therefore, I think if I think about Greenspan's Fed tried to push markets into valuing risk more appropriately. The Fed did not bail us out. If long-end yields were surprisingly low over the Greenspan era, I think it had a lot more to do with what was going on in China, petrodollars, the savings glut. And since the crisis, the global financial crisis, what we've actually seen is a Fed which is almost led by markets. Everything that's gone on the long end of the yield curve seems to be driven less by the economy and much, much more by Fed action, intervention, in a part of the yield curve it actually shouldn't be present in.
Some people might say the toothpaste is out of the tube. Do you see it differently? Do you think we can go back to where we used to be?
No, I don't think we can go all the way back near term, but I do think over the next 4 years, I don't think Kevin Walsh is coming in and I don't see him shaking up markets by immediately trying to reduce the size of the Fed balance sheet. But over the next 4 years, I do think we'll see a more sustained move in that direction, in the direction of reducing the size of the Fed balance sheet. It is enormous. I don't think that he's looking for the financial instability that an overnight return to...
But let's say he goes in that direction. I'm not saying we get back to that place, but let's say he goes in that direction. Do you want to own those assets on that balance sheet?
Eventually, yes. But before that, we're only talking about monetary policy in isolation. We need to see what's going on with fiscal policy here. And that's another piece of this puzzle, and it's not a good one. And that's a part of the reason that I would not be jumping in to buy long-end bonds at this point. I think between inflation, between a return to hopefully more orthodox monetary policy, and a continued fiscal profligacy in the US, I don't see a reason to go all in there and own long-end bonds. I think you could opportunistically go in and come out, but I think over a medium term, long-end yields are going higher.
No, thank you. Appreciate it, as always. Sorry to add there, Franklin Templeton. I was going to say earlier in the conversation, it's funny that we were all focused on the White House on Friday, but the real headlines of the Federal Reserve were made in Frankfurt with Governor Waller really pushing back against the easing bias over the Federal Reserve.
Seems to join the dissents, which a lot of people are taking as just confirmation that the move away from the easing bias. That said, this is a dovish Fed. And how much do they have to be based on the deficit versus GDP? And that is what a lot of people are focusing on.
Incredibly dovish Fed.
Correct.
Before Kevin Walsh even got there.
Correct.
Up next on the programme, Leslie Marks of Mackenzie Investments, Henrietta Trays of Vader Partners, Calvin Say of BNP Paribas, and the former New York Fed President, Bill Dudley, with some things to say about where rates are right now. From New York City, the second hour of Bloomberg Surveillance. Up next.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
As an exchange, what can you do to make it more attractive to be a publicly traded company?
Talk to our customers. We spent a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies to really focus on structured reform to allow a company to tell their story in the most efficient way possible and reward them for the good disclosures that they are making in the market.
Is there any sort of financial innovation that you could drive to get more companies to list? Tokenization has come up.
Well, we did announce our tokenization initiative earlier this year. We already built the technology, we've already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into that electronic form, but is going to be a platform that runs in parallel to our more traditional exchanges.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
We're not seeing recession, though there is this tale of two economies. We're in this environment of fiscal activism and economic nationalism.
We've backed out 3 rate cuts and added 2 rate hikes.
I think that the Fed will not hike rates this year.
The market's really having to discount this backdrop in which the economy is stronger than expected.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg Surveillance starts right now, and your price action, your scores look like this. Close to all-time highs on the S&P 500 following 3 days of gains. Just short of those levels this morning following a 3-day closure of this market. We bounced by 0.7% on the S&P. On the NASDAQ, up by 1 full percentage point. In the bond market, yields backing away from multi-decade highs. At the long end of the curve, down by 6 basis points. At the front end of the curve, down by 7. Queuing off this in the commodity market. WTI this morning pricing off Friday's close on net, still lower by 5%. With the escalation we saw overnight, you see a bounce in Brent crude, but still the focus of this market, a resolution to this conflict.
And what are the conclusions if we get some sort of resolution? This is what I find interesting. People believe that inflation will fall back down, that the Fed will be able to cut rates once again, that earnings will rebound in some of the less loved sectors, which is the reason why you saw equal weight outperform last week for the first time in a while. And you saw declines actually on some of the Magnificent Seven names. And you will get back to where we were before. You could focus on earnings again and ignore what's going on. That's where I'm actually curious about analyzing, because I cannot analyze what's going on with Iran and the United States.
I know the market wants to move on and focus on earnings, but you have to look at, to understand what's going on in this conflict, you have to look at not what the president or the Iranians are saying, but what they are doing. And what we see them doing is actually what they say is defensive to hold on to the ceasefire, but it is more kinetic warfare. They are going after the speedboats that the Iranians were using to drop mines, and the Iranians are going back at the Americans going after F-35s. So for me, this doesn't look anything like a ceasefire. We are seeing some kinetic movement in the region, and I think this shows that they are still a long way from reopening the strait and then getting to the negotiating table to talk about nuclear.
Energy coming in just a bit, but relative to last year, much higher. So looking ahead to the data later this week, PCE on Thursday, we're expecting a number closer to 4%. That's almost a full percentage point higher than it was just a few months ago. We've seen a real bounce in inflation data and the outlook for higher prices.
And a key question for a lot of economists is how sticky this will be, because if you take a look at a recent Oxford economic study, they talk about how it can take 2 years for this shock to work itself through the market. Is there a dissonance between how much profit margins are increasing at companies, the earnings that everyone is cheering, and the potential for there to be stickiness in some of this inflation? A lot of people come here and say, absolutely not, Lisa. look at what we're seeing in housing, look at what we're seeing with wages. It's all great when you look at the inflation front. Other people saying, take a look at what's actually happening, and maybe we're not restrictive at all. Maybe this is actually easy in terms of monetary policy.
It's all great for the bad reasons, you know.
But exactly. People aren't getting paid.
Great reasons.
I mean, it sort of, again, goes back to the labor question, but I'm going to get off that.
Did you see you Mitch on Friday?
I did.
Let's really get Bramo going.
Terrible. Well, okay, and Kevin Hassett came out and said, this is a political poll, political sentiment, da-da-da-da-da. That said, even if it is political, the fact that some people are feeling the worst that they've ever felt, and it is a contingent of the population, is it because of AI? Is it because they don't like President Trump's policies? Whatever it is, some people are feeling bad.
Headline index, record low. 5 to 10 year inflation outlook, whatever that's worth, climbing higher to close to 4%, and more worries that higher prices will hit personal finances. To your point, whether you believe that's a political poll or not, you have to ask yourself, will that shape behavior in this economy for a certain cohort of people in this economy?
Also, will it shape how people go out and vote? Even though this maybe is political, we see in this country, elections are won by the independents in the middle that swing. And this does not, a survey like this with consumer sentiment dropping to brand new lows does not bode well for this White House.
Futures this morning positive by 0.7%. That's your bounce on the S&P 500. Coming up this hour, we'll catch up with Leslie Marks of McKinsey Investments. As stocks notch an 8-week winning run, we'll speak to Henrietta Trace of Veda Partners as the US and Iran exchange fire. And we'll catch up with the New York Fed President, the former New York Fed President, Bill Dudley, on a newly minted Fed Chair, Kevin Walsh. We begin this hour with stocks on track for a 4th consecutive day of gains. Leslie Marks of McKinsey Investments writing, we have a neutral view on equities. Equities just may need to consolidate here for a bit before their next move higher. Leslie joins us now for more. Leslie, good morning.
Good morning.
We've caught up with a lot of equity market bulls encouraged by these earnings. They say these earnings have been the best we've seen outside of recoveries in decades. That's the reason for this bull market to continue. Do you have doubts?
I think it's absolutely the reason for this bull market to continue. I think just thinking through, we've had a big move in equities. We've had a good reaction to earnings and earnings revisions. And when you look at where interest rates are here, we just think that this is a time where we may see a pause and people start to say, you know what, long bonds look attractive here. And these are levels that we haven't seen in a very long time. So it's just a matter of relative risk and reward between the two asset classes.
That's a line we've got to follow up on. Long bonds look attractive here. What makes them attractive?
Well, I think it's just looking at interest rates. And if you think about what's happening in the political backdrop, to Lisa's point, of course, we don't know what's going to happen in the next day or week, but we do believe that eventually there will be a realization of some sort of resolution with the war in Iran. And I think at that point, people are going to get, and you're already seeing it, they're going to get more constructive around bonds. And so that's why we see rates, having an opportunity here to fall, bond prices appreciate. And we've had such a strong move in equities here. They are pricing in a lot of optimism. So we think the bull market continues, but probably time for a pause.
Are you seeing any of your clients actually seeing long bonds as a competitive asset to U.S. equities for the first time in a long time?
Well, we haven't actually seen people sort of talk with their wallets yet. We're not seeing a rotation, but we do think that people, when they think about a risk-free or a lower risk asset versus a lot of the risk that's built into equities, from an equity risk premium perspective, that you will start to see people look at rotating into bonds in the context of our current risk-reward outlook.
Well, this raises a key question, and different people have different outlooks on it, which is how contingent is the U.S. equity rally to the idea that the Federal Reserve will keep cutting rates at some point, right? How contingent is this rally on the idea that rates, all things being equal, are going to head lower? What's your take on that?
Well, when we started out the year, part of our thesis around higher equities was related to an easing monetary policy, just like many other market prognosticators. Obviously, that's not in the cards for this year, yet we've still seen equities perform very well. So I would say that equity upward price movement is not necessarily contingent on the Fed cutting rates throughout the rest of the year. The big story that's kind of overtaken the Fed narrative has been earnings. Earnings have been very supportive of a higher move in equities for a whole cast of reasons. And we still see potential upside in earnings throughout the year. I mean, when you look at what's been driving the earnings, the upside, it's been in the technology sector. It's been as a result of positive earnings revisions in energy, ironically. I mean, the S&P 500 is much more levered to technology and communication services than it is to the negative headwind that higher oil prices bring about. So we think there's still more upside in earnings. There's, of course, the productivity story coming from AI, which hasn't really borne out yet when you look at what companies are saying. They're not really talking about realizing productivity in the rearview mirror. It's more perspective.
Do you think this Fed could look through the oil shock?
I think the Fed is already looking through the oil shock. Now, the question will be, right now, it looks like we're forecasting or projecting about one interest rate hike towards the end of the year. Now, things have really shifted from the cuts towards the hikes, but I think you could actually build a story, particularly if you have an agreement with Iran that this is transitory and that this is primarily energy-related inflation. And so that's what you might start to hear in the Fed language.
If we were to see an agreement, would your neutral view on equities start to turn a little bit more bullish?
Well, I think that, equities have been able to look through the conflict, look through inflation. We've seen that even, when equities started to rally more recently, it was at the announcement of the temporary ceasefire. So I think that if you saw an agreement, you would see a modest move in equities, but I'm not sure you're going to get that big move that we've already seen so far. I mean, I think that's already starting to be priced in. Because it's so unpredictable, and you pointed that out, Lisa, day to day, what's going to happen and what this agreement is going to look like and what's going to be in that agreement, I would suggest that we shouldn't be making decisions on the basis of an outcome of this war, but really go back to the fundamentals. And the fundamentals are very strong.
Leslie, it's good to see you. Thanks for being here.
Thank you.
Thanks for dropping by. Leslie Marks there of Mackenzie Investments. Future this morning with a bounce up by 0.7% on the S&P. You'll notice the outperformance on the Russell. We saw that through last week. Small caps outperforming, equal weight outperforming.
And who underperforming? Magnificent Seven, which actually lost value on the week, even with the 8th consecutive weekly gain. And this speaks to, even if, say, we do see some sort of resolution, what's going to get bid up? It's going to be the cyclicals. It's going to be those that are more exposed to oil prices. You might actually see a little bit of an underperformance for some of the high flyers at the same time. Still, markets will be up.
That was Altman's point over at Barclays, that maybe that was a risk, a headwind to the overall index, that you actually get a resolution in the Middle East, which is difficult to really get your head around.
I was struck by something that he said, which is potentially the bigger risk is missing on the upside. And I think a lot of people are trying to get ahead of that risk. So how many people are not hedged to the downside because ultimately they're just discounting it altogether?
Got a bounce this morning, this Tuesday morning. Good morning to you all. Let's get you an update on stories elsewhere with your Bloomberg Brief. Yahara's back with us for more. Hey, Yahara.
Hi, John. U.S. and Iranian forces clashing near the Strait of Hormuz overnight, even as they tout progress toward a peace deal. U.S. Secretary of State Marco Rubio telling reporters in India that there's a lot of talking back and forth about, quote, specific language in the initial document, so it'll take a few days. China is restricting overseas travel for top AI professionals at firms such as Alibaba and DeepSeek. The move escalates efforts to safeguard strategic technology and close the gap with the U.S. in artificial intelligence. And in sports, a major shakeup at one of Europe's top football clubs. AC Milan is parting ways with several top managers after a directive from its owner, Redbird Capital Partners. The club firing its CEO and head coach after calling last season's performance an unequivocal failure. That's your Bloomberg Brief. John?
I'm ready to step in. I really am.
I would love to see that.
Of course.
Liverpool
Just
won.
Ridiculous.
Just letting you know.
Things are not going well in Italy, are they?
I mean, it's been brutal.
The national team, if you're a Milan supporter like I am, not going well.
No.
Over at Ferrari, they're launching the Nissan Leaf with a Ferrari badge on it.
Honestly, which evidently is in a bucket with cut up spaghetti and cappuccinos after work.
Yes, ketchup on pizza.
Evidently, I'm there too because I actually thought it was innovative. If it were $70,000, I'd be interested.
Maloney should step in. Up next on the program.
What, design an engine?
No. Stop it from launching. All right? Reigniting tensions with Iran.
These incredible men and women gave their lives to ensure that the world's #1 state sponsor of terror will never have a nuclear weapon. Oh, and they won't. They will never have a nuclear weapon.
Up next, we'll catch up with Henrietta Trays of Veda Partners, live from New York City this morning. Good morning.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need,
There's going to be now tons of tariff headlines until midterm elections.
hear it first on Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Still trying to work out how they got in the news wheel.
Someone's trying to troll you.
Clearly.
Ferrari.
And now I'm wound up today.
Yeah, well, I think that Ferrari just was like, you know what?
Come on.
You say that we're in that bucket?
More on the Luce a little bit later. 15 minutes away. Important takes on this program. Futures right now on the S&P up by 0.7, on the Nasdaq up by 1 percentage point, on the Russell up by 1 percentage point and change off the back of this move in the bond market. 2s, 10s and 30s. Yields down across the curve. We're down by 7 at the front end, taking its cues from this in the energy market. WTI this morning pricing off Friday's close. We're down by 4%. Brent, of course, pricing off yesterday's close, so pricing in the escalation overnight. Directionally, you'll see this move here up by 2.8%, $98 and about 80 cents. Under surveillance this morning, reigniting tensions with Iran.
These incredible men and women gave their lives to ensure that the world's #1 state sponsor of terror will never have a nuclear weapon. Oh, and they won't. They will never have a nuclear weapon. We're having victories all over the place, more than we've had in many, many decades.
So here's the latest this morning. The US and Iran exchanging fresh strikes near the Strait of Hormuz. Uranium supplies remaining a sticking point while both sides hail progress on a deal. Bloomberg's Tyler Kendall joins us now from Washington. And Tyler, I think that's where the tension is right now. They're both talking about progress, but the sticking point is the ultimate sticking point to get any deal.
Right. And John, at this point, we've heard from the U.S. that it appears that we would see a phased agreement if we see any agreement at all, which would postpone those negotiations when it comes to Iran's nuclear program and what any potential curbs would look like. Because U.S. officials over the weekend did signal that progress was being made towards this memorandum of understanding, which our understanding is would first see an extension of the ceasefire, perhaps a reopening of the Strait of Hormuz, and the U.S. lifting the naval blockade in what appears to be a goal to decrease the pressure on global oil supplies, but raising questions about just how sustainable lasting peace would be. In fact, those questions are even being raised by some Republicans and more hawkish members of the Senate here in Washington, who are concerned that an approach like this could ultimately lose the U.S. some leverage when it comes to if the U.S. would give up its naval blockade in exchange for Iran to limit its grip on the strait, as well as an unfreezing of Iranian assets, which we know is something on the table, including the fact that we saw an Iranian delegation arrive in Doha over the weekend, which included Iran's central banker in what appeared to be a bid to try to grease the skids for some relief when it comes to the U.S. looking at Iranian assets. John, at this point, the U.S. has really defended its approach. We heard the U.S. Secretary of State Marco Rubio overnight saying that President Trump is committed to only reaching a good deal. If he doesn't get a good deal, then there will be no deal at all.
Tyler Kendall with the latest down in Washington. Tyler, thank you. Henrietta Trace of Vader Partners writing this. President Trump has until June 2nd to reach a final deal with Iran or face the risk of Congress ruling against military escalation while negotiations are ongoing. Henrietta joins us now for more. Henrietta, just familiarize us all with the calendar. What's special about June 2nd?
Yeah, I would start with last week. Last week, the House Republican Conference was this close to voting to approve a war powers resolution that would have resisted the president's or limited the president's ability to perpetuate the war. The Senate Republican Conference simultaneously is battling internal fronts about $1 billion in funding for the ballroom, $1.776 billion for January 6th insurrectionists, a fight over the fact that the president is trying to unseat and is succeeding in unseating reliable Republican voters across Kentucky, Indiana, Louisiana, North Carolina, and it's really disrupted the president's control of the Senate Republican Conference. So when you think about what happened, in order to keep the peace and prevent an uprising, the leaders of both the House and the Senate sent their members home. And they're going to be gone until January 2nd. So the president effectively has the rest of this week to coordinate, get some resolution to the Strait of Hormuz, or a war powers resolution bill is in a place where it can pass in both the House and the Senate. And that's a problem.
Henrietta, in the Senate, what Republicans are going to vote for that, go against the president?
Senator Bill Cassidy in Louisiana, Senator Tom Tillis could flip, Senator Susan Collins of Maine, Lisa Murkowski of Alaska, and one more that I'm blanking on at the moment. But there are as many as 5 Senate Republicans who are willing to cross the aisle right now.
How much is the president trying to placate some of these Iranian hawks? You know, Lindsey Graham was very prolific and busy on Twitter over the weekend. And given the fact that the president started to bring in this idea of an expansion of the late Abraham Accords, you started to hear him flip and say that this is a brilliant idea and could change the Middle East. Is the president now adding to more deals he needs to get done when it comes to Iran to placate his own party?
I don't know that it's necessarily to placate the party. There are members like Lindsey Graham, Senator Wicker, who want the escalation of military force to perpetuate. They want another round of air bombing to take out what is now understood to be 70% of missile capabilities that Iran has back in its control. So there are members that are looking for more military escalation, but the war is uniquely unpopular with the American public. And you guys were talking about the polling data earlier. The polls of American consumer sentiment are absolutely biased. They're a political barometer now, and they have been for, I don't know, at least 5 years. But you don't get to the thresholds that are this low without also losing Republican support. The president's down 18 points with Republicans since January, and that's largely because of the war. So if the goal is to just end this, get the strait reopened, there are 2 ways to do it. You either expand the pie and make the deal that you're working out with Iran look more comprehensive, like acknowledging Israel, for example, as you're alluding to, or you go in with the military component and you really try to re-effectuate regime change, if at all possible, or at least regain control of the strait, which we do not have right now.
Henrietta, if the president is losing popularity of the Republican Party, then why is he able to unseat incumbents with such incredible unanimity? I mean, we've seen that one after another, and Texas has another primary today where potentially we could see Ken Paxton take the lead over John Cornyn.
Primaries. That's it. Like, who are you turning out? Who is voting? I mean, the average bear doesn't vote in a primary. Very enthusiastic, hardcore Trump supporters, hardcore motivated party members of both sides. Democrats and Republicans are the ones who turn out for a primary. So if you are inclined to be a regular, routine, go-getter voter, you are the one that is voting in a primary. So it ends up being a more extreme demographic. And so that's true on the MAGA side as well as on the left.
What do you think that means for the fall elections, the midterm elections, that a lot of people have said probably will go Democratic? There has been a lot of redistricting. There has been a move to the extremes on both sides. What do you expect in terms of just how much this could shake up the resolution of that vote?
I'm at 95% odds that Democrats win the House, and the odds of the Democrats winning the Senate have been creeping up all year, largely because of the war, although there's a lingering hangover from the deaths in Minnesota from ICE, and of course the tariffs that were also unpopular. What you want to look at is the generic ballot. As we've discussed in the past, the average American doesn't know who their congressman is. So when you look at what the parties want, the latest Wall Street Journal poll shows a +9 lead, +8, I think, 8 or 9 lead for the Democratic incumbent. That means that Democrats are galvanized. They're encouraging the Democratic Party. They are happy to get out and vote. They're fundraising, and that portends a win. So my odds on the Senate side are still 45%. The map favors Republicans overwhelmingly. Democrats would have to pick up Texas and Alaska and Ohio and states that have gone for Trump reliably for years. In the case of Alaska, by, I think, 14 points, Ohio by 8 points. So the map is really difficult, but it's trending in that direction. You can see the anxiety, as I described, from the Senate Republican Conference.
Henrietta, it's basically June. What would the Republicans need to do this summer to turn it around?
I don't think that there's really a path to that, to be honest, Anne-Marie. When we got into this year, gas prices were on average $2.81. Now we're at 450 and Americans don't like it. If you open the strait tomorrow, you've got to deal with the fact that there's 80 bombed out facilities across ports, refineries, oil producers that are bombed out, and that will take 1 to 3, maybe even 5 years to restore. So we're not going to get gas prices back to where the American public wants them to be. And that's a reality the Republican conference has to face because they made the decision to go into this war. If you think about gas prices dropping twice as slowly as they rise, we're talking like October, November, December before we get anywhere near a 3 handle. 305, 310, 320, something, anything that Americans would consider normal. 450 isn't going to cut it.
The midterms feel like a lifetime away still. Sitting here in May. Henrietta, thank you, but I know time's passing quickly. Henrietta Trays of Vader Partners, I found that Q1 felt like a lifetime. Q2's wrapping up very, very quickly. I want to bring up this stock very quickly. This move here. BP in London trading, check it out, down by close to 4%. This statement just dropped, press release from the company, reading as follows. The board of BP announces that it has today unanimously decided that Albert Manifold should no longer serve as chair and director with immediate effect. This follows serious concerns raised to the board related to important governance standards, oversight and conduct. Amanda Blanc, a senior independent director at BP, said the following. I'll read the quote for you. Albert has helped bring a welcome focus and pace to BP's transformation. However, the board has been surprised and disappointed to learn of governance oversight and conduct issues it deems unacceptable and has taken decisive action. That stock is trading lower by about 3.6%.
Yeah, they named Ian Tyler as interim chair and with immediate effect as they try to replace the CEO. Real question here about what the strategy is going to be. BP has sort of fluctuated between moving to more green energy and not. Well, we're going to learn more about exactly what happened here. I'm going to keep looking to see what that potential malfeasance could be.
Well, this is the issue with this statement. It doesn't give any details on what this, quote, serious governance concern is. And if it's so serious, I think they would obviously need to be pretty transparent with their shareholders about what exactly happened.
We'll keep tracking that story for you. The stock is lower in London, trading by around 4%. Coming up on the programme, Calvin Say of BNP Paribas on the health of the US consumer, plus Danny's back. She's got your morning movers. Shares of Micron rising on a potential breakthrough in China. The stock is up at the pre-market by 6%.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Equity futures firmer by 0.7% on the S&P 500. On the NASDAQ, we're rallying by 1 full percentage point. 3-day winning streak coming into Tuesday on the S&P. We're about to make it day 4 very close to all-time highs. Catch-up trade in the bond market closed yesterday, open today. Yields lower across the curve. 2's down by 7. 10's down by 8. It's a break of 450 off the back of this move in the energy market. WTI pricing off Friday's close, negative by some 4 to 5% throughout much of this morning so far. That's helping the trade in the bond market, helping the equity market just a little bit more.
You know, I noticed that the market rallies more on the potential of a deal than it does fall on the potential for some sort of re-escalation. The faith that something will really transpire here between the U.S. and Iran seems to be very strong. People want to move on very strongly from this. They want to feel good about some of the less loved names than, say, the Magnificent Seven, and they're using every excuse they can to do that.
It's still difficult to move on. You see the headlines overnight. If you look at Brent pricing off yesterday's close, Brent this morning bouncing back just a little bit, not too much drama, but ultimately we're told a deal's going to be struck. Okay, then why is Iran laying mines in the Strait of Hormuz if the Strait of Hormuz is about to reopen?
It's a very good question. Unless it's some extreme scenario where at the very end of a negotiation, everyone's trying for the final bits. The real issue is neither Tehran or Washington have changed their red lines. So it's hard to see a negotiation, a real deal opening up. I think it's important to remember that there's really 2 negotiations going on. We've been talking about this for weeks now. 1, just to reopen the Strait of Hormuz, and 2, something more permanent when it comes to nuclear. And even what seems like maybe some thought was going to be easier in terms of Strait of Hormuz is not so simple.
Lisa was done weeks ago. You were done with this weeks ago.
You're
not alone.
Okay, the Peanuts cartoon, I don't know, you've probably never watched it. But when the adults speak, you just hear wah, 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 wah. That's essentially what happens when people start
That's how the market feels like.
100%.
Is that how you feel about me?
I'm in a bucket. I mean, I'm in a bucket with cut spaghetti.
You can settle down in a moment. As we count you down to the opening bell, 2 hours to go. Let's get you some single names, some morning movers. Danny has more. Hey, Danny.
Hey, John. The semis, the chip makers are rallying this morning. For one, they just have become this high beta sector for the S&P 500. When it rallies, these things rally. But a couple other things going on. For one, Huawei out with some more advancements. That's leading to optimism over the sector and the chips that will go into those devices. And for Micron specifically, the president name-checking the company at a rally on Friday, calling out how much they're investing into the United States. They have committed about $200 billion to build out manufacturing capabilities in the United States. So those shares up more than 6% in the pre-market. Some deal news, Eli Lilly will be buying 3 different vaccines, getting back into the infectious disease treatment. It's something that a lot of these vaccine makers or drug companies are rushing to get back into. Shingles among the various vaccines that they have bought from different companies. Those shares up 1 1/3%. Finally, anything having to do with space is rallying a lot this morning, all in anticipation of the SpaceX IPO, because if SpaceX can be $2 trillion, why can't these companies be worth more? AST, one of them, they make the satellites that are launched into space. Those shares go up nearly 7% in the pre-market, John.
Hey, Danny, thank you. Thank you for the update. More from Danny in the next hour. On our radar this morning, the US and Iran exchanging fire just hours after President Trump held progress on a peace deal. The US Secretary of State Marco Rubio saying negotiations are still underway.
going to take a couple days to settle on even down to the disagreements over a word, sentence. If there's going to be a deal, we're going to have to work through that. It's either going to be a good deal or there isn't going to be one.
The Strait of Hormuz and Iran's nuclear program remaining key factors in peace talks. Elsewhere, AI training firm Wall Street Prompt is cashing in on automation. The firm charging $25,000 a day to teach bankers how to use AI tools. Sources telling us here at Bloomberg the company has worked with T. Rowe Price, Citi, and Bank of America. And finally, shares of Ferrari falling after unveiling its first fully electric vehicle. The luxury car maker facing negative reviews from critics and analysts. Many believe in the car is too similar to other popular EVs.
You know, I would buy this car for $70,000, $60,000, not maybe $650,000. I will just say the executive chair said this: Ferrari Luce is not a responsible change. Whatever.
Come on.
It is a deliberate decision to lead what comes next.
I'll take over. So this is what I thought was the most interesting. Rolls-Royce commented on their Instagram, even we have standards. Aston Martin, we wouldn't be caught dead in this. Tesla, you spelled, quote, software update wrong. No one likes this car, except maybe people who were going to go out and buy a Tesla, to Lisa's point anyway. But if you are buying a Ferrari, and you potentially are buying this Ferrari because you also think in the future it's going to have more value, this is not the car for you. And I'm just confused. They might lose their hardcore fans with this EV experiment.
Clearly, Johnny Ives wanted to design a car, and Johnny Ives has designed a car. Johnny Ives has not designed a Ferrari, and there's a massive difference. The question, and I think it speaks to why the stock is down this morning, is why Mr. Alcan, over at Ferrari and over at Fiat, allowed this to ever happen. That's the question I've got this morning. How on earth did Alcan and Co. sign off on a car that looks like that and stick a Ferrari badge on it? That is a judgment call, and I think that is why the stock is down this morning.
What is their goal with this? I think that that is a fair question, given the fact that they haven't had an EV until now, that this is a flooded market with electric vehicles that look something like this. And Ferrari has been a selective sort of aspirational purchase. They said that they are going to limit the purchases for this too. Let's see how they actually do and whether they gain traction. But I think that that is the key question. What is the ultimate strategy going forward?
When you had Ferrari's chief marketing commercial officer give this interview to the Financial Times, he said, to my petrol heads that I meet, I always tell them, please don't buy the Luce. The key driver the car maker is targeting is someone who already owns an electric car. And of the people invited to its launch event, they weren't Ferrari drivers. So they're trying to expand. But yet, once again, you might end up ruining the brand and the core individuals that love Ferrari, like our Jonathan Farrow.
Yeah, I get why they're doing it. I understand that. The regulations are pushing them in that direction. For me, take the EV out of it. Forget that it's got an electric engine. It's the design of what it looks like that's the problem. If you ever get the opportunity and you find yourself in northern Italy, go to Modena and go to the Enzo Ferrari Museum, and you walk in and there's some beautiful cars, and you track the history of progression of how these cars have been built, the engines, the designs. You start with like something like a 166 mm. It's just stunning, this car from like the 40s, 50s, and the heritage that builds from there. If you dump that into that museum, it's going to look like a massive eyesore. It has no place in the heritage of Ferrari, no place whatsoever.
So again, who's going to buy the Luce, and what exactly are we going to see with
Grandma, what are you doing? Come on. Stock is down. She knows. She knows. She knows.
Go cut your spaghetti.
Drink your cappuccino in the afternoon.
I totally
Put
do.
ketchup on your pizza.
Okay, that's
pineapple.
That's disgusting.
Come on, Ferrari down this morning by 6%. Let's turn to the consumer and the US economy. Sentiment falling to a record low as rising prices weigh on shoppers. Traders looking for more insight with another busy week of retail earnings on deck. Calvin Say of BNP Paribas writing the consumer has been resilient. Fiscal stimulus, wealth effects and monetary stimulus are offsetting pain at the pump. Calvin joins us now for more. Calvin, good morning. Good to see you.
Good morning.
Welcome to the program. How much weight should we put on that record low consumer confidence read on Friday?
Not very much. A lot of these consumer sentiment numbers have been coming up and down, and they really haven't driven actual consumption. If you look at what people are actually doing, retail sales have remained strong through this war. And exactly as we say, there are three things propping up the consumer right now. It's the wealth effect, it's fiscal stimulus, and we also think, really importantly, monetary policy is very stimulative at the moment.
I wanted to pick up on the monetary policy call. This seems somewhat unique to you and the team over at BNP Paribas. I think a lot of other banks are getting there. They're just not quite there yet. The risks of a hike, and maybe this year, could you lay them out for us?
Sure. We've been highlighting that there are two prerequisites necessary for a hike. One is either long-term inflation expectations show more signs of unanchoring, and the other is potentially the labor market tightening further. We're already starting to see signs of this. As you saw last Friday, the University of Michigan report 5 to 10-year inflation expectations jumped in a really big way. And the Fed needs to be worried about this. This is exactly what we saw in the 1970s when we had a rolling series of shocks to inflation that led to an unanchoring of inflation expectations, and that prompted the Fed to have to do a lot of hiking to combat that. So that's something that we're very worried about, and we're also worried about the risk that maybe we might be, over the next few months, seeing a labor market heat up here. That could also get the Fed toward rate hikes.
We're not there yet, and a lot of people push back on that and say maybe it's not accommodative, maybe we're just seeing a productivity boom, and we're seeing all of these positive things that are happening in equity markets that can keep risk assets elevated, even with rates at a relatively restrictive pace. How much do you get that? How do you push back against that argument?
It's pretty simple to me. If monetary policy really were restrictive, you should be seeing, one, progress on inflation, maybe strip out all that volatile stuff. You're still not seeing any progress in things like non-shelter services inflation. And you should be seeing progress on labor market. The unemployment rate should be going higher if monetary policy were restrictive. But it's been very range-bound, and we think there are actually downside risks to the unemployment rate over the next few months.
What happens if the Kevin Warsh-led Fed does not hike rates, right? I mean, how potentially big of a mistake would this be on the long end of the yield curve, and how much would bond markets revolt?
We don't think that the Fed needs to be hiking now. We just think that the conditions will likely be in place at some time this year for the Fed to seriously have to consider hiking rates. Let's say our scenario plays out where the unemployment rate is making a move toward 4% and inflation expectations show signs of unanchoring. We think the Fed is going to hike. Warsh is just one person. He's 1 out of 12 votes. And as you can see in the minutes, as you can see by Christopher Waller's speech last week, even the doves are moving in the hawkish direction, and one person is not going to be able to stop a hike if the monetary policy conditions suggest that we should be seeing one.
What kind of consumer will we see then if they really think inflation is going to be much higher?
The consumer, for now, again, we think is relatively supported. We have stimulus coming through multiple channels.
Doesn't that dry up at some point? Aren't they using that extra stimulus right now for higher energy costs?
In the first half of the year, we think fiscal stimulus is going to be a big supporter of consumption. That's going to wane by the second half of the year. But our feeling is that the labor market is going to remain tight. I'll just give you a very quick anecdote. We just finished Q1 earnings season. The S&P 500 is expected to see 20% earnings growth over the course of the next year. The corporate sector is on fire. Meanwhile, at the same time, we've seen 0 jobs added to the U.S. economy over the last year outside of healthcare. Companies just simply, we think, don't have enough labor. So we think we could see a pickup of hiring throughout the summer and into the end of the year, and that we think should also help support consumption.
A pickup in wage growth as well?
That pickup in wage growth isn't going to come immediately. We think it's going to require a tighter labor market, which is why the Fed currently is not concerned about the labor market. And that's why our threshold is around 4% on the unemployment rate. If we start moving to and toward 4%, at those levels, then you could start getting much more concerned that wage growth may begin to perk up in the economy.
Final question, how many Ferrari Luces will we sell in this economy?
I'm not buying one, but I'm not sure who else.
Don't have to go there, Kavod. Appreciate it. Thank you, sir. Thank you. Kavod Say there of BNP Paribas. I'm not sure that the US market is the market for it, you know, ultimately.
I mean, who is the market for it? Look,
might be China, don't know.
You really want to go back to this? I think the loose discussion, I think, look, people, you clearly...
I got a great message from a Bloomberg subscriber, which was limit it to 1. Just produce 1. Just limit it to 1.
I think it's actually bold. Look, I'm going to be the contrarian here because I feel bad.
By all means.
But
who do you feel bad for?
I think the craftsmanship. I was reading about how quickly you can accelerate to 60 miles per hour. I think it's 2.5 seconds.
Any electric engine right now, right?
Well, it's faster than that. And the fact that it has a maximum of 300 kilometers per hour is pretty impressive. I think that the power that can be sustained, I think it's good to be bold. I don't know that the design is the boldest that it could have been, but still, and trying to reconcile the sort of roar that people tend to enjoy versus the non-existent
You're
noise.
entitled to your opinion. You're not entitled to making up Italian words, though.
Yeah,
right?
basta.
Okay. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Yahira has more. Hey, Yahira.
Hi, John. President Donald Trump is requesting that several Arab and Muslim countries join the Abraham Accords in exchange for a deal with Iran. In a Truth Social post, Trump calling on Saudi Arabia, Qatar, Turkey, and Pakistan to sign the accord, which would effectively see them normalize ties with Israel. Iran's government may ease the months-long internet blackout. The official Islamic Republic news agency saying a government task force voted on Monday in favor of returning internet access to conditions in place before January 2026. Now the latest on the overheating chemical tank in Southern California that forced 50,000 people to evacuate overnight. Orange County fire officials said many residents could return home, but those closest to the site are still under evacuation orders. Officials say the risk of a major explosion has now been avoided. That's your Bloomberg Brief. John?
Yeah, Hara, thank you. I just admire Lisa's determination, consistency to be contrarian at all times. And it now finds you on this side of this argument with this thing.
It's definitely not the easiest argument to keep going with, but I'm going to keep trying.
I admire it.
Thank you. I appreciate
so consistent through the commercial breaks. It's non-stop. Up next on the program, reforming the Federal Reserve.
I will lead a reform-oriented Federal Reserve, learning from past successes and mistakes both, upholding clear standards of integrity and performance.
Up next, we'll catch up with the former New York Fed President, Bill Dudley, live from New York City. You're watching Bloomberg TV.
In case you missed it, on Bloomberg Crypto.
There's a debate going on right now in DC that I think folks need to start paying more attention to, and that is the yield. And the question really is, who is going to keep the yield? Who makes money off stablecoins? Well, right now, in the case of some of the large stablecoin issuers, there's a yield on those deposits. So when there's a dollar, for example, deposited in a bank account, there's interest paid on that dollar. And so who's capturing that yield? And I think one of the really interesting things about the Genius Act is that it bans so-called yield-bearing stablecoins from giving that yield directly back to consumers. Now, that's not true everywhere. And I think if consumers have a choice, why would a consumer want an institution to keep that yield? Or would there be sharing of that yield? So right now, one of the debates going on is, will rewards be allowed? And I think these are really important questions.
Don't miss Bloomberg Crypto live Tuesdays.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on Salar de Uyuni in Bolivia, and this is Bloomberg.
Stocks here bouncing up by 0.7% on the S&P 500, on the Nasdaq up by 1 full percentage point. Catch-up trade of the bond market, yields lower. After a three-day weekend here stateside, we're down by 7 basis points on 2s. We're down by close to 8 on 10s, 448 on 10s, and just about holding on to 5% on a 30-year. Under surveillance this morning, reforming the Federal Reserve.
I will lead a reform-oriented Federal Reserve, learning from past successes and mistakes both, escaping static frameworks and models, and upholding clear standards of integrity and performance.
So here's the latest this morning. Fed Chair Kevin Warsh preparing for his first week leading the central bank as investors price in higher for longer rates. The former New York Fed President, Bill Dudley, writing, the prevailing wisdom is that the Fed will tighten monetary policy later this year. Bill joins us now for more. Bill, welcome to the program. I enjoyed the piece. I just want to get to one important line in there, whether it's credible for this Federal Reserve to say that monetary policy is indeed still restrictive. Bill, what's your take on that?
I just think you have to look at the economy's performance over the last few years. We've been at this level of interest rates or higher since November of, I think, 2022, and yet the economy is continuing to grow. We're still at full employment. So where's the evidence that monetary policy has actually been restrictive? If it had been restrictive, the economy should have slowed down, the unemployment rate should have risen. So I think the case for cutting rates now is actually very, very weak.
Given that, Bill, there's a real question here about the housing disinflation that people point to, as well as we haven't seen wage inflation accelerate. In fact, you've seen it decelerate. We've seen the worker not participate as much as companies in terms of just their profit margins. At what point does the Fed have a right to keep looking at that rather than the overlying GDP growth?
I think they do have a right to look at that. I mean, I think the big question is the tax refunds that have boosted people's disposable income over the last few months the key driver? And as we get to July, August, September, will consumer spending turn over? Or is the fact that financial conditions are so easy, is that going to be the dominant influence in terms of supporting consumption and economic activity? I think the wage trend is something that is positive in terms of those who think that inflation can come back down to 2%, but that could turn. I think the problem here is that we've been above the Fed's inflation target for more than 5 years. And there is a risk that inflation expectations do finally become unanchored. And the University of Michigan preliminary result last week showed that 5 to 10 year inflation expectations did tick up quite markedly. Chris Waller's focused on the 2-year inflation outlook, 2 years forward. That's also moved up. So I think the Fed is concerned that they're starting to lose credibility because they haven't been able to get inflation back down to 2%.
How much is this Fed sort of conditioned by the pre-pandemic reality of low rates in a way that has made them overly dovish to meet the moment? And frankly, having to reconcile their overly dovish stance with fundamentally stickier inflation as a reality?
I agree with that. I mean, I think that if you look at the level of real rates prior to 2007, the real rate embodied in the Taylor rule, for example, is 2%. The Fed's assuming today that the level of real rates adjusted for 2% inflation is 1%. So it's very possible that monetary policy today is not restrictive at all because real rates are higher. And there's a reason to think that real rates are higher. Look at the investment spending boom caused by the AI. That's raising real interest rates because it's increasing the investment demand in the economy. The fiscal path of the U.S. is also raising real rates because it's diminishing the supply of savings available for investment. So I think there are good reasons to think that real rates are higher than they have been in the recent past.
When you have Christopher Waller saying that his current policy position is to hold rates steady for the near term because policy risks have changed, do you find it interesting that he was able to look through the potential tariff impact on inflation, but he's not when it comes to the oil shock?
Well, I think they're really the same in terms of both being likely to be transitory. The real question, though, is how does it get bodied in inflation expectations? And I just think the Fed is sort of pushing the limits of their credibility to claim that, trust us, that we're going to get inflation back down to 2% when we haven't been able to do it for the last 5 years. So I think he's getting nervous that they can't sustain this. There's also a big risk here. I mean, Kevin Warsh is coming in. The president wants lower interest rates. So you can see all the elements in place where the Fed should, tighten rates sometime later this year, and they don't because of the pressure from the president. So the questions about the Fed's independence, how willing Kevin Warsh would be willing to buck the desires of the president, also weigh into this situation. So I think that if the Fed's independence wasn't under question, then there'd be more likely that inflation expectations expectations would stay well anchored.
So, Bill, there's an odd tension in inflation expectations right now. Consumers don't trust them, haven't for a while. You see that in the recent survey. They're expecting inflation to be way above their particular target for a significant period of time. Bill, market-based inflation expectations, does the market trust them?
Well, I think if you look at the very longer-term expectations, for example, like you look at the Treasury inflation-protected securities market versus nominal Treasuries, five years out, that looks fine. I think the issue is that an accurate measure of what households and businesses think today? And I think that's why Waller brought up what's inflation going to be 2 years from now for the next 2 years. And that has started to tick up. So that's not so far over the horizon. 5 years is a pretty long time. Yeah, I can trust the Fed's going to get inflation down to 2% in 5 years. Are they going to get it down to 2% by the end of 2027?
Is this a recent problem or a problem that's persisted for some time under Chairman Powell?
I think it's a more recent problem in the sense that the credibility that monetary policy is restrictive has really started to diminish as the economy has continued to perform well. So that's really if the Powell thesis was correct, the policy was restrictive, then the economy should have slowed more and the unemployment rate should have risen more.
Certainly this data is testing that thesis. Bill, appreciate your time. Great column today. Thank you, sir. The former New York Fed President Bill Dudley on Bloomberg Opinion, this line. It is incredible to judge monetary policy as restrictive when short rates have been above current levels for more than 3 years and the unemployment rate remains at a level judged by monetary policymakers to be consistent with full employment and stable inflation. He's not alone. Increasingly over the weekend, a lot of different economists came out with similar types of tones. Michael Darda, what if the Fed is actually below neutral? Matt Luzetti talking about how maybe the Fed bought itself too much insurance with the 175 basis points of rate cuts. There's a deeper question here. How can any Federal Reserve be hawkish when they're dealing with an overhang of a fiscal deficit that is not cooperative with what they're dealing with, right? I mean, ultimately, math would suggest that as the deficit goes up, people have to pay more for the borrowing, and that is something that is just a natural consequence. The Fed doesn't want that, right, because that's not the kind of tightening that they want to see. And as these politically appointed members come on, they've increasingly tended to try to look past inflation. This is the dynamic that we have here at hand. So there's a question about the independence regardless of the person simply because of the deficit and the structure here. There's a deep irony to all of this that's worth highlighting. It's odd we're even having this conversation about central bank independence. I understand the president was pretty wound up by the fact that the old Chairman Powell, cut interest rates 3 times heading into the election. He also cut interest rates again last year 3 times by 75 basis points. And the conversation we're having now, today, is that the Chairman Powell Fed might have been too dovish. And still going into this month might have been too dovish. And yet here we are talking about independence because the president was unhappy with the current chairman, who everyone is saying might have been too dovish. Key question for Kevin Warsh. Can he maintain the too dovish Powell Fed, given the mandate that he's received from this president? Redefining dovishness, aren't we? We are. It's not cutting rates, it's just keeping rates on hold. Up next, Mona Mahajan of Edward Jones, Amanda Liner of Goldman Sachs, Greg Deco of EY Parthenon, and Richard Bernstein of Janice Henderson from New York City, the 3rd hour of Bloomberg Surveillance just around the corner.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation.
As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals.
every week, only on Bloomberg Television.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
It's a market that is looking at reasonable growth.
People feel like they have to put money to work.
Stay diversified, stay disciplined, and you get rewarded.
The market could get gut-checked here from a momentum unwind.
Were it not for AI, this would be a very, very different story.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The third hour of Bloomberg Surveillance starts right now, and your price action scores look like this. Equity futures bouncing by 0.7% following a three-day weekend stateside. The Nasdaq up by 1 percentage point. The outperformance on the small caps last week could get more of the same later on this morning with this move in the bond market. 2s, 10s, 30s, yields lower. 2-year notes down by 6 basis points, 4.05%. 10s down by 7 to 4.48. Taking cues from the energy market this morning. WTI following Friday's close, negative by 4 percentage point, with all the good feelings and vibes over the weekend about getting closer and closer and closer and closer to a deal in the Strait of Hormuz.
Yeah, we're 95% there. There's a question here as we go forward about what kind of blowback there will be in terms of the decline in inflation that we could get if this is resolved, right? The idea of going back to where we were before the conflict with Iran began. It seems like in the bond market, there is a hope that we will disinflate as quickly as we inflated. That, I think, is a key question. How quickly can we see the inflation that's been worked into the system as a result of the conflict and in tandem with very strong earnings if there is a resolution to this conflict?
And it's confusing when it comes to the conflict because on one hand, the president is saying the talks are proceeding nicely. On the other hand, the U.S. military is actually going after Iranian boats that were then laying mines. I'm not sure how they're straight, to your point, Jonathan, is going to open if there's going to be mines that are laid at the bottom of the sea, and also going after missile launch sites as well in Iran. But they are clinging to this idea of a ceasefire, at least verbally, not physically. Look what they're doing. That doesn't look like a ceasefire. To, quote, protect our troops from threats posed by Iranian forces. They want the ceasefire to maintain, but say that this is defensive in nature.
Things can change, and they can change really quickly. This from Andrew Hollenhorst of Citi. If we get a deal, and these positive developments could lead to a rapid repricing of front-end yields, which continue to dramatically overprice the probability of rate hikes. Things can change really fast. So what do you do if you're the Fed? Well, the Fed's got an easy move to make in many ways in the next month. You just remove the easing bars, you slip into neutral, and you figure things out through the summer. Everyone else has put themselves in a bit of a box here. the ECB being one in the next month, because if this continues, then the ECB, based on their guidance, they're going to hike.
Yeah, and if the Fed is behind, there's a real question about the liability for the Federal Reserve. Look, the ECB is probably going to hike. That is priced in. The Fed might remove the easing bias. That's ludicrous if you take a look at some of the commentary that we're even talking about just that small step, that the next move isn't necessarily going to be a cut. The market has moved on. I think this is really important. The market is not taking forward guidance from the Federal Reserve anymore. They're taking forward guidance from oil prices, from some of the data that they're seeing, and they're pricing in fully a rate hike by early next year. So the Fed may signal whatever they want, but at this point, it is just potentially to disappoint the market that already has gotten significantly ahead of them.
Governor Waller in the mix on Friday, going into the weekend. He really made the headlines. That's a guy worth watching on the committee. Very data dependent, unfairly, I think, dragged through the mud in the Wall Street Journal this morning, and I'll just say that much. This is a guy who, up until the war, was thinking about reducing interest rates because of developments in the labour market. Developments in the labour market have stabilised, and inflation expectations have picked up. If you're a data-dependent central banker, you should be changing your mind based on those details alone over the last several months.
Yeah, I mean, ultimately, can you really say this is transitory, right? Can you say that some of the increase that we've seen, the reacceleration in inflation metrics, truly is transitory when you have a labor market that seems to be on the margins tightening, getting better, when you see profit margins that are reaching the highest in decades in the aftermath of a non-recessionary period of time. So you take a look at this, the data is giving a message.
We're not talking about hiking rates 50 basis points next month. We're talking about being open-minded, slipping into neutral, being open-minded about the future. What's wrong with that?
Yeah, I mean, the future of the Fed policy, the future of electric vehicles, the future of racing, open-minded.
I don't have a problem with EVs, per se. It's not that they've done an EV, it's that it looks like that. That's the problem.
Is it the color?
It's not even the color, it's the design.
Yeah, one analyst called it a Honda Accord. Can you imagine your $650,000 EV being compared to a Honda Accord?
If a cartoon monster ate an Accord and a Nissan Leaf and spat it back out, and Alcam went over there and put a Ferrari badge on, that's what it looks like.
I think that's been done on Twitter, by the way.
Okay, has it?
Yes, I think that's where people are going.
There you go. Coming up this hour, we'll catch up with Mona Marjan of Edward Jones as investors shake off strikes in the Middle East. We'll speak to Amanda Lynham of Goldman Sachs on why private credit fears are overblown, and Richard Bernstein of Janus Henderson saying a boring portfolio is a beautiful one. We'll begin this out with stocks closing in on fresh all-time highs. The investment strategy team at Edward Jones writing, we do not think the move in yields is enough to derail the bull market. This is not a repeat of 2022. Mona Marjan of Edward Jones joins us now for more. Mona, it's good to see you.
Good to see you.
Welcome to the programme. It's not a repeat of 22. We've heard that a few times. It hasn't been until maybe later this year when people are talking about the prospect of hikes. Do hikes change the game if we get them?
You know, look, I think the market is doing the job almost for the Fed. As you all talked about earlier today, I mean, we saw yields on the 10-year move up to 470, coming in a bit now as oil prices are coming in, but nonetheless, the Fed almost doesn't have to do anything. The market is tightening conditions for investors de facto. Now, the other thing I'll say briefly is this Fed, if this was a demand-driven shock, if people were going out there really buying oil, that was driving prices up, that's one thing. Rate hikes could help that. This is clearly a supply-driven shock. Strait of Hormuz is closed. Fed rate hikes in that environment don't really solve the issue or address the issue of adding supply to the system. So something we should consider as we move forward as well.
Hasn't it demonstrated in some ways, though, that consumers can stomach these high prices, which might be a signal to other actors in the economy, and also might be a signal for us to sit here and recognise, and this is what Bill Dudley, the point that he's making, that maybe we aren't that restrictive at the Federal Reserve?
You know, look, I think with the Fed at 3.75%, inflation around 3.8%, clearly you're at least at a neutral rate, maybe slightly restrictive if you think oil is transitory. We do think the market is forward-looking. This market is pricing in, and we see what they're pricing in. WTI futures curves are looking back to low 80 levels by year end. We're looking at earnings growth at 20% plus this year. So this is an economy that has withstood very nicely oil price increases and oil price shocks. And by the way, this is an economy that is looking forward. So we saw the same thing in tariffs. As soon as the administration said 90-day pause, markets started pricing that in. As soon as we heard the term ceasefire in the Iranian crisis, markets started pricing that in. So if you wait for 100% certainty, you probably would have missed some of this move.
What kind of future can you look ahead to, though? This is the key question. Is it one driven by AI productivity gains that are monopolized by all of the semiconductor companies and the hyperscalers, or is this a world where you start to see a broadening out, where you can see the real economy play a little bit into this narrative?
You know, we're hopeful that it's the latter. We do think the initial move, and this is usually how it works with a new technology, a new technology cycle, the initial move is by the infrastructure players of that technology. So think about semiconductors, think about parts of the data center build out that we're already seeing a tremendous move in. Over time, we should see the beneficiaries of those productivity gains start to see some gains as well. So we continue to like areas like industrials, areas like, well, comm services that can continue to benefit from productivity spreading. Now, I'll also say broadly, from a market cap perspective, we like large and mid cap. From a regional perspective, we like U.S. and emerging markets, which could be an alternative to technology in the U.S. as well. So different ways to play this over time.
I've been thinking about something since earlier this morning, so bear with me. But someone was mentioning how profit margins have been 20%. They've been the highest they've been in a very long time. You've seen incredible profit expansion at the behest of productivity, but you've seen the actual employment figures decline, if anything. Is that a feature or a bug, right? I mean, is it essentially that you're seeing these profit margins increase at the expense of jobs, or is this setting up for a jobs boom?
Yeah, you know, look, I think thus far, any softness in the labor market has not really been attributed to AI. Maybe the potential of AI ultimately taking some jobs, but layoff figures, you can actually look at the survey data, only 5 to 8% of companies are pointing to AI as a reason for layoffs. So we're not seeing AI as a reason for pulling back in the jobs market. What we are seeing in the labor market is less supply and less demand overall. So supply driven by immigration reform, driven by an aging population, lower supply in the U.S. of labor. But on the other hand, we're not seeing as robust of demand for labor across corporations thus far. So that's what's keeping this unemployment rate steady at 4.3%. We wouldn't call it a robust labor market because wage gains haven't picked up in a meaningful way either. So we're not seeing that wage price spiral kick in as well.
Mona, could you pick up your point about how you like parts of EM? Because EM right now, for me, when I look at them, they're these economies that are really dealing with spikes when it comes to the energy crisis, way more than we're dealing with in the United States.
Yeah, absolutely. You know, look, I think really the part of the world that is dealing directly with the spikes is probably Europe, maybe parts of Asia, to your point, but that is more international, developed, and not as much. I think EM has the benefit of not only the productivity gains, but the AI technology boom behind it. And over time, I think if we continue to see a dollar weakening environment, we could see EM gain some momentum as well. So probably more cautious on international development to that point, but more favorable on EM.
You're very constructive on what's going on with the conflict. If it lasts the rest of the year, do you have to start to rethink some of this?
Yeah, you know, I think certainly this conflict will take some time to resolve. And I think we've all talked about, even if it resolves in the next couple of weeks, it will take some time for the strait to open, for oil prices to mitigate, for the supply to come back on board. We know that environment is probably there for the next 6 to 12 months. But to the point that markets are looking beyond that, what's the environment going to be like 12 to 18 months when we're sitting here? Could actually oil supply, we know prior to the crisis, we were a little oversupplied globally in oil. We know that economies are looking to build their buffers. We know that, you know, countries like the UAE have left OPEC, so there's more supply potentially coming from that region. Could we be in an environment where we get back to oversupply and the strait is clearing up and we get back to global oil flows? So could we be in an environment where we're back at, $60 to $70? There is a possibility of that, especially when you look longer term.
Can we finish on EM? What does liking EM mean? What does it mean to sound like EM? Do you like, I don't know, TSMC?
Yeah.
Samsung, SK Hynix, 3, 4, 5 companies? What does it mean to like EM in 2026?
Yeah, so from our perspective, we like MSCI EM Emerging Markets Index. And so probably not at the company-specific level, but several of those that you mentioned have done phenomenally well.
And they've got massive weightings in that index.
Yes, and interestingly, China itself has come down in the MSCI EM index as a weighting. Taiwan has moved higher, so there's an offset there. But certainly this is an ecosystem that has been front and center in the semiconductor build-out and the AI CapEx spend build-out. And we think over time, the growing consumer base in those economies will be beneficiaries of the productivity gains as well.
Mona, good to see you.
Great
As always,
to be
great to catch up in person. Mona Marjan there of Edward Jones on the equity market. It used to mean something else. It used to be almost exclusively, you'd see that fast money in and out of VM. It would be based on US rates, the US dollar, and now it's almost exclusively a tech trade.
Well, it used to be cyclical, now it's secular, and that's the shift. And so when people talk about EM, they're talking about the secular shift that's really led the rally in the US, regardless of some of the economic pressures, because it is all tied to AI.
Futures this morning on the S&P up by 0.7%, with an update on stories worldwide. With your Bloomberg brief, Yahara has more. Hey, Yahara.
Hi, John. Just in the last hour, Iran condemning U.S. attacks on Iranian vessels in the Strait of Hormuz as a violation of the ceasefire. Iran's semi-official Tasnim news agency also saying the Islamic Revolutionary Guard Corps shut down a U.S. drone and fired at an American fighter jet in Iranian airspace. We are seeing Eli Lilly shares rising 1% in the pre-market after the pharma giant agreed to buy 3 vaccine developers in deals worth nearly $4 billion. The company is using the windfall from its blockbuster obesity drugs to push deeper into the infectious disease prevention market. And in sports, if you haven't heard, the Knicks are heading back to the NBA Finals for the first time since 1999. New York sweeping the Cleveland Cavaliers in their 11th straight playoff win. They'll be taking on either Oklahoma City or San Antonio in the finals, which tip off on June 3rd. That's your Bloomberg brief, John.
Very cool. Yahara, thank you. Appreciate it. Up next, we'll get you some morning calls, plus Amanda Lynham of Goldman Sachs seeing further opportunities within private credit. That conversation just around the corner, live from New York City this morning. Good morning.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
There's a lot of nervousness, and there are a lot of jobs that do seem like they are trending towards we need less of them. What has long been thought in sort of this last generation as a solid kind of entry-level white-collar job is disappearing.
That was Sarah Kunz at Clio Capital a little bit earlier on this morning on the great debate in the labour market and AI's impact still to come. Equity futures on the S&P 500 going into the open in about 1 hour and about 13 minutes away, bouncing back by 0.7% on the S&P 500, adding to a 3-day winning streak. Could become day 4 on the Nasdaq, up by 1 percentage point, and just a little bit of outperformance again on the small caps following this move in the bond market. 2s, 10s, 30s, yields pulling back, 2s down by 6, 10s down by 7. Queuing off this in the commodity market, WTI of Friday's close lower by some 4%, encouraged by the headlines over the weekend. But if you look at Brent bouncing back from yesterday's close, discouraged by some of the headlines overnight. So if you've taken a nice long 3-day weekend, it's back to where we were before. Some serious doubts about just exactly where we are in the Middle East.
Totally following all of that, and I'm really paying attention because ultimately it will dictate future action. Emery, I know that you've been following the ins and outs of this. I just still find it remarkable that people are trading off of it because ultimately we have no concept. I mean, there was a whole meme unleashed about 95% done over the weekend, which I was there for.
Right, so it sounds better than where we were on Friday, but it certainly doesn't look better than where these two countries were on Friday because since Friday, we now have active strikes in the region on top of the Iranians going after United States aircrafts and planes. So it doesn't look very good, even though the president is trying to wish cast or hope cast this deal into existence.
I think for markets, it's a single issue negotiation, reopen the strait. I think for the actual negotiation, it's a single issue negotiation. It's about the uranium, which will lead to reopening the strait if we can agree on that. We can't agree on the uranium right now. So never mind 95% done. If the 5% is the uranium, as far as I'm concerned, we're 100% not done. That's the issue.
Well, the issue is if you're 95% done, but you haven't reestablished exactly what Iran's control is going to be over the strait, exactly how you're going to secure it, whether they're going to get fees, and you're dealing with uranium, and the idea that they can't decide, isn't that exactly why we went to war in the first place? So, you know, it's a reason why people are kind of struggling with how close we actually are.
Welcome back.
Thank you.
From the long weekend. Equities are positive, stocks are close to all-time highs. There you go. That's the equity market. Let's get you some morning calls. First up, Bank of America raising its price target on Apple to 380, saying it should have meaningful leverage in an AI agentic world. The stock is up by 0.6. Your second call from UBS, tripling its price target on Micron to 1625, citing long-term memory supply deals that could lock in pricing. And finally, Piper Sandler raising its price target on Apollo to 157, saying it's one of the best-positioned companies in the alternative space. That stock is up marginally in the pre-market. Elsewhere, private credit managers looking to offload troubled assets. Sources telling us here at Bloomberg, a number of business developers are looking to trim software exposure. Amanda Lynham of Goldman Sachs writing, we believe private credit's role in the financing ecosystem remains intact and expect to see expanded deployment opportunities. Amanda joins us now for more. Amanda, good morning. Good to see you.
Thank you for having me.
Do you think that BDCs have unfairly shaped the narrative for this whole universe so far this year?
I think you're hitting on a great point, which is I feel like the market's focus, and I think this is an appropriate shift, has moved from the redemption pressures in the retail market, which is about 15% of AUM on the most conservative calculation. And it's now pivoted to actually what also matters for liquid credit, which is the risk of a slowdown in the economy and the disruption potential in the software space. And so what we see from the first quarter data actually is a continuation of the trend that we've been noting, which is dispersion but not widespread market disruption. And you had mentioned kind of the strong risk tone, earnings, trend-like growth. That's all a pretty supportive cocktail for credit risk, both liquid and private. But I do think it's appropriate that the market has kind of compartmentalized the redemption pressures in retail, which we expect to continue, by the way. The next redemption activity window will open in June. But I think that's a bit of a known at this point.
Well, can we just stay on BDCs and software? Sure. BDCs is a total universe, you've just indicated, very small. Yep. Software within that, quite large, yes, depending on which particular vehicle you're looking at. For the whole universe, are they all just loans to software companies? Give us an idea of the numbers involved here.
So a lot of the loans that BDCs hold are also held within institutional portfolios. So the BDCs are a good proxy for the broader corporate credit market. You are correct. The software on average across the private credit market is around 25% of total assets. Now, some managers flex lower than that, some flex higher. I think the debate that we are having at the moment, though, is really emphasizing this should probably be a nuanced conversation around software. For example, we're seeing different price performance in vertically integrated software companies versus horizontal. Our equity analysts who cover the space have made the point that a lot of these incumbent players won't stand still and allow their businesses to be disrupted. So I think that's the lens with which we're going into it. Not that different from the energy disruption or the retail disruption. There will be winners and losers. But even if you apply a pretty draconian outcome to the software exposure, both in terms of defaults and recoveries, in the context of the income generation of the asset class, in our view, it's not a systemic risk to the financial system. It's just a driver of dispersion. The other point I will mention is that certain vintages like 2021 and 2022 that were formed in a low-rate environment and before AI was really on investors' radar to the extent it is now are especially vulnerable.
At this point, there's a bigger takeaway, and this is what some people are saying, which is there was a reach for yield given how much money was coming into private credit. And you could see that maybe most prominently in the BDC space. But on a broader level, it doesn't make private credit as attractive as being more liquid, even if you're picking up less income. Do you agree with that type of philosophy, which we're hearing more from a lot of investors?
I think it's shifting a bit. We've seen spreads widen around 25 basis points since the end of 2025. We're seeing covenants really do stay intact, I would say, especially given the recent disruption that we've had. Look, these alternative asset classes, they ebb and flow in terms of dynamic interest. I actually think right now, private infrastructure, private real estate is really kind of in the sun in terms of funding data centers and just the significant capital need there. Private credit really benefited from a period of time when the Fed was hiking rates, the ECB was hiking rates. We're no longer in that environment, really, and so I think there's a relative value trade-off. That being said, if you are an investor looking at credit, private credit, the one thing that has remained consistent is private credit is offering you additional spread compensation, not for higher risk, but for the illiquidity premia, basically reflecting the fact that these private credit lenders don't sell out of this exposure. I would say our conversations with institutional investors are actually looking for ways to deploy in this space. The one thing that's different, though, is they're looking to deploy in areas, for example, like distressed, special situations, and opportunistic lending, as opposed to the kind of senior direct lending, which had been, to your point, the focus for the past few years.
Does distress exist?
I mean, there for sure is dry powder on the sidelines across all of these strategies. I think what you're hitting on is a point that a lot of distressed investors have been waiting for a distress cycle really since 2022, right? Because
Yes.
there was a view that there would be an imminent recession in the U.S. and in Europe years ago. But I do think, kind of going back to John's point on software, if there's an issue in software, it's not going to be isolated to private credit, because actually what we didn't talk about is the broadly syndicated leveraged loans largest industry weight is also software. So if there's an issue with software, it's going to be an issue across multiple pockets of the credit market. In that sort of scenario, private credit likely steps in to deploy because they do have the patient capital, which is a competitive advantage. We've seen multiple periods where the broadly syndicated loan market kind of seizes and risk-off periods, doesn't operate like we wish it would, kind of pulls back from lending. That would be the opportunity, in our view, for private credit to step in. So I think it's just private credit's role in the financial ecosystem is largely intact, in our view. It's just the mix shift of growth has pivoted more towards institutional, kind of more towards special situations, opportunistic, less in retail and less in direct lending.
Smart framing. Amanda, it's good to see you. Thank you. Amanda Lineham there of Goldman Sachs. Remember that moment in the pandemic? Distressed investors got very excited. This was the moment. It was the moment. The Fed had other ideas. It was not the moment. We moved on very quickly.
It was a moment. It was about 6 hours. And if you wanted to get in on it, it wasn't going to be in the debt markets because there was no debt transacting because everybody was so excited about this moment to buy that nobody sold. And in the stock market, you saw a dip. And quickly, if you bought that dip, well, congratulations.
Crazy how things turned out. The fears people had and how things ultimately turned out.
This is, though, underpinning a lot of the bullishness. You're seeing this in credit and you're seeing this in equities. Nobody wants to miss the dip, so there hasn't been a dip.
Coming up on the programme, we'll catch up with Greg Decker of EY Parthenon on whether the Walsh Fed's first rate move could be a hike. Plus, Danny has your morning movers. AutoZone's third quarter sales falling short of estimates. That stock is down by 5% in early trading.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
60 minutes away from the cash open, looking at a 4-day climb on the S&P 500, 4-day winning streak following an 8-week winning run on the S&P. On the NASDAQ this morning, higher by more than 1%. Queuing off this in the bond market, yields lower across the curve, particularly at the front end, and we'll spend some time on that, the prospect of rate hikes and all of that in just a moment. 2-year yields are down by 6 basis points, just north of 4%. Let's get you some single names, some morning movers with more. Danny Berger joins us. Hey, Danny.
Hey, John. AutoZone reporting earnings this morning, and they missed on their third quarter comparable sales. The executives over there specifically pointing out their Mexico and international sales that stayed more or less constant than they were the prior quarter, so shares down 5 1/3%. Also looking at the ADRs of BP this morning, losing a chair over serious concerns of his conduct, according to the company there. This is a company that's gone through, I believe, 4 CEOs and 3 chairs in the past 6 years, so a lot of churn. And this particular chair, Alfred Manifold, was only there since last July. Shares fall 5.6%. Finally, Micron to the upside. A lot of things happening here. Semi is rallying. Huawei coming out with new technology that maybe increases the use of chips. You also have the president specifically calling out Micron at a rally on Friday for all the spending and investment they're doing in the U.S. And UBS raising their price target to over $1,000 for Micron. Before, it was $500-something, so more than 200% price target increase for Micron. Those shares up about 7 3/4%, John.
Crazy, just absolutely crazy. Danny, thank you. These analysts just can't keep up, which is unusual. Usually it's, you know, they're being aggressively bullish relative to where the stock is, but they don't seem to be able to keep up with the earnings story as some of these names.
Yeah, especially when it comes to semiconductors, given the fact that they can charge pretty much anything, and all of the companies that are buying them, namely hyperscalers, feel like it's an existential risk. How much did they increase their capex simply because the cost had increased by the likes of some of these semiconductors? Well, guess who's winning that money? It's the semiconductors, and that's what we saw in earnings.
It's rare to say analysts haven't been bullish enough, right? Because typically you bring up the A&R page on a Bloomberg terminal and it's just a sea of buys along most names.
Given that, I wonder if they're going to miss the turn. Given the fact that they are all going to be preconditioned by missing the upside, how much they are going to be preconditioned to miss the downside at some point, because you're going to have to imagine there's going to be pricing pressure unless we see true productivity start to filter into the rest of the market.
It's a good point. For the equity market right now, all-time highs close to those levels on the S&P 500. For the bond market, yields pulling back just a touch as the Federal Reserve Chair, Kevin Warsh, is pledging to modernize the central bank while defending its independence.
I will lead a reform-oriented Federal Reserve, learning from past successes and mistakes both.
I want Kevin to be totally independent. I want him to be independent and just do a great job.
Warsh facing increasing odds of higher for longer interest rates as investors ramp up bets the Fed stays on hold and maybe considers hiking. Michael McKee joins us now for more. Mike, things are building, and they're building going into that June rate decision.
Absolutely. Now, this is perhaps Kevin Warsh's first day in the office. You know, after that nice ceremony at the White House, take your family out to lunch, go to one of your houses for the long Memorial Day weekend. His term as Fed chair, 4 years now, but his term as governor, 14 years. So, John, maybe one of your children someday will be questioning whether or not Kevin Warsh is going to resign with a new chairman in place. His first job is clean up on aisle 2. The price stability mandate is the second in the list, and there is no price stability right now. So he's got to get to work right away on PCE inflation before they can even think about cutting interest rates. We will get more information on that today with the, not today, but with this week in terms of what's going on, because we get the PCE inflation numbers on Thursday. Consumer confidence today will be interesting. All-time low in Michigan last week. We'll see what the conference board comes up with. A lot of other secondary, tertiary indicators, but we do get some really interesting information towards the week's end. And then, you know, if you're Kevin Warsh, you're sitting there wondering where everybody is on your first day. A lot of Fed speak this week, nobody in town. Kashkari is in Tokyo today, Logan, Jefferson, and Goolsby tomorrow. Lisa Cook's out in Stanford, California. Williams and Musalem are in Reykjavik on Thursday. Tom Barkin, who's from Richmond, will be in Washington. He's the only one. Mary Daly speaking out in California, some more Reykjavik, New Jersey. And then on Sunday, Chris Waller is in Croatia. The chair's in his office, but nobody else is home. He may feel a little bit lonely this week as he gets to work trying to figure out ways to convince everybody to vote for those rate cuts and make the changes he wants.
We'll have a young Governor Farrow on that list in no time, 2040 maybe, 2040 something. Michael, thank you. Appreciate it. Never seen Michael McKee so downbeat about Fed speak before. Lots going on in Iceland, apparently.
Well, I mean, I understand why they would want to give a speech in Reykjavik. Highly recommend.
Sounded pretty good, though.
Tokyo, I was about to say,
Croatia,
sort of the world tour.
I
but,
mean,
you know,
yeah, Mike should have gotten on the list. Maybe that's why he's
Probably the kind of thing that Chair Walsh is going to push back on. What are you doing in Iceland?
Talking about U.S. monetary policy. I mean, honestly, the geysers are amazing. And truth be told, it's really beautiful.
It's a great trip.
Gorgeous, gorgeous scenery.
Should we go?
Sure, I think that we should.
Next time, let's get the interviews lined up. Let's do it.
We could talk about monetary policy.
We'll take Greg Dacko with us of EY Parthenon. He's got this to say. Walsh faces a challenging backdrop. Our expectation remains that the Fed will stay on hold throughout the rest of the year, but we would not be surprised to hear some policymakers suggest a rate hike. Greg joins us now for more. Greg, we're getting closer, but as you know, this institution moves very slowly. What do you think the next step is at the June meeting?
I think the next step is to include a dual-sided statement that says that essentially rate hikes are on the table should inflation prove more persistent. And you're already starting to hear some policymakers voice that very theme, that narrative that should inflation prove more persistent than what has been expected, then they would consider a rate hike as a possibility to bring down inflation and at least prevent the risk of inflation becoming more entrenched.
It certainly feels like the centre of the committee is close to that, if not there already. Then we start to think about thresholds. Yeah. Give me an idea of what it would take to actually deliver that rate hike once you slip into a more neutral kind of forward guidance?
So our baseline right now is that inflation will surpass 4% on a PCE basis, and that we're going to see some core inflation pass through from these higher prices via food prices. That's not the core, but via higher food prices, but also transportation costs, production costs that will lead to higher core inflationary pressures. By the end of the year, we're still expecting core PCE to be around 3%. That would be a threshold that I think is very key to watch, because if inflation is indeed 1 percentage point above the 2% target that the Fed has, there is going to be much more noise around the necessity of a rate hike, especially if that trend is moving sideways and not moving back towards the target. Remember, when we were at the end of the tariff impulse, which was the case earlier this year, we were seeing inflation still moving towards the 2% target, but there were some core services metrics that were still moving sideways, and that was the hesitation for further easing of monetary policy. Policymakers wanted to see more movement towards 2%. If we are at the end of this year still around 3% when it comes to core inflation, that's going to be the point at which some policymakers will be voicing the need for tighter monetary policy.
Do you think that with hindsight, the 175 basis points of rate cuts that the Fed did over the past couple of years was too much?
No. I think the Fed was right to ease monetary policy because we had underlying inflation that was moving back towards the 2% target, and we saw growing downside risk when it came to the labor market. So the combo of the two goals moving in the right direction were essentially this notion that the Fed could have eased monetary policy. I was actually arguing a few months ago that we could have continued to ease monetary policy back towards 3%. The key narrative right now and the key new development is the fact that we have higher inflationary pressures coming from the Middle East conflict. And this is something that was not expected back in January, February. So it is a new narrative that we're currently facing, and policymakers have to adapt to that.
And so they should treat this as largely a shock, a transitory shock that essentially will sort of fizzle out as the conflict is resolved, at least according to the argument. You hear people like Bill Dudley saying there's something else here you've got to pay attention to, which is that maybe we are not at neutral, maybe we're not above neutral, maybe we're below neutral. And you're seeing other strategists and former Fed members saying the same thing based on what we're seeing with corporate earnings, based on what we're seeing with people still able to buy things even at higher prices. What's your pushback to that?
I think in general, when we're looking at the economy, we have this economy that is strong on the surface, but fragile in terms of the narrow breadth of growth. And that is really important to consider because when you think about the inflationary pressures that are currently building, the risk is that we're seeing a layered environment of supply shocks, where supply shocks are hitting one after the other. And in that type of environment, there's a risk of more inflation persistence. And that is really testing the cost of growth, the price of growth, which is eroding economic momentum. And so in terms of the neutral rate and where we are relative to the neutral rate, I think we're still in a moderately restrictive monetary policy stance when it comes to the long run. But when it comes to the short run, because of all these supply shocks, we're increasingly at an environment where monetary policy is easier than it appears to be. And that is why the Fed, I think, should be considering potentially tightening monetary policy, or at least signaling the potential to tighten monetary policy should there be more inflation persistence.
Do you think we could see Fed Chair Walsh dissent? A chair dissent in his own meetings?
I think that's very possible. It's something that hasn't been done since the 1930s, but I think it's very possible because we have a greater fragmentation amongst policymakers. We have a large share of policymakers, a vast majority, per the FOMC minutes of the April meeting, a vast majority that considers rate tightening as a potential next move for the Fed. And in that environment where Kevin Warsh is indeed supportive of easier monetary policy because he's expecting AI investment to deliver strong productivity growth and ease inflationary pressures, he believes the Fed should be accommodative today. That's not what most policymakers, especially regional Fed policymakers and some governors, are thinking about. They're much more focused on the today, on the here and now of inflation being above the 2% target and moving in the wrong direction. I think the movement is very important.
I've got to ask you this. If you did see Chair Warsh dissent against the bulk of the committee, how would Governor Powell vote?
I think he would vote with his mind and with his heart.
You don't think he'd vote alongside Chair Warsh just to keep a low profile?
Perhaps, but the reality is that Powell is much more concerned about the institutional credibility of the Fed. And in that regard, he's going to be very much focused on the two objectives, inflation and maximum employment. And if there are indications that inflation is moving further away from the 2% target, while the employment side of the mandate is still relatively stable, even if in appearance, he would actually consider tightening monetary policy or at least moving towards a more hawkish bias. So I don't think he would necessarily just follow Kevin Warsh in every decision to not make any noise. He's going to be voting as to what he believes is in the best interest of the U.S. economy.
Looks like he'll be making noise regardless whether he likes it or not. Greg, thank you. Appreciate it. Greg Dacko there of EY Parthenon. Can you imagine if it plays out in that particular fashion, what that would look like? What kind of signal would that send?
You know, if everybody voted to hike rates and we did not get that from Chair Warsh, that I think alone would be a pretty big signal. And then if you had, of course, this question of Governor Powell voting alongside the rest of the committee, then the conversation will be Kevin Warsh lost control over the Fed. Kevin Warsh is a Fed chair in name only, but not in practice.
Which is why dissenting, if the chairman chooses to dissent, the optics of that would just be atrocious for the chairman, by the way.
Well, not just that, but also because Kevin Warsh was one of the most hawkish members of the Fed board when he was back on it back in the 2000s. So you start to wonder, who would this person be? I mean, again, will the real Kevin Warsh please stand up?
Of course, a lot of speculation here. We've got no idea. I imagine June's going to be very boring after all of this. Just be very boring. Slip into neutral.
Yeah, I don't think so.
Keep the news conference really short.
You think so?
5 questions.
Honestly, the way that he does that will be analyzed, scrutinized.
Is he thinking about capping questions?
No, I'm just saying, you know.
I got
just
nervous
make it super short.
Yeah, I don't think so.
Who says he has to take like 20 questions in the news conference and the thing has to last 60 minutes? Who says? He can keep it short if he wants to.
Stop.
Yeah, he could change it.
Don't give him ideas.
All
Stop.
right.
Yeah, but
I'm sure he's got his own ideas on the matter. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Yahara has more. Hey, Yahara.
Hi, John. The head of the World Health Organization is visiting the Ebola-hit Democratic Republic of Congo today as fears grow over a wider regional outbreak. The number of confirmed deaths in the country has now topped 200. China is restricting overseas travel for top AI professionals at firms such as Alibaba and DeepSeek. The move escalates efforts to safeguard strategic technology and close the gap with the U.S. on artificial intelligence. And we are seeing BP shares trading lower in London after the company removed Chairman Albert Manifold effective immediately. BP says the decision was tied to serious concerns over governance, oversight, and conduct, but the company did not provide specific details. That's your Bloomberg Brief. John?
So much churn at that company. So much churn. I think that's rattled a lot of investors. Yahara, thank you. Up next on the programme, we'll set you up for the day ahead. Plus, we'll catch up with Richard Bernstein of Janus Henderson Investors on why he's sticking with a boring portfolio. Not quite the best tease, but he'll tell you why in a moment. From New York City, you're watching Bloomberg TV.
About 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI. That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
for cutting rates now is actually very, very weak. We've been above the Fed's inflation target for more than 5 years, and there is a risk that inflation expectations do finally become unanchored. The Fed is concerned that they're starting to lose credibility because they haven't been able to get inflation back down to 2%.
Bill Dudley, former New York Fed president, just hit pause just for a moment. Took 3 hours. Took 3 hours, converted Bramo. Okay, no longer supporting the new Ferrari. What's the position now?
I think that the orange one looks okay. Look, you made me look at one versus the other.
The Ferrari Amalfi.
The Ferrari Amalfi versus
a real Ferrari.
You know, one of these, and it just
the epitome of design.
It doesn't. It
she just wants to be
looks
contrarian.
a little bit like a car
even she
that
can't hold this line.
a kid would have just pulled back. It looks very basic, but it might be really good for Johnny Ives, right? Because it sort of is reminiscent of the Apple designs, but not necessarily Ferrari's designs, but it might have a great engine.
I remember getting to a traffic stop in Sao Paulo. Taxi pulls up, stops. Car to the right of me pulls up to the side. Father gets out with his child, walks towards the showroom, holding his hand, just to look through the window at the Ferraris. That's the pull that brand has, the epitome of design, aspiration, ambition, even for people who wouldn't be able to dream of ever buying one. That's what a Ferrari should be. That thing that Ives has designed as a standalone vehicle, judge it as a standalone vehicle. As a Ferrari, I'm sorry, but the bar is like up here and it falls way short of deserving that badge.
If people are just joining now, earlier when I was trying to defend this car, John said that he put me in a bucket with cut spaghetti as well as cappuccinos after lunch, which gives you a sense, you know.
And ketchup on
and
pizza.
Ketchup on pizza. I will not put that in there because it's disgusting.
And then called the Luce de Luce, so there we go. It's been the last 3 hours. As we count you down to the opening bell, here's your trading diary. The week ahead, better than this. 10 a.m. Eastern Time, Conference Board Consumer Confidence in focus after you, Mitch, was rock bottom on Friday. Looking ahead to Salesforce earnings on Wednesday, Thursday, core PCE, durable goods, and another round of claims, plus Costco earnings. Look out for Costco and a couple of other retailers, I believe Best Buy, in the mix as well. Stocks extended gains this morning ahead of the opening bell. Richard Bernstein of Janus Henderson Investors writing, it seems clear that we're in some sort of highly speculative environment. We are sticking with our theme of boring is beautiful. Richard joins us now for more. Richard, welcome back to the program. Congratulations, by the way, on the acquisition to Janus as well. Welcome, sir.
Thank you.
Let's talk about boring is beautiful. What is boring in 2026? What is that?
So, John, what's boring is basically almost everything out there that people don't want to look at. I mean, I would argue that the range of potential investments is maybe historically broad, but people have no interest in this broad kind of normal capital formation investing. Everybody's speculating, and the quote you had from me was referring to that people are having trouble differentiating between the financial markets and the prediction markets. And that's ridiculous. That shows how speculative an environment we're in.
You talk about short duration investments and focusing on just the higher quality within fixed income, which is notable right now, given the fact that a lot of people are talking about inflation as the big risk. Inflation is not boring. It tends to wreak havoc through a whole series of stocks and pick winners and losers. How do you deal with the inflation risk? How much of that is underpinning some of your boring thesis?
Right. So Lisa, I think that people have focused too much on the near-term cyclical inflation issues. You know, even your previous guest talked about the war a little bit. I think people are still missing the secular backdrop, which is very inflationary relative to history. I don't mean like there's going to be 8% inflation, but I would argue vehemently that the Fed's 2% inflation target is very antiquated, or they've got a lot of inflation fighting to do. They have a weird choice they got to do here. And the reason why is simply deglobalization. And deglobalization is inherently inflationary because we're reducing competition. And as you reduce competition, you get upward pressure on prices. So you want short duration, whether it's short duration fixed income or short duration equities, because as inflation pipes up, you need more cash flow up front to meet your spending needs. People have forgotten about that in such an extended period of disinflation. So we think that's very, very important, is those near-term cash flow, cash plus type investments.
Richard, I want to ask you what you think of prediction markets, because you talk about it on your note. How speculative is the environment when you say basically, and you're correct, you sometimes can't tell the difference between what's going on in prediction markets and the stock market?
Right. So, Anne-Marie, I think that people have totally lost the point of what the financial markets are all about. The financial markets serve an economic purpose to build capital formation. Right? Companies can raise capital. They can then expand plant and equipment. They can expand employment. But it's real investment in the economy. So the financial markets are there to spur real investment in the economy. The prediction markets have no economic value added whatsoever, right? They're basically saying, oh, something happened, that's good, and you win. So I don't quite understand how one could get this one, that the Knicks are going to beat the Cavs, right? I guess that paid off pretty well. But that has some economic value in the economy.
When there are binary things, though, that people are betting on, is there information in where that money's going, Richard, to apply to how you'd approach equity markets?
Well, I think that there's an information content, perhaps. I mean, I think that there was certainly some academic studies on limited prediction markets and what would happen, and do they tell more than is there information content in those prediction markets? I think the answer to that from an academic perspective was certainly yes. But now we have so many prediction markets, and there's also questions, I think legitimate questions, about whether they're fair or not. Does it really give you the information content that people believe? I'm not so sure about that.
Richard, appreciate your take. As always, we'll see you in person next time. Thank you, sir. Richard Bernstein there, now with Janice Henderson, investors on prediction markets at the end there, and the shortfalls when thinking about financial markets.
Yeah, there are a lot of people who are saying that potentially they're increasingly more detrimental than they are beneficial, in part because it also is training a new generation of investors to essentially just gamble. And what we see in day-to-day market activity is becoming more like gambling. Are they going to open? Are they going to close? Do we even know what that means? Doesn't matter. Open, close, open, close. Is that really going to ignite the interest of a lot of portfolio managers that have 3-4 month horizons? Probably not. And that's what you hear every morning.
Also, I think what we've seen, at least in Washington, D.C., is a lot of concern. I mean, the White House even had to send out a note reminding people not to make sure they're using some information that they're hearing in the likes of the prediction markets. Think harder to track down who potentially is going on the prediction markets with information that is not known to the public.
Who's got an edge and who doesn't right now? We're done this morning. That was fun, wasn't it?
That was fun.
We're done with Ferrari for the week, right?
No.
No, we are. No more. Not tomorrow. We're done.
No, we're
Completely.
done. We're absolutely
moving
done. Oh, tomorrow she'll be clutching her Knicks mug again. That was literally through the whole show. Occasionally, we would just be like,
just to show everybody.
Just so you guys know, though,
during her commentary, she would just sort of
since
hold it
the
up.
show started, because I keep refreshing, tickets have gone up. I'm
glad you're focused.
What's the get-in price
now? It's closer
now?
to 4K now, and you're talking nosebleeds. Again, anyone out there?
We don't accept tickets, but maybe we do.
Yeah,
kind of, sort of. All right. New York City this morning. Good morning. Thank you for choosing Bloomberg TV. This was Bloomberg Surveillance, and we'll see you tomorrow morning.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacqua. Listen and watch on Bloomberg Television or wherever you get your podcasts.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start in the third floor or the lobby. You actually have to start in the basement.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Good Tuesday morning, 30 minutes till the start of the cash trade. Futures are higher. I'm Matt Miller.
I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, U.S. and Iranian forces clash near the Strait of Hormuz, clouding hopes for a potential peace deal.
Eli Lilly aims nearly $4 billion in vaccine deals and posts encouraging results for a cholesterol drug.
Plus, Ferrari's long-awaited EV debut falls flat despite help from former Apple design chief Johnny Ive. The stock is down on this design.
I'm not going to even get into this one right now because I know you have lots of opinions, so we'll maybe save that?
Yes, let's save that for a little bit. We're going to talk a lot about it today.
Obviously we'll talk about it. But first, I am looking at space stocks this morning, Matt. EchoStar, York Space Systems, Rocket Lab, all of them are up around 5% and more. SpaceX has begun its IPO roadshow for what's expected to be the largest public debut in history. And if SpaceX can be $2 trillion, why can't these companies be worth more, Matt?
Yeah, I think that's the resounding agreement in markets, and that's why they're up so bigly across the board. Ferrari's first ever all-electric car is not getting rave reviews. Analysts and influencers comparing the more than $500,000 car to a Tesla or a Honda, and we're going to talk about that because I bet you everybody in your office is talking about that today as well. And it looks like it's actually moving the stock. Now it's only down 3.5%. It had been down almost 8% in the early pre-market. A lot of people have been looking at this thing for about 12 hours now, Danny.
It's a mighty fine Nissan Leaf. Let's get back to our top story this morning, though, and that is the latest on the war in Iran. Investors remain hopeful of an imminent deal to end the war, even as fresh U.S. strikes send Brent crude prices higher, still under $100 a barrel, though. Here's what Secretary of State Marco Rubio said about the continued closure of the strait.
I need to reopen. What's happening there is unlawful, it's illegal, it's unsustainable for the world, it's unacceptable. I don't know of any country in the world that does. And the Russians are not in favor of a tolling system. The Chinese are not in favor of a tolling system. I mean, there's no country in the world that's in favor of a tolling system except the regime in Iran. So that's not acceptable. That cannot happen.
Joining us now is Bloomberg Washington correspondent Tyler Kendall. Tyler, it certainly doesn't sound like progress towards a deal if you still have attacks happening in southern Iran.
Yeah, and if you still have what is now renewed fighting when it comes to Iran, Danny, as CENTCOM confirms that the U.S. military conducted what it's calling defensive strikes near Iran's largest naval base. That included hitting targets such as missile launchers and boats that appeared to be laying mines near the Strait of Hormuz. The Iranian side, they say that the IRGC did engage with multiple U.S. drones and an F-35 fighter jet, just heightening the tensions and reminding reminding us how fragile this situation remains. At the same time, though, you still had U.S. officials say that progress is being made towards what is shaping up to be a memorandum of understanding. And it is our understanding that this would be a phased agreement that would potentially see an extension of the ceasefire that is currently in place, if that is what we could call it at the moment. And then we would see a gradual reopening of the Strait of Hormuz with the U.S. lifting its naval blockade. Only then would we get into those discussions for potential curbs on Iran's nuclear program and what happens to that stockpile of already highly enriched uranium. But Matt and Danny, the thing is, new sticking points are emerging even this morning. As we heard earlier from Iranian state media, which says that Iran is demanding that at least half of its estimated $24 billion in frozen assets need to be unfrozen first before they could move into this first phase of the deal that could see this reopening of the strait. The Trump administration, in response to some criticism coming from Capitol Hill, has said that President Trump is willing to walk away from a deal if it is not a good one.
I wonder, in terms of what we heard from Marco Rubio, right, about the tolling system. Obviously, there are waterways that charge tolls. You can't cross the Panama Canal for free, for example. It can cost hundreds of thousands of dollars. Will we accept any control of the Strait of Hormuz by Iran in an agreement? Will we unfreeze funds for the Iranians to use? Will we allow them to keep highly enriched uranium in country? Will we even pay reparations to end this unpopular war?
Well, Matt, at this point, you're listing all of those big questions that we still have about how this deal could ultimately shape up. We should say you're right when it comes to the waterway and tolls, though the Strait of Hormuz in particular is raising some legal questions on the international stage, considering that this waterway is subject to a ratified law that the U.S. and Iran haven't ratified, but it does have to deal with freedom of navigation. And we know that many of our regional partners, as well as European allies, definitely would not stand for a toll. We've heard the U.S. say this as well. So a lot of different things here to watch. But you're right. Repayment of war damages is something that Iran has asked for. Also, that unfreezing of assets. I read the headline earlier today that they want to see at least half of the estimated $24 billion unfrozen before they even agree to let up their grip over the Strait of Hormuz. And that is really why you're starting to see some of those more hawkish members on Capitol Hill, like Senators Lindsey Graham, Roger Wicker, Ted Cruz, raise concerns that the U.S. could be giving up some of its biggest points of leverage, including the U.S. naval blockade, in order to try to grease the skids to get some sort of movement here without really firm guarantees on exactly what Iran would do when it comes to curbing their nuclear program and intent of their nuclear program.
All right, Tyler, thanks very much. Bloomberg's Tyler Kendall reporting on that situation in Washington. Now, Eli Lilly is taking another step toward what could become a one-time treatment for high cholesterol and heart disease through gene editing. For more, Madison Mueller, a Bloomberg health reporter, joins us on set. So this is interesting. We could see, I think it's a 4-hour intravenous treatment that essentially solves bad cholesterol issues for what, the rest of your life?
Yeah, I mean, that's the idea, is to have a one-time treatment that would prevent heart attacks, prevent potentially heart disease for people, which is still the #1 cause of death globally, is heart disease. And so this is potentially something that could be a really big deal, both for Lilly and for people around the world. But the thing that we have to keep in mind right now is that this was still a really small, early-stage trial. So we still need more results to see if this is something that will actually, bear fruit, that will come to market. But as of right now, it's a pretty exciting, promising early signal, sort of part of Lilly's effort to expand beyond obesity. Obviously, it's a large company with many different other disease areas that they're trying to solve for. And the biggest thing for Lilly right now is trying to figure out sort of what their next era of growth will be beyond obesity. So this is part of that strategy.
Well, just on that, you were reporting this morning that they bought 3 different vaccines in infectious diseases. Is the same idea, trying to expand beyond obesity?
Yeah, exactly. So Lilly has sort of a long history in infectious disease. They were the first ones to manufacture the Salk polio vaccine back in the 1950s. They made antibiotics back in the 1940s. And so they've been in this area, over the last 100 years or so. But they're getting back into it. They hired former FDA official Peter Marks back last year. And so he's overseeing that unit. He has a lot of experience there. And so this is sort of their first foray back into infectious disease with these 3 big vaccine deals this morning.
All right, Madison, thanks very much. Bloomberg's Madison Miller there talking to us about Eli Lilly. We'll continue to talk more about that throughout the program. Also, Ferrari trading lower following disappointing reviews of its first fully electric model. Craig Trudell, Bloomberg's managing editor for global business coverage in the Americas, joins us. And Craig, you've covered cars for us in Europe, in Asia, in the U.S. How is the market responding to this $640,000 EV?
Not great. I mean, in short, I mean, this is just a vehicle that does not look very Ferrari-like. It has a lot of superlatives to it in terms of, biggest, heaviest, first five-seater as well. And yet, I think while there's a lot to like about the interior of this vehicle, I think the exterior in particular is getting a lot of polarizing reviews where people are comparing this to a higher-end Nissan Leaf or a Honda, which is just not the sort of comparisons you like to hear if you're in Maranello.
Or a bar of soap, even. Just with this, Craig, because you've seen a lot of the luxury car makers just back off and have varying strategies over EVs in general. So this car, what does it take for it to be successful? Can it not just have a handful of people, or more than a handful, who say, I want something unique on the road that shows that I have bought this Ferrari EV, and that be enough to make this investment worthwhile?
I do think that's a great question to sort of set expectations for this, where a lot of manufacturers have swung and missed when it comes to higher end electric vehicles. Ferrari, they don't necessarily have to sell a ton of these to be able to sort of declare victory here. This is a model where I would suspect even in the range of like 500 units at the price they're looking for, they're going to be quite happy with that. And if you're setting up, your sort of sales strategy at Ferrari to say that in order to sort of get an allotment for other vehicles that sort of Ferrari purists are more interested in, you have to have one of these. You're going to have some well-heeled consumers who are going to be more than happy to put in for this, even at that price point.
People who aren't, obsessive don't know that if you want to get the V12, the latest top-of-the-line Apex Predator Ferrari, you have to buy an entry-level model first.
The Hermes model. They did the same thing. You want the best Birkin, you got to buy a weird canvas one first.
Exactly, but you can get an Amalfi for what, like 300 grand, right? You don't need to be spending $650 on a car to get into the $650,000 car club.
Yeah, this is going to be fascinating to watch, because I do think that there are a lot of people who are sort of reacting to this as sort of an abomination, and yet there are going to be some absolute there will be some interest in getting the first Ferrari. It is a vehicle that is going to sort of make history for this company, regardless of how the sort of instant reactions are to the looks of this vehicle.
All right, Craig, thanks so much for joining us. Craig Trudell there covers cars for us really globally. Also, you can listen to my podcast, Hot Pursuit, with Hannah Elliott. Hannah, I hope, is going to join us a little bit later on in the program to give us her take and the takes of the elite car collectors that she speaks to on a daily basis out in Los Angeles, so stay tuned for that. In terms of the markets right now, we're still looking at gains despite hostilities in the Middle East. You can see S&P futures now up another 0.2%. NASDAQ futures gaining more than 1%. So the momentum trade is real. Let's get a look at some of the single stocks moving on our radar. AutoZone earnings beat estimates, but its international sales are struggling. I didn't even know they had international. Can you go to an AutoZone?
Mexico is one of their big markets, and that's struggled for them.
I see.
Elsewhere, there's Oklo. Those shares are surging. There's a new pact with the U.S. Energy Department. Shares are up nearly 10%.
UBS raised its price target on a stock we talk about a lot on this program, Micron. They see it now hitting $1,625. Their previous target only $535. Long-term memory supply agreements could support significantly higher earnings and free cash flow forecasts through 2029. We're going to talk more on that throughout the program as well. This is Bloomberg Open Interest.
morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years, and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start on the third floor or the lobby. You actually have to start in the basement.
Bringing you up to the minute geopolitical news whenever and wherever it's happening. I'm Anne-Marie Hordern in Caracas, Venezuela, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anim, only on Bloomberg.
Let's get now to high interest to look at the non-Ferrari stories that are making headlines around the world today. BP fired its chairman, Albert Manifold, over what it called unacceptable governance and conduct issues only months after he took the role. Shares fell as the company faces renewed leadership turmoil during its turnaround effort. BP named an interim chair and said it remains committed to its strategy under the CEO, Meg O'Neill. Two ex-SoftBank investors are charging Wall Street firms $25,000 a day to teach bankers how to use AI. Their startup, called Wall Street Prompt, shows hedge funds and banks how tools like ChatGPT can automate earnings analysis, research, and deal work as thousands of finance jobs face AI-driven cuts. And Micron is on a pre-market tear after UBS raised its price target to a street high of $1,625 a share from just $535 previously. The firm sees demand for AI memory accelerating. Micron CEO joined Bloomberg TV last week to talk about its expanding U.S. production.
Of course, the demand for memory has really surged, and that is because of the importance and the value and the capability of memory that is really essential for all advanced systems. And yes, there is a shortage, but Micron is working hard to increase supply through these projects here in America, here in Manassas, Virginia, Boise, and New York. And we see this shortage continuing beyond, well beyond 2026 timeframe.
Let's bring in Bloomberg Intelligence Head of Global Tech Coverage, Mandeep Singh. Micron also getting a call out from the president on Friday for all their investment in America, so that probably helping them too. I don't know. I'm actually not sure. He very well could, to be fair. But the sell side can't even keep up, Mandeep. It is remarkable of how much this company is growing. Is it just this idea that we continue to invest in the bottlenecks and chips and semis is a clear one?
Yeah, and when you look at the gross margins of a company like Micron, I mean, we've gone from negative gross margins to 81% gross margins in a span of few quarters. That just goes to show how tight that supply is. And even though, you know, the CEO was talking about adding more capacity, none of it will be enough to really, supply enough for all these LLMs and inferencing. And so from that perspective, I think the agentic AI shift that we have seen over the past few months has been a real driver for memory. That wasn't the case when, we were in that training of LLM phase. So that shift from training to now agentic AI has been a huge driver. and everyone is trying to model the price increases, but they keep exceeding estimates, and which is why you're seeing price target revisions and just the margins continue to expand here.
I was looking at the EE page, so you can look at a nice summary of earnings estimates on the Bloomberg terminal. It shows, for one thing, that the forward 12-month price earnings estimate is still less than 8. But for another thing, it shows, on a list of here it is, on a list of different lines, so EPS, adjusted revenue, net income, adjusted operating profit, EBITDA, how many analysts got it right? Almost none of them were above what was published. Are the analysts going to do, Mandeep, are your colleagues going to do a better job this time?
I mean, just think of, what we are talking about here. These companies used to have 15, 16% operating margin. Right now, they are at 4 times, almost, 65 to 70% operating margin. And I think even though you try to, extrapolate the trends and you don't try to box yourself into linear thinking, it's very hard to see that, huge jump, 4x jump in margins, especially when you're trying to model ahead. And so from that perspective, it is sort of a gradual build-up in terms of, okay, they have pricing power. We know they've been raising prices, but of this magnitude and for this long of a cycle, which is why I think this will exceed everyone's expectations in terms of the length of the cycle and how much room there is to grow. And look, the capacity additions will catch up eventually, but for now, we know it's a very tight market.
When does the cost of inference become a real problem? You've seen it selectively for a few companies like Uber. I was also looking at a story this morning that DeepSeek has cut their pricing by something like 75% for their current model. When is that going to be the route that these U.S. frontier models try to do, that they realize that companies can't keep paying up or they won't have as much pricing power? Maybe they will forever have pricing power and they can command whatever they want for inference costs.
No, so that's a function of that token demand. So right now we are seeing tokens growing 7x, and Google actually gave that number at their event. If that starts to come down, and 7x is a 700% increase, so you really want to see that come down, and then it's a question of how good are the open source LLMs versus the proprietary LLMs? Do proprietary LLMs continue to command, a pricing advantage? And so from that perspective, we've all these questions that will be answered over time. But for now, we know the demand when it comes to tokens is like off the charts. And that's why everyone is paying up.
All right, Mandeep, thank you so much for joining us. That's Bloomberg Intelligence Head of Global Tech Coverage, Mandeep Singh. Coming up on the show, Empower's Marta Norton joins as we are set to trade at another all-time high, just 10 minutes away from the open. This is Bloomberg Open Interest.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
The
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Check on markets ahead of the opening bell, and we are poised for another all-time high, up 0.7%. NASDAQ outperforms with the chip makers having a good day. This would be the we had the eighth consecutive weekly gain for the S&P, the first time since 2023. Even though the price of Brent crude is higher, still under $100 a barrel, and 10-year yields at 4.4787. Let's bring in Empower Chief Investment Strategist Marta Norton. Marta, how are you feeling here at all-time highs? Are you comfortable with the current level that stocks are trading at?
Well, it's interesting because these all-time highs have come on the back of very select areas of the market. And of course, we're talking about those memory chips and those semiconductor areas. Those areas do seem a bit frothy to me, but if we're looking at the market on a whole, even if we're looking at some of those mega tech areas, some of those areas still seem attractively priced to me. So even though we are grinding to these all-time highs, I guess I'm not overly concerned at this moment.
Do the events of the Middle East really have anything to do with what happens in equity markets? Because even though the president, and Marco Rubio continue to say a deal is close, the Iranians are still mining the Strait of Hormuz. Like, clearly it's not.
Yeah, talk about mixed signals. It does, I think the market does have some worry, and we especially see this in the bond market, of course, but have some worry about an asymptotic event, right? Where we get ever closer, but we never actually touch it. I think that is in the background, and I think if we were to see a deal come together, the markets would unleash. But there's so many other positive factors that are at play, and obviously the equity market is focused on those at the moment.
At what point, though, do higher yields become a problem? Or at least, Marta, does it make us more vulnerable if we do get any more further disruptions? And only less than a minute here.
Yeah, so it's threefold, really. It's valuation, it's the fundamental concern of higher borrowing costs, and then it's the competitive nature of bonds offering stocks, just that higher income. So I think it is a problem. It's just, is it a problem for the AI trade? And I think that is what's driving the market, and that's where maybe there's more resilience.
All right, we're going to continue to talk about this with you, Marta. You're staying with us. Marta Norton with us through the open. Check on markets as we head to the bell right now. We are seeing really decent gains after an 8th straight week of gains in equities. We had a record high once again at the close, and we're up 0.7% on futures. This is Bloomberg Open Interest.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller. Kicking off a shortened trading week. Of course, yesterday closed for the Memorial Day holiday. Today we're up 0.6% on S&P futures. NASDAQ futures up more than 1% as chip makers especially, this momentum trade continues to push stocks to new highs. We hit at one point on Friday, the last trading session, 75.06. That is, I believe, an all-time intraday high. We closed a little bit below that at 74 and change, but it looks like we could push to a new record high today. MasterCard ringing the opening bell at the New York Stock Exchange. Interesting stock as we talk about consumers. We're going to get confidence numbers out in just about a half hour. Over the last 5 years, this stock is up 42%. Which trails Visa up 50% and American Express up more than 100%. So of those three payment methods, at least, I don't know what Diners Club is doing, but they're doing the worst of the major three. This company ringing the bell at the NASDAQ, I don't know how to pronounce it. I'm going to guess Rayoj Baba. And it's a very small company. I note in the description of what they do, they claim to improve and restore physical and mental health diminished by work-related stress through corporate consulting and health services. And I can understand why that's necessary.
Yeah, and they're big in Japan, which has a brutal work-life balance culture, too. I just want to know what they do. Is it like, you know, they roll out the yoga mats at your office, you do breathing exercises?
They give you one of those little sand gardens with a tiny rake. You know?
So relaxing. Yeah. We should have one of those at the set. Matt, this morning I'm looking at all of the rocket space-related companies. They're rallying a lot. It's off the back of SpaceX beginning its IPO roadshow. It's expected to be the largest public debut in history, and considering high valuations are expected to be for SpaceX, maybe there's optimism around these. A lot of these companies, though, Matt, are not even profitable, so already trade at pretty high valuations. But yeah, sure, why not bid them up even more?
Yeah, you don't have to make money to be a stock market success. Ferrari, which does make a lot of money, Ferrari's first ever all-electric car is not getting rave reviews. Analysts and influencers alike comparing the $650,000 car to a Honda or a Nissan Leaf. I think it looks like what would happen if Lucid Air designers really brought their idea to fruition. So I don't hate it, but just as a Ferrari, and for that price, it doesn't make sense.
I saw the blue one, and I was like, I get what they're doing. They're trying to have something so distinct that you're driving it, and people would say, oh, look, you got the Ferrari EV. And then I saw it in red and orange and no good.
It's not fantastic as a supercar, right? But if you think of it as a brand extension, or obviously a signifier to the people in your neighborhood that you just spent
That's
so
what
much
I saw.
money.
It's like a Cybertruck signifier, that you have something so weird and odd looking that it means something and people can spot it.
If it were an Apple car, we would all be saying, that looks fantastic. That's exactly what I thought an Apple car would look like. And of course, Johnny Ive helped design it. We're going to talk more about that a little bit later, I hope, with my Hot Pursuit co-host, Hannah Elliott. Hopefully she joins us. It's quite early in Los Angeles. Let's bring in bring back in Empower Chief Investment Strategist Marta Norton. Have you seen the new Ferrari, Marta? Do you have it? Do you have a take?
Yeah, I've seen it. I've heard the conversations on Bloomberg all day. I know there are strong feelings.
All right, well, we won't get into that, but I mean, somebody's going to be able to buy this for $650,000. I know we talk about a K-shaped economy all the time. How is the upper end of that K doing in this market, in this economy?
It seems the upper end of the K-shape is doing quite well. That's really the force behind a lot of the resilient consumer numbers that we've been seeing. Of course, there's the concern on the lower side of things. And you know, one thing I would argue is that we're not necessarily just seeing a K-shaped economy. We really see a splintering economy, especially when you think not just across low and high income, but also homeowners versus those who don't own a home and would like to, or folks who don't have a job versus those who do. So there's all different ways to cut the economy these days.
One of the things, it feels like there's two conversations happening on each coast of the United States, but with different intensity, and that's this idea of the K-shape getting even worse because of AI. It feels, just from talking to people in Silicon Valley and in California, and just from reading different editorial pieces, that there's a real sense of anxiety that basically everyone who's made their wealth, that has been working for Anthropic and OpenAI, that they're done, and if you haven't made your wealth, you can't now, because AI is going to be replacing so much, and a permanent underclass will arrive, even for those in tech who might be losing their jobs because AI can now do it for them. Marta, where do you stand on this, you know, the extremes of whether or not AI is going to have a really disruptive, powerful force in exacerbating a K-shaped economy?
Well, Danny, I really have to echo and underscore that idea of anxiety around AI. I see it with clients as well. So concerns don't just relate to the war. They don't just relate to inflation or tariffs, what we heard about last year, but they relate increasingly to AI. I think a lot of the conversation around AI has done very little work in actually marketing it to the broad masses and what that actually means for their quality of life. When I'm looking at the numbers, at least from the labor market, for example, I don't really see it in job losses. I do think that there's some impact on the hiring front, so that's somewhere where I'm watching. I think at this early stage, it's still very much in the benefits phase for most of the economy. I mean, even if we look at the impact on markets, it is AI that is offering kind of the resiliency to the U.S. markets that we're seeing today. So I think there's a lot of good out there, but these questions around what it means for the broad economy, what it means for the labor market, I don't think those have really been answered yet.
What do you think about the momentum trade? I mean, it's astounding to me that Micron is still trading at less than 8 times estimated earnings. I guess I would buy the stock too if I thought that, you know, that could continue, that kind of growth.
Well, it depends on how you're thinking about what those valuation metrics are telling us. We know that some of these areas are very commodity-like, that their earnings are very subject to kind of fits and starts. And of course, if we're looking at this space, we're on the long end in terms of how long the upcycle has continued, at least on a revenue standpoint. So you really have to buy into the theory that this agentic AI is going to fuel further and further gains for a lot of these companies. Now, that could very well be the case, but you are subject to that commodity cycle. And so I think if you have any sort of skepticism in you, it's worth thinking that those valuations are a little bit higher than maybe they look at face value.
Marta, is there some skepticism warranted for the amount of supply coming to this market? Past market tops have coincided with a flurry of IPOs with demand, not necessarily keeping up with supply. Should we be thinking about SpaceX, OpenAI, Anthropic in the same way?
I mean, that is the big research topic that we're tackling right now, is this summer of IPOs. And of course, it's probably going to extend beyond the summer, but with SpaceX, with Anthropic, with OpenAI, they really can have two different narratives. One is that it could really reinforce this thrust of AI. And on the other hand, you have to wonder, how are people going to buy in? Are they going to use cash? Are they going to trim across the board? Or are they going to look for what they can find as the closest substitute company and maybe trim that and move into some of those names? So I think watching where that marginal dollar comes from is going to be really important for how the market behaves on the whole.
All right, Marta, we're going to have to end it there. Thank you so much for joining us. That's Empower Chief Investment Strategist Marta Norton. Let's get a check on your equity market now, over 8 minutes into your trading day, and it is the chip makers. Look at this gain on Micron, up 12%, followed closely by Broadcom. Again, it's these chip makers that are helping us. Micron has a lot going on. We've just been discussing them. We didn't perhaps mention that President Trump called out Micron on Friday, thanking it, or just basically saying, look at all the investing it's doing in the U.S., and it is doing a lot, about $200 billion it's committed. AMD, Apple is up there too, SanDisk, again, Texas Instruments. If you're a chip maker, you're in for a good ride this morning. To the downside, Costco's having a tough day, as is Johnson & Johnson, some of these more consumer-oriented companies, as does it seem some of the cybersecurity ones. Palo Alto, Palantir, those are down this morning. Walmart is down, IBM. If you look at the sectors, tech is likely going to be doing well, thanks again to the semis. The SOX index is higher, so Infotech at the top, industrials followed by close after. At the bottom of the pile, energy is lower as WTI moves lower. Consumer staples and healthcare, those are in the bottom too as we head towards another all-time high, Matt.
All right, coming up, we're going to talk about this momentum trade with Micron as a poster child. It surges on an analyst upgrade. Details of the new price target next. This is Bloomberg Open Interest.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
After 8 consecutive weekly gains, the longest winning streak since 2023, we are yet again trading near all-time highs for the S&P 500 at 75.21. NASDAQ outperforms thanks to the chip makers. Let's get you some top calls now. Some of the analyst upgrades and downgrades of the morning. First up, Barclays, they upgrade Occidental, saying that stronger oil prices should help the company clean up its balance sheet and get ahead on payments tied to Berkshire Hathaway's preferred stake by late 2027. Shares little change. Next up, HSBC upgrades Marvell, saying Wall Street isn't fully pricing in just how big its AI business can get. The firm sees strong growth ahead of its optical products and says Marvell's CXL business is also being overlooked. Finally, this is the crazy one. UBS raises its price target on Micron from $535 to $1,625, more than 2x. The firm is keeping a buy rating on the stock, saying that long-term memory supply agreements could lock in pricing and demand visibility across the industry. Micron up more than 13.5% this morning, Matt.
All right, that's really driving markets higher today. Also, space stocks are surging as SpaceX begins its IPO roadshow. The company conducted separately its 12th Starship flight test on Friday. But that is kind of a roadshow of sorts. Let's discuss with Bloomberg Tech co-host Ed Ludlow. Ed, I'm sure that you were up Friday night watching this. What was, I guess, semi-successful launch of the Starship with the super heavy V3 and Raptor 3 engines. What did you make of the attempt?
Well, very right. I was up, and the millions that were watching us on Bloomberg Television special coverage were up too. For SpaceX, data is success, right? And they'll always tell you that irrespective of the net outcome, the spacecraft itself splashed down in the Indian Ocean. The booster lost control, but splashed down in pieces, I suppose, in the Gulf. All of that planned. But you're exactly right to frame it as part of the roadshow because, we went through the S1 with such a fine-tooth comb. None of the future that SpaceX outlines, be it orbital data center or humans going to Mars, or even in the more near term, a greater build out of the Starlink network, none of that happens without Starship because it's the only vehicle, as SpaceX would tell it, that has the capability in terms of payload to orbit to deliver that. And so, at some point, this is going to need to make some progress.
And is there any real benefit to other space stocks, be it other rocket makers or satellites or anything, just by having SpaceX being public?
Yeah, I mean, this happens, right, in the context of a big IPO, specifically if it's, like, very, very thematic. And so the trade we're seeing, you're showing EchoStar is now kind of flat, but other space stocks have been moving over a number of days since the S1 hit, is validation of a sector. It brings attention to space, but basically says this is legit. And so that kind of feel-good continues to happen. One thing that, we've covered at Bloomberg over a number of years is that there's been this ripple effect of SpaceX, particularly in Southern California. But when a big financial event like this happens, other companies are kind of born out of it. There's a great network of startups that are run by SpaceX alumni. There will be great wealth creation for SpaceX staff that currently work there and may go and do something else. That all feeds into the market's attitude towards the sector, not just the name.
Ed, I want to ask about Micron and the semiconductors that are driving markets today. I'm sure you'll be all over this on your program. I looked at the EE screen for earnings estimates and saw that it's still trading less than 8 times the forward 12-month earnings estimates. We don't get earnings from Micron until, I think, the end of next month. But why don't investors just buy more if valuations remain that low?
Yeah, you asked Empower's Martin Norton exactly the right question in the last block, which was about the multiple. And so, like, the catalyst, one of them in the moment right now, the reason Micron is up so much in the session is this UBS note raising the price target. But in discussion of that price target, what Timothy Arcuri is arguing is that over time, the market will assign to Micron what he sees as a more normal multiple, right, as a result of what its a total addressable market is, being in the enviable position that the thing that it produces, high bandwidth memory, but also just DRAM, generally speaking, is in so much demand that they can't keep up with it. You know, and the note, the whole point of raising the price target, but also where this firm sees the valuation, is to finally kind of catch up with that.
You mentioned total addressable market, and I realize we haven't talked about the SpaceX TAM. What do you think? What kind of pushback do you think they're going to get for that on the road? You know, when you get into a room with serious bankers that do this for a living, and they flip to the page where it says $28 trillion total addressable market, they're going to be asking their Goldman Sachs colleagues, like, how did you come up with this number?
Well, what's wild about it is $28.5 trillion. Only $2 trillion of that is Starlink, essentially, and the launch business. So $26.5 trillion is SpaceX telling the world that they think they can basically sell AI to enterprises, exactly as OpenAI, Anthropic, Google hope to do. You know, it's $26.5 trillion of software opportunity that has nothing to do with rockets at all, other than they need the compute in orbit to facilitate it. So every IPO needs a good story. No one was surprised that there was a TAM number in there. I think that people were just surprised by the severity of the breakdown. If you had a bar chart, you know, the big AI bit sticks out and everything else is hard to register. You don't even see it. And so it's time to, you know, as SpaceX would pitch you in the S1, stop thinking about them as a rocket company and start thinking about them as a software company.
Ed, thank you so much for joining us. Looking forward to your continued coverage of this. Bloomberg Tech co-host Ed Ludlow. Bloomberg Tech kicks off at 11 a.m. in just over an hour's time. Coming up on this show, Lilly strikes nearly $4 billion in vaccine deals as it expands beyond obesity drugs. That's coming up next on Bloomberg Open Interest.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Quick check of what's going on with stocks to kick off this shortened trading week. S&P 500 gaining to 75.22. So if we were to close right now, that would be another all-time record high after 8 weeks of consecutive gains for the equity index. NASDAQ also doing much better, up 1 1/3% as Micron and other chip makers power this rally. You can see here that we have the 10-year yield coming back down. That's good for stocks. Crude, although it's up, is only at $100 a barrel, so much lower than it has been. Nvidia is not moving a lot, so that's not helping this market much. Intel up 2.5%, though, and the rest of the chip makers are really contributing. Ferrari we put here just because probably everybody at your office is talking about the new Ferrari EV and asking you for your thoughts on it, or maybe you're asking somebody else. It is different for sure. And AutoZone is trading down 8.5% because apparently their international locations aren't delivering the results that people are hoping. Pfizer is off right now as Lilly came out with some good test results, but Lilly itself is not up right now because it's also going to buy 3 vaccine developers for about, what, $4 billion, Danny?
Exactly. I mean, Eli Lilly was originally up in that news, but the entirety of the healthcare sector is selling off, so that might be adding to the pressure. But $4 billion is expanding further into vaccines and infectious diseases, maybe away from obesity. Joining us now is Bloomberg's Jerry Smith. Jerry, how much of this is just about building out a robust portfolio that's not just dependent on obesity medication?
Yeah, I think with this deal, we're really seeing Eli Lilly trying to, transform its business and rely less on just, diabetes and its weight loss drugs that it's well known for. Interestingly, Lilly has a long history in infectious diseases. Many, many decades ago, it made a treatment for penicillin and a polio vaccine, but the company is really in recent years focused in other areas. And now it's, flush with cash from the success of its weight loss drugs, and it's now re-entering the vaccine business, which has been a really challenging business for other companies.
I got to ask about this new cholesterol treatment. It's like a gene editing treatment that apparently is a 4-hour intravenous injection and then done, right? And that should lower your bad cholesterol for at least 18 months, but potentially the rest of your life. And I've had, PR professionals emailing me ever since these results came out saying, like, this is game-changing and even bigger than GLP-1s. Is that hype for real?
We have to see still. So this is a company, that Lilly bought called Verve, and they have been working on gene editing treatments. So this is a one-time treatment that could potentially lower your cholesterol, potentially for your entire life. The results we saw are very promising. I think the big question here is there are a lot of other medicines out there for people who have high cholesterol. There's statins. There's other treatments that you can take even less frequently than statins. So, this is a treatment that's showing promising results. I think it's more of a question is if it gets approved, whether people are willing to, get this one-time treatment or if they're more comfortable with the existing medicines that they have to take more frequently.
Jerry, does this speak also to the advancements in gene therapy as well as a treatment?
Yeah, this is an area that Lilly has been really investing in. We've seen other large pharmaceutical companies that have gotten away from gene therapy, but, this is an area that's shown a lot of promise. The idea is that you're editing someone's DNA and really getting to the root cause of a disease. And instead of taking a medicine every couple weeks or every couple months, you get one treatment and the effects potentially could last for your entire life. But it's still early days. The long-term data we haven't seen yet, so we don't really know the durability a lot of these one-time treatments. Right. But this is an area that Lilly clearly believes in and has been investing a lot in as well.
All right, sounds very cool. Jerry, thanks so much for joining us. Bloomberg's Jerry Smith covers healthcare for us. Coming in the next hour, Joanne Feeney on markets at an all-time high, and we get new consumer sentiment data as well.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation. As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies.
With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
The Iranians arrive in Qatar for peace talks. Marco Rubio says the Strait of Hormuz will be open again soon, and yet the U.S. military striking Iranian missile launching sites overnight. ABC Chief Global Affairs correspondent Martha Raddatz has more on what some say has been muddled messaging from the White House.
They've said the ceasefire is not broken. Any military official I know and talked to said that ceasefire was broken about 3 or 4 weeks ago when there was firing across. But they want to keep this low. We're making progress. We're making progress. But we don't know actually what that progress is. And remember, the nuclear facilities were the key to this, and they seem to be putting that off more and more.
Israel's military clashing with Iranian-backed Hezbollah militants in Lebanon. One strike killed at least 12 people, including several members of one family. 2 children and 2 adults killed when a train hit a bus in Belgium today. ABC's Maggie Rulli is at the foreign desk.
7 children were on the bus when it collided with the train just after 8 a.m. local time. And local media is reporting the bus was on its way to a special education school. Now, there were no additional injuries, and the accident happened about 15 miles north of the Belgian capital of Brussels, where the bus can be seen now lying on its side. This morning, the president of the EU, Ursula von der Leyen, says she's heartbroken and that today Europe grieves with Belgium.
No catastrophic explosion at a failing Southern California chemical tank after officials said their worst-case scenario was averted. ABC's Alex Stone.
This would have been a huge chemical explosion, and it would have set off likely other chemical explosions from other tanks that are around it and at other properties around the aerospace manufacturing center. So, yeah, this would have been a big deal.
There's still the threat of a much smaller explosion. Republican Senate runoff in Texas today. Longtime incumbent John Cornyn taking on Attorney General Ken Paxton. You're listening to ABC News. Ebola outbreak in Central Africa is leading to travel restrictions for some. ABC's Faith Abube is outside CDC headquarters in Atlanta.
It's only been 1 week since the World Health Organization declared Ebola a global public health emergency, and already officials are admitting that this outbreak is spreading faster than they can contain it, which is why several countries now, including the U.S., are tightening their travel restrictions.
Americans coming from infected areas can only enter specific airports where they are screened. Shark attacks are rare in this country, but 2026 has already netted at least 2 reported incidents happening off the Texas Gulf Coast.
Around 8 million people visit Galveston Island each year, and local officials say that in the past century, only 17 have been bitten by sharks. On Monday, a 17-year-old fishing with his dad on a boat off Galveston was helping to haul in a shark they had caught when he was bitten. His father applied a tourniquet until help arrived, but the teen had reportedly lost a lot of blood when he finally made it to a hospital.
ABC's Jim Ryan in Dallas. Temperature records toppling as a spring heat wave continues to scorch parts of Western Europe, triggering government warnings about risks to life. Several drownings have been reported in Britain and France as people are trying to cool off. Party like it's 1999. That was the theme of last night for the New York Knicks, who swept the Cleveland.
Uh-oh.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
Good Tuesday morning from the Bloomberg Interactive Broker Studio in New York City. To our worldwide audience, we're streaming live on YouTube. We're streaming live on Bloomberg.com as well. Scarlett Fu out today and tomorrow, people tell me. And it's very difficult to replace Scarlett Fu. We have Alexis Christophers, thankfully, sitting helping out here.
Step into those shoes.
Yeah, so we may have Stacey Vanek Smith later. I mean, it takes a
you
whole.
Have a it takes a whole
crew to support
camp of people today.
Scarlett Fu. So anyway, we got a lot coming on out there today. We got some green on the screen here. Coming up, we're going to check in with Dana Peterson, chief economist at the Conference Board. We had some consumer confidence data came out a little bit better than expected. We'll break it down. Dan Williams, reporter for Bloomberg News. He's based in Jerusalem to get the latest out of the Middle East. Madison Muller, Bloomberg News health reporter on Eli Lilly. Eli Lilly back out on the M&A trail, buying some pharmaceutical developers out there. What else is new? It's the beginning of a week, so you have another pharmaceutical deal. Jen Bartashis, Bloomberg Intelligence senior analyst. She covers all the retailers. World Cup, $80 billion prize hinges on fans not crying foul, so there's always a retail angle to these sporting events, and that's
there's
true.
Always the NBA.
Always the NBA. The
and the New York Knicks
just doing extraordinarily well. We'll wait to see who we play next, but that's going to be some good stuff coming up. All right, right now, let's kick it all off with John Tucker on the Bloomberg Business Watch.
All right, we are data dependent, so let's start there real quick. The Conference Board, the Consumer Confidence Index, 93.1, better than expectations, better than the prior reading of 92.8. The Present Situations Index, that fell, 121.2, the expectation for 123. The Dow, S&P 500, right now, record levels. You have the hope for peace in Iran that's fueling some of these gains. Treasury yields, they're pushing lower right now. The 2-year down 6 basis points, 4.05. The benchmark 10-year yield down 7 basis points. That is at 4.48. 8 of the 11 major industry groups in the S&P 500 up right now. Information technology, that's in the lead. Biggest drag coming from consumer staples. Micron Technology, best performing stock in the S&P 500. It got a price target raise, and that stock, that was up just about 13.5%. Worst performing individual stock of the index, that belongs to AutoZone, down close to 9%. They had a sales miss. Meantime, Ben Laidler at Bradesco Securities says stocks can push higher.
I think you can question the pace. I don't think you can question the direction or really have a problem with valuations when you have earnings growth of 30% for the S&P 500 at this point, which is almost unheard of.
S&P 500, 58 points higher. That's up 0.8%. 75.31 in the index. Again, that's a record. Dow up 104 points. That's adding to its records. 50,684 of the index. And the NASDAQ Composite Index up 311 points. That right now is up 1.2%. And I got to do Ferrari shares just because they have the coolest ticker symbol, race. Down 4.5%. I don't know, have you seen the new electric release?
We have.
And the verdict is
that it looks a lot like a Tesla?
well, you and many analysts agree. So it's just like, you know, not getting a great reception. It does cost, what,
640,000 is what I saw. Okay.
5-seat model.
It does have the speed, though. If you have need for speed, I think it's got it.
Yeah, but
I want it to sound like a Ferrari, and none of these EVs, like the Lambos, or
well, what are they doing with this? They have to pump in the sound. It's
I
just
think
it's
exactly.
fake.
They're just not doing it.
But it's a Johnny Ive, the formerly of Apple, his design. So whatever. Anyway, we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash, Alexis and Paul.
All right, very good. We got Alexis Christopher sitting in for Scarlett Fu for the moment. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. John Tucker just reporting. We got green on the screen. Let's take a look at some of the stocks on the move today. We can do that with Bloomberg's Natalia Kenyajevic. Natalia, what are you looking at today?
Let's start with Eli Lilly. Shares are actually flat right now. The stock is down by 0.3%. The ticker is LLY. But there is a big announcement, as you mentioned. The company agreed to buy 3 vaccine developers for as much as $3.8 billion. Eli Lilly wants to expand beyond weight loss drug segment. The companies are Curevo, Lima Tech Biologics, and Vaccine Company. Now, it is interesting that many analysts pointed out that the company has so much cash right now as demand for weight loss drugs keeps growing, that this is a very logical step. And also when we look at the earnings report, last time when they reported results, they also boosted profit, adjusted profit and revenue forecast for the full year. So
it makes sense in many ways, right?
Yeah, exactly. But still, I'm really, surprised that the stock is also flat on a year-to-date basis.
Yeah.
No movement.
Hasn't done much in the past year, even though it's got those blockbuster, obesity drugs. Let's move on to the next one. I saw that chip stocks were doing well, right? No surprise there. But Micron Technology, I said, there's got to be news specific to this stock because it's leading the S&P 500 higher.
Yeah, so shares are up by almost 14%. The ticker is MU. So we saw upgrade from UBS analysts. So they raised the target to a street high of $1,625 versus previous target of $535. So it's a pretty big step. So that target implies almost double-digit double of its growth on the pre-market level, and then the market cap of about $1.8 trillion. So analysts are optimistic. The company also said during the last earnings season that they expect to spend more, of course, on developing because there is more demand than supply.
All right, very good. Space stocks?
Space stocks. We're going to be talking about space stocks a lot.
I have a feeling.
One of them is Redwire. It's a space infrastructure company. It's one of the biggest gainers in space stocks today. The shares are up by almost 28%. The ticker for that one is RDW. So, of course, all of that is driven by SpaceX IPO filing, and then they launched the biggest Starlink, right, the rocket ship. And also, of course, many companies are now keeping an eye on these big initiatives like putting data centers into space, which could lift the entire space industry.
So they haven't even gone public yet. And look at the impact they're having on the market, what SpaceX is doing to the market.
It looks like on Global Wall Street, the aerospace and defense analysts are going to be the analysts that cover this SpaceX thing. And I've talked to a number of them, and they're all are uncomfortable with the valuation because they're not used to it. They're used to Boeing trading at 20 or 30 times earnings. They're not used to valuing these things. So it's going to be interesting to see how Wall Street gets behind this story on SpaceX. Natalia Kenyajevic, thanks so much for joining us there. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. We did get some economic data here today. The Conference Board Consumer Confidence number came in a little bit better than expected, 93.1. The consensus was for 92. Last period revised up to 93.8, so a little bit lower there. But let's face it, folks, you want to see a consumer confidence number. I mean, if you look over the last 5 years, it's been north of 100. And here we are down here at 92, 93, so not kind of where you want to be. Dana Peterson, she can help us understand this a little bit better. She's the chief economist at the Conference Board. Dana, what's the consumer confidence data telling you this period?
Well, it's telling us that some areas consumers are feeling a little bit better about, but they're still very much concerned about inflation, wars, and basically on affordability. So just looking at the guts of the data, current situations were worse in terms of their optimism, and that includes businesses, the business outlook, as well as jobs available. They were a little bit more optimistic about business and labor 6 months from now, but we're still concerned about income, which is actually a bit new because typically they say that their incomes are okay.
How are they feeling about gas in particular? Did you guys ask specifically about the cost of gas and what that means for household budgets?
Well, we have write-ins where they can just say whatever they want in terms of what they think is having the greatest impact on the economy. And absolutely, gas is very high on the list, as well as prices, and that those measures actually edged up in terms of the number saying it was a problem. But they also continued to say that they were very worried about wars and conflicts and geopolitics.
Does this, the confidence data, does it break down by political persuasion? Do certain groups think about the confidence and just the current situation differently?
Well, we actually just look at the aggregate. And we do have a balanced number of Democrats, Republicans, and independents. So there's no weirdness with the numbers in that sense. And for the most part, it's which is not unusual. Republicans are still the most optimistic, and Democrats are probably the least. But in the month, only independents showed a little bit more optimism. But in general, I think consumers are still, kind of antsy and nervous about what's ahead.
Did they call out travel and what you sort of, this lack of confidence means for summer plans?
Well, it's interesting. Travel was kind of weak for a long time, and it's been declining in terms of folks wanting to do that. But they edged up in May, and I think that they are looking toward the summer. Kids are out of school, and maybe that's just an opportunity to kind of chill and just not be so concerned about what's going on in the world and how it's impacting their pockets.
Dana, how does AI figure into this? A lot of folks are saying, people are concerned about AI and maybe their jobs and things like that. How does that factor in, if at all?
Well, I think certainly in terms of the labor market measures, right now, consumers are still very concerned about the fact that it's very difficult to find a job, but also at the same time, many companies are not really hiring, but they still expect that things will be a little bit better going forward. And I do anticipate, I posit that some of the job announcements, layoff announcements are disconcerting for many people, even if AI will not actually have any influence or actually could help them in their occupations.
Dana, thank you so much. Appreciate that. Dana Peterson, chief economist for the Conference Board here. Again, just reviewing the data. Consumer confidence came in at 93.1 for the month. Consensus was 92, so a little bit better there. The last month was revised up from 92.8 to 93.8, so we saw a little bit of a sequential decline. And again, if you go back and plot that data over the last 5 years, it's typically that data point is north of 100, north of 105, 110 maybe.
So it is, I think the takeaway is it is still generally weak.
Still generally weak, and so we'll keep an eye on that. But it's been weak for some time here. And again, I think it took another leg down when the war started. People started seeing some inflationary issues with gasoline, for example.
Yeah, and I think a lot of that, too, is a disconnect, right, between what we're seeing on Wall Street, record after record after record. We're looking at another record day on the street today, and yet confidence on Main Street, isn't where you'd want to see it.
Yep, and you see confidence in the earnings. I mean, corporate America, we just came through with a stellar quarter of earnings, north of 20% in terms of growth of earnings, and that's propelling equity prices higher here. So it's like, take a look at WTI crude oil. I'm just going to look at WTI And we'll compare it to Friday's close. We are down about $2.50, $94 a barrel for WTI crude oil. And the question is kind of where are we going in terms of some of these peace negotiations. Coming up, Dan Williams, reporter for Bloomberg News. He's in Jerusalem. We'll have the latest report. That's coming up.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Record levels for the Dow and the S&P 500. We're seeing a broad semiconductor rally this morning. The SOX, the Philadelphia Semiconductor Index, up close to 5%. Micron Technology, just some of the heavy lifting this morning. It is up over 14%. UBS raising its price target on the memory chip maker to a street high of $1,625. That implies the stock's going to more than double. Earnings season isn't over yet. Of the 473 companies in the S&P 500 that have reported, 82% delivering positive earnings surprises. And right now, the S&P 500, 61 points higher. That's up 0.8%. 75.35 of the index. The Dow up another 40 points, 50,620. And the NASDAQ Composite Index, that is up 354 points, a rise right now of 1.3%. Yeah, we got to do shares of Madison Square Garden, up 1.5% after the Knicks swept Cleveland. They've also taken steps to split the Knicks and the Rangers into two publicly traded companies. So that's been one of the other catalysts for MSG lately. Oh, guess who's coming back? Ozzy.
Who's come? Oh, Ozzy Osbourne?
Ozzy Osbourne's family defending plans to recreate the Black Sabbath frontman as a life-size AI-powered avatar. Crass, no, his son Jack said it's going to be so tasteful.
Okay.
Ozzy, tasteful?
A tasteful avatar of Ozzy Osbourne. All right.
Can't wait. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Well, I don't know. I don't know what to think about that.
I don't know. I'm not a huge fan. Can respect the music though, but
yeah,
we'll
why not bring it back? AI, who knows? John Tucker, thank you so much. We appreciate that. Alexis Christopher sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg and Eric DeBroker studio, streaming live on YouTube as well. Well, the U.S. military said it conducted self-defense strikes in southern Iran, targeting missile launch sites and boats attempting to lay mines, while the Islamic Revolutionary Guard Corps said it fired at an F-35 fighter jet and several drones. So there you go. Dan Williams joins us here, reporter based in Jerusalem for Bloomberg News. Dan, the reporting over the weekend was we've got the two sides moving towards some type of peace plan, and the markets seem to be reacting to it, but yet there's still some shots being fired here. What's the latest reporting?
As you noted, the weekend showed people being upbeat about the prospects here, but only a week ago there was talk about a potential resumption of that US-led war against Iran, and now we appear to have come full circle in terms of the beat of those drums. You noted both sides saying shots were fired overnight. On the Iranian side, potentially lethal shots by the Americans. They reported at least 4 sailors killed by that American strike. The big question is whether these are parting shots potentially ahead of an announcement of a deal, or whether they are the proverbial shots across the bow designed by either side to keep the other or to make the other more accommodating in negotiations, or indeed the prelude to a resumption of the war. Very, very hard to tell. What we can say is that as these talks or these reported talks have proceeded in recent days, rather than showing the sides coming together, reports have suggested they are very far apart on core issues such as the timing for a reopening of the Strait of Hormuz, the timing for what the West, the United States, has demanded, a dismantling of what remains of the nuclear program of Iran, the resumption of financial relief, sanctions relief, and the like, and the inclusion of Lebanon in any extended ceasefire or peace deal, given that that's where Israeli Hezbollah fighting is raging. Hezbollah is an asset, an ally of Iran. So much is unknown, much is unsaid, and as you noted, the violence overnight, the fighting, would suggest that this remains a very thorny situation.
And Dan, Iran is actually threatening retaliation for those strikes that the U.S. says was in self-defense. Is that what you're hearing?
Yes, and we had the supreme leader of Iran saying from his hiding place, he has yet to appear in public, that the United States, in his word, would find no safe haven in the region. Some very strong rhetoric. It is a fraught time in the Muslim calendar, the beginning of the festival of Eid al-Adha. So it could be that that kind of exhortative language from the yet to be publicly seen new leader of Iran could be part of that religious fervor. However, it's hard to separate rhetoric from reality here. The Iranians presumably are ready to muster as much force as they can, but it's worth remembering they've suffered a very significant drubbing in this war that was launched by the United States and Israel on February 28th. And I can assure you from this part of the region in Israel, the Israelis are certainly on a hair trigger alert when it comes to potential resumption, not just in Iran, where there's open fighting going on, but potentially as far east as Iran, 1,000 miles to the east, in addition to Lebanon, where the Israelis say they could send out their warplanes at a notice of just a few minutes.
Dan, I just want to follow up on that. You're based in Jerusalem. What is the average Israeli on the ground? What do they want now?
I think what they want, and this is to judge from polling as well, is something conclusive, something that would show them that this war, which while Americans see it as an isolated event, a high-intensity event, a very expensive, destabilizing event, for Israelis, it's effectively the capstone. It's the end, the cascade of a war that began on October 7th, 2023, with that Hamas attack from Gaza spilled over onto several fronts with other Iranian allies, and most recently with Iran itself. The Israelis want something conclusive here. They were not happy, to judge by back-of-the-envelope reporting and commentary in the media by what was reported over the weekend, that Trump could potentially sell short, as they see it, the war goals by closing a deal with Iran that wouldn't achieve anything conclusive immediately on the nuclear front, on the financial front, on the front of Iranian support for groups like Hezbollah or Hamas. I would imagine Israelis are relieved that those reports have proven untrue for now. They would be happy to see an agreed deal that would set back the Iranians permanently, that would remove the nuclear threat, that would defang Hezbollah to the north. In the absence of such a deal, I think they'd prefer to see force of arms finish the job, as the phrase goes. This is something that Netanyahu, I imagine, would also welcome. He's a few months away from his re-election bid in a ballot that's expected here in September. I think he can ill afford to go to that, having not provided a conclusive victory or something he can cast as a victory on any of those fronts.
Dan, thank you so much. Always appreciate your reporting. Dan Williams, he's a Bloomberg News reporter based in Jerusalem, giving us firsthand account of what's happening in that part of the world. Let's get back to these markets here. One of the key issues we've seen over the last couple of weeks was yields push meaningfully higher. We noticed that, the 30-year bond got north of 5%. That really gets your attention. We're sitting here at 5.01% here today. So let's talk about what's going on in the bond market. We can do that. Joanne Gallegos, co-founder of Bond Blocks Investment Management. Joanna, we've had, again, yields move higher. What's going on out there? Is it concerns about longer-term inflation?
Yeah, I think that's a pretty well-tread story about why yields are running higher. There's uncertainty in inflation. There's ongoing geopolitical risks. And as yields in the bond market is signaling sort of their tolerance for some of this uncertainty, yields are moving higher. However, the way we look at it is that the increased volatility and obviously these higher yields across fixed income, because it's in many categories, not just the long-dated treasury, provides a lot of opportunity for investors to, trade up in higher quality fixed income, use these yields to their advantage in their portfolios.
And we're also seeing more market volatility, right, as time is going on. Are we seeing money continuing to flow into ETFs with the same sort of, vigor they were at the beginning of the year?
Absolutely. The flows are markedly, historic. Again, year over year, ETFs continue to see increased flows across fixed income and equities. Fixed income is gaining on its historical averages in terms of how much fixed income is taking a piece of the pie overall in flows. So a lot of traction in fixed income. There are a lot more products or a lot more choices in fixed income than there have been in the past decade. Bond Blocks is one of those providers that's giving you more choice. And so I think investors are really comfortable with the structure, really comfortable with the liquidity access in these fixed income vehicles. So they continue to be a port of call during volatility and when people want liquidity.
In the equity ETF business, the way I understand it is it's like, the handful, the VUs, the Qs, take a lot of the asset flow on the equity side. And then everybody else is trying to fight for the pieces, kind of the secret sauces Eric Balchunas would say. How about in the fixed income space? Where does most of the money go?
So it's interesting. I think year over year you've seen, so what you're talking about is the core allocation of someone's equity portfolio, S&P 500. Similarly in fixed income, you're going to see core allocation products take a lot of flow like an aggregate category. But the winner that was recently dethroned, that has been a winner in most quarters over year, has been short duration assets. Surprise, surprise. And that's not just short duration corporate government assets. It's corporate short duration products that investors are using to reach for yield. They're comfortable that the duration's low enough so that their interest rate risk is a little bit managed. But recently, intermediate exposures and corporate high yield has really gained in the top 3 of flows. So it just, again, shows you that when markets are telling investors that they should be moving, ETFs are maybe a first choice to do that.
What does that tell you just about investor psyche, that you're seeing that more interest go into these medium and longer term? treasuries?
So intermediate, we like to focus on it in both treasuries and corporate, both investment grade and also in high yield. And the intermediate nature of focusing on intermediate exposures in like a triple B, for example, in corporates, or even in treasuries, a 3, 5, 7 year, it's a sweet spot. So in treasuries, you're getting 80% of the return potential of the longest dated treasury in 20 and 10 years for, a third of the interest rate.
And that looks pretty attractive, right?
It's very attractive. And so what we would say is fortune doesn't have to favor the bold in all cases in these markets. You can find these sweet spots, like intermediate treasury is one of our picks. We also think intermediate triple Bs is a good pick because over time, triple Bs have yielded and had a yield pickup over triple As and the A category in ratings by a meaningful amount. We're talking, 40 basis points a year, sometimes upward of like 30 to 45 basis points year over year.
That's impressive.
Why wouldn't you, in this market, when you can choose every single sector in equities, why wouldn't you be able to choose your triple B intermediate? You're managing your interest rate risk. You're reaching for really reasonable yield and investment grade with barely any additional credit risk. So that's how we think about the fixed income opportunity.
Right. Very good. Joanna, thank you so much for joining us. Joanna Gallegos, she is the co-founder of Bond Blocks Investment Management. Think about these are the folks, ETFs focused on the fixed income business, and that's what the folks at Bond Blocks do. We appreciate Joanna showing up in our Bloomberg Interactive Broker studio here. We got kind of red and green on the screen here. Some of the earlier gains fading a little bit. The S&P is up 60 points. That's 0.8%. But the Dow is pretty much flat right here, down about 20 points. The NASDAQ holding on to those gains, up 360 points, 1.3%. And the yields coming in a little bit here. You got the 10-year Treasury yield in 6.5 basis points, 4.49%. And looking at crude, we'll look at it, the Brent crude. Brent crude is up 3.8% from yesterday's trading. The Brent market was open for trading yesterday, so the rise in Brent crude from yesterday reflects the added tensions in Iran. So we're seeing that in Brent. Bitcoin, Tom from the Upper East looking for a quote, is up $250, 77,500. So we'll keep an eye on Bitcoin. Coming up here, Madison Muller, Bloomberg News health reporter. Eli Lilly out there making some deals. That's coming up.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash, brought to you by IBKR. For the past 3 years, Interactive Brokers' individual clients averaged 24.3% annually, beating the S&P 500. Lower costs and access to 170-plus global markets matter. Visit ibkr.com/performance. Major averages higher to little change right now. We're still near record highs. IBM and United Health, right now, they're weighing on the Dow as it tries to add to its record close. Micron Technology, best performing stock in the S&P 500, up over 18%. And for what it's worth, the shares of the semiconductor companies extended their influence in the S&P 500, so that leaves the index the most reliant on a single industry since the dot-com era, or whatever that's worth to you. S&P 500, 64 points higher. That's up 0.9%, 75.38 on the index. That's good for an intraday record. The Dow down 6 points right now. The NASDAQ Composite Index up 370 points. That's a rise of 1.4%. And right now, yields are lower. The 2-year down just about 6 basis points, 4.06%. The benchmark 10-year yield down close to 7 basis points at 4.49. Well, Kevin Warsh, starting his first week on the job as the new Fed chair. Calvin Say at BNP Paribas sees pressure building on the Fed to eye rate hikes.
As you saw last Friday, the University of Michigan report 5 to 10-year inflation expectations jumped in a really big way. And the Fed needs to be worried about this. This is exactly what we saw in the 1970s when we had a rolling series of shocks to inflation that led to an unanchoring of inflation expectations, and that prompted the Fed to have to do a lot of hiking.
Well, at the French Open, the heat is proving to be the player's most formidable opponent. Temperatures in Paris set to be 93 degrees today. And then with the World Cup, FIFA, I mean, the athletes are taken care of when it gets really hot and breaks or whatever. They're really worried at this point about the fans.
Right, sitting out there baking while they watch the match.
Yep.
I agree.
Anyway, somewhere between 5 and 7 million people expected to watch the games in person. The heat, real worry there.
Or you know what? Don't spend the money, stay in your air condition and watch it.
Drink more beer.
There's water in there.
I gotta say, Paul, that's probably
not
the
the solution
best
there.
advice.
Sounds like the technical term for hydration.
Right.
Okay.
It's not no. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Alexis and Paul.
All right, John Tucker, thank you so much. Appreciate that. Alexis Christopher sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio in New York City, streaming live on YouTube as well. Well, I was going to call it a merger Monday, but it's Tuesday, so that doesn't work. But that doesn't stop the pharmaceutical companies from doing more deals. As I'll said it before, I'll say it again. In the next life, I'm coming back as a healthcare M&A banker because they get paid every single week, it seems like, and this week's no different. Madison Muller joins us here, healthcare reporter for Bloomberg News. Eli Lilly agrees to buy 3 vaccine developers for as much as $3.8 billion. Madison, what's Eli Lilly looking to do here?
Yeah, I mean, it's definitely an interesting time to be buying into the vaccine space, given sort of the political climate that we have in the U.S. with Health Secretary Robert F. Kennedy Jr., who has pulled funding from various vaccines, and we've sort of seen a loss of public support for vaccines, but that has not stopped Lilly. I mean, Lilly has been on a tear recently with M&A. The company has a lot of cash on hand thanks to the popularity of its blockbuster obesity and diabetes medications. And what it's looking to do now is to build toward that next era of growth. What happens after these medications that are fueling its growth right now lose patent protection, as they always do in the pharmaceutical industry. And so vaccines are going to be, at least it appears to be, part of Lilly's sort of next era. They hired former FDA official Peter Marks last year to lead their infectious disease unit, and then this is their first real foray into that space. So there are 3 different companies, as you saw, that they are buying as of today to target various different global health crises, from antimicrobial resistance to Epstein-Barr virus and others. So it will be pretty interesting to see what happens here.
Shingles as well. One
exactly,
of
shingles.
that might go up against, I guess the leader in that space is the, is it called?
Shingrix.
Shingrix, yeah. The Shingrix vaccine. So do we know more about this deal? I mean, I know the three companies that they're buying are privately held, but do we know anything else about these deals? Or because usually with these kinds of things, there are milestones, as you, I guess, I don't know, set sales goals or what have you.
Yeah, exactly. And that is a part of this. There are going to be milestone payments. These various companies, I mean, based sort of all over the world, a couple in the U.S., outside of the U.S., I think one is based in Zurich. And so they, Lilly has a track record of going earlier in the, drug development process. They like to go for these earlier stage, cheaper deals versus later on sort of bigger mergers. And this is the sort of the same pattern that we're seeing here. A couple of them are in clinical development already. One of them is about to be ready for phase 1 trials. And so Lilly will be able to really partner with them and take them through that process, which is something that's often hard and expensive for biotechs to do on their own.
So for these big pharma companies that are out there in the marketplace with these weight loss drugs, they're not standing still, are they? They're making them better, more powerful, less side effects. What's Lilly doing, for example?
Lilly is basically doing everything. I mean, they have their strategy in obesity is to throw everything that they have at this. They don't want to be left out of it. They don't want what happened to Novo Nordisk to happen to them. I mean, Novo has sort of been caught flat-footed just by how quickly this market has moved, and there are a lot of competitors and a lot of people, like you said, trying to develop better weight loss drugs, whether that's, pill forms or less side effects or taken monthly. Novo's sort of struggling to figure out its next move and fill its pipeline. Lilly has, strategically made the decision years ago to throw everything that they had at obesity. And so they are looking at different types of molecules, something called amylin, which is thought to maybe be a little bit gentler on the stomach, maybe not have the same GI effects that the current generation of weight loss drugs have. They're looking at less frequent dosing. They just had a new pill approved. They are looking at drugs that are even more effective than the ones currently on the market. So it's pretty much like everything under the sun they want to be playing in.
Hey, the next area they need to focus on, they being the pharmaceutical industry, baldness.
Baldness,
You get a pill
huge opportunity
that'll
there.
put hair back on, half the men out there.
He's looking at me.
Was a big,
It's not that bad.
I mean, is that something that they're talking about? Because that is the same areas as like obesity, weight loss.
Exactly. So Lilly actually does have a drug for alopecia, which is a little bit different. But there is another company, and I'm blanking on the name, but I know the ticker is Maine, which is pretty creative. That has been getting some hype recently because they are developing a supposedly better hair loss treatment. So that's one that I know people have been watching.
But when you look at these stocks, like Eli Lilly has barely budged year to date. And you mentioned Novo Nordisk sort of being held flat-footed. Year to date, they're down almost 12%, which, I guess I get that. But I would expect a more enthusiastic response to Eli Lilly, and for some reason the stock's just not moving much.
Yeah. I think that's because at this point, they've just grown so much. I mean, their valuation is enormous. They hit $1 trillion. They were the first healthcare company to hit $1 trillion valuation last year. And I think it's hard for investors to see much more right now. Like when you're at the very top,
they sort of topped, right? They've peaked.
Right, like what is there to get excited about? Which, there is a lot that Lilly is doing, but I think to get it up from the high point that it's at now, it has to be something pretty spectacular. So I think that right now investors are sort of just watching and waiting to see what happens. Like, are they eventually, is there a mistake or a hiccup coming, or are they going to be able to sustain this incredible growth? And so I think that that's sort of the moment we're in right now is like, okay, what are they going to do next? What's going to get investors excited about this company going forward? That's not to say that they're not already excited and doing super well now, but I think it's like, okay, sort of watching.
Well, the bar, when you're doing well, the bar gets raised, and it's hard to beat the heightened bar.
On a trailing 52-week basis, Eli Lilly, Merck, and Johnson & Johnson are each up 50% on a trailing 12-month basis. So
that's pretty darn good.
Yeah, so they've done pretty well. Madison, thanks so much for joining us. Really appreciate it. Madison Muller, she's the reporter who covers the healthcare space, which is always booming. There's always news out there. She does that for Bloomberg News. Appreciate her coming into our studios here. Looking at the markets, you've got red and green on the screen here. The S&P's up 62 points. That's 0.8%. The Dow's off about 20 points here. But the NASDAQ, that's where the action is, up 350 points. That's 1.3%. How about the small cappers? Up 1.7% is the Russell 2000. Keep an eye on that. We'll have more coming up. This is Bloomberg. Good morning.
is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Alexis Christopher sitting in for Scarlett Fu today. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio in New York City, streaming live on YouTube as well. The World Cup is coming, starts June 11th. First game for the U.S. of A, June 12th, the U.S. against Paraguay. So you got that going for you. It's big business. It's big business globally. We're not really into it so much yet here in the U.S., but I'm sure we'll get there over the next few weeks. Jen Bartasha, she's been crunching the numbers. She covers all the retail stuff for Bloomberg Intelligence. Jen, I'm seeing some huge numbers of what the World Cup means, economic impact across the globe. How do you guys look at it?
Yeah, hi, Paul. So, the estimates this year are that the World Cup around the world could result in $80 billion worth of spending. So that's a huge sporting event. It's the biggest event for a lot of countries around the world. But as you alluded to in your warm-up or entry, the United States, we're not such a big soccer country. So it's going to be very interesting to see how having the tournament here plays out with regards to that anticipated spend.
I'm wondering if the NBA Finals, and I'm going to be very New York-centric right now for a moment, but we've got the New York Knicks in the finals for the first time since 1999 over at MSG. Is that going to take any of the thunder away from the World Cup, or are these two different sets of fans, or maybe is that part of the problem?
Well, it's a good question, Alexis, and I think that you're talking about kind of two sets of fans. Everybody's very excited about the Knicks. And, you know, as that final comes through and we see what happens, I think there's grounds and reason for the city to celebrate. But the World Cup matches are actually happening outside of Manhattan. They're happening in New Jersey. And right now, one of the challenges, I think, for the World Cup is that none of the matches are sold out. Ticket prices are way out of the reach of your average fan. And so as we get closer to the tournament, part of what we'll be seeing is, you know, do those prices come down to help improve engagement and get people in the stadia and get them excited about the tournament?
Jen, right now, what are the brands that are really making big commitments to the World Cup these days?
Yeah, it's obviously there are a lot of partnerships that happen with regards to brands. On the apparel side, Adidas is leading. You know, they have made commentary from their management team that they expect the World Cup to generate €1 billion in revenue for them. Our analyst, who's Poonam Goyal, our lead analyst for Adidas, she thinks it's closer to €1.2 billion. You've also got brands that are doing other partnerships like Old Navy and The Gap, where they're at a much lower price point, but they're having the ability for people to just buy a T-shirt for the team that they're supporting. So you're seeing it across all different levels within the retailer space. And you know, I think that those are the things that get people excited if they pick a team and they're able to follow it and they're able to participate in some way. But those are, you know, when you look at the athletic brands, Adidas and Nike are the ones who have the kits, the uniforms for the most teams that are in the Cup. So if people go out and they buy the actual jerseys, that's a benefit for Adidas and Nike.
Jen, I want to go back to ticket prices, which has been a sore spot for fans. They've just been, you know, through the roof in many places. Because FIFA is using dynamic pricing, if there are a lot of seats left just before these matches happen, you know, are we going to see a material drop in prices, do you think?
It is possible that we'll see a drop in prices as the matches become nearer because of that dynamic pricing. But it's not just the match. If you've seen any of the other media out there, it's about getting to the match as well. So, you know, we've seen, you know, New Jersey Transit, for example, talking about getting to Giant Stadium where there are going to be matches. You know, the round-trip train ticket at one point was $150. Now it's closer to $100. But that's still a big outlay just to even get to the stadium where that's happening. Not every city is doing the same thing, but there are lots of ways that fans are getting gouged beyond just the actual ticket price to be able to go to the stadium and enjoy the show.
What do the retailers say? Does this drive sales? Like, do people come and buy jerseys and things like that?
It depends, I think is the answer, Paul. In the United States, I think that there's a little bit less of that, unless the U.S. team happens to go far. The further the U.S. team goes in the tournament, I think the better that is for U.S.-based retailers, because people will jump on that fan bandwagon and purchase things to show support for the U.S. team. Globally, however, it's good for those brands that are, as I said, Adidas and Nike, those brands that have the official jerseys. There's a lot more of that kind of purchases that happen overseas.
All right, Jen, thanks so much for joining us. Jen Bartash, Senior Retail Analyst for Bloomberg Intelligence. Of course, I'm rooting for the U.S. of A. We'll see how they do. My sleeper pick is the Netherlands. That's how I'm going. I love the orange. Pound for pound, like on a per capita basis, nobody's better in soccer than the Netherlands. There's like 18 people in the country, yet they have one of the best soccer teams every year.
Yeah,
that's how I'm rolling. And Ireland is not in the World Cup, so I'm going with Netherlands.
Then you have to go Netherlands. Yes. I understand
Still hard to get excited for a game where you can like end in a tie.
0-0.
0-0.
Yep.
0-0.
Yeah.
You know what is flying off store shelves though?
What?
I got to bring it back home. The New York Knicks.
Yeah.
Jalen Brunson, Karl Anthony Towns, their jerseys just flying off store shelves.
Yep. I'm a kid, grew up, Walt Frazier to this day is my favorite player of all time. I wore 2010 my entire basketball.
And he was there
career.
last night giving them helping to give them the trophy.
But I would put Jalen Brunson right up there with Clyde if they win. That's how good he is.
It's
and that's
predicated
how
on
valuable.
if they win.
You got to win.
Okay.
But
because he does have 2 rings.
Yes. So anyway, but Brunson's just a special player. So
he was MVP of the series, right?
Absolutely.
No one's going to dispute it.
Yep, absolutely. Alexis, thanks for sitting in for
My
Scarlett.
pleasure. You don't want to talk Knicks anymore? Are you kicking me out?
Yes, yeah, exactly.
Okay.
We've had enough Knicks talk. But it takes a small village to replace Scarlet Fu. So we're going to have Stacey Vanek Smith join us for the second hour. How cool is that? Coming up in just a moment. We've got red and green on the screen here. I'm sticking with the green. S&P up 58 points at 0.8%. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
All right, coming up in this hour, we have Stacey Vanek Smith sitting in for Scarlett Fu because Scarlett Fu is out today, so it takes two co-hosts to substitute to support Scarlett Fu. So first hour, we had Alexis Christophers. Now we have Stacey Vanek Smith. So we're covered for Scarlett. She'll be back, I believe, on Thursday. Lots coming up in this hour. Joe Lovinger, Bloomberg Texas reporter. Yes, Texas is so big that we have a reporter dedicated to all things Texas, and will give us the latest on some of the politics that's going on down there in the great state of Texas. Anthony Hughes, Bloomberg U.S. Equity Capital Markets reporter, talked to us about Honeywell-backed Quantinium seeks to raise $1 billion in an IPO, so it's not all SpaceX all the time. Winnie Caesar, Global Head of Strategy at Credit Insights, give her thoughts on these markets here. Laura Rappaport, founder and CEO of Northbridge, get the state of the consumer, the commercial real estate market there. It depends where you look in the commercial real estate market and to where the performance is. But right now, let's kick it all off. John Tucker in a Bloomberg Business Flash.
All right, guys, the S&P 500 and the NASDAQ on track for records right now. And after its record close on Friday, the Dow is lower right now, down 84 points. So it's big technology stocks continuing their run. Micron Technology jumping right now, ticker symbol MU, up over 17%. The strongest force lifting the S&P 500. Analysts at UBS raising the 12-month price target for the stock to $16.25. That implies a doubling of this stock. AutoZone reporting slightly weaker revenue for the latest quarter. It is down over 11%. Actually, the biggest drag right now in the S&P 500. Meantime, Leslie Marks at McKinsey Investment sees reason for the stock rally to pause.
We've had a big move in equities. We've had a good reaction to earnings and earnings revisions. And when you look at where interest rates are here, we just think that this is a time where we may see a pause and people start to say, you know what, long bonds look attractive here.
Well, the S&P 500, 52 points higher, 75.26 on the index. The NASDAQ up 312 points. That's a 1.2% pop there, 26,655. And the Dow, as I said, down. Right now it's extending those losses, down 92 points at 50,488. As for the yields, the 2-year, which I always say is more policy reactive, down 5 basis points, 4.07%. The 10-year, 5 basis points lower. That right now is 450. Oil is higher. This is Brent, actually up 4.5% at 143 a barrel. West Texas American crude down 2.3%, 94.39. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Paul and Stacey. Stacey.
Yeah, John Tucker, we appreciate that. Stacey, thank you so much for joining us here.
I am very thrilled to be here.
Did you have a commute issue this morning?
Oh my gosh, yes.
Tell me it's not New Jersey Transit.
No, it was the MTA.
Okay,
it was
fine.
the MTA.
Okay, but that's, you had to come in from Brooklyn or Queens or something, right?
From Brooklyn, yeah.
Well, it's the hipsters
we got
out
stuck
there.
on the bridge.
Oh, that's nice.
I know. I thought of you saying that you don't believe in Brooklyn, and I agreed with you for about an hour today.
It's where all the cool kids go. I know it. I know it. My daughter's there, so we've got a lot going on there. John, reporting, we've got red and green on the screen here. NASDAQ's higher, but the Dow's lower. No idea why. Let's take a look at some of the stocks on the move today. We can do that with Bloomberg's Natalia Kijevich. Natalia, what are you looking at today?
Yeah, so we have lots of single stock movers. Let's start with AutoZone. This is the worst performing stock in the S&P 500 today. The ticker is AZO. So shares are down by 11%. This is the company that sells different replacement parts, maintenance parts for cars and trucks. So domestic sales were below expectations. Analysts are saying that do-it-yourself, DIY segment, which the company is exposed to, can also be under pressure. Commercial sales, on the other hand, were fine. But overall, we see that, yes, lots of pressure. The stock, I don't know if it can be a barometer of what's happening with the U.S. car market, but the stock is down 10% on a year-to-date basis, so lots of pressure.
What else are you looking at today?
So, yes, I'm looking at a company called Pony AI. The ticker is PONI. I'm sure you guys talked about this company, but maybe you forgot it. So it went public in November last year. This is a Chinese autonomous vehicle startup, but it went public here in the United States. So today the stock is down by almost 2%, but it had really good news for everyone who is watching self-driving vehicles car segment. So they are planning to increase sales of vehicles. They also reported 145% year-over-year revenue growth. So lots of positivity in this sector. So yes, the startup raised about $400 million here in the United States. They also expand operations around the world. They're doing like tests in UAE, South Korea, Singapore. So something to keep an eye on when it comes to self-driving cars.
I'm all in there. Micron, what's going on there?
Yeah, so this is the best performing stock in the S&P 500. Shares are up by almost 17%. The ticker is MU. So we saw that UBS raised price target to $1,600 from $535. So this is a pretty big improvement when it comes to UBS view. They see normalization. They also see that the company, is doing well. And also the latest earnings report showed that they are increasing CapEx because demand is just so high. And the stock on a year-to-date basis is up by more than 160%.
Yep. Fantastic. All right, very good. Natalia Kenyajevic, thanks so much for bringing us those movers here. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute auto reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. All right, Stacey, you're a graduate of Princeton University.
That's true.
Reunions weekend was this past weekend. Was it a reunion weekend for you?
I didn't go. I was going to go, but it got so rainy that I skipped it.
Folks, if you don't know, Princeton takes reunions very seriously.
It is a
very seriously
movement, yes.
Now, the sport coats they wear are absolutely the ugliest of all time.
The beer jackets.
Each class,
do they call them sports coats now?
What do you call them?
Beer jackets.
Beer jackets. Okay, the beer jackets. Go Google Princeton beer jackets. Each class tries to outdo the other in terms of how gaudy, ugly they can be.
They're all terrible. Going all the way back.
Yeah, the Princeton folks.
I think Dan Ives has a line.
Yes, he probably could outfit the Princeton University reunions. But anyway, I saw them. I was cruising through Princeton this weekend, and they were all over the place, these people. So there you go, Princeton. Have fun there. Let's get back to these markets here. What are we looking at here? We're looking at the state of Texas. They got some politics going on down there. We got an election down there. And whenever you talk Texas, you're talking just big. Everything's big down in Texas. It's so big that we have a reporter dedicated to the state of Texas, Joe Lovinger. He joins us there from our Dallas bureau. Joe, talk to us about what's going on politically in the state of Texas today.
Hi, everybody. Thanks for having me. So today we have the runoff in the primary election for the Senate. This is on the Republican side. The Democrats have already selected their nominee. That's going to be State Rep James Tallarico. But the Republicans have been waging a really nasty primary battle. This is between incumbent Senator John Cornyn, who served 4 terms in the Senate, almost, 24 years. He's really an institution in the Senate and, at one point was the caucus whip, extremely powerful. But he's being primaried by our state attorney general, Ken Paxton. Paxton now has received the endorsement from President Trump and has really connected with the grassroots base in the party. So this has been a really nasty runoff. There's been name calling. Ken Paxton comes to this race with a lot of baggage. He was once impeached by the Texas House over allegations of corruption and abuse of power. Meanwhile, John Cornyn has fallen out of favor with a lot of base voters in Texas who feel that he has not been sufficiently supportive of the president. So, these two really have been going at it for over a year now, and today voters will finally put an end to this primary election, and then we'll be able to pivot towards the general.
I know that there's been a lot of news about Texas redistricting. I believe they redrew a lot of their lines and apparently may have changed the outcome to some of these elections. Is that playing into any of this right now?
Yeah, well, this is actually going to be a really helpful barometer for us to understand how big of an impact we can expect those redistricted maps to have in the partisan balance of power in Congress. So those maps were drawn to give the Republican Party at least 5 new seats in the House of Representatives, but those really relied on the shifts toward the Republican Party that we saw in the 2024 presidential election continuing to hold. So that was Hispanic voters on the border and some suburban voters who shifted towards the Republican Party after supporting Democrats in 2020. So, today, while those maps aren't in play, there's a statewide election. This is a test between 2 flanks in the Republican Party. John Cornyn is really representing the establishment and a lot of high-dollar donors, while Ken Paxton has resonated more with the Trump base. So, we'll see which side wins out and which side has a stronger, base of support. What we are expecting to see is we're expecting Ken Paxton to be the favorite. Again, he won the endorsement of President Trump after a long process where both candidates were really trying to court the president. And so he has that advantage coming in. But, John Cornyn has vastly outraised him in campaign financing and also has won 4 statewide elections. And Ken Paxton really just does not have that experience running for federal office in Texas. Right. This is a huge state. We have a lot of expensive media markets. So that money is really important, and Ken Paxton has not demonstrated an ability to raise.
Joe, you mentioned that President Trump has endorsed Mr. Paxton. What is the standing of President Trump amongst the Republican Party in Texas?
President Trump, he won the state of Texas by 14 points. He's extremely popular among Republican voters here. But John Cornyn has made the point again and again that even though Trump did not endorse him, Cornyn has still been an ally for the president. He says often that he votes with President Trump 99% of the time. He has been, instrumental in getting a lot of the president's legislation passed. The issue, though, is that, like I said, a lot of the base voters feel that Cornyn's time has run its course in the Senate and that they're ready for fresh blood. And someone like Ken Paxton, who, has really come up in this ecosystem, would be a better voice for that movement right now.
All right, Joe, we'll see how it plays out there. I'm sure we'll be talking to you tomorrow based upon the results. Joe Lovinger, Texas reporter for Bloomberg News. He's down there in the Big D. When we talk IPOs, we've been talking all about SpaceX over the last, and for good reason. It's going to be some huge offering there, and as well as maybe some AI deals coming down to space. But there's another one out there. There's a quantum computing IPO. That's the other secret sauce out there. In addition to AI, you mentioned quantum computing, and that gets your attention there. Anthony Edwards joins us here, equity capital markets reporter for Bloomberg News. Talk to us about Honeywell, this Honeywell-backed deal, Quantinuum. What does this company do, and what are they coming public for?
Yes, well, Quantinuum is another quantum computing company. I mean, there's been quite a few that have gone public over the last, say, 3 or 4 years, but most of those have gone public via SPAC mergers, which is probably sometimes that raises a question mark about their quality, and obviously also the SPAC merger process sort of lends itself to companies that are perhaps don't have an established level of profitability. But so the interesting thing here is that this is a fairly large IPO. This company will be Quantinuum will be looking to raise about $1 billion for a sort of market cap of around sort of 12, 13, and yeah, I mean the company is not profitable, and but it is a bit more mature than most of the other quantum computing names out there. But this is just going to be another way for people to play quantum computing, which has become one of these big themes. And what is quantum computing? Well, you sort of need a degree in quantum mechanics to explain it to you well. But basically, these are very powerful computers that these companies are developing, and it's a little bit way off, but these can solve some really complex tasks that really classical computing can't. So that's about as good an explanation as I can give you.
So what are some of the complex tasks they can solve? Like, what are some of the ways that quantum computing can make money or help businesses in this moment we're in?
Yeah, well, I think the classic use case which people have been talking about, and certainly with this, the marketing of this IPO, is around drug discovery, where basically there's a process that takes, can take a very long time to take a drug from the R&D to commercialization, and using these powerful computing. That's one idea, I guess, is that you may be able to really speed up the whole R&D process, because the way these computers work is that they can sort of process so much information simultaneously in a way that classical computing can't, and you can really sort of go through these trials and much quicker, and really get to get through that process. But that's just one area, and obviously the full commercial adoption of quantum computing is some way off, and obviously there's a view that there'll be plenty of other ways in which quantum computing can be deployed in the future as well.
Well, the Trump administration is supporting quantum computing. They announced on May 21st $2 billion in funding for some of these companies. Is Quantinuum part of that group?
Yeah, so Quantinuum got $100 million out of that deal. So, obviously in recent times, the US government has put a bit of money into some companies, and those companies like Intel, and that's become obviously a very hot stock after being a very poor stock for a very long time. But yeah, so the whole sector, well, there was $2 billion devoted to about 9 different companies, including IBM getting $1 billion was the lion's share of it. But there were some companies that actually missed out. So, some people wondering why that was. But basically, the government's prepared to invest a lot of money. And governments around the world are actually showing a preparedness to invest a lot of money in quantum computing, because they feel like it has a sort of an important industrial and, national security relevance to them.
SpaceX, let's take it right back there. Have we seen a roadshow schedule yet?
No, but basically the expectation is that, this IPO, Quantinuum, is going to price on Wednesday, June 3rd.
Okay.
But the current expectation is that SpaceX will be launching its IPO or begin marketing its IPO on the day after that, potentially. And so really what we're seeing is Quantinuum, and then there's actually about a handful of other companies that are looking to go public before SpaceX, so which somewhat flies in the face of the idea that other companies are going to completely steer a wide berth of SpaceX. But we don't expect to see a lot of other IPOs on the road at the same time as SpaceX, but we are going to see a decent amount of companies here, about $4 or $5 billion worth of deals come right before SpaceX.
Try to I'm not sure front run the right term, but just to kind of get out there before SpaceX sucks all that capital out of the marketplace, presumably.
Yeah, well, I think the early indications are that there is going to be a lot of demand for SpaceX. I think we're going to find out more about that over the next week or so. It's been interesting because when that filing came out last week, I think a lot of people scratched their heads around the financials and the like. But I think, there's a palpable sort of level of interest and hype around the whole thing, which probably means that they are going to be able to get the money fairly well. And, we can see that the banks seem relatively confident they can raise some pretty reasonable sums of money in some of these other deals as well.
All right, very good. It's going to be a lot of fun over the next several weeks. Anthony Hughes, Equity Capital Markets reporter, probably not a busier reporter at Bloomberg News than the Equity Capital Markets reporter, because these companies are rushing to get out the door before summer, before Elon, and it's going to be a busy, busy time. And why not? The markets are at near all-time highs. I could sell stock in this marketplace. S&P up 46 points, the Dow's down 78, the NASDAQ up 278 points. That's 1%. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash, brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning gold for stability. To get a free gold and silver information guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. So we're hovering around records right now for the major averages, and chip makers powering the rise for the S&P 500 and the NASDAQ. Now, the Dow, after Friday's record, it has turned lower right now, down 92 points. The S&P 500 is up 45 points. The NASDAQ Composite Index up 277 points. That is up 1% right now. Let me start with Qualcomm. Those shares up 5%. They had a key win. They've reached a deal with ByteDance, the owner of TikTok, to supply chips for AI data centers. ByteDance set to buy millions of the Qualcomm chips. They're known as, like you care, application-specific integrated circuits. So put that, on your palm. This is going to help support the company's AI agent software. We did have some eco data, consumer confidence edging down in May as views of the current economic conditions settle back amid rising prices because of the war. Active contract for Brent right now up 4%. Brent is at 137 a barrel. West Texas Intermediate, that's down 2%, 94.34 a barrel. Yields have been falling today. Two-year yield down 5 basis points, 4.07%, and the 10-year yield is 5 basis points lower. That right now at 4.5%. This is kind of surprising. Americans spending big on trips. According to a survey from Bloomberg Intelligence, 66% expect to spend more on vacations this year than they did a year ago. At the same time, everybody's staying closer to home. 43% of respondents tapping savings to fund trips. 53% are using a credit card.
The kids are really good using points. Like my daughter, she travels and she spends like $8. Points everywhere.
Is there any chance your daughter can call up my daughter?
Exactly.
She needs some help on that front.
Yeah.
We check the markets and other stuff for you right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Stacey Ball.
All right, John Tucker, thank you so much. We appreciate that. Stacey Vanek-Smith, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Well, inflation is front and center. That's what $100 oil will do for you. What's the bond market doing about it? Yields are rising. Let's be honest. And we have the 30-year, 5.02% here. That gets your attention here. Winnie Caesar, that's her job, global head of strategy at Credit Insights, zooming in from North Carolina, from someplace. Winnie, thanks for joining us here. In your bond market here, we're seeing yields higher. Are they higher for longer, do you think?
We think that they're higher for longer than we expected coming into the year. Now, whether this will persist past the end of this year, I think is very much an open question, as you have a lot of moving pieces on the inflation front, on the labor front. Gas prices have been such a big driver, some concerns around institutions, what the Fed's going to do, fiscal policy. All of these things have resulted in higher interest rates and a steeper 10s, 30s curve than I think a lot of people would have expected coming into the year.
We're seeing some headlines this morning that maybe a peace deal between the U.S. and Iran is near, which would hopefully bring down oil prices. How big of an impact would that have? Are there lots of factors that would mean it takes a longer time for yields to come down, or would they come down pretty fast?
Yeah, I think that the market is always trying to move ahead of what is kind of today's news, of course. Now, from a supply chain perspective, from normalizing some of the oil commodity prices, I do think that some of the forwards are going to come down quite quickly, which would probably bring down yields. But there is the reality there's going to be a period of time, 3 months, 6 months, 9 months, in which the renormalization of operations within the Strait of Hormuz is going to need to be back up and running. And so I think that there is probably a bit of a delayed effect on the actual fundamentals, on things like corporate profit margins, on gasoline prices versus what the Treasury market and even the oil futures markets are going to be pricing in.
So what's been unique in your credit market and your bond market has been these tech companies throwing a lot of debt into the new issue market, and we don't typically see them as active issuers here. What do you make of it?
Yeah, absolutely. These companies, the hyperscalers, the Microsofts, the Amazons of the world, they have historically operated very under-leveraged balance sheets with business models that were very asset light and also incredibly generative of cash flows. And so that has changed quite significantly. There is a new additional business model, which is building out the AI infrastructure. And that has resulted in just so much expectations around CapEx. It seems like every quarter on the earnings calls, management teams are upping their CapEx forecasts for the next couple of years. And with that is coming a tremendous amount of new issue supply within the tech sector, which has really repriced how technology trades relative to the broader US investment grade index. Historically, that was a very defensive, tight spread sector. And now technology is actually trading a little bit wide of IG in aggregate, which is a very significant regime change from how things used to be.
Are these kinds of bonds, because these companies are so big and so wealthy, are they potentially competing with U.S. government bonds? Is that maybe part of why yields are going up so much?
Yeah, I think that anytime you have a lot of U.S. investment grade corporate new issue supply, there can be some impact on treasuries. Now, I think that people are really looking at, how confident do we feel that the tech issuance is going to result in return on investment, and also the reality that if you are benchmarked to an index and all of a sudden there's a lot of tech bonds in that index, you really run a significant risk being underweight those bonds. So there are some technical considerations on top of just the fundamental concerns. And then when we look at what non-US investors are doing, they've actually been paring back their treasury holdings a bit, but still upping their corporate holdings. So I think to some extent, there is some re-racking of portfolios between corporates and treasuries.
How much credit risk do you want to take in this market real quick, Winnie?
Not that much. Spreads are incredibly tight. Expectations are incredibly optimistic. Yields are still compelling. That's kind of the big thing underpinning the bid for corporate credit. But, you could just buy the long bond at 5% if you want the yield.
Very good. Winnie, thank you so much for joining us. Winnie Caesar, Global Head of Strategy for Credit Insights, giving us some thoughts on the bond market. I tell you, sit with Brent crude oil at $100 a barrel. That gets people's attention, particularly when you're thinking about renewables. And how do you think about substituting some type of renewable source of energy for a fossil fuel? $100 oil will get your attention. Matthias Kimmel joins us here, BNEF, Head of Energy Economics. He's a co-author of the new Energy Outlook from BNEF. So Matthias, talk to us about oil and the substitution effect with more renewables. How does that conversation change when oil is $60 versus $100?
Well, we see a significant impact, especially in the countries that are importing a lot of oil. That's the case in Europe. That's the case in Asia. And there, a $40 difference makes a difference in the oil price, makes a big difference. So we see these countries accelerating EV adoption. We've seen it in Europe for a few years. China is a leader. And in the scenarios that we run to 2035 to 2050, we see the deployment of electric vehicles accelerate, not only because of high oil prices, but also because electric vehicles are becoming really cheap thanks to cheap batteries.
How likely is that to last? I feel like often when oil prices get really high, we see a bump in interest in alternative energies and alternative vehicles, but often that will, especially in the US, go right back down the second that gas prices fall. Or is this time different?
I think you're making a good point. We have seen something similar in Europe with heat pump adoption after the Ukraine war, and now numbers have gone down again. But I would argue the important thing about electric vehicles is that they are, as vehicles, are becoming cheaper over time. So when we do the modeling, looking at the cost of electric vehicles versus ICE vehicles, in the long run, the batteries are becoming so cheap that it makes sense to buy them. So even though we are now in a period where we're very focused on how much gasoline costs in the long run, we think that that EVs are just the cheaper option when you go to your dealer, want to buy a new car. In the US, it's a bit more tricky because gasoline prices are very low, but in Europe, in Asia, it's often already today a clear choice.
So, what are the governments doing in order to spur the conversion to more renewable energy? Talk to us just about the level of subsidies, if any, we're seeing.
In Europe, we've seen a little bit of a back and forth, very generous policies a few years ago. Then because of budget deficits, they've been removed. They're slowly being introduced again. What we would say, though, is that a lot of the electric vehicles, thanks to the falling prices, start to carry themselves. That means, you may not need very generous subsidies anymore, especially in a few years. In Asia, you see, for example, if you take China, the government being very involved and subsidizing manufacturing. So there it's a bit of a manufacturing subsidy or support as versus Europe, where it's more about helping consumers purchase these vehicles at a cheaper price.
What are some barriers to the switch to electric vehicles? Battery price used to be a big one. You just said that that's not really one anymore. Obviously, if subsidies are helping out with manufacturing costs, that's helpful. What are some of the barriers that maybe still be in place?
Maybe depending on the country, charging infrastructure is still one, although that is a very dynamic market and it's being solved very quickly. But you can see, let's say in Northern Europe, for example, we have a lot of charging infrastructure on highways, but also in the countryside, that it's not the case everywhere. But often I would argue it's also just consumer perception. Do I trust an electric vehicle? Do I want to make this change? Am I open to that technology? So it's not always just a cost consideration or an infrastructure consideration, but also, let's say, a consideration regarding your own willingness to shift to a new technology. But we've seen with other technologies like iPhones, etc., once it is in full swing, once people like the technology, the uptake should be very, very fast.
Matthias, thank you so much. We appreciate that. Matthias Kimmel, he is head of energy economics and co-author of the New Energy Outlook for BNEF. He's based in our Milan office. He got his master's degree in public policy at the Duke University, so he can come back and do this again. Looking at the markets here, speaking of oil, Brent crude sitting right at $100. WTI crude, we're sitting at 94. Trying to figure out, I think, Stacey, where are we at these negotiations? It seems like there's two parties talking past each other.
It is always hard to say. I feel like the news changes very quickly, so we'll trust it when it's real.
And as some people pointed out, you just don't know who you're negotiating with over in Iran, since so many of the leadership have presumably been taken out in military action, so you really don't know who you're talking with there, and do they in fact represent the will of the people. So again, we'll stay on top of this story. It is moving, it is fluid. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash, brought to you by Chapter. The average couple spends over $300,000 on healthcare and retirement. Want to know how much of that you could keep? We'll find out today in under 20 minutes with one free call to Chapter. Go to askchapter.org to get started. Major averages, right now they're mixed after the record close that we saw for the Dow Jones Industrial Average on Friday. It is down 116 points, down about 0.2% right now, 50,469 on the index. 6 of the 11 major industry groups in the S&P 500, they are higher, and that index on track for a record. Information technology in the lead, and that's where you're going to find the semiconductors. The stocks, also the Philadelphia Stock Exchange Semiconductor Index, that's up 4.5%. And Micron Technology, best performing individual stock in the S&P 500. Right now, Micron up 16.2%. UBS predicting the company is going to wind up with a market cap of $1.8 trillion. Steve Chaperon at Federated Global has a year-end target of 8,000 for the S&P 500 if the Iran war wraps up soon.
But what you've got going on here, we think, is the beginning of the end. And I think what it belies, though, is the more important story for the markets, which is that we're seeing something happening with earnings that none of us have really seen in our careers, the fastest margin expansion we've ever seen. And I think that's what's driving the markets higher.
Well, the S&P 500 is 42 points higher, up 0.6%, right around its record. The NASDAQ Composite Index, same thing there, up 260 points. That's a rise of 1%. As for yields, the 2-year down 5 basis points, 4.06%. The 10-year yield is 5 basis points lower, 4.50. And oil, well, mixed. Brent, the international benchmark, up 4%, 132. And WTI is down 2.5%, 94.13 a barrel. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Stacey Paul.
All right, John Tucker, thank you so much. Appreciate that. Stacey Vanek-Smith sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio in New York City. We are streaming live on YouTube, streaming live on Bloomberg.com as well. Let's talk a little commercial real estate. I used to think it was just office, and then some people had to educate me that it's a lot more than just office.
Yes, especially in a place like New York.
Especially in a place
it's
like
everywhere.
New York. Well, all I know is a 30-year fixed mortgage rate, 6.56%. I mean, I was looking to refinance mine on the Jersey Shore compound, but I don't think that's going to happen here. Laura Rappaport, she's a pro. She's a founder and CEO of Northbridge, joining us here in studio. Laura, where do you guys see value in the commercial real estate space today?
Great question, and thanks for having me. It is very much bifurcated. We are seeing a tremendous flight to quality throughout the country for trophy assets, whether it's office buildings really being driven by this growth of AI and interest in AI in cities like New York and San Francisco, or really well-located, really well-leased multifamily buildings. And so we're seeing a tale across the country of the haves and have-nots. The really well-located, well-leased buildings are having a feeding frenzy. And those that are not in that particular situation are a little bit more challenged.
I remember during COVID and lockdown, there were so many stories. There was so much worry about what was going to happen to the commercial real estate market. There was all kinds of preparation for a big crash. The big crash never seems to have come, but still all around our Bloomberg headquarters, there are empty storefronts. What kind of shape is the market in overall? Did we avert disaster? What do things look like?
A lot to unpack there. So we've talked about New York in particular, and to your point, it's not just one asset class. It's multifamily, it's office, retail, and hotel. Well, let's focus on New York, and then we can widen the lens to nationally. In New York, you have strong fundamentals for trophy office buildings. They are highly sought after. The increase in interest for these from tenants, especially because of AI, has grown substantially. Anthropic just announced nearly 450,000 square feet in Hudson Square. We also see 4 times growth in other AI tenants. So the AI tenants are being very aggressive about finding space, and other tenants who need space are being pretty defensive and trying to seek out space. Part of the problem, though, is there's a significant pullback in housing starts and office starts, and so there's not that much new supply that has been built in the last few years or is coming online, and so the shadow inventory has decreased substantially. JLL announced actually that the Q1 was the largest since 2020 for leases over $100 a foot, which is substantial. And that was over 4 million square feet in Q1 alone. So you're really seeing a tremendous interest in quality space. You're seeing a lot of empty storefronts, though, because some of these mid-block office buildings really need to be reimagined and repurposed, because they're, with this flight to quality in office, people can choose, and they're not choosing to be in a mid-block building. And so what we're seeing for that is actually a resurgence in office to residential conversions, something that we've been spending a lot of time on at Northbridge in terms of financing this adaptive reuse from an office building to multifamily or, condominium space. And so that's that, or even being repurposed into storage and other use cases, or even data centers, to be able to repurpose this space. Retail, though, has been pretty strong in certain areas, but in these mid blocks, it's becoming pretty desolate.
So, well, actually, Scarlett, Phil, and I were out at a real estate conference down in San Francisco a few weeks ago, and they flat out said AI saved San Francisco. Yeah, flat out. And along with the new mayor, they've turned that city around big time. Now, I understand it. A quality property like we're in here at 731 Lex, that stuff sells itself. The B and C stuff are people, and that's 3rd Avenue between here and 4 to 42nd Street is all B and C stuff. What do you do with that? I mean, you have to invest in it. Don't you have to sink hundreds of millions of dollars in there? And if so, where does that money come from?
So
is that equity or debt?
Both.
Okay.
I'm a recovering developer. I'm now running a commercial finance platform. We see both. We see a tremendous interest in the value add on the office side, if you can reposition the building into space that people want to be in. Not everybody can be in the Bloomberg headquarters, which is one of the gold standards of great building. But if you can't build new and you can't reposition it into new buildings, some buildings are just totally impaired. We're seeing this office to residential conversion be another alternative, and there are some good use cases on 3rd Avenue for how that can be utilized. But people are going to have to be creative. Money, there is a lot of liquidity in the market now, even with inflationary fears. There is a lot of interest in flight to quality. So certain projects are getting capitalized if they can create value, whether to repurpose as better office or to convert to residential.
What about in other cities? Obviously, New York is a little bit of a special case in certain ways. Are we seeing a similar thing play out in Chicago, Dallas, San Francisco, other cities?
San Francisco, yes. Again, AI has really helped the city substantially, and New York and San Francisco collectively were 90% of the leasing activity in Q1, which is insane, and a very wonderful stat in terms of, especially for San Francisco, the comeback. In places like Dallas, it's very different dynamics than Chicago. Dallas is very much location, and because it doesn't have the same high barriers to entry like a New York does, you can build more easily, and therefore it becomes very much about the location of the asset and what's being built. Chicago has other challenges, that there is a lot of older buildings that are in distress or don't have the same fundamentals to attract tenants to come, and that remains to be seen in terms of the story of repositioning.
20 seconds, Miami. Have we peaked Miami, or is there still room to grow for that?
I'm very bullish on South Florida. We're
right?
doing a lot of work there. Location, location, location. In certain locations, you are getting strong fundamentals for both multifamily and for office.
Yeah, it just seems like nonstop. I mean, that in Texas, too. I mean, boy, I don't know. Laura Rappaport, thank you so much for joining us. Laura Rappaport, founder and CEO of Northbridge. Talk a little commercial real estate here. We still got a couple stores on Lex between 58 and 59. I mean, I got to talk to this listing agent. It's like, dude, you got to lower your price. It's sitting there for 5 years.
Well, they don't want to lower the price.
Well, they have
to. You got to move this inventory. I mean, I'll go do it.
Because then they start talking to their neighbors, and everyone wants their price lower.
I mean, 58 likes. There's a lot of good space there, folks, so come on in. S&P 500 up 35, the Dow's down 120, NASDAQ up 225, so got red and green on the screen here. We're going to have more coming up. This is Bloomberg. Good morning.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
Stacey Banning-Smith, Paul Sweeney. We are live here in a Bloomberg Interactive Broker Studio, streaming live on YouTube as well. This next segment, this should really be Matt Miller. I don't know where he is, but I'll try. We'll try to do it justice here. Craig Trudell joins us, Global Autos Editor for Bloomberg News. I think you have another title now, right?
Yeah.
But old notes. So what's your new title? You're like Grand Poobah. We moved you back from London.
Managing editor for business.
That's a good title.
Yes.
Yeah, that's big. We moved him back from London, so Craig's here in New York for better or worse. Craig, talk to us about Ferrari. That's all people are talking about here. They launched their first fully electric car. Again, I'm not like a Ferrari dude. That's a Matt Miller's territory. But tell us what you're saying.
I knew no matter what, it was going to be something that I would be talking with a lot of people this morning, knowing that this unveiling was going to be happening last night. But it absolutely has been, universal and universally sort of, what is this? How is this a Ferrari? It is very un-Ferrari-like in its exterior design. It looks like just more of a sort of typical car. I do think that they do get some credit for some of the details that they shared previously. The interior, I think, is widely well regarded and has some cool touches to it. But from the outside, it looks very un-Ferrari-like and is very polarizing.
Okay.
Yeah, the Ferrari's known for its like really sleek, beautiful Italian lines, and this looks a little bit like a Prius.
Yeah, and It's interesting that Johnny Ive, was brought in for the design of this. So, maybe that was intentional to sort of really shake things up and also perhaps to create some distance, given that they were, no matter what, this was going to have to be quite a departure from, what we've come to know from Ferrari for so many years.
How committed to EVs are the Ferraris of the world, the Lamborghinis of the world? I mean, when you're buying a car, you're like a Matt Miller. You want to be seen. You want to be heard. You want the roar of this thing and the distinctive roars, the sounds that these supercars make. How committed are these manufacturers?
We've seen a lot of the higher-end manufacturers actually take steps back from making this transition, and it was always going to be complicated. I do think that there are going to be some markets in the world where they have to have a vehicle like this for compliance reasons that, even for really low-volume manufacturers like Ferrari, which, they will sell this vehicle in the hundreds as opposed to, what we're used to seeing from, the sort of mass manufacturers. And so, this is not necessarily a case where, Ferrari's going to live or die based on the success of this vehicle, but there are also going to be some countries where there is not sort of slack cut for even high value but low volume manufacturers like Ferrari. And so they need to make this transition, even if it's very gradual in nature.
So in addition to the awesome rumbling engine, also the cars are supposed to go really fast. They are built for speed. What about this one?
Yeah, I think this is interesting. It's going to be sort of commoditized that we see, really quick acceleration for electric vehicles. We've seen that for some time, right? And I think that's something you have to give Elon Musk credit for, that you don't have a situation where electric cars need to be sort of compliance vehicles that look like toasters and like science projects. You can make an electric car, not just sexy, but the instant torque that you get out of an electric vehicle with battery that just that power goes straight to the wheels. You're going to get that, and you would expect that of Ferraris, where they're going to have a motor on each wheel for this vehicle. It is going to be incredibly quick, about 2.5 seconds from 0 to 60. So this one will absolutely throw your head back, even if maybe it's not the biggest looker, to sort of show off to your friends.
All right, while we got you here, you mentioned it, Tesla here. I mean, what's going to happen with this company? Because everybody's attention, including, I'm assuming, Elon Musk's attention, is on SpaceX. What are you guys who follow Tesla since day one? How do you think this is going to play out?
I think it's fascinating that also that we probably take for granted how long it's been the case that this is the company that Elon Musk is paid most attention to, and that even for Tesla being as successful as it has been, and built itself into the far and away the most valuable car manufacturer, SpaceX has long been his baby, and sort of what he's sort of focused on of taking us to other planets. I do think that it's fascinating to me that some of the people that are closest to Musk now are sort of talking very openly about the notion that the SpaceX IPO might be sort of step one in further consolidation of his empire, and that perhaps a Tesla SpaceX combination down the line. That's probably in the offing.
That's probably the best case if you're a Tesla shareholder, right? I would think so.
I think they're both highly valued companies in terms of rich valuations, and with the amount of ambition that he has to do really big things, perhaps he needs the cash flow from both of them to fund all of that ambition.
Yeah, that's a good point. Yeah, exactly. Might just come down to numbers. Craig Trudell, Bloomberg managing editor for Global Business Coverage, here joining us in our studio here, talking to us about Ferrari launching their first fully electric vehicle here. And I know, Stacey, you're going to run out and put your order in.
Absolutely.
There you
Absolutely.
go. All right. Very good. Taking a look at these markets here, the S&P's up 32 points, the Dow's minus 100, and the NASDAQ's up 200. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121, access the world's only global audio business network, coast to coast 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Your top stories and global business headlines are coming up in just a moment. Again, red and green on the screen in yield space. Yields coming in a little bit, down 5 basis points on your 10-year, 4.50. Brent crude It is trading up almost 4%, a little over 4% from yesterday's close. This is Bloomberg. Good morning.
From ABC News, I'm Chuck Sievertson. Right now, it's another routine poking and saying for the nation's chief executive.
President Trump traveled to Walter Reed National Military Medical Center in Maryland today for what the White House called his routine annual dental and medical assessments. This marks his third visit to the medical center in 13 months. He had a physical in April 2025 and went back for a follow-up appointment in October, which the White House later said included a CT scan to assess his cardiovascular and abdominal health. His doctor said at the time the imaging was, quote, perfectly normal, and the president remains in, quote, excellent health. It's also the third visit to the dentist in 5 months for the president, who turns 80 next month. Karen Travers, ABC News, the White House.
Iran calling yesterday's U.S. air attacks a gross violation of the ceasefire. ABC News chief global affairs correspondent Martha Raddatz says the Pentagon calls them defensive.
They've said the ceasefire is not broken. Any military official I know and talked to said that ceasefire was broken about 3 or 4 weeks ago when there was firing across. But they want to keep this low. We're making progress. We're making progress. But we don't know actually what that progress is. And remember, the nuclear facilities were the key to this, and they seem to be putting that off more and more.
U.S. and global crude oil trading a little lower, but are still way up since before the Iran war. Global oil at just about $100 a barrel. National average of a gallon of regular grade gasoline, now $4.45, according to Gas Buddy. The Texas U.S. Senate primaries today. ABC's Jim Ryan says the state senior senator is in the fight of his long political life.
John Cornyn first got to the Senate in 2002 and has easily won re-election every 6 years. With financial backing from the likes of George W. Bush and Rupert Murdoch, he's considered an old-school conservative. Challenger Ken Paxton's war chest is filled with money from lesser-known but equally powerful donors who like his hard-right leanings.
You're listening to ABC News. Officials in Belgium say 4 people were killed, including 2 children, in a crash involving a school bus and a train. ABC's Maggie Rulli.
7 children were on the bus when it collided with the train just after 8 a.m. local time. And local media is reporting the bus was on its way to a special education school. Now, there were no additional injuries, and the accident happened about 15 miles north of the Belgian capital of Brussels, where the bus can be seen now lying on its side. This morning, the president of the EU, Ursula von der Leyen, says she's heartbroken and that today Europe grieves with Belgium.
The train was estimated to be traveling at about 75 miles per hour at the time of the crash. The Deep South bracing for a new round of heavy rain and thunderstorms today, following deadly storms over the holiday weekend. ABC's Lindsay Tuckman.
Days of severe weather in the Deep South, triggering flash flooding. The storms turning deadly near Hattiesburg, Mississippi. And in South Carolina, a woman was killed at a restaurant after authorities say strong winds sent a patio umbrella airborne, striking her in the neck. The restaurant, which had opened just 1 day earlier, saying, "Our hearts are with the family, friends, and loved ones affected by the tragic incident."
In parts of Europe, heat is the issue. France, Spain, and the UK are breaking temperature records for a third straight day. Temperatures are about 20 degrees higher than normal for this time of year, in the 90s. Chuck Sievertson, ABC News.
Live from Washington, D.C., This is Balance of Power with Joe Matthew.
Strikes resume, even as the markets bet on peace. Welcome to the Tuesday edition of Balance of Power, as the Pentagon says it carried out self-defense strikes in southern Iran. And now the Navy resuming escorts of ships through the strait. We'll get the latest from Bloomberg's Wendy Benjaminson in just a moment. The Pope says it's time to disarm artificial intelligence. We'll discuss the warning from the Vatican when we spend some time with Bloomberg's Mike Shepard. And it's MAGA versus the establishment today in Texas. They're voting right now. And we're going to look at the primary runoff happening in the Lone Star State with our political panel, Jeannie Shanzano, Lester Munson, all after a look at Wall Street. Let's start there right now. First trading session of the week with Charlie Pellet in New York. Hey, Charlie.
Well, hello there, Joe Matthew. And a bounce off the bottom. We do have the Dow Jones Industrial Average lower. The S&P, NASDAQ, they are both advancing right now, with the S&P 500 index at 75.11, higher by 38 right now, up by about 0.5%. So stocks kicking off the holiday shortened trading week at a record. Hopes for a peace deal between the U.S. and Iran overshadowing military strikes in the Persian Gulf. We've got the Russell 2000 index of small cap shares advancing by 1.4%. All of this with a 10-year at 4.49%, the VIX just above 17, and the 2-year 4.05%, the 30-year holding above 5%, 5.02%. Spot gold down 1.4%, 45.04 the ounce. Interesting day for crude. Yes, West Texas Intermediate crude at $94 a barrel. It is down 2.7%, but Brent crude holding around $100 a barrel. Barrel of Brent right now $100.10, up by 4.1%. As for the market backdrop, Joanne Feeney is a partner at Advisors Capital Management, and she was a guest this morning on Bloomberg Open Interest.
I think the market is assuming some kind of resolution occurs that will allow more oil traffic to get through the strait. I think we've seen that in the oil price numbers, but you know, by no means is that assumption 100%, because we're still seeing elevated oil prices relative to before the war.
Joanne Feeney of Advisors Capital Management. So again, we do have Brent crude pushing higher, right around $100 a barrel. Oil majors are trading lower. Case in point, ExxonMobil down 2.2%, ConocoPhillips down by 2%, and shares of BP, they are down by the ADRs, down by 4.5%. I'm Charlie Pellet. That's a Bloomberg Business Flash. Joe Matthew, back to you now as Balance of Power continues.
All right, Charlie, thank you. Missed you over the weekend. Charlie Pellet's back. We're putting the band back together on a Tuesday. Feels like a Monday edition of Balance of Power here on Bloomberg Radio, satellite radio, channel 121, and streaming live, as always, on YouTube. You'll want to dial us up. We've got new images from the White House, this incredible set they're putting together here for the big UFC fight for the president's birthday. You can hardly drive by there. It looks like, well, there you go. If you're with us on YouTube, James mentioned it looks like an alien spacecraft has landed on the South Lawn, and we're not even close to being done. And that doesn't even include the ballroom. The president's not in the White House right now. He's actually up at Walter Reed, and we've got our eyes on the clock. He got there a little before 9 o'clock. Walter Reed Hospital, his third scheduled checkup in 13 months for what the White House is calling a routine annual dental and medical assessment. Annual? This is the third trip in a year. Knowing the president turns 80 next month, everybody's waking up to more stories questioning his health. He did look bruised up on the hand when he was at Arlington Cemetery yesterday. We'll find out if we get a readout on what's going on there, because it looks like it might be a bit of a stay. Wild market, though, today. The president had everybody in a tizzy over the weekend, thinking we were on the verge of a peace deal with Iran. And the market is still pretty much there. I see the Dow has turned lower, but oil prices have been responding, stocks and bonds responding, as the president prepares to make a trip to Camp David tomorrow to talk about what could be the final throes of this conflict. And he's been thinking big, not just about ending this war, but maybe even adding to the Abraham Accords. As he says, I am mandatorily requesting that all countries immediately sign on. I love that use of language, mandatorily requesting. I'm going to start using that a lot more often. I feel like that's a pretty polite way to demand something. It says Iranian officials, U.S. negotiators in the final stages of reaching an agreement. But then we wake up this morning to news that we've been striking more targets in Iran because they're laying mines in the Strait and they're moving missile launchers around. This doesn't sound necessarily like we're on the verge of a deal. Let's see what Wendy thinks. Wendy Benjaminson, Bloomberg News senior editor, back with us here in Washington. It's great to see you. And same deal last week. You can pick one storyline or the other. Right. And the president even says this himself. We're either going back to war or we're going to have a peace deal for the ages here.
Right.
Has anything actually changed? Is he trying to simply talk the markets higher, or are there negotiators doing good work at the table somewhere?
There are negotiators doing work at tables somewhere.
Doha in this case,
Doha
right?
in this case, right, in Qatar. And the Iranians were there yesterday talking to Qatari and Pakistani negotiators, and then they left. And then there were these strikes overnight. But you're right, Joe, this is the same song we've been hearing. I mean, we were all very eager on Saturday when he put out Saturday afternoon. He puts out a Truth Social post that says, we've basically reached we're very close to a deal, and I'll be announcing something shortly. And then Saturday ends, and then Sunday happens, and then Monday happens, and nothing happens except more talking. And then, as you said, these strikes overnight that supposedly were to defend against the mines. But I think Trump is trying to please so many people at once, both the hawks like Roger Wicker and Lindsey Graham, who are saying just start bombing them again, finish the job. And then you have the people going to the gas pump for Memorial Day weekend who are not happy. And, and he's got a lot of stakeholders who all want different things.
Well, it's got to the point where leaks, presumably coming out of the White House, maybe it's the other side, I don't know, were so specific. They think they have the elements of a deal here. And if this isn't the case, I don't know who we're talking about. Officials say the extension of the ceasefire would last 60 days, right? You heard that.
Right.
While the Strait would be reopened, and then they would, I guess, hang on to talk about the dust or the nuclear or the enriched uranium later on, as the president says. He even posted at one point that there was an agreement to
that was the confusing
either destroy
thing.
it in place or bring it somewhere else where it could be.
Right. Out of nowhere, I think Sunday or Monday, he posted this thing about the what he calls nuclear dust, which is the enriched uranium that supposedly that Iran has. And he says, it's going to be eliminated or taken care of by one side or another. And then the Iranians come forward and say, no, we haven't talked about that yet. And we're not going to talk. I mean, the Iranian position is we're not going to talk about our nuclear program until we resolve the more immediate things like the Strait of Hormuz and their frozen assets and all that sort of stuff. So there's, so then we just don't know what's happening.
I'll throw another log on the fire for you, because it was an hour before you walked in here. Wall Street Journal, U.S. Navy restarts guiding ships through Hormuz. What? A Greek oil tanker was guided by the Navy off the coast of Oman, and the U.S. plans to help a dozen vessels cross Hormuz in the coming days.
Right. That's the Wall Street Journal reporting that at this moment. Yeah.
Markets like this, they don't care who or why is getting through as long as the oil's moving, right? Is that the point here? And where is this coming from? Again, it's not from an official channel, of course, right?
No, it's not. It's from some sources of theirs. And the U.S. Navy, or U.S. Central Command, which runs the war in the region, they put out a statement saying that they are there and they're sort of there watching to make sure ships are safe. They didn't go quite as far as saying we're actually escorting ships through. So we really, again, don't quite know what's happening there.
Mandatorily requesting that I get a raise. Mandatorily requesting all countries immediately sign the Abraham Accords, and that if Iran signs its agreement with me, as President of the United States of America, it would be an honor to have them also be part of this unparalleled world coalition. He's even lined up the order in which companies, beginning with Saudi Arabia, would sign on to the Accords. Do you think that they had any idea this was coming?
No, nor do I think I don't know where that's coming from or how that fits into the nuclear deal. And Saudi Arabia and Qatar and some of the others are unwilling at this point to sign on to the Abraham Accords because their position is, fine, we'll recognize Israel as long as they recognize a Palestinian state. Right. And that's what they've been waiting for 75 years or so. Yeah. And so the other countries that have already recognized Israel have decided, that ship has sailed and they're just going to accept it, probably to be in good stead with Trump. But Saudi Arabia has no interest in doing this, and they're probably sort of saying, wait, we're helping you with this war. Why are you trying to push us into this corner right now? And Iran signing on to the Abraham Accords? That would be something to see.
Just imagine the signing ceremony on the South Lawn following the UFC fight.
Well, they could leave that structure.
Yeah, we've got a stage for it. What's happening at Walter Reed? Is this like one big root canal? I mean, he's there for hours, I guess, today.
Well, one thing that is distressing with this is that the lack of transparency from the White House about what exactly is going on.
Annual dental check.
Yeah, an annual dental check, which he's already had, as you noted, and physical checks, which he's had. You know, he was talking just a few weeks ago about the cognitive test.
Remember? And the
CAT scan and all of that.
He actually wrote at one point that he was in front of a battery of doctors taking the cognitive test, suggesting that there was a room full of physicians.
Right, which isn't comforting.
That would not be normal.
Right, and yet the readout that we probably will get this afternoon will say, you know, he's the strongest president who's ever been in office, and he's exceptional and all that. And so we really won't know what is happening with our about to turn 80 president, even though we see the rash, we see the bruising, we see the swelling, and it's can be a little worrisome.
It's inside baseball here, but it's interesting. There are usually a couple of cameras that follow the president everywhere. When the pool goes into the Oval Office, you'll get two angles. You get the head on and then the cutaway shot. Usually that cutaway shot is zoomed in, not usually, but very often now and more than ever, zoomed in on his hands to see if he's got a bruise or makeup. When he's sitting in the chair, look at this is from Arlington yesterday. If you're with us on YouTube, there's a shot. This is what they're busy taking pictures of. When they're in the oval in front of the fireplace, sitting in chairs, they're frequently zoomed in on his ankles. Have you ever seen anything like this? I mean, obviously, Joe Biden's age was a huge story.
Yes.
But the physical component is different.
The physical component is different because Joe Biden seemed clearly to be slowing down cognitively, clearly becoming very, very, very forgetful. And, you know, all of us should have been paying more attention to that. But Donald Trump seems to have physical ailments that we don't, as the taxpayers, as his employers, don't know about. And it's a little... It can be a little distressing. We'll see what we get this afternoon.
The nodding off, I don't know. I fall asleep all the time.
Yeah,
something
maybe we shouldn't have presidents who are in their 80s.
Well, I guess there's something to be said for that. He was getting some winks during Hegseth's speech at Arlington yesterday. Look, we'll let you know when he gets out of Walter Reed. We'll find out from the pool. We'll let you know if there's a readout from the White House. I think, as Wendy mentions, though, we typically would see a glowing letter as opposed to an official White House statement from the doctor, and maybe that's what we'll get today.
That's probably what
we'll see
get.
how it goes. Great to see you, as always. Wendy Benjaminson, off the long weekend, setting us up here on Balance of Power, our senior editor here in Washington, D.C. I'm Joe Matthew. It's good to see you. We're all back together now, and Shep's going to come in next to talk to us about the latest chapter in the AI wars. It's the Pope this time. Our dystopian tale gets more abstract by the day. Yes, the Pope versus Silicon Valley, or is it Trump? We'll ask Shep to put it together for us here on the fastest show in politics. This is Bloomberg.
12:21 on Wall Street. We do check markets all day long. Here at Bloomberg, we have got the Dow lower, S&P, NASDAQ. They are both advancing. We're looking at records right now. The S&P 500 index up 36, up by about 0.5%, 75.10 where we stand on the S&P 500 index. Wall Street kicking off a holiday-shortened week with stocks and bonds moving higher as hopes for a peace deal between the U.S. and Iran are overshadowing those military strikes in the Persian Gulf. Keep it locked into Bloomberg for any and all developments out of the Middle East. We got you covered. S&P again up 38 right now, up 0.5. The Dow lower by 0.2%. NASDAQ up 221 for NASDAQ. That is a gain of 0.8%. All of this with the VIX hovering right around 17, a 10-year at 4.50%, the 2-year 4.06%, and the 30-year 5.03%. Gold, meanwhile, is at $45.05 the ounce. Spot gold down 1.4%. West Texas intermediate crude trading lower by 2.5%, $94.23 a barrel. Barrel of Brent, however, holding above $100, $100.19 now, up by about 4.2%. Shares of Madison Square Garden Sports are trading at a record. This after the Knicks completed a series sweep over the Cavaliers to advance to the NBA Finals for the first time since 1999. Today, we are seeing shares of MSGS up by 1.7%. I'm Charlie Pellet. That, Joe Matthew, is a Bloomberg Business Flash.
All right, thank you so much, Charlie Pellet. Stunning gain in Micron technology. Is this the Tyler Kendall bump? The T-Money rally? Micron is through the roof today. It's absolutely surging, up 17% now. This is a stock that is already up 800% over the last year. Adding $130 right now after UBS put the all-time high price target, the street high of $16.25. It's up 800%. UBS says it'll double from here, and clearly somebody believes that. We need to interview somebody, James, who sold Micron last week. We'll see if this can hang in there, and we're going to be advancing our conversation in a moment with Mike Shepp, who's going to be talking about the Pope and this whole dystopian debate that we're having over all of this. We've got our eyes on the White House, though. If a lot of people coming back into town from the long weekend, and boy, they have been busy. If we can show you on YouTube, search Bloomberg Business News Live. The massive cranes are up as they build the staging for the big UFC fight that's going to be on the president's birthday. Look at the size of this thing. This is from across the park from the Hay Adams Hotel, the view that you're seeing right now. New renderings are out. This is partly why I mention this, from the UFC, showing the arena, the octagon that will be on the South Lawn for what they're calling, there you see it now, UFC Freedom 250 fight, because nothing says America's birthday like getting kicked in the face. 5,000 VIPs on the South Lawn, including producer James. He's going to be there with a credential hanging around his neck. 85,000 on the Ellipse. Do we believe that? The big fan fest? They've got 19 days to get this thing done. June 14, President Trump's 80th birthday. And I feel like we can see where this is going. Look at the work they're doing. A year from now, is it the UFC? Or is it the enhanced games, as we saw over the weekend in Las Vegas? Did you check this out? Great headline in the Washington Post. With drugs, money, and hype, athletes chase dreams at the enhanced games. The Las Vegas spectacle set to prove athletes freed from traditional doping rules could push the limits of performance. Look no further than Half-Thor Bjornsson, the Colossus human, better known as Thor, or possibly as the Mountain in Game of Thrones. He tried to lift 1,135 pounds. He didn't pull it off, but some remarkable things took place. A couple thousand invite-only spectators came in on private jets. They did this at Resorts World across the street from the Wynn on the Strip. Interesting, attendees included Callie Means, an advisor to Health Secretary Robert F. Kennedy Jr., and William Finbar Finn Kennedy, the secretary's son. What do you think? Next year? The enhanced games on the South Lawn? Remember the all-drug Olympics on SNL? There's an audience for this. On the latest edition of the AI Wars, we do introduce the Pope. This is like the sequel of the movie that nobody would believe. Pope Leo out with the encyclical over the weekend that is so long I'm wondering if he used AI to write it. Warning over artificial intelligence that AI must be disarmed to essentially save humanity. Now, Donald Trump already was not a fan of this Pope, and I'm not sure what he's going to think of this, but Michael Shepard is with us to get to the bottom of it. Bloomberg Senior Editor for Technology and Strategic Industries. Shep, it's great to see you.
Great to be here, Joe.
You're going to the UFC fight, I'm sure, right?
Wouldn't miss it. I got us front row seats.
That's the VIP stuff. I understand.
We will be there.
A lot of favors.
You know, just hoping that whole infrastructure stands intact. We might need a mountain to hold it up.
You used to cover the White House. Have you ever seen anything like this?
This strains all recollection from anything quite like that.
That's a great
The president
answer.
would complain about the big tents in the back for other past events.
Right.
This blows it all away.
It blows it away. I'm amazed we haven't seen a truth post, unless I missed it, James, about the Pope. But this got a lot of coverage over the weekend. To see a figure like this enter the debate over the moral and ethical implications of artificial intelligence is a curveball. And here we see him speaking at the Vatican. And he's got an official from one of the co-founders of Anthropic with him. You can't make this stuff up, Mike. What prompted this now?
Well, this has been long brewing, Joe. And a year ago, when he was installed as Pope, and in his very first words to the world, he really stressed the importance of defending humanity and defending our human nature against all the societal and economic pressures that were out there. And it was really written in the stars in a lot of ways that this issue would come up right in front of him. The Vatican and the Church have been trying to address artificial intelligence with previous missives from Pope Francis. There was even an agreement that some companies signed up for, like Microsoft and IBM, to try to pursue artificial intelligence in an ethical fashion. This is 6 years ago, back in 2020, before ChatGPT. And more recently, 2 years ago, in 2024, we did see Pope Francis really elevate the debate further, but nothing going quite as far as this. Pope Leo put out his first encyclical, which is a pretty critical document of teaching, on social teaching, really, Joe, for the church, but also aimed at the wider world. It's addressed to all men and women of goodwill. And the idea is to say that, look, here is the moment that we're in with a particular social issue, and this is how we have discerned the correct path to pursue. And he is not giving instructions per se. He is really saying, look, this is how we need to be thinking about it. It is a document, as he puts it, more of discernment. And it is strikingly non-confrontational. He really did try to bring some executives aboard, and we did see Anthropic taking part in this. And he doesn't also come out as a Luddite. He is a tech user. He has a mobile phone. We've heard in the past about his difficulties with customer service. You can Google it. So he has lived this struggle just as you and I have, Joe. But what he is trying to say is that, look, there is a way to use this technology and do so ethically.
Fascinating, indeed. When he talks about disarming, it's a little bit different than a lot of the concerns we hear about impacting the job market, although he's aware of that, taking over the world, Skynet type of stuff. He's talking about humanity, that AI should be more human-friendly. And he also points out no algorithm can make war morally acceptable. And he refers to the monopolistic control around AI. So what do we think the Pope wants to see?
Well, the Pope is really aiming at two of the biggest concerns surrounding this and really any new technology, that it allows those who have the resources and the power to accumulate it in even greater order and form and use it to suppress a larger mass and to eliminate diversity. And it was interesting that he used the analogy of let's not build the Tower of Babel, referring to the biblical tale from Genesis chapter 11, where people who all spoke one language decided one day to build this massive tower and do so to the exclusion of others. And God swept it aside and scattered them. and really had people speaking many different languages according to the story.
Yeah.
And what he's cautioning against is not allowing AI to become that thing that is exclusive, that disrupts the natural communion of people and interfere with their humanity. And also, he does get into the question of labor and work and what this means for workers. And he calls for protecting workers' rights, ensuring that there is retraining available. He's also warning about the risks to children, too. You know, there are a lot of awful things out there that can be generated via some of those chatbots, and he wants to be sure that kids are protected from it as well. And he's calling on governments to take that on.
This comes days after the president canceled an event to sign an EO on AI regulations, kind of a framework that surprised a lot of people last week. There were executives in the air, apparently, on their private jets headed to Washington after receiving a late invitation who were told that he decided not to go through with it. Reports suggested Mark Zuckerberg, Elon Musk, and others were in the president's ear saying, don't do this yet. You're going to restrain this technology. The president was asked about it. I really thought that could have been a blocker, he said, and I want to make sure that it's not. Is the Pope a blocker?
Well, that's a good question. The Pope doesn't want to be seen as standing in the way of the technology in its application toward the good, curing diseases, being a bridge to better understanding and knowledge. But when it comes to being used to, again, gain monopolistic power or being used as a tool of war, then that really does cross the line. Now, the president also framed that conversation in his discussion last week about why he pulled the plug on that order at the last minute. He was concerned about the competition with China. Well, when you talk to the Pope, he's not worried about the competition with China.
No.
You know, he is thinking, you know, of all nations and of all peoples, and he is not worried about, like, well, is China or the U.S. ahead in the race,
winning the
particularly
race?
Which nation state. He is concerned about the human race and where people stand and how they will be able to interact with this technology and not be made vulnerable by it.
Are we ever getting an AI framework then from this White House? What will follow what happened last
You know, what's interesting is, and I've been thinking about this following the encyclical from the Pope, which is called Magnificat Humanitat, which means magnificent humanity. Does this act as any sort of propellant for the White House to maybe just try to get it out of the way, or will they hold back? How do they sort of position themselves around the Pope? Remember, two of the president's closest advisors, his Vice President J.D. Vance and his Secretary of State and National Security Advisor Marco Rubio, are both practicing Catholics, each with presidential ambitions. So how does that fit into this document fit into their own White House ambitions and also their desire to promote American technology, which we've heard J.D. Vance do?
You wonder how this helps or hurts Anthropic at the Pentagon, too, after showing up with the Pope like that.
Oh, it's a great question.
Can you be our senior Pope correspondent? You're our Vatican reporter from now on.
I'm happy to add that to the tech,
Michael Shepard,
tech portfolio.
This is Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow lower, the S&P, NASDAQ. They are both advancing. Looking at records there, 75.13 on the S&P. A bounce off the bottom, but still off session highs. 40 points higher right now, with the S&P 500 index gaining 0.5%. The Dow, very different story. Down 119 now on the Dow, drop there of 0.2%, while NASDAQ is up 250, looking at a record up 0.9%. Wall Street kicking off a holiday-shortened week. Stocks and bonds pushing higher as hopes for a peace deal between the U.S. and Iran overshadow military strikes in the Persian Gulf. All of this with the VIX just above 17 now, a 10-year at 4.50%, the 2-year 4.06%, and a 30-year 5.02%. Gold is down $62 the ounce, 45.08, down 1.5% now, while West Texas Intermediate crude trading lower. WTI down 2.6%, just above 94 a barrel. But Brent, yes, below $100 now, 99.84. Barrel of Brent, though, higher by 3.9%. As we have been reporting right here on Balance of Power, Texas voters are at the polls today deciding that runoff election between Senator John Cornyn and State Attorney General Ken Paxton. It is one of the most expensive in Senate history. It's a race that Democrats are watching closely in hopes they can flip both houses of Congress in November. Henrietta Trey's is Director of Economic Policy Research at Veda Partners, and on surveillance this morning, she talked about the economic backdrop for the administration heading into the November elections.
Think about what we went into this year with. We had record lows since the pandemic of $2.81 gasoline, and now we're at $4.50. It's just a chaotic increase driven exclusively because of the war, and you can see it. You know, you don't have to educate people on these grounds. People know it. So that's really the problem facing Republicans going into November.
Henrietta Trey's of Veda Partners. Eli Lilly shares are gaining 1.5%. Lilly has agreed to buy three vaccine developers for as much as $3.8 billion, marking the drug maker's re-entry into the infectious disease space. All three are privately held. Again, Lilly shares up now by 1.5%. Recapping, stocks are trading mixed. Dow Industrials down 0.3%, and we do have the S&P at a record up 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Joe Matthew, that is a Bloomberg Business Flash.
All right, Charlie, thanks so much. Charlie Pellet. We'll be back at the top of the hour, 1 p.m. Eastern Time, with another read on the markets here. The Tuesday trade. I know it feels like Monday, but the president is out of the hospital. He just posted a moment ago. We knew that the motorcade was rolling a couple of moments ago, remembering he showed up a little bit before 9 a.m., so he was there for about 3.5 hours. Just finished my 6-month physical, he writes, at Walter Reed Military Medical Center. 6-month physical? Everything checked out perfectly, all caps. Thank you to the great doctors and staff. Heading to the White House, President DJT. Knowing that this is something that, well, we had seen this coming, the White House referred to it as a dental appointment. This is what they said was a routine annual dental and medical assessment. So he had his annual 6-month physical? We still have some questions on this, but we probably, well, we shouldn't hold our breath. Maybe the doctor will kick out a note like we have seen on recent visits. This is the third one in 13 months, which is why a lot of folks are asking about it. So the president is clear. He's on his way back to the White House where they're building the UFC stage. He will be 80 years old next month, the night of the fight. The fight in Texas is the one we're talking about now. This is really something. Do or die for John Cornyn, 24 years in the United States Senate. And it's all about to go poof if you believe the analysts and the polls, remembering that Donald Trump decided to go with somebody else last week. In the closing days of this runoff, this primary runoff, President went with Ken Paxton, the Attorney General, over the establishment candidate who could have been majority leader in the Senate, according to some. And so they're treating this like it's already over and that we're in a general election. Ken Paxton versus the Democrat, James Tallarico. And they're going after him hard. Now, look, John Cornyn could win tonight. Maybe this is the wrong narrative, but we're following the news here. Ken Paxton zeroing in on the Democrat, just like the president did a couple of days ago. This was March or May 15, rather. Remember, he went to the back of the jet and he started talking about this weird candidate in Texas. Listen.
I think the Democrats have a weird candidate. 6 genders, a real hit on Jesus. I mean, this guy is bad news with his mask from relatively recently. And he's a vegan, all of a sudden he's not a vegan. He was a vegan, now all of a sudden he's not. Texas doesn't like vegans. I do believe either one of them will easily win the race.
All right, he said a lot. I know it's hard to hear. He's in the back of the jet, and I want to make sure. He called him weird. 6 genders, he said, a real hit on Jesus. I don't know what the genders refer to, but he talks about him being a vegan. Of course, he means vegan. He doesn't eat meat. The vegan, he says. And they're trying out nicknames for him now. Ken Paxton was at a rally in one of his first since winning the endorsement. He told the crowd in Katy, Texas, he wanted to try out some nicknames. Suggestions from the audience started flowing, CNN reports, as Paxton passed the mic around. Low T Talrico. Tofu Talrico. I guess that's the vegan thing. And then the one that seems to be resonating, it was in the tip sheets this morning, Talafrico. We'll see if any of these stick. But it doesn't say a lot for John Cornyn if we're drilling down on Talrico on this level. We assemble our political panel for their take on this, if we dare. Bloomberg Politics contributor, Democratic analyst Jeannie Shanzano is with us, democracy visiting fellow at Harvard Kennedy School's Ash Center. And Lester's back, as you can see on YouTube. Lester Munson, Republican strategist and principal of the international practice at BGR Group. It's great to see you both. Jeannie, as the Democrat, what do you think of this? The vegan in the headline on CNN says, a vegan and a Talafrico. GOP prepares furious general election messaging blitz. Will it work?
Thank you, Joe, for being Donald Trump's whisperer, because I had no idea what he was talking about, a real hit on Jesus, all this stuff. So this is all very helpful. I was just sitting here thinking back to the other people that Donald Trump has endorsed. In addition to Ken Paxton, there was like Carrie Lake, there was Herschel Walker, there was Roy Moore. We could go through the list. So I don't know if I would, go by his judgment of these people. And let's not forget, Ken Paxton has his own checkered past, to use a term. He's been impeached by his own party. He has been indicted. He has had staff members report to the police on what they thought were behaviors of concern that they said bordered on the criminal. So, I think Democrats are very, very happy that the president is supporting Paxton and would like him to win tonight.
So bring me to Texas here, Lester. Which is more damaging? To be called a vegan in the home of the vegan? A vegan, that is a real hit on Jesus, all the rest of this stuff, tofu, or is it being impeached and having this very messy divorce like Ken Paxton?
Well, this is going to be a negative campaign. No matter who wins tonight, I think this is going to get pretty negative. I think President Trump is highlighting some interesting theological issues that we could do a deep dive in Protestantism. And there's definitely the more evangelical kind of charismatic approach. And I think he's trying to appeal to those voters versus the more mainline liberal Protestant interpretation of Mr. Talarico. And there are some real differences there, to be sure. How acutely the president is aware of those theological issues, I'm not sure, but it's interesting he's talking about them.
Are we ruling out a win for John Cornyn? I mean, is this over?
The number, I've looked at the numbers. The numbers don't look great for Senator Cornyn, who we should say, is a Washington insider. Yes. He's a senator's senator. He's been around for 24 years. He's run campaigns for other senators. He's very well liked by his colleagues. I think he's a pretty effective advocate for Texas and an effective interlocutor inside the Republican Party, but that may not be what the people want right now. They may look for a little fire from the outside.
Well, that would be that's what you're getting is the fire, and then the question becomes who's a better general election candidate here. Jeannie, Democrats have been talking about flipping Texas for a long time. Beto's calling as we speak. Can James Talarico do this against this messaging blitz?
It's an uphill battle, but certainly if he has to run against Paxton, Democrats are feeling like it is a possibility. And one reason is that amongst other things, Paxton is not a great fundraiser. And so that $300 million that Donald Trump has sitting there, he's going to have to put his money behind his mouth, so to speak, if Paxton wins, and help fund this thing. And Texas is an expensive state. You mentioned already, this has been, I think, the most expensive Senate primary in U.S. history, like $130 million spent alone on the primary, if you can imagine. We go into a general that pits these two people, it is going to get ugly and very, very expensive. And Joe, Democrats are very, very happy about that prospect. Please, Republicans, spend your money in Texas. Take it out of those other states.
You remember the narrative around James Talarico when he first emerged. It was the Joe Rogan show. He was very selective, being very smart in some of the media that he was doing. His sermons were going viral online, and people said, wait a minute, is this a new style Democrat who might actually be able to get votes in Texas? What have you come to think of him?
Well, as I recall, his competition for the Democratic nomination was Jasmine Crockett, who was seen as way more progressive, way more to the left than Talarico, and there's a lot of truth in that. So I think Democrats thought Talarico would be stronger than her.
Yes.
However, I think if Talarico were running against Cornyn in the general, I don't think it would be that close.
Right. Okay.
With Paxton, this is going to be a race, and there's going to be a lot of money spent and a lot of resources.
So you're not laughing at the idea of a Democratic senator from Texas?
I'm not laughing at it, not yet, but this is going to go negative. This is going to be a very, very, very negative campaign. It'll probably be the most negative campaign of a nationwide campaign of negativity. Neither party's all that popular. President's not very popular. Democrats aren't very popular. It's just going to be a slugfest.
So, Jeannie, how does a pastor, how does a preacher like James Talarico go negative? What does he get a bunch of surrogates to do it for him?
And Joe, I think you interviewed him not that long ago, correct? Yeah. Like more important than what was happening on Joe Rogan's podcast was the best Joe Matthew, who interviewed him.
There you go. God love you.
There we go. You know, I think Talarico, it's going to be an uphill battle. As you mentioned, it is Texas, and this is going to be a hard fight. And I don't want to underestimate Paxton's political prowess. He has never lost an election, and he did something. If you remember, about 10 weeks ago, this thing we thought Trump was going to endorse Cornyn because Cornyn had done better in the primary, the first one before the runoff, than anybody expected, even beat Paxton. We thought he was going to endorse. And what did Paxton do? He came out and said he will consider dropping if Cornyn gets rid of the filibuster or supports getting rid of the filibuster and passes the SAVE Act. Of course, that wasn't going to happen. And so that, coupled with Cornyn, I think, slipping by saying he thought it was a done deal on Donald Trump's endorsement, it sort of shows, I think, Paxton's prowess. So he's got the support, he's got the prowess, he doesn't have a lot of the money. So that's going to be where Donald Trump comes in.
I guess James Talarico, there's confusion about whether he's an actual vegan. He was out there eating turkey legs. There's some people. Does he go out there and get a big brisket sandwich right now? Do you get 5 points on that alone in Texas?
I think I'd be visiting all the ranches, all the cattle ranches I possibly could.
It's kind of a real thing.
And less focus on what my own particular diet is and more focus on what Texans actually care about in the Texas economy and that kind of thing.
Right.
Because it does seem like he's vulnerable with this name. You know, this doesn't sound very Texas to be a vegan.
Vegan thing.
So he's got to demonstrate, he's got to show that he's a different kind of
This
Democrat.
is the styling of Trump. Remember this Texas candidate? He said she doesn't even like, she was from Nashville. She hates country music. You can't be in Nashville and hate country music. But look, I guess there is some truth to some of this stuff. In our remaining moment here, Lester, what are the actual issues in Texas? Is it national politics? Is it the price of gas? Does immigration give Republicans a leg up in a way that it wouldn't somewhere else?
I think it's going to be about energy issues. If you were talking about real issues, it would be energy, it would be agriculture. Those are both huge in Texas, there's no doubt. I think we're going to end up having a personality argument and a lot of negativity, and we're going to see, can Paxton position himself as kind of the outlaw that is kind of, part of Texas's history in maybe a more positive way than the way the Democrats are going to portray it, which I presume is very negative.
Absolutely something. Do you both believe John Cornyn's done? It sounds like you see that as likely, Lester.
It's certainly likely.
John Cornyn lose tonight, Jeannie?
It looks like he's going to. And I think Tallarico needs to talk to Oprah about taking on those cattle farmers in Texas. It's never a good place to be in. So.
Wow. All right. We got to come back around on this. Let's get them both on the program as well. James Tallarico, come back and talk to us. We'll let you pick your favorite nickname. I'm Joe Matthew in Washington. Our panel's back with more right here on Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
President Trump says negotiations with Iran are going nicely, but we're still striking them. Welcome to the Tuesday edition of Balance of Power, as the Pentagon says it carried out self-defense strikes in southern Iran, even as the markets bet today on peace. I'm Joe Matthew alongside Kaylee Lines, coming off the long weekend with her eyes on Wall Street here. Kaylee, the Pope talking about artificial intelligence, the president talking about war and peace. It's just another day in Washington.
Just another day in paradise for sure, Joe. Of course, over the weekend, it seemed like we could be getting closer to some kind of negotiated agreement. At least that's originally the signal President Trump was sending before he then said he doesn't want negotiators to rush.
Yeah.
And his Secretary of State, Marco Rubio, contends it's either going to be a great deal or there will be no deal at all. And in the interim, as you say, whether in self-defense or not, the U.S. military was engaged in strikes in southern Iran, strikes that Iran says are a violation of the ceasefire that the U.S. says is still intact.
A ceasefire that was about to be extended. If you read the posts on Truth Social from over the weekend, a 60-day extension is what we had been hearing about here, Kaylee. But there are a lot of questions as the president now prepares to hold a cabinet meeting up at Camp David tomorrow to review military options. It's hard to tell if we are closer or further away from peace. We'll get an update from Tyler Kendall, who's going to join us live from the White House, and insights today as well from Heather Conley at the American Enterprise Institute. I feel like we've been asking a lot of the same questions about the trajectory of this war.
Yeah, in many ways it feels like Groundhog Day, but we also have a lot of unanswered questions as to what exactly the U.S. military has spent and is still spending, not just in terms of monetary figures, but of course actual munitions. And we have a very important conversation coming up this hour with Tim Cahill of Lockheed Martin. He heads up their missiles and fire control section of their business, and it is missiles. In many cases, expensive missiles shooting down cheap Iranian drones that we have been talking about for the duration of this conflict.
They're expanding their manufacturing capacity in Troy, Alabama. Mr. Cahill's going to join us to talk about that and whether it's even possible for Lockheed to meet this demand.
Yep, so looking forward to that conversation. We also have to talk about the fact that it's runoff day in Texas. Really important Republican Senate primary runoff happening between John Cornyn and Ken Paxton. So we have a lot to get to this hour. We better get started. And we start, as always, with a check on the markets. Charlie Pellet's up in New York with that.
Hi, thank you very much. And what's happening as I speak, we're looking at the lows of the day on the Dow Jones Industrial Average, United Health, Chevron, Cisco, all weighing on the Dow right now, down just about 150 points on the industrials, down by 0.3%. The S&P 500 index, so pushing higher, 75.11 where we stand. Could see another record today on the S&P, just about an even split on the S&P 500. It is showing a gain now of about 0.5%. The NASDAQ Composite Index up 250 now, higher by another 1%, indeed a record there. The NASDAQ 100 Index up 1.5%. And the Bloomberg Mag 7 Index just about flat on the day right now. All of this with the VIX right around 17. The 10-year 4.50%, the 2-year 4.06%, and the 30-year 5.02%. Gold is down 1.4% at $45.06 the ounce. Interesting day for crude. West Texas Intermediate 94.04 a barrel. Yes, WTI is down 2.7%. Barrel of Brent now below $100, 99.82 on Brent crude, but Brent is up now by 3.8%. Among some of the oil majors, they are all lower. ExxonMobil down now by 2.7%. I mentioned Chevron weighing on the Dow, down 2.7%. ConocoPhillips down by 2.9%. So again, recapping, Dow Industrials declining by 0.3%. We've got the S&P up 38, up now by 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie Pellet checking on the markets for us. Thank you so much. I'm Kaylee Lyons alongside Joe Matthew here in Washington, where it seems like we've been telling you a pretty similar story for weeks now. Stop me if you've heard this one before. Joe, the ceasefire between the U.S. and Iran remains intact, according to the U.S., even as the U.S. military is actively engaging in strikes against Iranian targets in the south, they say defensively. So there still, obviously, is tension and hostilities. But a deal is close, according to President Trump, just not close enough and can't be rushed and won't happen unless it's a great deal.
Close enough to even expand the Abraham Accords based on a post from over the weekend. And this is where we start with Tyler Kendall at the White House, is trying to track all the messaging coming from social media, the president himself when he speaks with reporters. Tyler, the post of yesterday morning on Truth Social, it was the 25th of May, just before 8:30 a.m. Negotiations with the Islamic Republic of Iran are proceeding nicely, exclamation point. It will only be a great deal for all, no deal at all, back to the battlefront and shooting, but bigger and stronger than ever before, and nobody wants that. Has anything changed since that post? Do we have a sense of where the president's mind is?
Well, Joe, at this point, the White House and other U.S. officials, including Secretary of State Marco Rubio, have given updates that they do think that progress is being made on the diplomatic front towards what appears to be shaping up to be a memorandum of understanding. But still, the uptick and renewed fighting that we saw overnight definitely underscores just how fragile this situation is. Now, as you both just mentioned, the U.S. says that it was acting defensively, considering that Iran was laying mines near the Strait of Hormuz, according to CENTCOM. And while Iran has said that it is prepared to retaliate and that this violates the ceasefire, we also got indications earlier today that Iran is still maintaining that negotiations are ongoing. And that came perhaps through confirmation from Iranian state media that a delegation that arrived yesterday in Doha is staying there through today to continue talks on some of the biggest sticking points. And that delegation actually includes Iran's central bank governor, amid what our understanding is talks about potentially unfreezing Iranian assets as part of what could be the first phase of a potential agreement. Now, I say first phase because, as you both well know, it appears the U.S. could be moving towards a phased agreement where maybe there could be this reopening of the Strait of Hormuz, the U.S. lifts its naval blockade, and then we would see negotiations on any potential curbs around Iran's nuclear program and what happens to that stockpile of highly enriched uranium. But Joe and Kaylee, at this point, we haven't really gotten any tangible specifics from this White House on what could be included in that agreement. And if we really are any closer towards that deal, I would point you to within the last hour, we did get this statement out of CENTCOM denying media reports that CENTCOM was starting to restart helping ships go through the Strait of Hormuz, which leads us again to evidence that at the moment, the situation is still very fragile and that waterway is effectively closed.
Yep, Project Freedom has not yet been restarted, according to Central Command. Bloomberg's Tyler Kendall live at the White House. Thank you so much. And with us to continue this conversation is Heather Conley of the American Enterprise Institute, where she is a non-resident senior fellow. She's also former Deputy Assistant Secretary of State for the Bureau of European and Eurasian Affairs in the George W. Bush administration. Heather, welcome back to Bloomberg TV and Radio. Good to see you here. Great to be in our Washington studio, as always. Our understanding, based on what President Trump at least suggested over the weekend, was that instead of reaching some kind of deal in the near term on Iran's nuclear program, it's going to be a ceasefire extension, punting that issue until later. Would you describe that as a quote-unquote great deal for the United States? Because the president says it's either great deal or no deal.
Yeah, I mean, I think a great deal would be making sure that the nuclear dimension of the deal is up front. And this is the problem with the sequencing. And it's the challenge that Iran has the strategic leverage by having control over the strait, that the first thing that they focused on is opening the strait, which I think is basically acknowledging that Iran will control that strait through a variety of means. So it's not a great deal until we get that nuclear issue resolved. And if you put it to the end, what we've seen even in the Gaza ceasefire, those tough issues at the end, they stay stuck. And I think that's the concern. The president needs to sell a nuclear arrangement, and the Iranians are not allowing us to put that up front in the sequencing.
You might have thought otherwise reading Truth Social over the weekend. This again was yesterday, much later in the day. The enriched uranium, nuclear dust as he calls it, will either be immediately turned over to the U.S. to be brought home and destroyed, or preferably in conjunction and coordination with the Islamic Republic of Iran, destroyed in place or at another acceptable location. Is this essentially him proposing this, or was that something that was discussed?
Yeah, I mean, again, it seems to me that we just keep sort of inching or leaning towards the Iranian solution. Yeah. The Iranian Revolutionary Guard have said that HEU, that highly enriched uranium, will not leave Iran. And of course, the president was insistent it would come here or maybe go to another country. We continue to bend. Okay, well, maybe we can find a way to destroy it within Iran. Again, to do that would have to be incredibly intrusive into Iran. What conditions would allow that?
Even if we unearth these canisters, though, would we actually bring it all the way back to the United States, this incredibly dangerous and volatile set of substances, or would we actually blow it up there?
Right, but to your point, we will find out what state it is in.
Yeah, right.
And this is, we don't know. We know the tunnels have been closed and crushed. This has been an issue for discussion originally, like way back in the beginning. It was, to go to Russia. That was, said no. Then maybe to the U.S. But you're right. The transit of this highly enriched uranium has to be done extremely carefully, done under the most, transparent and austere conditions, of course.
Well, so obviously the nuclear program is one thing, and these negotiations, at least that we understood to be between the U.S. and Iran, with mediators, of course, the ones facilitating that conversation. But President Trump is also arguing that this is going to go potentially much broader than that, as he seeks an expansion of the Abraham Accords. To quote him directly, he hopes that countries, including referring to Jordan, for example, simultaneously sign on to the Abraham Accords. Mandatory, he suggests that should be. And I just wonder how you think that actually fits into this puzzle here, Heather.
So I think what the president's trying to do is reframe this as really a reorganization of the Middle East, that in part the June 12th, 12-day war last year, this ongoing conflict is reorganizing this, and to create a win out of it, which would be transformational of having these countries recognize Israel. The challenge is we have to go back to Gaza again. The war, and really that has not resolved itself in helping a Palestinian Authority create itself. Those countries will not be able to go forward in any way, in my view, with the Abraham Accords, unless there is much greater progress in Gaza. You have today, in the last 24 hours, the Israelis continuing to bomb Lebanon. Yeah. They've just tried an announcement to evacuate the Bekaa Valley. So we just have, this is the problem. You can't resolve that big transformation until you resolve the Palestinian question and until you get the Iran issue into some containable element within the region.
As long as Benjamin Netanyahu is claiming to be pedal to the metal in Lebanon, can any of these other agreements take place?
It seems absolutely impossible, and particularly because we have Israeli elections coming up in the fall. I think they're going to wait to see if there's some changes potentially there. And I think you saw in this flurry of diplomacy with the president speaking to all of these leaders as we headed into the holiday weekend, the Israelis are very concerned about being part of a deal that really fences them in, that they cannot take action which they believe is defensive, and it just continues to erode the hopeful stability that needs to come to this region desperately.
Well, of course, Benjamin Netanyahu was not very satisfied with the original JCPOA agreement back in 2015. With the way things are tracking, Heather, do you think he's going to find more satisfaction with whatever the outcome is this time?
Well, we don't know what this deal is, so but absolutely. I mean, again, if you start before this conflict, the Strait of Hormuz was open. Now this is a huge bargaining chip for the Iranians. We now have really pedaled back on ballistic missiles, on proxies. We're focusing on the nuclear issue, but as we've discussed, where is that HEU, that highly enriched uranium, going to go? And at this point, with this latest ceasefire violation, I think you're going to continue to see some reprisals, both by the Iranians and the Americans. They're laying more mines. They're striking against U.S. aircraft. This is not a ceasefire. It's, it's a reduction in violence that can flare at any moment.
So you imagine the conversation that might be had tomorrow at Camp David. The president will be having a cabinet meeting. Apparently it will be Tulsi Gabbard's last. They don't go up there for nothing, of course. In our remaining moment, what type of options might he be presented with?
Yeah, I mean, there aren't really great options here. He can continue to negotiate, and the Iranians are continuing to be very hardline, and we're pushing towards them. Or the president can decide to take a much bolder military option and open the strait, take that leverage away from the Iranians. It's unpalatable, both options, and I don't envy him the task. The intelligence agencies are saying that the Iranian capabilities are not as degraded as the president has said, so I think that is still a point of contention. How much did we really degrade?
Really interesting, as always. Heather, thank you so much. As we continue to ask Heather Conley questions that she cannot answer, even as non-resident senior fellow at the American Enterprise Institute. It's simply the world that we're in as we try to follow some very confusing messaging coming from both sides in this whole arrangement. We want to play this to the panel. Bloomberg Politics contributor and Democratic analyst Jeannie Sheehan Zaino is with us, Democracy Visiting Fellow at Harvard Kennedy School's Ash Center, joined today by Republican strategist Lester Munson, principal of the international practice at BGR Group. Jeannie, with your thoughts on what takes place tomorrow at Camp David, the president at some point is going to have to make some pretty difficult decisions here. And we've heard even from some Republican senators, beginning with Tom Tillis, but also others, suggest that he's not getting good advice. Should we believe that the people surrounding the president are giving him an honest take on what's happening in the Middle East?
Yeah, I mean, we certainly hope so. But if those are the same people who got him into this war, then he is not getting good advice. But we are here now. You know, there was a statement by the Supreme Leader in honor of Hajj, and he said the hands of time don't go backwards. And that's something we have to keep in mind. We are in a very difficult place right now. The U.S. has three options: military, maintain the status quo, and that's a big problem for the international economy, or negotiate a deal like the president is trying to do. But if that deal puts nuclear questions, as Heather was just talking about, at a second or third round, that is going to be a deal that benefits the Iranians. The U.S. and Donald Trump will have lost, and that is a horrific situation for the U.S. to be in. So I hope he's getting better opinions and better advice now than he was at the beginning of this thing, which got us here.
Well, it becomes a question of not just the advice he's given, but whether or not he chooses to heed it, right? Lester, we've heard repeatedly that the one calling the shots here ultimately is the president. Are you getting a consistent message from him as in terms of what course of action he prefers?
Well, not by the standards of other presidents, to be sure. He has his own way of talking about these things. I do disagree with Jeannie on this, and I might be a little bit of an outlier. I actually think the U.S. is in a much stronger position than folks are willing to admit with respect to Iran. Yeah. Iran's nuclear weapons program has been devastated, is in a very different position than it was over a year ago before the first strike against it. That is the real threat to the region at the end of the day. A nuclear-armed Iran is totally unacceptable. I think the president acted a couple of last year and this year made some tough decisions to act against Iran's nuclear weapons program. So the fate of the enriched uranium here, it really is the key. If he can negotiate with the Iranians to completely withdraw all of the enriched uranium out of Iran, and that might take a couple of months, then the U.S. is going to be in an even stronger position, and so will the rest of the Middle East, frankly.
The president said that negotiations with Tehran are proceeding nicely, Jeannie. We've only got about 30 seconds. Who was he talking to when he posted these, or is the president projecting online?
I can't read his mind. I think he's talking to the American public, asking them to hold on. But, I would just go back to what Bob Kagan said in The Atlantic. One of the most significant military blunders and losses in U.S. history. That is a real neocon saying where we are. There's a lot of ifs in what Lester said about if we get the uranium and all the rest. Neocons are now starting to say what a position we have put ourselves and the international economy in by giving them control of the strait, which we have to remember they didn't have when this thing started.
Just 10 seconds, Lester. If we don't get the uranium, is this a loss for the United States?
No, it's not. I think we're actually in a better position than we were before this started.
All right. Lester Munson, Jeannie Sheehan Zaino, our political panel on this Tuesday. That feels like Monday. Thank you both so much for joining us. There's more Balance of Power straight ahead. We'll get into the U.S. munitions with Lockheed Martin coming up next on Bloomberg.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow Jones Industrial Average declining. We're down now by 0.3%. Yes, off session lows, but the S&P 500 index is heading in the other direction. The S&P at 7507, looking at a gain right now of 34 points, up by about 0.4%. The Nasdaq Composite Index trading at a record up 231, now up 0.9%. The Nasdaq 100 Index surging 1.4%. So a rally in techs underway today. The 10-year 4.50% with a 2-year 4.06% and the 30-year 5.03%. All of this with a VIX just above 17. Spot gold is down $64 the ounce to $45.06, down 1.4%. West Texas Intermediate crude oil down 2.8%, $93.90 a barrel. But an interesting day. Yes, we got Brent below $100, $99.79 a barrel. It is up by 3.8%. Next win, Madison Square Garden shares trade at a record. Shares of Madison Square Garden Sports up now by 2.5%. This after the Knicks completed a series sweep over the Cavaliers to advance to the finals for the first time since 1999. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Live from New York, Charlie Pellet will have more on the markets coming up in about 20 minutes' time here on Balance of Power as we connect the dots between policy and Wall Street. And this next conversation is a pretty good example of that, as we've spoken so much about the DIB, the Defense Industrial Base, and the need for expanding capacity to try to meet the needs of the Pentagon, knowing that we have spent an enormous amount of money and hardware in obviously our war with Iran, but also in trying to support efforts in Ukraine. Kaylee, it's been millions, billions of dollars worth of missiles, not just offensive missiles, but interceptors that all need to be replaced. The Pentagon is now undertaking its largest mass production munitions commitment in decades. And this obviously could mean huge business for companies like Lockheed Martin and its competitors who are facing an enormous amount of demand.
Well, that's certainly the case. Demand that has perhaps been heightened given the depletion of munitions we've seen in this conflict in the Middle East. According to Central Command, U.S. Admiral Bradley Cooper, as of May 14th, the U.S. had expended 13,629 munitions. Stockpiles that will need to be backfilled if they want to be able to be deployed in future conflicts. But of course, Joe, there is a lead and a lag time to this. And it is all the conversation we want to get into now as we turn to Lockheed Martin's President for Missiles and Fire Control, Tim Cahill, who is joining us now here on Bloomberg TV and radio. Tim, welcome to Balance of Power. We appreciate you joining us. You, of course, last week just held a groundbreaking for an expansion of facilities in Troy, Alabama, Building 47, where you focus on THAAD specifically, a number of which we know have been deployed in the Middle East in just the last few months, and of course, conflict elsewhere as well. We only have a couple hundred left of these, according to reports. So how quickly can your new facility ramp up and get these back into the hands of the U.S. military?
Yeah, well, first, good afternoon, Kaylee and Joe. It's a pleasure to be here. Thank you. Well, so directly, we are putting a significant urgency, dollars investment into building rapidly. And speaking of the THAAD interceptor, of course, as you used as an illustration, the answer is we've already started to increase THAAD capacity out of the existing floor plan that we have at Troy, Alabama, and we're going to continue to do that. This particular expansion will double the size of the facility and will quadruple the number of THAAD interceptors that we're able to produce. And if you're wondering about that math, you can see behind me some of the robotics and some of the high technology additive manufacturing systems that we're going to bring into play in Troy to do exactly that.
So when we think about, Tim, and it's great to have you with us here, I'd love to know everything that's behind you in that shot. When we think about the incredible demand that's coming from the Pentagon right now, is it up to Lockheed basically to expand as quickly as you can to meet that demand? And is the Pentagon helping you do so?
Well, so it isn't just up to Lockheed, which I'll get into, and absolutely the Pentagon is helping. In fact, the Pentagon is driving this, and through their leadership and innovation, and in our partnership with both Lockheed Martin and all of our major suppliers and their entire supply chain, we're all working rapidly to move at a pace that's never been moved before. everything from contracting space to investment. We're already about $1 billion into what will be a $9 billion investment into this ramp, to requirements and certifications changes that are going to enable us to move faster. So you can imagine every single element of this throughout thousands of subcontractors and through Lockheed Martin as well, and the Department of War, which is, again, clearly our partner in this. We're all hands on deck to make sure that this happens.
Well, as you consider that ramp up, even with the assistance of the Pentagon, are there still constraints to the speed at which you can ramp up capacity, whether in the supply chain or elsewhere? What are the headwinds facing this effort, Tim?
Yeah, Kayla, that's a great question. And you can imagine if you have thousands of suppliers and tens of thousands of parts, and you need every single one of them, anything can become a bottleneck. But to first order, absolutely, we are addressing everything from material, things like titanium, which is critical to the build of solid rocket motors, all the way through advanced circuit boards. These are actually pretty intelligent machines that we are building. They're not just simple ballistic rockets. And so all those components have to come together. And fundamentally, what we are doing is, in partnership with the Department of War and all of our suppliers, is that we are methodically going through every single potential choke point, every single, if you will, iron bar, everywhere where there is a potential for something that could hold us up. And we are trying to crush each of those things one by one. And whether it's getting materials faster, getting buildings built faster, whether it's looking for alternative places that we can get material that we haven't had before, or whether it's in contractual space, requirement space. There's a lot of places that we can work with the Department of War and our suppliers to find things to do more efficiently. And particularly now, I think it's all about the sense of urgency. How can we do this faster? And when you look through that lens, you may come to a different set of answers than you did before.
Interesting. You mentioned circuitry. Tim, is Lockheed in the business now of buying as many memory chips as it can get its hands on? Are you buying CPUs as well, knowing that there's so much demand from them coming from AI and so many other industries outside of defense?
Yeah, Joe, we do that, in fact, and particularly in places where we think that there might be a shortage in the future or whether something might go obsolete, we'll go do bulk buys. But effectively what we do is we look at all of the components, again, in the missile system itself, and pick what things that we might need to buy ahead, what things we might need to add additional emphasis on or incentives on. Whatever the case may be, each one of those components gets evaluated and we take whatever the appropriate action is. And in some cases, it is in fact buying parts ahead.
Well, when we consider the parts you are buying, Tim, and what they go into, we've had an ongoing conversation, and frankly, we've had it for years now, as after Russia invaded Ukraine and drone warfare came to the forefront. But obviously, we're seeing that now in the Middle East as well, as we see these cheap Iranian Shahed drones being shot down by missiles that are much, much more expensive, in the millions of dollars. How is Lockheed thinking about addressing that asymmetry we're seeing on display in this current conflict? How do you do these cheaper and more efficiently if there are enemies of the United States who can attack cheaper and more efficiently?
Okay, that's a great question. So we are looking at systems, everything from the very inexpensive, quick deploy, all the way through the highly capable systems such as THAAD and the PAC-3 MSE that we deploy, which are going to be key still in the future because there's still those high-end, highly capable missile systems that are going to be deployed against our troops and potential population centers. But to the point of the less expensive systems, even as we speak, we have some counter-UAS drones, counter-UAS systems, for example, that we have deployed out in the desert, where we're using everything from small missiles all the way through lasers, through microwave emitters, all tied into something we call the Sanctum counter-UAS system. It's actually been out in the desert for the last few weeks, hitting targets and showing how it can rapidly knock down those Shahed-class drones with something that is more appropriate for it. And we believe that's more appropriate as well. We don't advocate that you use something like a THAAD or an MSE against these very cheap and quickly deployable threats that come out in vast numbers. We absolutely need some of these cheaper systems. We're out deploying them like a lot of people are. It's all about applying innovation in AI, applying innovation in additive manufacturing, bringing new technologies to bear, oftentimes in partnership with some of these new entrants.
The innovation that we've seen coming out of Ukraine is quite remarkable, to the point where I understand a number of defense contractors, and maybe that includes Lockheed as well, have traveled there to work with the Ukrainians, who are basically building equipment in garages and in basements to help knock down Russian drones, to help swarm and deal with this new technology. Are you impressed by some of the innovations that we're seeing coming out of smaller countries with fewer resources? And can you adopt them at Lockheed?
Well, we're absolutely impressed. These folks have done an incredible job in their country, and we can absolutely adopt that. And that's really what's critical. It's other countries that have been under stress that have had to develop these systems quickly and adapt quickly as the adversaries are adapting. It's the small new entrants that are coming in that are bringing in new technologies and new capabilities into the defense marketplace. It's a worldwide global endeavor, if you will. And so I think all the free nations are collaborating together for bringing the best technology as fast as we can bring it and learning from whoever we can learn from. We don't have a problem engaging with folks at any scale, any place on the world, and working with them to adapt what they have learned as well. That's how we all get better.
Yeah, you're talking pretty favorably about the new entrants here, Tim. As Bloomberg's reported that the Pentagon is looking at potentially different startups in the missile space, hypersonics specifically. Do you not see those as companies that are nipping at Lockheed's heels?
Well, of course. But, you know, competition is good. And the fact that, first of all, we can bring in some of those new entrants and their technologies. And we've been doing this for many, many years. It's just that there was a small number of them. There wasn't tens or hundreds or thousands of them. But we talk to them all the time. We have new technologies that you'll be seeing announced over coming months that we are actually incorporating into systems right now that come from new entrants. We discuss potential partnership opportunities with them all of the time. They are pushing us as well, and they are making us go faster as well. So they're making us better. We're making each other better. And so we're not afraid of competition. You know, we've been doing this for well over 100 years in Lockheed Martin, delivering exactly what the customers asked us to deliver. Now, the customer's asking for something a little bit differently. They're asking us for speed and urgency and getting things to the field faster. And we're going to respond to that. And we will partner with any of folks out there who have capability and desire and have that same sense of urgency and that same sense of mission. That's clearly still the most important, is providing deterrence, protecting our troops, protecting population center, protecting our allies.
Well, that's a great answer. Tim, I only have 30 seconds. I'm just deeply curious. Is the Pentagon the exclusive buyer of your goods, or those other governments deemed appropriate by the Pentagon? Like, could I buy a THAAD system for my backyard?
No, I don't think you could buy a THAAD for your backyard, but the U.S. government would have to decide that, so I won't speak for them. But it's absolutely a global market. THAADs we sell to a number of countries. We sell them through the United States government with their approval. PAC-3 MSE is to dozens of countries, and in fact, across the board, we have operations in about 60 different countries across the world. So this is a global operation. Supplying our allies as well as the United States is critically important to us.
I guess I won't need one for the backyard. Tim Cahill, Lockheed Martin, great to have you with us, sir. We appreciate your insights. I'm Joe Matthew alongside Kaylee Lyons on Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow lower right now, but the S&P, NASDAQ, they are both advancing. Yes, a holiday shortened trading week. Back to work Tuesday. Stocks joining bonds higher as hopes for a peace deal between the U.S. and Iran are overshadowing military strikes in the Persian Gulf. So here's where we stand. We do have the S&P 500 index holding above 7,500, 7,504. We're off session highs, very much so, up 30 points, so a gain now of 0.4%. Dow Industrials in the red, now looking at a loss of 194 points on the Dow, down 0.4%, while NASDAQ is up 211 for NASDAQ, a gain now of 0.8%. The Bloomberg Mag 7 index lower by 0.3%, the VIX holding just above 17, with a 10-year at 4.50%, the 2-year 4.06%, and the 30-year 5.03%. Gold now below $4,500 the ounce at $44.99 now. It is down 1.5%. Silver down 2.6%. Barrel of Brent crude 99.64. It is up 3.6%. So Brent below $100. West Texas Intermediate crude now 93.87 a barrel. Barrel of WTI down by 2.8%. We're keeping an eye on shares of BP, down 4.4%. BP's board has fired Chairman Albert Manifold just months into a job after serious concerns were raised about governance standards, oversight, and conduct. Again, BP down now by 4.4%. Recapping, S&P 500 index up now by 0.4%. The S&P higher by 31 points. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie Pellet checking on the Tuesday markets for us as trading gets going for the week. Thank you so much. I'm Kaylee Lyons alongside Joe Matthew here in Washington, where, of course, it's not just any Tuesday. It's a primary runoff Tuesday in the state of Texas. We're going to have a lot of these now that we're in primary season. It was last Tuesday that we were in Georgia for that state's primary, but it was the day also a week ago today that President Trump decided to weigh in on the Texas Republican Senate runoff, throwing his endorsement behind the state attorney general, Ken Paxton, not the incumbent, 4-term Senator John Cornyn.
It's amazing. 24 years in the Senate, and it really could be up tonight. It is widely expected that John Cornyn is going to lose this runoff to the MAGA alternative, the man who President Trump saw as more loyal, but many Democrats see as easier to beat. And that's going to be the question here, is whether the candidate quality is enough to emerge from this runoff to not allow Democrats to flip the seat. We've got a couple of great voices lined up here. Julie Fine, of course, is our Texas bureau chief. She's going to weigh in from our Dallas bureau. And Dr. James Henson of the Texas Politics Project at the University of Texas at Austin will be with us as well. Julie Fine, let's start with you. Is this the swan song for Senator John Cornyn?
I mean, certainly we're looking at a close race tonight, or it appears that way. I mean, Senator John Cornyn's certainly been battling back. As you know, Joe, he really wanted that endorsement from President Trump. He did not get that. That went to Ken Paxton. That naturally would give Ken Paxton the advantage. Ken Paxton, however, also was leading before that endorsement came out in the polls. So whether it's a swan song will really depend on how many people come out to vote, and if people that didn't vote in the primary in the first place now come out for that runoff.
Julie, can you just walk us through the financials here, the money that has been spent in this primary and in this runoff? Republicans spending money against Republicans.
I mean, certainly John Cornyn raised a lot of money. This race is in the over $80 million, I believe, at this point, and you haven't even gotten to the general. That is a serious question facing Republicans now. John Cornyn really outraised Ken Paxton. If Ken Paxton wins, it will show that all the money in the world didn't make the difference, but you're looking at a general election against James Tallarico, who has shown so far that he can raise money, and that's all he's had to do the past few months. While the Republican candidates went after each other, James Tallarico could just continue to fundraise.
There were a couple of other races that we're watching here. The 18th district, really something. Christian Menefee, who did his first broadcast interview right here on Balance of Power the day after the primaries, going into a runoff here with Al Green, Colin Allred in the 33rd, trying to get back to the House. Colin Allred, pull this off? Julie Fine, you've been talking to him for a lot of years.
You know, Colin Allred's people feel pretty confident going into this, but this certainly turned out to be a very nasty race. I mean, at one point, Colin Allred was actually backing Julie Johnson. Now those two have really been going at it. Colin Allred has had a really interesting road. As you know, he chose to elect Congress. Then he ran for Senate against Ted Cruz. He lost by a very big margin. Then he decides to go back for this newly redrawn district. So just by name recognition alone, he's been in politics a little bit longer on the federal level. However, Julie Johnson was also in the state house. Colin Allred's raised more money. Now we'll see if that money goes to work for him tonight. But there's a lot of questions about what will happen with this district.
Well, we just have a lot of questions in general. Just quickly, Julie, before we let you go, who are the voters that are showing up to vote today in these, not just primary elections, but runoffs specifically? I would imagine this is a pretty small fraction of the Texas electorate.
It's a pretty small fraction. One thing they all have going for them is an absolutely beautiful day here in Texas. It's not too hot and it is not raining. However, it's a small fraction that votes. Now, in terms of the primary, all the Democrats that voted in the Democratic primary, they cannot vote today. If the Republicans voted in the Republican primary, they can vote today. General voters can vote if they didn't vote in the Democratic primary. So really, one thing that John Cornyn may be banking on is people that did not vote originally in the primary getting more interested as the past few months went on. However, as you know, primary elections don't generally get a lot of voters, and now you're looking at a runoff.
All right, Bloomberg's Texas Bureau Chief Julie Fine joining us on this runoff day. Thank you so much. As Julie mentioned, of course, Texas now dealing with a new congressional map this cycle, which has led to some interesting primaries on the Democratic side. It seems, though, Joe, we won't get a new congressional map in South Carolina. According to NBC, the state Senate in South Carolina shot down that redistricting effort. It has now failed in the South Carolina State Senate. So perhaps we won't see Jim Clyburn, the incumbent Democrat in South Carolina's sole Democratic district, drawn out of that.
Well, just keep your eyes on Truth Social, because I have a feeling the president might have something to say there. That's a really important development here as we track the races today in Texas, knowing that this redistricting effort is not done or isolated to this cycle. We'll be talking about this going into 2028.
Yes, indeed we will. But let's stick with 2026 for now and get back to Texas specifically as we turn to Dr. James Henson, director of the Texas Politics Project at the University of Texas at Austin. Dr. Henson, welcome to Bloomberg TV and Radio. A week now since President Trump endorsed Ken Paxton for this Senate seat. Does that mean that the result today is all but guaranteed to go for him? What does the polling bear out at this point?
Well, I think it's close to all but guaranteed. I mean, I think throughout this race, we've been sort of adding the caveat to the fact to this race that John Cornyn, has not been the most popular Republican for a long time, yet, as you pointed out, has served in office in one guise or another for decades, literally, and has had that Senate seat for decades. But Ken Paxton, I think, to really just look at the polling and to look at the dynamics in the party in Texas, Ken Paxton is much more where the Republican primary electorate is at right now, for lack of a more technical term. John Cornyn is, I think, widely viewed as kind of something like yesterday's Republican, and this is really, even though the campaigns try to make it about ideology, it's much about style and alignment with President Trump as it is about anything.
What do you make of the way that Republicans are framing James Talrico? Dr. Ken Paxton's not waiting around for the results of this runoff. They're treating this like it's a general election already. And some of the names that were flying in Katy, Texas the other evening, as he passed the microphone around to ask people to suggest nicknames. Tofu Talrico came up. Talafrico came up. You listen to what President Trump said about him on Air Force One just a couple of weeks ago. I guess it was last week, as a matter of fact. A weird candidate, 6 genders, a real hit on Jesus. He's a vegan, the president said. He pronounces it vegan. Is this stuff resonating in Texas?
Well, I think this was pretty predictable. I think one of the things that was kind of lost in the Democratic primary when James Tallarico beat Jasmine Crockett was that, he did have a very prominent public record, taking a lot of very progressive positions. And I think it was bound to come back in the general election setting. So, look, I think this is about making sure that, there's no Republican defections, which I think is not much of a problem. But also to speak to more conservative-leaning independents as Republican operatives and the Paxton campaign and its allies anticipate winning and anticipate a very Democratic year in Texas, playing on Tallarico's positions in the way that you're talking about and using this kind of Trump style, which I was sort of alluding to a minute ago, are really all about making sure Republicans don't stay home and that there's, not leakage among non-Republican voters when we get around to the general election.
Well, and when we consider those general election dynamics, and again, it's not a sure thing that John Cornyn is going to lose this evening, but if he does, are Cornyn voters more likely to switch their votes to Ken Paxton, vote for James Tallarico, or just not participate?
Well, we don't know that. I mean, I think that's one of obviously the big questions. In some polling that we did in April at UT Austin, one of the things we found, though, was that not by a huge margin, but by a slight margin, Cornyn voters actually were more likely by a little bit to vote for Paxton than Paxton voters were to vote for Cornyn in general election matchups against Tallarico. So I think one of the things that's been, I think, a little bit misestimated here going into the general election is the degree to which Cornyn was obviously a better candidate for Republicans. Cornyn is marginally more well-liked among some Democrats and independents, but it's really not a big difference. And actually, you probably have a bigger problem with Republican turnout if Cornyn is the candidate than if Paxton is the candidate. Because, as I've said, Paxton is just much more in touch with where the Republican electorate is right now. That shows up in virtually all of the numbers, and that's the big dilemma for Republicans thinking about the general election. Should Paxton win the election, is how do you weigh the need to make sure that Republicans don't lose morale in a very pro-democratic environment, even in Texas, in this election cycle, versus what you might lose with persuadable voters. And I think it's just honestly, it's just too soon to tell. We're going to need to see what happens this summer with the economy, where Trump is, and what things are looking like after Labor Day.
Well, with that said, you were in the field in April, but the Texas Politics Project poll finds in each matchup, Tallarico leads by 7 points against Cornyn, 40% to 33%, and by an indistinguishable 8 points against Paxton, 42 to 34. How should we read this then? This is Tallarico's race to lose.
Yeah, I mean, I think I would not read it that way, honestly. I think what you have to do is look at look at those numbers, is notice that if you look at by party breakdown in both of those matchups, Tallarico versus Cornyn, Tallarico versus Paxton, Tallarico gets virtually all of the Democrats, 80%, which is all given the tension level in April. Neither Paxton nor Cornyn were able to attract more than about 60%. I think one had 60 and Cornyn had 60 and Paxton had 61, so statistically indistinguishable. About 60% of Republicans. So I think you have to read that lead for Tallarico through the lens of the fact that that poll was conducted in the midst of this really personal, deeply negative primary runoff. And so those numbers are going to move a lot between now and the fall.
Understood.
Just quickly, Doctor, $130 million spent in this primary and runoff. Is it the money ultimately that you think will make a difference one way or the other, or just the endorsement or lack thereof of the president?
Well, I think if it was going to be the money, Cornyn would be running away with it. So it's pretty clearly not that. I think you know, as your reporter said to some degree, Trump's endorsement was in a way pro-cyclical. I think that there was a real sense that Paxton was in the lead, but the Trump endorsement really sealed that, which is why the Cornyn folks tried so hard to prevent that from happening, as it turned out, unsuccessfully.
All right, Doctor, it's great to have you. James Henson with us live on Bloomberg.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
A very good afternoon, everyone. Live on Bloomberg Television, radio, streaming on YouTube and Bloomberg Originals. It is Bloomberg Business Week Daily. On this Tuesday, May 26, 2026, I'm Tim Stenivek. And that is not Carol Massar. In for Carol Massar is Alexandra Semenova.
I have big shoes to fill.
You do have big shoes to fill, but we love it when you join us, and we love it, especially on a day when we could see another record for the S&P 500.
Yeah, and it's worth pointing out, Tim, too, we've been talking a lot about market concentration, how everything is just led by this rally in tech, but the S&P equal weight is actually also trading at a record high right now. So really significant given the fact this is, of course, the version of the benchmark that gives the same weighting to a company like NVIDIA as it does to Campbell.
We're going to have more from on the markets from Charlie Pellet in just a minute. In the meantime, Alex did mention what the S&P 500 equal weight is doing. Wall Street kicking off, though, this holiday-shortened trading week. Stocks and bonds higher, all emanating from hopes of a peace deal. We're going to have more from Charlie in just a minute. We'll also have more on a peace deal, how to interpret the conflicting signals out of the Middle East and out of Washington. Bloomberg Economics economic statecraft lead joins us in just a minute. Also, the closure of the Strait of Hormuz really changing the affordability picture for many Americans. We're going to spend a good portion of today's program really focused on affordability. Alex, we got Peter Atwater of William & Mary joining us in just a few minutes. We'll talk slipping consumer confidence. We're going to talk about higher food prices and sort of the outlook for food prices. That's going to be with Wells Fargo's Agri-Food Institute's chief agricultural economist. And then on affordability, maybe a stretch here for many Americans, but buying an apartment here in New York City. Louise Phillip Forbes is going to be joining us from Brown Harris Stevens a little later, too.
Yeah, really incredible that rent prices have gone nothing but up, and yet the demand is still so high. I'm watching TikToks of people just lining up.
Can you believe those?
They're bidding for apartments. It's crazy.
Yeah, it's really crazy. The mayor certainly has his work cut out for him. We're going to talk about that, too. All that and more coming up over the next hour right here on Bloomberg Business Week Daily. First up, though, check of the day's trade and top business stories. Here he is, Charlie Pellet.
Thank you very much, Tim and Alex. And here's what's going on. Dow, just about the low of the day right now, while the S&P 500 index, you guys were talking about a record there, but a pullback for the Dow, down now by almost 200 points, a drop there of just about 0.4%. We do have the Dow Jones Industrial Average being led lower by Chevron, shares of United Health and Cisco. Again, Dow right now down by 0.4%, down by 201 points. S&P 500 index 7506. Up 32. That is a gain of 0.4%, while NASDAQ is advancing 230 now, up by 0.9%. The VIX holding above 17, just above 17 to be sure. The 10-year 4.50%, the 2-year 4.05%, and the 30-year 5.03%. Spot gold is down 1.8%, $44.86 the ounce, while West Texas Intermediate crude. Interesting day there. We do have WTI lower, $94 a barrel, just below now, but a barrel of Brent, yes, below $100 a barrel, but still trading higher. Brent up by 3.9%. The oil majors are lower. ExxonMobil down 2.9%. Chevron is down 3.2%. ConocoPhillips right now down by 3.1%. Again, recapping, S&P 500 index could see a record close up 33, gain there of 0.4%. Alex and Tim, that is up Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Charlie laying out the oil picture, the complicated oil picture, really well just now. Of course, all of that emanating from the latest in the Middle East. U.S. and Iranian forces clashing near the Strait of Hormuz overnight, highlighting the tension between the two sides, even as they tout progress toward an interim peace deal. I want to bring in Chris Kennedy, economic statecraft lead for Bloomberg Economics. He joins us from Bloomberg's Washington bureau. Chris, good to have you on the program. A lot of developments over this 3-day weekend. Different signals coming from Washington, different signals coming from social media, from the president's account, and different signals coming from the leaders of Iran as well. Where are we right now?
So a lot of action, Tim, over the weekend. I would say that our assessment is we're pretty much where we were before the weekend started. I think what we're seeing is a new set of constraints emerge that are preventing us from getting to something that can permanently or at least temporarily open the Strait of Hormuz and provide a level of confidence to global oil traders and vessel owners that they can re-enter the oil trade in the region. And that's coming from congressional Republicans who, as they start to see some of the details of what Iran is demanding to agree to a temporary reopening, they're not liking what they're seeing, right? They're looking back to the deal in 2015 and comparing it to those conditions, and this is putting pressure on the president.
Chris, we've heard the White House say time and time again that we are getting closer to a deal. What makes this time different? Is there anything more promising as they say that we're going to reopen the strait?
Well, I think that there is pressure building in the global energy system. We saw, record drawdowns of U.S. oil stockpiles last week, and I think that that is putting real pressure on the president to try to get to a deal sooner. So I would say that that is a positive sign that we might get to something. But at the same time, the two sides are still very far apart on key details, including the disposition of Iran's nuclear material, the conditions under which transit will be allowed to restart through the Strait, whether Iran will have a say or be able to collect fees. And again, now we're seeing this question around compensation for Iran, as they put it, but what it means is sanctions relief and also the unfreezing of assets. And that is emerging as a real sensitive issue for the president as he tries to sell this on Capitol Hill.
Yeah, okay, so I want to go there, Chris, and I'm glad you brought up the JCPOA, the so-called Iran nuclear deal that the president abandoned, I think it's fair to say, in his first term in office. How should we look at, it's hard to say, I don't want to put the cart before the horse because there is no deal at this point, but how should we look at that deal, not as a framework, but as sort of a reference point for what the U.S. and Iran could agree to?
Yeah, well, I think, going back, it's interesting because now we are starting to see some of these details emerge over what an MOU or Memorandum of Understanding would entail between Iran and the U.S. And we are seeing it touch on some of the same issues and run into the same roadblocks. So, this was a very hard-fought deal on all sides back in 2015. And I think the U.S. believed they got as far as they could go. And I do think it makes sense to keep that in mind as the Trump administration pushes here. So what was Iran willing to give up back then? Well, they were willing to submit themselves to significant oversight from international bodies on their enrichment capabilities. There were some assets that were unlocked, and we're seeing the same discussions play out again. Now, this makes it very difficult because, of course, President Trump has disparaged that deal and said that he can get a much better deal. And to me, and to us at Bloomberg Economics, that puts a real sort of constraint on the ability for the president to compromise as he tries to reopen the strait temporarily and then, again, get to a durable place where we feel like we're making progress on some of these issues that have yet to be resolved.
Chris, we have the U.S. midterm elections coming up, of course. How is that calculus playing into Trump's decision-making, especially given the fact that stocks are at record highs? We've had higher gas prices for quite some time. That hasn't seemed to move him. How is he thinking about elections?
That's the question of the day. So certainly Republicans on Capitol Hill are thinking about the midterm elections. And certainly some of Trump's political advisors are thinking about them. I think there is a question, the extent to which Trump is personally thinking about midterm elections, at least at this moment, seems to be primarily focused on primaries. But we're clearly entering a pretty tough environment for Republicans. Gas prices are high. There's no sign that gas prices are going to come down in the near term. Even if we get a deal that reopens the strait, it will take months for the global energy system to normalize. And so, how the extent to which the president is thinking about this, I think, is to be determined. But you can bet he's getting a lot of pressure from the Hill.
Chris Kennedy, thanks for joining us. Right at the great way to kick off our program this afternoon. Chris is economic statecraft lead for Bloomberg Economics, joining us from the Bloomberg Washington Bureau. Well, the closure of the strait driving energy prices higher, as well as derivatives of energy higher. We're going to talk a little later about higher food prices as a result of the closure of the strait. That's hitting U.S. consumer confidence. It edged down in May. Views of current economic conditions settling back amid rising prices due to the war in Iran. The most recent report that we got this morning adds to evidence of growing anxiety among American consumers about the high cost of living, the recent spike in fuel prices, particularly challenging for lower income households despite a largely stable labor market, and few signs of broad layoffs. When we talk about sentiment, we talk to Peter Atwater. He's president of Financial Insights. He's also adjunct lecturer of economics at the College of William and Mary. He joins us on set in the Bloomberg Business Week studio. Peter, I think a lot of people know you as the K-shape guy. And nowadays, we hear about this from everyone, whether we're talking to executives or executives are talking about earnings calls, or we're talking to analysts or investors here on our program. It's not getting any better. In fact, it's getting worse.
Yeah, and in fact, it's no longer a straight line K. The arm of the K looks almost parabolic.
Yeah.
and the leg is turning almost straight down into despair. And so the divide between those at the top and bottom isn't just economic at this point. It's almost become two life experiences that bear nothing in common. And I worry that those at the top are doing all they can not to see those at the bottom. But in a world of social media, those at the bottom can't help but see this enormous overabundance that exists above them.
I want to get more into that. There was a great piece in The Atlantic this weekend. The vibe session is over. The perma session is here. It spoke about how households are feeling worse about their finances and the economy than they did back in 1970 during great inflation. So you talk also a lot about the confidence gap. How much does the pullback from lower end consumers have to do with the fact that they just don't see any upward mobility?
It's not only that they don't see any upward mobility, the AI boom has now put a target on their back. They believe that it's a zero-sum game, and they're looking at all of these gains being made in AI stocks and believing that ultimately it will come at their expense. And so a lot of this has to do with how both groups imagine the future. And the imagination of the future could not be more divided in terms of extraordinary optimism at the top and this dire level of despair at the bottom. And it's the despair that troubles me, because I know that ultimately that is what sets people into the streets.
Are you seeing, I want to talk about those people and the repercussions of this or the ramifications of this in a minute, but before we do that, just we hear so much about the resilience of the American consumer, and I hear what you're saying about despair and that bottom rung of the K, but are we seeing an uptick in people missing car payments? Are we seeing people spend a certain demographics, put a different type of payment on their credit card? We talked to the folks at the Buy Now Pay Later firm, and they have their client is the average American, and they say the average American is doing so well right now.
Yeah, so if I look at credit card delinquencies, which this month look like they're going to come in at about 13%. What is so striking to me is if you look at it mathematically, that level is historically high. But it comes at a time when within the card portfolio, you have enormous convenience balances that are absolutely riskless for the card issuer. And so on their own, I suspect that the quality that the card issuers are seeing among their lowest tier is distressful. And the challenge right now, Tim, is that we have this bifurcation where not only are businesses like the airlines dependent on the top, but I see so many derivatives of wealth, including our banking system, that require at this point those at the top to continue to do extraordinarily well. It's fascinating to me that a bank like JP Morgan, at the bottom of the financial crisis, there were about $3 worth of credit card balances to private banking balances. Today, the lines have crossed. They have more credit outstanding to private clients than they do to Main Street credit card holders. So there's been an enormous wave of credit extended to those at the top with the belief that they will never default. I think that when you see so much of our economic system now dependent on those at the top, it begins to beg that question.
This bifurcation, Peter, has been a problem for years now and seems to only be getting worse, as you just mentioned. What can policymakers do to remedy this? And if they don't step in, what is the worst case scenario?
I think policymakers need to be thinking about the needs at the bottom of the hierarchy. We know that food insecurity is an issue that leads people to protest and riot. We know that basic health care is financially debilitating to those at the bottom. And so I think we need to be thinking about the basic needs and ensuring that there is a safety net. And I think of it as a social safety net that prevents despair from setting in. And I think that we need to be cognizant of the fact that there is a growing population that feel hopeless. And that hopelessness ultimately leads to action.
Well, what kind of action? I think a lot of people watching this, especially on primary day in Texas, and as we do get into the midterms, would think that there are electoral consequences. And certainly that was a lot of the navel-gazing that we saw post-2016 election. But what are ramifications of this?
So the ramifications, if you go back to the fall, to me it was no coincidence that in the midst of this affordability crisis that everybody was talking about, you saw a more populist mayor elected here in New York.
Okay.
Who resonated both left and right. One of the things that is so telling about this latest consumer sentiment data is that for the first time, we have a meaningful drop in confidence among Republicans. And so the bottom is purple. It's not red or blue. And so that purple wants change. And candidly, neither party has done anything to suggest that they have action in place to serve those at the bottom.
So do the people at the bottom have to be served through political action, or is there a way for this to be solved without Washington's help?
I think you're seeing it on a local level first.
Okay.
As I would expect. And ultimately, those changes on a local level lead to national
So
change.
local, like New York City and Zohran Mamdani, our newish mayor.
Yeah.
Where else?
So I think we're going to see examples of that this fall, where you have incumbents on both the left and right who are voted out. And I think it's quite interesting in some of the political ads, incumbents aren't even talking about the fact that they're incumbents.
Like
because they know that it's
governor of California, someone like Steve Hilton coming in, or mayor of Los Angeles, someone like Spencer Pratt coming in, for example.
Yeah.
Is that what you're talking about?
It'll start at a local level.
Okay. Interesting.
And part of that is every crisis is local. And politics are incredibly local when confidence is low. And so that's where it's tangible, it's immediate, it's proximate. And so those are where people demand change first.
I'm really interested, Peter, in this idea that you mentioned of America becoming more of an ownership economy, where more and more goes to the people who already own homes, who already own financial assets. Can you talk a little bit more about how this incredible run in AI companies is worsening that?
Yeah, so you have beneficiaries of asset inflation, and it's hard not to see it, and it driving everything from Knicks tickets to airline seats. Owners of assets today have choices and opportunities that those below don't. And I think that for every owner, there is a renter. There is, somebody with a car payment, somebody with a credit card payment. So you have those that are, in essence, extending credit, extending opportunity, and those who are on the other side of it. And the gap to move from one to the other is, it's too wide, and it's too costly. You look at, the average rate on a credit card, 20-some%. Well, to pay that off first, to begin that upward migration is all but impossible.
We're speaking with Peter Atwater, president of Financial Insights. He's a lecturer of economics at William & Mary. He's also the author of The Confidence Map, Charting a Path from Chaos to Clarity. Peter, let's end with the investment thesis in an environment, in a world where the Ks are sort of going parabolic in the other directions. We're speaking to you on a day where the S&P 500 could finish again at a new record. Doesn't seem like this idea of a weakening bottom rung of the K is holding back investment in AI, as Alex mentioned. What are the investment ramifications of society like this?
The investment ramifications are that there is an overinvestment in this abstract technology that we crave when confidence is extremely high. We imagine this unlimited opportunity in futuristic technology at every peak in confidence. And then there comes the backlash. And in this case, I expect the backlash to AI to only grow. And I think those at the top, particularly the proponents of AI, fail to appreciate the zero sum that is seen by those at the bottom. And the higher the market goes, the more those at the bottom feel that ultimately they will pay the price. Because to sustain that earnings growth, it has to come somewhere. And the most obvious target is labor.
Peter Atwater, always a thoughtful conversation when you join us here on Bloomberg Business Week Daily. Peter's president of Financial Insights. He's an adjunct lecturer of economics at the College of William and Mary. He's also the author of the book, The Confidence Map, Charting a Path from Chaos to Clarity. Let's head on over to the Bloomberg Business Week studio. That's where Charlie Pellet is standing by with a look at the markets. Hey, Charlie.
Well, hello there, Tim. We are looking at a down day for the Dow Jones Industrial Average, just about session lows, down 168 right now. A drop for the Dow of 0.3%. But this on a day when the S&P 500 index is pushing higher at 75.15, a gain there of 42 points, up by about 0.6%. NASDAQ up 279, could see a record for NASDAQ today, advancing by 1.1%. All of this with the VIX now below 17, the 10-year at 4.50%, the 2-year 4.05%, and the 30-year 5.03%. Gold at 44.90 the ounce, spot gold down 1.7%, while West Texas Intermediate crude oil, interesting story today, 93.94 for a barrel of WTI. So bottom line here, yes, lower by 2.8%, yes, below $94 a barrel. But while WTI is down, Brent continues to advance, holding below $100 a barrel, 99.57. But even so, barrel of Brent crude up now by about 3.8%. So Wall Street kicking off a holiday shortened trading week with stocks joining bonds higher as hopes for a peace deal between the U.S. and Iran overshadow those military strikes in the Persian Gulf. Next, when shares of Madison Square Garden Sports are at a record. Right now, we are looking at shares of MSGS, that is the ticker for Madison Square Garden Sports, up 2.7%. We got the Knicks advancing to the NBA Finals for the first time since 1999. Again, MSGS, that's the ticker, up by 2.7%. For on-demand news, 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet. Alex and Tim, that is a Bloomberg Business Flash.
Hey, thanks, Charlie. Appreciate that. Well, this story from the Wall Street Journal getting our attention this afternoon. Peter Atwater mentioning Mayor Zohran Mamdani. Well, that mayor set to announce a new plan to help rescue some of the most distressed rent-stabilized landlords, including allowing eligible apartment owners to charge a one-time rent increase on certain empty units. So there's that, and then there's the reporting last week that we got that a proposal to levy a new tax on all cash real estate transactions over $1 million here in New York is likely to be dropped from the state budget. For an update on all things NYC and real estate, we bring back Louise Phillips Forbes. She's an associate real estate broker over at Brown Harris Stevens. She's been in the industry for more than 3 decades. She's transacted more than $6 billion in sales. She joins us here in the Bloomberg Business Week studio. How are you?
I'm great. Thanks for having me.
Yeah, welcome back. Spring, okay.
Ooh,
summer
hot.
off to a good start.
Yes.
Things are hot. How hot?
I mean,
And where are they hot?
all over the city. I mean, look, the real estate as predicted at the end of the year. I was here at the end of the year saying it's going to be on fire first quarter, probably second quarter. Despite the war, people are absolutely committed to making decisions and purchasing. You see 3 million and above doubled in transactions in the first quarter, and you see up to 40 people. You mentioned it, I heard you earlier about like there are 40 people standing around for open houses in some cases. And I literally was showing in Brooklyn, and literally every single apartment I showed, they were like, best and finals on Tuesday. We have 7 offers. So it's interesting. And that's like a certain, niche of the markets, whether it's under 3 million or even lower. But I just think it's really interesting, given interest rates have popped up, the conversations around the pied-à-terre tax, which I'm sure we will talk about a little bit, and this cash proposed, tax has got people talking but not hesitating in their actions.
Do you see a breaking point where prices will get too high because they've gotten exorbitant and it doesn't seem to have brought down demand at all?
Not to date. I mean, first of all, we have been anticipating a lack of inventory for some time, and you got to realize that New York City's vertical market, unlike the tri-states or other places across the country, urban environments react and respond differently to, even if I'm going to even still talk about COVID, but our recovery has just been different. And so our lack of inventory on top of policies that were made in 2019 have affected what we're experiencing today in the rental market as well as the sales market.
I want to go back to what you said about the potential tax on all cash transactions. These all-cash transactions, more than 60% of the nearly 18,000 transactions in New York City in the first 6 months of 2025. That's according to data compiled by the nonprofit Center for NYC Neighborhoods. This idea of a tax faced pushback broadly from different constituencies, including real estate brokers. Right. The thing is, people who take out a mortgage have to pay a tax, like the mortgage recording tax too.
If it's a condo, not in a co-op.
Not in a co-op. Okay. Or if it's a house too, right?
Correct. It's real property.
Okay.
The difference between buying shares in a co-op would be the houses or condominiums, which are real property.
Do you think there needs to be parity in terms of the tax structure? Like, it does seem like people who pay all cash get an advantage, a tax advantage.
Listen, a lot of those cash transactions, if you think about first-time buyers, parents are helping facilitate those things, and sometimes they are actually the bank, the institution. They're holding the mortgage, and they get to forgive the interest payments for those kids if they choose to. But I think that when you're dealing with people who have the luxury to pay $3 million cash, they'll take a mortgage out. They'll take a small mortgage out just to beat the game. So accountants will help advise those individuals. So it seems like policy always does drive behavior one way or another. And we're experiencing cash in our market for several years. And I don't think that's going to change. I just think how it's interpreted is going to change.
Okay.
I have a pressing question for you, Louise. Something that I've been wondering is, a little bit ago now, brokers' fees were removed from rents, and that was supposed to provide relief to people who are seeking a home in New York City, but it kind of feels like they've just been baked into prices. Do we have a sense of...
This was exactly what the industry was trying to have the conversations with all of those city council and the assembly parties to try to have a conversation about really what is the unintentional consequences and those kinds. I mean, overnight rentals went up 11% conservatively. And I think also when you get into these pied-à-terre taxes and some other conversations, you're going to find policies for buildings are going to start allowing short-term rentals just for that opportunity to beat the system, if you will.
Is it fair to say that renters are ultimately paying more after this?
Absolutely. Absolutely. And by the way, the idea was to have transparency and to, push the landlords. The goal was to have the landlords pay, but the landlords have the luxury to say, you want to live here, this is what it's going to cost.
We're speaking with Louise Phillips-Forbes, associate real estate broker over at Brown Harris Stevens. She joins us here in the Bloomberg Business Week studio. Let's talk about the pied-à-terre tax. This is different than the other proposed tax. There's a lot of taxes to keep track of. This would be second homes in the state budget. Has not been finalized. City and state officials say it would affect roughly 10,000 properties worth more than $5 million citywide and yield $500 million in additional revenue for the city in the coming fiscal year. You sell You sell.
I sell all of those.
You sell pied-à-terres that are valued over that.
Yep.
What are you hearing from potential buyers about that? Are they pushing back at all? Are they complaining to you?
I think
What are they
that
saying?
the reality is that it is going to pass when you have the governor standing behind it. The implementation of it is what is going to be so challenging. You got to realize that when you're looking at Ken Griffith's pied-à-terre, since that was in the news, you know, that assessed value is based on the rental market. So a $240 million apartment, how do you quantify that for a rental?
Meaning it's looked at in what sense? Like you're not looking at it from the assessment value?
You're not looking at it from the actual hard cost. You know, you're going after people that are paying $5 million and above for second homes. And therefore, how are you quantifying that when the assessed value is based on about 45%?
You have to explain what that means for non-New Yorkers who don't pay property
taxes. What that means is that sometimes transactions are based on sales, the price of a sale. New York has 4 different classes of how you're paying for 1 to 3 family townhouses, condominiums, the luxury market, then you have the co-ops, and then you have commercial. Commercial is taxed the highest. But that, for the residential piece of it, I think one of the things that we're going to find is the implementation of it. Co-ops have 1 tax bill. So I happen to sell somebody a $5 million apartment in a co-op. So are you going to tax the co-op? How is that going to be okay? And I think you're going to have a lot of legal arguments around this.
Interesting. So the implementation is the challenge because of the assessment.
It's not the policy. I mean, listen, policy affects behavior all the time, but the unintentional consequences around that, I mean, let's look at the Rent Stabilization Fair Act that happened in 2019. It is now the direct result of no new conversions. None, zilch. So that new product is not happening, which is housing. Whether it's affordable or not, it is housing. And those that can afford are taking away from those who cannot afford if they can't buy what they're looking to buy. So I just feel that the collaboration between the industry, I just think that it's just short-sighted. It could be much more collaborative and think about those pied-à-terre people, if they are individuals that are bringing massive business and employment, and they're spending, you know, we are still the mecca around the world for the tech scene and fashion and culture. And, you know, it just seems to me that it's too aggressive as opposed to being collaborative in a solution. And I'm not sure how they're going to collect it.
We were talking about earlier people lining up to view homes and this insatiable demand for New York City real estate. How are bidding wars reshaping the market? Are they making prices broadly higher?
Absolutely. I mean, you can see the days on market lessening. You can see that when it is actually still sitting on the market for more than 30 or 60 days, it's actually not because of interest rates. It's the pricing. And it is really interesting to have and consult an owner to be bold enough to put something on the market $100,000 less than what they're wanting, but they may actually get $150,000 if they strategically price that way.
Foreign money, what are you saying?
I'm seeing some more than I did last year.
Okay.
But I think that is distressed individuals, meaning they're looking at getting a placeholder of assets.
Where are they from? Where's the money coming from?
Have a lot from Korea, a lot from, you have some Ukrainian, and I think that, normally we have Italy and Mexico and people that are looking to educate their children here coming, and that lessened, but now that's starting to trickle back.
Yeah, the immigration question and what's happening at universities is part of this. Just 30 seconds before you go, the hottest part of the market, not geographically in New York, you can answer that too, but sort of like where it falls in terms of how much the apartments cost or the homes cost.
I mean, I think we have a lot of pressure on areas from 3 million and below. And then the high ultra luxury, if you can get it, if you can find it, stuff that's selling off market, because there's just not been, people are trying to make those changes. And they are exempt from the stress of what's really going on around here. So it's interesting. So I think that you'll find that we're going to continue to have a strong market.
Louise Phillips Forbes, Associate Real Estate Broker over at Brown Harris Stevens. Coming up next, we're staying on costs. The Chief Agricultural Economist at the Wells Fargo Agri-Food Institute joins us next.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow remains lower. The S&P, NASDAQ, they're both higher. NASDAQ 100 index as well. Right now, the S&P is up 40, 75.14 where we stand. Could see a record close today. We're up by about 0.5%. The Dow, though, however, does remain stuck in the red. Dow Industrials down now by about 0.4%. NASDAQ is surging up 269, up 1.1%. NASDAQ 100 index full of those big tech names doing a lot better. It is up by 1.6%. The Russell 2000 index of small cap shares is also advancing up now by 1.6%. The VIX right around 17 with the 10-year at 4.49%, the 2-year 4.04%, and the 30-year 5.02%. Gold at $44.96 the ounce. Spot gold down 1.6%. West Texas Intermediate crude oil down almost 3%. 93.75 for a barrel of WTI. Interesting day for crude because we got Brent, the global benchmark, holding below $100 right now at 99.45, but a barrel of Brent is trading higher by 3.4%. Sources tell Bloomberg Qualcomm has reached a deal with TikTok owner ByteDance to supply chips for AI data centers. Qualcomm shares, they're climbing higher now by 3.1%. Again, recapping, the Dow lower, the S&P 500 index advancing now by 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcast. Alex and Tim, that is a Bloomberg Business Flash.
Hey, thanks, Charlie, for that update. Here's an interesting story that you could have missed last week. We know farmers worldwide have been under pressure due to the Iran war. It's disrupted supplies of conventional nitrogen fertilizer. It's forcing these farmers to improvise ahead of this crucial fall planting seasons. One of the ways they're improvising is actually using human urine as a fertilizer. 2P Organics is a French startup. This was in Bloomberg News last week. It converts human urine collected from schools and festivals into a bacteria feed that helps plants grow. The Bloomberg News piece also said that since late February, sales have jumped about a quarter for the product. There is no end in sight to rival U.S. and Iranian blockades in Hormuz. Fertilizer disruptions are expected to persist. A prolonged conflict could mean weaker harvests and higher grocery prices. This is what Dr. Michael Swanson looks at. This is his specialty. He's chief agricultural economist at the Wells Fargo Agri-Food Institute. He joins us from Maryland. Dr. Swanson, good to have you on the program. The disruptions that we've seen as a result of on fertilizer, as a result of the war in Iran, the Strait of Hormuz closure, we spoke at the top of our program about what an open Strait of Hormuz could look like and when that could happen. Hint, we're still no closer than we were 3 days ago, is what our Bloomberg News team says. Chris Kennedy over at Bloomberg Economics. If the Strait were to open, how quickly would we then see fertilizer prices drop and that actually hit worldwide agriculture?
You know, it's interesting. The prices would drop quickly, even though the supply itself would be delayed behind it. But these are markets that are always looking forward. So the same thing that drove them up quicker than the product disruption would take the prices down faster than the product actually arriving to the markets.
Dr. Swanson, one of the themes that we've been talking about a lot is this idea that consumers are trading down on certain items. They're trading down on staples, but splurging, for example, on certain categories. Where are you seeing this when it comes to food trends?
You know, it's interesting. You can see it clearly in the protein space. I mean, when you look at the value of chicken and pork relative to beef right now, clearly it's really bidding up that demand in a big way. But on the flip side, when you look in the beverage categories, some of the probiotic soft drink replacements, they are super premium pricing, but they're not finding any problem looking for good demand. They have plenty of product demand, even at that super premium pricing.
You know what I noticed over the weekend? I was buying some chicken and it said 20 grams of protein per serving on it. And I'm thinking to myself, is this a result of the protein craze coming from GLP-1s? That, you know, even foods that have had the same protein content in them for generations, like forever, are now advertising that protein because that's what at least American consumers want to see?
That's exactly what you're seeing. So we're seeing across every single category. If you have a protein component, you're going to highlight that first on your packaging. And it's interesting how packaging really responds to that question that's on the consumer's mind. But you're exactly right. This is something that's going to continue, and it's going to be very prominent. I think you're going to see it clearly in every single category.
Is this protein craze, is it like other food crazes in the past where we've seen people consumers are fickle and Americans are fickle when it comes to sort of what we follow, or is this protein craze here to stay?
It's a great question, and it's here to stay. I mean, you and I can all name diets that have come and go, paleo, Atkins, things like that. But when you're talking about medicine that's going to be prescribed, it's going to be the new statin. When you think about it, there's like 90 million prescriptions for statins out there right now. This is going to be the new statins. And since Americans are pretty good at taking their pills, this is going to be one that's going to stick around. This is not a fad that's going to walk away. It's going to be here for a long time.
Consumers are very much feeling the sticker shock of prices when they go to the grocery store, even as some agricultural commodity prices have actually come down. At what point do consumers feel some of that relief in the stores?
It depends on the category. Take eggs, for example. Last year's highly pathogenic avian influenza was just an enormous shock. But we're actually below the price starting that cycle right now. But we're not seeing consumers really take away a lot more eggs, even at these really low prices. So it takes an awful lot to shake an American out of his particular diet that they really like. But we will see some relief as for example, the dairy industry right now, they're chasing more cows to produce more beef, which means more milk. So we're seeing good dairy pricing as well. So the consumer does have some opportunities if they're willing to look for them.
As we head into the summer months, are there any categories in food that might see inflation pick up, any that you're expecting for it to be worse than others?
Right now what we're seeing is a little bit in the vegetable and fruit category. We started out the year with a tough spot with the freeze in Florida, which really put up the price of tomatoes. And we're going to have to wait to see what happens with the labor, with the transportation costs, because diesel is a major cost for moving it around the country and bringing it into the country. So probably fruits and vegetables will probably be the most pressure thanks to the recent events we've seen.
So my same question to you about fertilizer has to do with diesel prices. If the Strait does open and diesel prices come down, will we stop seeing those price increases in fruits and vegetables?
Probably not, because the bigger driver is going to be that long-term availability of wages. And wage inflation is probably still running at a 3-4% range right now. So diesel would be a nice relief factor. Don't get me wrong on that. But the wages are going to be a bigger piece of it for the longer term. And once they go up, they almost never come down.
What about our farmers, Michael? There is a disconnect between how much farmers are earning and how much consumers are paying. Are American farmers getting squeezed right now as grocery bills remain elevated?
It's a great question. It really is farmer by farmer. When we look at the micro data that we have, last year we saw some amazingly good returns in the same year as very bad returns. And I think what really driving a lot of it is the technology. What we're hearing from the farmers is technological change is so rapid and so difficult, they're having a hard time implementing it if they're not on top of it. So yeah, we're seeing some squeeze. It would be nice for them to get some price relief from the higher crop prices, which would be inflationary, or lower input prices, which would be great. But what's not going away is a vice of technological change, which is just really putting them in a tough spot.
You mentioned the rising prices of protein. The story in the Washington Post over the weekend got my attention about how the Texas barbecue industry is struggling due to rising meat prices, the cost of brisket increasing 28% over the past year. Imports coming from outside the United States, that is what an import is. Is that going to put a dent in rising beef prices?
Not really for that type of a category. So grind that goes into hamburger, absolutely. This industry has discovered that Brazil is a gold mine of hamburger, and they're going to mine it for the foreseeable future. But when it comes to identifiable cuts, steaks, and brisket, things like that, no, we don't really have another source because we want a certain quality. So this industry is pretty bullish right now about their ability to keep prices high. And it usually is a sign that things will change when they think nothing will change.
Michael, going to have to leave it there, but this was a great chat. You got to come back soon. We appreciate you taking the time. Michael Swanson, Chief Agriculture Economist at the Wells Fargo Agri-Food Institute, joining us from Minneapolis this afternoon. We are a little over an hour from the close of equity trading. The Dow is lower right now by 0.4%. The S&P 500 at a new record. We'll see if it closes at a new record today, up 0.5 percentage point. The NASDAQ Composite up close to 1 full percentage point. Coming up next on Bloomberg Business Week Daily, we are taking a look at stocks on the move. This is Bloomberg.